Good morning, happy Tuesday, and welcome back to Forex Focus here on Tasty Live. I'm Glenn, joined with my good friend Twitter Mike. How we doing?
Not too bad. Markets are moving a little bit overnight after the happy holiday weekend. Seen some mixed moves across the board so far. Been in a little bit of a dollar uptrend since late last week. Great weather in Chicago, great weekend. Nice long weekend, so happy to be back with markets though.
Yeah, nothing as exciting as NBA Summer League.
Oh yeah.
You're a big Thunder fan, right? Post championship, now you're
I
watching
think it's
all
like
the.
13 years, over half my life now I've been a Thunder fan, so.
All right, I'll choose to believe you. But you are watching Summer League, and one of my boys is now one of your best friends.
Oh, yeah.
Northwestern alumni, Brooks Barnheiser, now on the Thunder.
Yep.
He's playing pretty well. Any other Summer League takeaways? Is Bronny James doing anything?
Bronny James is doing better than Dalton Connect, which is like a first-round pick last year.
They still have him playing?
Yeah.
That's
I
whack.
think he's like 23, 24, and Bronny's younger, that's pretty interesting to see. Thunder guys look great, though, and then guy on the Sixers, VJ Edgecombe, he's gonna be nice in the league. So
Better than Cooper Flagg. Is Cooper Flagg playing?
I don't know. Or maybe not in Summer League. I haven't heard anything yet. Right now is like the mini Salt Lake City, California tournament.
Yeah.
The true Summer League hasn't started just yet. So
very nice. But yeah, let's waste no more time here. Let's hop into the platform and take a look at what is moving on this Tuesday morning, because you're right, it's a full week now, off of yesterday's holiday week. Not a holiday week for Forex markets. Could have traded all Friday, but nothing was really moving, so less excitement there. But today we do have some movers. We got U.S. dollar, Japanese yen continuing to move higher through 146. We've got Australian dollar, U.S. dollar, the mover of the day, up almost a whole percentage point here. And if you're looking at these popular non-dollar pairs, you'll see that this Australian dollar, Japanese yen cross is up over a full percent, which it definitely corroborates this storyline. But why necessarily is that the mover of the day? What did we have overnight? Last night at around midnight, we had a Reserve Bank of Australia interest rate decision, a surprise stay. Do you have any additional color on that? I do not. Expected to cut 25 basis points, but this is how we here wake up to economic news overnight. A lot of these moves, a lot of these bank decisions won't happen during the U.S. session. So here we're reacting to an Australian rate hold, which is bolstering this Australian dollar this morning.
Yeah, pretty interesting. Maybe their central bankers are taking a little page out of Powell's book and pausing free maybe. Again, maybe it's just a little bump in the road here, and they decided it's best right now to just hold rates. We can see how the market reacted to that, right? With a strong Aussie compared to any cross for the most part. Is this gonna continue, right, to the upside here? Do we just see, after this little cool off from this rally on the dollar, do we just continue, again, uptrending even more for Aussie?
I was going to say, yeah, because looking, at the all FX pairs, you'd say, wow, big move. But you go to the hourly chart here, and we're just back to levels where we left off last Friday. So yesterday saw a pretty strong, considering how few and far between any dollar rallies have been, U.S. dollar that is. This appeared to be somewhat sustained throughout the U.S. session and now taking it all back, but not necessarily any ripping price action here in the Australian dollar's favor. We have last week hit highs close to 66 cents here, but zooming out to the daily, those were the highs dating back year to date, back to November. And now just back to the middle of this range. Anything else you're seeing here from a tape action perspective?
It's just interesting that Aussie is such a lagger compared
Mm-hmm.
to like pound dollar or euro dollar, right? Because we see those are breaking year highs, 2 year highs, 3 year highs, day after day right now. Then we have Aussie, right, and just sitting back to its, again, normal yearly range. Sure, it's to the upside or anything, but it's nothing special, right? And then if you even zoom out weekly, monthly charts, um, again, we have a lot more room to
Mm-hmm.
work with if there's continued upside, right? Or do we finally see some dollar strength for the next couple of months? And do we see a trend change here for some reason? Um, again, this is a very small window of dollar strength right now. So again, maybe it's not trend change or anything like that. But again, it has been a lagger, right, compared to Euro USD or pound dollar in that sense.
Absolutely. Let's just take a quick look into one of these big movers, just because it's always interesting to me when you have kind of a dollar story that's stuck. Recently, we've been stuck in a ton of dollar weakness, pretty one-sided. So it's always nice to pull up the cross-currency pairs to try and get some unique chart patterns, perhaps, or just no dollar exposure at all. And now here, maybe a little breakout here above 95 in this Australian dollar Japanese yen pair, going back to late February. So not any sort of multi-year or multi-month price extreme, but we are now breaking out of this range that we've been in for a few months. Is this interesting to you at all, or not worth looking into from a second-tier diversification level?
Yeah, it is interesting. Just one, because of the different, when you're looking at Aussie and USD, right? Those central banks are kind of acting very differently right now because US
Mm-hmm.
has been paused for so long. But then you look at Aussie, JPY insured, Bank of Japan has been paused for a little bit, right? But they're going to continue to actually raise rates, or they're expected to, right, at some point here. So sure, maybe a little bit interesting with the interest rate differential. And is there any way to maneuver around that at all? Or are we going to, again, maybe we've been in an uptrend since April, right? That's when Liberation Day happened with all the tariffs. So is that an important part of the chart, and that's the very low there, right? Or do we just see this is a big bounce? Things are mean reverting right back to their historical averages. Once that's done, do we just get continued downside with the yen ripping for upside there?
Time will tell. We'll look at this dollar yen piece just to round out this story. I mean, this one, a big mover yesterday, and now trending back upwards to the highest we saw. If you look at the hourly chart, and this one is pretty crazy because you go back to 2 weeks ago, a really sustained down move. This one, one of the more entertaining pairs to watch from a two-way action perspective over the past couple weeks here. What do you think about the price level we're at here, sitting starkly in between 146 and 147? I mean, we got all the way up to 148, but that wasn't a long run up here. 146, kind of aside from that, the high for the past month or so. Anything interesting here?
Yeah, pull up that weekly chart. I feel like past couple weeks we've been hopping on here, right? It's been sitting in that range from 148 to the low 140s there. And we hop on, it's at 148, then we hop on a week later, it's at 142, right? So are we seeing this just staying in this channel of 148 to 140, again, upper low 140s there? And this is just touching up a resistance, or again, are we finally going to get a breakout to the upside or a breakdown to the downside? Again, right now, it's in that channel. I think that decision is yet to be made, right? Again, interesting market to watch, right? Because there's a scenario for everyone here, whether you're interested in taking it to the upside on that breakout, trading it to the downside on that breakdown, right? Or if you're trying to range trade it from 148 to 142, something like that. You can also trade that either way, right?
Absolutely, but starting to see maybe a little more of the interest rate correlation pick up in this market as bond market gets more interesting this week. Looking at economic events for the day, we had the RBA press conference already. We'll look into that, see if there's any interesting tidbits there, but we know the market reaction. Other than that, nothing crazy on the radar today. Got some Chinese inflation data late at night that might also play into that Australian dollar piece. But I think that'll do it for our market update. We've got a nice segment today if we want to jump over to the slides. Doing some more back testing. We got for you today some symmetric risk reward analysis in trending US dollar pairs. What does that mean, Mike? It's a catchy name that I came up with that hopefully has a lot of buzzwords in it, but we have some historic context for this. As we called out, a slight dollar comeback on the table, not nearly to the magnitude that a dollar recovery would need to get back to even where we started the year, let alone the past 2 years of dollar strength. But it was interesting to me to see, the U.S. dollar yesterday posting 3 successive days of gains against a lot of major currencies. Here we're looking at the U.S. dollar Canadian dollar pair, which is bouncing off of its lows from 136 towards 137. And when you really zoom in to FX markets, most traders that aren't involved in FX spaces might just be in the background, knowing that the dollar's weakening on tariff news. But if you are getting granular and you're trading in these markets every week, every day, there has been two-way price action. And we wanted to look into how you can identify moving markets. And when you do contrarian or momentum strategies work best? Like if you see this 3-day up move, would over historical examples, would trying to fade that little move work better than trying to capitalize on perhaps a trend of further dollar strength? So what we did was we used the past 6 years of price data using high-low, open-close daily data for the major US dollar pairs, 7 for you here: euro, pound, yen, Australian dollar, Canadian dollar, Swiss franc, and New Zealand dollar. And we used that 3 consecutive up or down day example as criteria for trade entry. So we simulated trades that only occurred after examining or observing 3 consecutive days in the same direction, and tested both if you were to put on a momentum play there, betting on continued performance, a 4th consecutive up day as an example, or putting on simulating a trade where you're fading that move. And so what we did is we used symmetric risk reward price targets, so getting stopped out if you hit your percentage price target, or if that move went against you to the same magnitude, and used a 5-day max holding period. This is something we played around with, doing 5 days, 10 days, but really wanted to see, you don't want to be stuck in a pair if you're trading this frequently for more than, say, a trading week. And so use this 5-day max to try and determine, how does symmetric risk-reward performance fare, and what kind of profit targets should we expect with this max holding period, and calculated win rate, a ton of performance metrics for you. So don't want to waste any more time getting into it. First, we looked at 1% price targets. So if a move from your trade entry went an additional percent in your favor or against your favor, and here looking at momentum plays, we got a lot of data here, but we got win rate, average P&L, average days held, the percentage of when your profit target was hit, loss target was hit, and time stop was hit. So all of these are really important. But what stands out to me off the jump is the US dollar, Japanese yen as the only real winner here for momentum plays using these constraints, with the only one with a win rate over 50%, only one with positive average P&L. But what's also interesting to me is the next conclusion I draw from this is that that time stop hit is really getting dinged a lot here, Mike. You're getting in this US dollar, Canadian dollar, you're getting stopped out due to time over 60% of the time. And so to me, that spells out that if you are looking for just trading within 5 days, already I can see that this 1% price target or stop loss is a little bit wide because you're getting stopped off due to time a lot more frequently than not. Is there anything else you see from this table here?
Sure. Yeah. Again, past performance is not indicative of future results, but this kind of shows markets are pretty efficient, right? In some sort of sense, because when news drops, markets are repricing things based on the variables changing. It just goes to show you kind of how efficient they are with that full move being priced in immediately, right? And then the market doesn't really care about that after. Again,
even over 3 days.
Yeah. Which is kind of interesting. Yeah. Again, not always right in this scenario, because then another headline comes out, another piece of data comes out, or something crazy changes, right? So again, it's always different for every single scenario, but it's just interesting how fast things move, and then it doesn't really matter anymore. It's kind of what these numbers show me, just with the stop loss target hit plus the time stop being hit when you combine both those.
Agreed, but even though it is close to 50-50, when you pull up the contrarian example, very similar table here, you are seeing, aside from this dollar yen, a slight edge here, even with 1% profit targets of mean reversion, contrarian plays after 3 consecutive up or down moves. You're still getting stopped out due to time a majority of the time, but even though you're not at that full 1% band in either direction, tends to play out historically in the contrarian's favor, and this British pound US dollar emerging as the winner here with an average P&L of 0.1%, which, if you're a stock trader, it might not look like anything at all. Why are we even talking about this? When you're trading on leverage, then that can be a pretty substantial P&L for you, and could even be a sustainable strategy long term for you. And so aside from that pair outperforming, again, just hammering home that for these 1% profit targets, seemed to me that it was perhaps too wide, because you're getting stopped out if you want to trade within 5 days. So what we did next, we took it a little tighter, 0.5% price targets. And this, it all depends on your P&L is actually based on your per pip movement, but using percentages here was a way to kind of level the playing field with all of these different dollar pairs. And this 0.5% level is typically what we see more often with the daily kind of range, daily 1 standard deviation move that we talk about on here quite frequently. And here in the momentum category, we're seeing a similar story for dollar yen, but also seeing this New Zealand dollar coming out and outperforming for the momentum strategies, because here when I'm looking at, I'm not looking necessarily at the win rate, but you're looking at the time stop hit and the profit target hit. And here you're seeing 54% of the time with these constraints, New Zealand dollar momentum plays is hitting that price target, and only 1% are you leaving it just closing it due to time. And so in my mind, that is the outperformer from this table. But again, momentum not doing as well as contrarian plays. And this makes sense to your thesis of kind of efficient pricing and, moves that are perhaps overextended without any sort of categorical fundamental changes like we've seen the dollar slide so much this year. Without that, those outsized moves, we tend to see contrarian plays perform a little better, getting a slight edge. But man, here you're seeing across the board win rates of above 50%, except for that dollar franc, and you're seeing that pound dollar and also that Australian dollar emerge as winners here, with nearly 55% frequency of profit target hits, and again those time stops really low. So in pound dollar and Australian dollar, over 5 days and using a 0.5% price profit bands, you're not going to get stopped over 5 days due to time, more than likely, but you're still seeing those average day held. Those are the shortest as well, at under 2 days. So a lot of interesting little tidbits here to derive. Not necessarily that this is an end-all, be-all strategy analysis, but I think a good starting point for trying to understand what to consider, what price targets are, reasonable to assume over what time periods here. And so going to the key takeaways is, symmetric risk reward. You're tending to see over this short-term interval close to 50-50. 1 week trading periods, we're seeing mean reversion strategies have a slight edge, but slight edge is everything, when you're playing a 50-50 game. And the outperformers here across the board, British pound for contrarian and dollar yen for momentum. And then those have seen a lot more success getting dinged on your price targets with 0.5% bands than 1%. Now you could play with, the actual time period. Perhaps if you live for 10 days, then 1% is absolutely in play, but over 5 days. And what was surprising to me is that even with those tight ranges, trades taking more than a day on average. Any other key takeaways for you, Mike?
It's pretty interesting. If you want to go to that last 0.5% profit target contrarian slide, that one here, and just goes to show you how correlated Aussie and Kiwi are, right? NZD, USD, I should say. And again, not exactly right here, but Kiwi's kind of like a more high beta Aussie, right? It kind of moves more. And then when you're looking at it from either the contrarian or the momentum perspective, it just goes to show you not only is that move more, but the kind of the momentum and the contrarian side is also exaggerated in those scenarios too, just based off average days held, right, profit target hit, or that time stop hit too. You just see the exaggeration relationship between the two on there. So that kind of cool to see just in the data itself.
Agreed. And that'll do it for us with this study. Hope that got your gears turning a little bit. And that'll also do it for us on Forex Focus. But a lot of day left on Tasty Live. So stay tuned for Tom, Tony, and Vanetta up next.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this tastylive site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess. It's more like insurance. People should watch Tasty Live because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move. Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Woo! Get tasty, free market. Come on, you know it, can you feel it? We got some things to talk about. Free market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Tuesday to you both.
Hello.
Hold on, look at you. You're looking very summery and fresh this morning.
You know, I try. My dress, it has like little cow boots on it.
Oh, look like postage stamps from this distance.
Yeah.
Very nice, very
I
nice.
wanted to wear my boots today, but I got my boots.
That's the look in
I got
Europe,
my
by
hat.
the way.
I'm bringing
Dresses
country
with boots.
back. It's a look everywhere.
Is
You've
it?
never been to Texas? You've never seen the most beautiful women in the state of Texas, just
Yeah.
all sundresses and boots?
Yeah, but outside of Texas now, everybody's doing it.
Well.
Cowboy boots and dresses.
I was wearing cowboy boots before you were kind of like...
No, Tucci was wearing cowboy boots.
Never been.
For all of
You've
us.
never been down to Nash Vegas for a bachelorette weekend?
Yeah, well, not for a bachelorette weekend. Unless they called me in, you know what I mean?
Cowboy boots were a phase back in like the 80s.
Yeah.
Did you have cowboy boots?
Oh yeah, a couple pairs.
What? With your tight jeans? Okay, girl.
Boot cut jeans.
for sure, but I never really liked them.
You didn't like cowboy boots?
No.
But you wore them because everybody else
wore them
them
because they just look good.
His buddy Tucci was wearing them all the time. Tucci wore them he still wears them. He's worn them. He's worn them so long they're back in fashion now.
I think all
the girls wear them.
I think
Tucci wears
I
them,
think
all
all women look amazing in country boots, but it takes a certain kind of man to pull off a boot.
Tucci's that certain kind of man.
I bet the Tooch could do it.
Tooch can do it. He's a little vertically challenged. It helps. Good. It's good. It's good.
Well, you used to wear them, but you used to wear your pants inside the boot.
Yes. I wear gauchos. I wore gauchos.
No.
I wear them as
no.
gauchos. Yes.
No.
Actually, I saw a picture of Paulie Walnuts on Twitter or X, whatever the freak it's called these days, of Paulie Walnuts in the 80s on Brighton Beach, which is like like a cool beach to be in.
Right.
He had suspenders on, pants inside like his boots, one arm inside the suspenders, built like a little bit of a rock, and he was like, posing. It was quintessential Brooklyn 80s. It was great.
Amazing. Where is this photo? I need it in my life.
All right, I'll find it for you.
I need it. I need to see it.
I'll find it for you.
All right, well, let's recreate it.
Man, I don't know if we can do it these days. It'd be a tough
I wonder if I
pull.
still have my cowboy boots in my closet.
Who's we?
I
You live by yourself.
I wonder if I still have cowboy boots in my closet.
Let's find
You know
out.
what? I'm gonna say when you find them, the gold bar is inside the boot.
Could be.
Could be. Yeah, it's gonna be a.
Well, now we have to play your line dancing video where Katie tried to teach you how to. Katie is really good at that. I was blown away by how an Irish girl from the South Side can like throw down at a line dance.
Yeah, she absorbed it.
Yeah.
Tom, on the other hand, did not.
Not even.
No, he did not.
Not one
He did not.
iota.
That did not. That did not come through. She looked good with a cowboy hat on, Saz. I'm like, oh.
But Tom, you had a culinary experience yesterday. Why don't you tell us about it?
What are you talking about?
You got to try something for
Oh,
the
the
first
Dubai
time.
chocolate
Where did you get Dubai chocolate?
at the Jewel.
It's at the
If Jewel has it, it's already jumped the shark. You
Yeah.
should have known that. You should have never even mentioned it. So pre-market today, he mentioned he tried something that nobody else has probably had.
No, I didn't know that everybody had already tried it.
It's at Jewel, for crying out loud. Everybody else had it.
Anyway, it was my first time trying.
The guy at the exit on the Dan Ryan was selling some.
It was my first time trying it. It was
What are
great.
your thoughts? So is it just pistachio and chocolate, or what?
Pistachio cream inside of like.
I'm not
I've
a
never
fan
had
of it,
it.
but Vinny's been buying it since it was $30 a bar. It's $12 a bar now. That's how long he's been doing it.
It was great.
Wow.
It was great.
How much did you eat? Did you eat the whole thing?
No, they're
It
huge.
seems like really rich.
That's what she
Super rich.
Yeah.
They're huge. I ate about I broke off one of the whatever it
Cubes,
is.
like little cubes. They come in they're like.
No, like a row.
Oh, okay.
Oh, a whole row. You went with double cube.
Better pump the brakes, girl. Well, I think even Shake Shack has a Dubai chocolate shake where they
now.
do like a hard shell chocolate and you crack it, and it's got like I think a pistachio shake.
It was great.
Wow.
I give it all 3 stars.
Good job, Dubai.
Yeah, delicious. And I'm not a huge pistachio fan, even though I
Yeah,
like.
I was gonna say you don't
eat
normally like your
pistachios
nuts.
every day.
Yeah, but he doesn't like chocolate touching his nuts.
That's sad that you know that, but yes, you're
Yes.
correct.
Yes. So that's why
anyway.
I'm surprised.
Anyway,
that
it was delicious.
Wow. Okay.
Yes.
And the quantity that you brought for the office is.
Well, I had to try it first.
Close your eyes. What do you see? Did I not describe this picture perfect? I'm going to put up on the screen.
Oh my God!
Isn't that it? I mean, that's it. Look at that.
He could get it.
Well, in 1962. Oh, there you go. I thought it was the 80s.
1962.
1962.
I
There
am
you
not
go.
mad at any of this.
That's my guy. That's my guy. Paulie Walnut.
Climb that man like a tree.
Have you ever been to Brighton Beach?
That's my Cracker Jack team in the background that found.
Thank you.
Thank you, guys.
Have you been to Brighton Beach?
1,000 times. Yeah, are you kidding me?
Have you been to Brighton Beach?
I don't know.
I had my first knish on Brighton Beach.
I don't know exactly where Brighton Beach is. I think I've been there, but where's
You've been there 100 times.
It's mostly like Russian.
before you get to Jones Beach?
Now, you see, Jones Beach I didn't get to until I was of age because, my mom said, you can't go to Jones Beach.
We always just go to Jones Beach, but I don't know where.
Of course you did. I'm sure you. That's how you honed your skills. Yeah, I got it. Yeah. Yeah. Jones Beach is a little alternative.
What isn't?
Yeah, it is.
What? I don't. Okay.
Brighton Beach is, I have no idea. It doesn't say where it is. The name is Greater Coney Island area.
Yeah, it's Coney Island area. That's kind of like a little bit of the.
It's a trek for you. I mean,
Go ahead, say
you're slumming
something.
it.
Go
You're
say
slumming
something
it.
racist.
It's not racist.
No. Coney Island was my old hood. I mean,
No.
it was slumming it.
He's gonna say something offensive.
No, it was slumming it for him.
It was slumming it.
It was slumming it for him.
Okay.
Yeah.
I mean, if we wanted to go to Coney Island, we would go to.
Something went hard. That's where the Warriors were from. Remember?
Warriors come out and play.
We could go to
Great movie, by the way.
I know. We go to like Long Island Sound, but we prefer to go to Jones Beach.
Prefer Long
That's where
Island.
all the hoity-toity people that couldn't make it to the Hamptons would go to, like, Long Island, Jones Beach, Fire Island, same thing.
No, it's not all the same.
Yes,
It's
all the
no
same.
Montauk. I'm just telling you right now.
No Montauk.
It's no Montauk.
No, Montauk is so far. You have no idea. If you ever want to go to Montauk, it's like you have to basically, if you're not, it's a 20-hour trip.
Okay.
Yes.
Montauk is
one
like,
way.
One way. It's like one lane.
How did we get on this subject? I don't even remember.
If you ever go to Montauk, it's like one lane. It'll take you 20 hours.
It is on my bucket list to go to the Hamptons.
Yeah.
I've never been.
I've never been either.
I want to go.
Go to New Buffalo.
visit
It's in the
Coney
west of the Hamptons. It's the Hamptons. in
I've
the
been
Midwest.
to New Buffalo.
There you go. Same thing.
I've been to New Buffalo.
By the way, Coney Island, the hot dog, of course, iconic. But the French fries, cannot sleep on the French fries.
I'm a huge.
Like Nathan's French fries?
I agree with you
Nathan's
100%.
French fries?
Nathan's is all about the French fry, not even the hot dog.
Yeah.
I've only had Nathan's at the airport, and I've only had their French fries because I
Their
don't.
French fries are really good.
I don't eat their hot
Crinkle
dogs.
cut, kind of
big
fat.
crinkle cut.
Yeah, no, they were good.
Big fat crinkle cut. It's
Yeah.
the best thing they have.
Yeah.
Okay. Well, the
Although Grandma
Joey
Beanie did love the
Chestnut,
frog legs. I don't
Joey
think-
Chestnut begs to differ. He's the returning champ.
Yeah.
I think he ate 70 hot dogs,
Yeah, he's impressive.
10 minutes. So
It's impressive. Yeah.
It's impressive.
yeah, that's a lot. That's
He's impressive.
it's like
See your idol?
500 billion grams of sodium, milligrams of sodium.
But he's not heavy.
No, I know, but if you break down just the macros of what's in 70 hot dogs, like it's a lot of bad stuff.
And the rolls.
Yeah.
That's the amazing thing. How do you-
That's what the woman, I don't know her name, that won, the female, because she said that the bread was more dense this year. It's made it harder.
Big difference. Big difference.
Yeah, it does make a difference.
Yeah. Those guys are impressive.
How many?
And my Taiwanese sources from Brooklyn, Joe Mama just reminded me Reese Park was actually the best park because it had waves. It had good waves. That's where I got my skungilis from, too.
Oh.
Reese Park.
I've only had scungili once with you, and it's okay.
You scoffed it down like you
What
were
is it? Is
starving.
it octopus or squid?
No,
No, it's a big snail.
Oh.
Not that big. I mean, fist.
A big snail.
Yeah, like a fist.
And it's called scungili?
Yeah.
Well, that's what the Italians call it.
Well, then
Probably-
that's what it's called.
Well, it probably
No, it's probably called Maximus Squangialia.
it probably has a different name to different people.
Okay. Well, but you liked it or you didn't like it?
He ate it like it was going out of style, like he was
I
going
thought
to the
it
electric
was-
chair.
I thought it wasn't as good as squid.
Like calamari?
It wasn't as good as, well, it wasn't fried, I don't think. I think it was.
No, it was
have
in like
unfried
red sauce.
calamari.
Beautiful.
Yeah,
Which,
yeah.
by the way, that spicy red sauce.
It's good. But
Cannot.
it wasn't
everything's
as good as like,
what
it wasn't as good as like, as like squid or octopus, but it was
Okay.
good. It was interesting.
Oh, okay.
You can buy it actually in
frozen
or in a can.
Canned scungili?
Yeah.
You know you made it when you're buying canned scungili.
Whoa.
You can buy canned scungili in Chicago. I don't think you can buy frozen.
Okay. Well,
You can probably order frozen.
learn something. You learn something new every day. I don't know how to pivot.
On this show, you do.
I don't know how to pivot out of this. Bat, what did you get up to last night?
I don't know, but I had the greatest news this morning, right before the show came on.
Your dog's okay?
No, she doesn't. She's not going for her CAT scan.
Oh, so she's okay?
She stopped sneezing. I sneeze more in the morning than she does
That's
now.
good.
Okay?
That's good then.
Yeah, but they already dinged me on my card ahead of time because you pay ahead of time.
Oh.
So now I got to see how much of it I get back. But
Right.
I've already made $4,000 today. So
Well,
it's a
you
great
just
day.
then have them on retainer. Just think of it as a retainer payment, and then
just
for
leave it for your
something
next CAT scan.
else. Yeah.
Maybe you can use it someday. You could probably use it.
I probably could use it. Although there's a thing out there called not Nuovo, where it's a full body scan.
Yeah.
Insurance doesn't.
My wife did it.
My wife did it.
Yeah.
It's really great.
For what?
It's pre-novo, maybe pre-novo
Yeah.
or something like that.
Yeah.
Insurance doesn't cover it. It's expensive.
But it's not. A dog's more expensive than that.
Dog's the same price. My dog was just getting an exploratory CAT scan. It was $4,000. I think pre-novo was for the
Wait,
full
no,
body.
I need to know more about what the wealthy women are doing. Go ahead.
It basically
Get a whole body scan to see
CAT
if there's
scan.
anything like.
Yeah.
Like anything like what?
Anything.
Everything from like a spot on your liver to
Anything.
And it basically pre-checks you for anything that might look like something might come in the future.
How much is it?
$4,000 for the full body, $2,000 for the arm.
$4,000?
Yeah,
Interesting.
I think it's like $2,000 for just the body, and with the head, it's like $4,000 or something like that. But my wife had brain
Interesting.
tumors, so we.
Last week I did a DEXA scan, but that's only
Right.
like $75. You should do it. It tells you what percentage fat you are. So it tells you like what your lean body mass is. It tells
Why do
you
I
how
need
much
to know
fat
that?
fat you have.
Depress yourself.
It tells you your bone density.
If you're feeling really good, you go and get this.
Why do I need that?
No, well, I asked Mike Butler. I was like, Mikey, have you ever had this done? He's like, no. He's like, no, but I heard about it. I was like, what do you think?
They
like,
do that other one too, where you hold the handles with.
well, that's what this is the top level of that. But it uses
what do I need to know
bioelectrical
that for?
impedance.
So I can tell-
Press yourself.
No, but
How many
listen,
times must I
listen?
say
So I
it?
asked
So I can tell Tony.
No, so I asked Mike Butler, and I was like, well, how much body fat?
I'm 94% water, 1% muscle.
Yeah, no, but I asked Mike.
We're not so sure.
I asked Mike Butler. I was like, how much body fat do you
3%
think you
margin of
are?
error?
I was like,
Yes.
I asked Mike Butler, how much body fat do you think you are? And I was like, what, like 6? He's like, no. He's like, probably like 10. And I was like, get out of here. I can't have this
10 is
conversation
lean.
with you. Yeah, no, he's super lean. But women have an extra layer of fat for reproduction. So
Yeah, they're called boobies.
awesome for that. But it was cool. And you
Yeah,
get
I'm
your
probably
results
about.
right away.
What do you think? 10.
10% body fat, girl.
You're now.
But in your old age, you should be trying to
I know,
hold
but I just
on
don't-
to the muscle that you have. Like,
Now he's skinny flabby. Like
I know.
yeah,
He's
Here's
skinny
what
fat,
here's what I want to know.
yeah.
Why
It's,
do
it,
I
and
need,
it's up by you. It's on Wes Foster.
Why do I need to know this information?
Well, I'm using it to see like how my work.
I've already told you
working
half a
out
dozen
is-
times. Do I have to
progressive.
depress yourself? There's no other reason to get it for you.
I have nothing to
Depress
measure it against.
I know, but then that's why you get like a baseline, and then you start like working out, and then you then measure yourself again
So he's
in like
right.
6
It's
months.
just to depress myself.
I try to help you, Sosnoff.
But
Come to me,
you would
my
want to
friend.
know
Come
if
to
you
me.
have like brittle little bird bones, wouldn't you?
I've never broken a bone.
Okay, well,
I've
knock
never
on
broken a
wood.
bone. Fingers.
I broke my collarbone when I was 6 years old.
So you
Yeah.
did break a bone.
That was the only time I ever broke anything.
Oh, I cracked my head. Does that count?
Well, I cracked my head open, but that's not breaking a bone.
Yeah,
But I did break my
It is a
collarbone
bone, I would say.
when I was 6 years old. I flew over the handlebars.
sure.
You
That-
flew over the handlebars. You were
Yeah.
6 years old. I saw pictures of it. There was no flying for you. You rolled over them. I mean, like
Whatever.
Whatever. I shattered my tibia and my fibula. So
yeah, yeah.
You
did bad.
You're a legit broken bone. Yeah, I've,
But my
you're like
bone
evil
density-
Knievel crap.
My bone density is strong
Mm.
because I lift weights. But you should start.
I
lifting weights.
I never broke a bone. I mean, like I said, at 6 years old. I
You were
broke a bone.
protected.
I know, but the older you get, the more important it is to retain the muscle mass.
And
that
now I
you
wear a
have.
helmet when I do things.
No, you don't. You should though. You should anyway. But that's cool. But I'll have to look into this other fancy rich lady scan. But then what do you do with that information? Like that would just scare me.
Then you depress yourself. Just
Yeah.
like I said.
Yeah.
These women aren't happy unless they're unhappy.
Yeah.
You have to understand this makes
True.
them very happy.
True. Hey, we got a great show for you today. Hopefully that makes everyone here happy at the top of the 8 o'clock hour on this terrific Tasty Tuesday. We're going to bring you an options jive, short option performance after price reversions. That's a word salad. What does that mean?
Say it again.
Short option performance after price reversions.
Yeah, that's a tough one.
You don't, what is, can you just, I don't understand, like, I guess looking at option performance when the price reverts.
Yeah.
Okay. I just reversed the order of the words.
Yeah.
Then we got Chris Vecchio in the house. Let me explain. 840, what are you talking about with Chris today?
You know, we have a couple different topics. I think we're going to go, I think we're going to lean in the direction of just talking about kind of the US dollar and things like that.
Okay, good. And then 9 a.m. market measures back to all-time highs. New highs. That is our market measure. We're going to break that down. And then at around 9:30, Scott Sheridan, big boy Scotty S, counting down all the top trending tickers over at Tasty Trade. And Jenny will be reunited with Liz. She texted me yesterday. She's like, I'm in South Bend. I'll keep an eye out for your parents. And I was like, okay. But she was dropping her daughter off at camp. So I think at Notre Dame, maybe. So.
I saw a lot in the parking lot yesterday, all the duffel bags lined up. You know, that's where they kind of pick up the kids. They all meet in one place.
Oh, for camp.
Yeah.
Aw.
Yeah. I remember
We used to take a bus to camp.
What's that?
I used to take a bus.
Yeah, they take a bus.
See, I never got to go to
I like taking a bus to camp.
summer. Did you get to go to summer camp? I never got to go to summer camp.
Did I get to go to summer camp?
What?
You think they have summer camp when you're on welfare, for crying out loud?
I didn't know. I never got to go to summer camp.
No, I never got to go to summer camp.
Okay.
Summer camp was walking across the street to the park.
All right,
Summer
chip
camp
on
was
your
throwing
shoulder.
a hose out my
Oh, you
mom's
had to-
All right, chip on
window.
your shoulder.
That was summer camp.
I didn't know.
Summer
I didn't
camp.
You had to
know.
open
Summer
up
camp
this
was a
getaway.
plastic pool in the
Okay, well,
walkway.
your son got to go to a very nice summer camp.
Wow, things are different now.
Okay, then. So your tune has changed. Oh my goodness. But I did get to go to
Summer camp.
I did get to go to math and science camp.
Summer camp was Reese Park and Brighton Beach, right?
And I went to leadership camp. I went to debate camp. I went to journalism camp.
Oh, see, you went to a lot of camps.
But they weren't all summer. They were just like a couple. But I never got to go to like a fun camp. It was always like
I went to
it
sleep.
was always just like model union.
He went to sleepaway camp.
I went to
Sure.
sleepaway camp.
How many
Yeah.
weeks? 4 weeks or 8?
8.
Yeah.
See,
my
that's the
kids went for
dream.
8 weeks.
Good for your parents getting rid of you. Anyway.
My kids went for 8 weeks when I was getting a divorce. My kids went for 8 weeks. That's when I met my wife, Chris. 21 years coming up, anniversary soon. Congratulations, baby.
Keep it
I told my kids I said to put them up to Eagle River, Wisconsin. 6, 7, 8 hours away. I said, now remember, you can always email me, you can text me, you can call me anytime
Never.
you want.
Never.
48 hours I was in Europe.
Wow. Cool. Way to abandon your family. Hey, that's the run of show for today. You guys want your daily dose? I don't know.
When we went to camp, there was a rule you had to write to your parents every day. You had to write a letter every day.
Yeah. It wasn't every day for
No,
them.
we had to write a letter every day. So, but we didn't have anything to say. So we would just send an envelope.
Hi, I'm fine.
No,
Hello, Mata.
Envelope, nothing.
Hello, Fada. I am good.
we would just turn in blank envelopes with our parents' address on it.
That's good.
Here you go. Here's my letter. There'd be nothing in it.
They
My
know
mom
you're
would like,
alive.
I'm sure that was wonderful for your mom.
You get care packages? Did you you're allowed to get food and stuff like that?
Pistachio nuts.
Your Manischewitz. Your gefilte fish.
All our parents, every parent used to send the same thing: licorice and pistachio nuts.
Oh, so you do like pistachio nuts? You mean
He
pistachio
doesn't like
nuts?
chocolate
red
touching his
pistachio.
nut. The red?
I don't think there were white ones back then.
Those Spanish
honest with you.
peanuts?
No, red pistachio.
You had to have the red on your fingers when you were done.
Rumors. Hey, focus. You want the daily dose? Here it
We're
comes.
talking about red dye number 5 right
All right,
now.
let's go.
Red
Kill us.
Here's my theme music. I've lost all control.
Breaking news.
Lost all control.
Top stories. Today's headlines.
This just in.
Breaking news.
All right, everybody. Today's a terrific Tuesday. It's July the 8th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news.
Hey, the declining dollar faces more headwinds. The dollar tumbled 10.7% against its global peers through June, setting up the worst first half for the dollar since 1973. That gives it the worst first half return in 52 years. I know you wanted to talk about this with someone who has a penis, but I'm here first. Let's talk about the dollar.
Yeah, not pretty.
Oh, so you don't want to talk about it with me, but you're going to talk about it for 20 minutes with Chris Vecchio?
Well, I mean, it depends how deep you want to get into it, but we're trading it, and we're actually
Trading it how?
Right now I'm a little bit long dollar.
How do you get long the dollar?
I sold the euro.
Oh, okay.
Yeah.
And
so remember, it has an inverse relationship.
Sure, but I was just curious.
I'm short a lot of premium in there. It's actually working.
Okay.
And the yen's actually been kind of weak lately.
I'll get to that in a second.
But
1973, the end of the Vietnam War.
Yeah, I mean, listen, there's the falling dollar has had a lot of impact on the bond market. It's had a lot of impact on the stock market. It's changed kind of
changed the game.
Well, it's changed the true returns.
Okay, but you haven't seen these levels since you became a trader.
Oh yeah, we have.
No, it's just since the worst first half since.
It's the worst first half, but we've seen all these prices higher than.
Sure.
We've seen the euro higher than 118. We've seen the British pound higher than 137.
Of course, yeah.
So these are not like record numbers or anything. It's just this has been the worst.
Are you concerned though about the dollar supremacy, as people say?
I'm not concerned about the dollar supremacy. I am concerned that this current administration they're so focused on America first that they don't understand the impact of a falling dollar. I really believe that that is not part of their concern. And I think when you think about, if you're a globalization freak, like I am, I don't look at the world as a self-contained ecosystem in America. I think about everything as a whole.
Sure.
And I think that's the way you have to in order to grow. Then I think it's scary. I think if you think about, also, but the dollar is very cyclical and the dollar can come back easily. It can move 3, 4, 5%. I think you're going to have a vicious.
The dollar went a lot further than we thought to the upside.
Yeah. I think you're going to have a vicious rally in the dollar in the next month or 2 months.
Oh, interesting.
Yeah, I think you're going to have a vicious rally in the dollar, but I don't like the tape action in the bonds right now, and I definitely don't love the tape action in the dollar.
Right.
But I think you have to trade it from the long side.
I think the dollar's affecting the.
Oh God, yeah. Because
bonds 112.28.
Because that's painful.
Can't buy bonds right now with the dollar crashing, because if you're outside the U.S., you're getting double whammied. Or you're getting double whammied.
In other currency news, the yen stumbles as President Trump imposes 25% tariffs on Japan. The yen fell broadly Tuesday, while the dollar held steady as President Trump unveiled 25% tariffs on goods from Japan and South Korea. No cap here. Your girl's skincare routine is in trouble.
There's some
South Korea.
There's some pretty juicy premium in the yen puts. If you've never traded long yen before, which I actually like here still, the puts got
down 4 days in a row.
Yeah, and the puts got jacked.
So they're rich, they're juicy.
Yeah, they got jacked.
Okay.
So the puts in there,
they're sure jacked like you
now it's been much lower. It's been in the 66 handle.
Yeah.
68.7
right now it's 68.7, but I think the IV rank is wrong. Actually, it's 8.7. I don't think
the markets are wide on the puts right now.
Yeah, I don't think that's what it is. Wait till the market opens today. Yep. But there's some rich premium at 68, 67, 66. I like the premium in there.
Your skincare routine and my wallet, because I just got hit with $142. This tariff stuff, this Trump stuff, better stop right now, okay? Because Vinny ordered something, I think, from some drop shop that probably came from Switzerland, some ski apparel crap.
Sure. Yeah.
That he bought. $142 they want to check. They knock on your door.
Tariff check.
Yes, they hold the package.
Yeah.
We already paid for the stuff, right?
So you're screwed.
$142 I want to check. They don't
Yeah. No, they are not messing
Who
around.
has checks nowadays anyway? Good thing we're old people. We got checks.
Hey, here is something.
That's a lot.
It was had a couple $100 worth of stuff, maybe $300 worth of stuff. $142 check.
Here is, if only that part of the platform had been clearer. Hey, Exxon just warned Wall Street of billion-dollar profit hits. That is no good. Exxon signaled Monday that lower oil and gas prices could cut its second quarter earnings by $1.5 billion from the previous quarter's level. The earnings snapshot from the largest U.S. oil producer is closely watched for clues on how the broader oil sector is going to fare. That's a pretty big matzo ball that's out there for XOM. What are your thoughts?
111.12. XOM looks like it's down around 30 cents. Been going sideways. I mean, XOM is where good traders go to die. I mean, it does pay.
Well, you talk about crude oil too as a broader picture.
Sure. Now, crude oil on the other hand has got an IV rank of 31. It made a big high at 78 about 2 weeks ago. Now it's 67. It got down to around 65. So crude oil's had some movement to it.
Tom, what are you doing in crude oil?
We covered our remaining option strangle this morning. It was a very good. We took about as much out of it as we could.
Okay.
It was a classic tasty play. Spike on all the Israel Iran bombings. Spike on volatility. We sold a lot of premium. Covered it last couple of days, and I'm guessing we took 60, 70 vol points out of there.
Yeah, at least.
Yeah. So it was pretty good.
Well, here is something interesting. Kathy Wood's ARK is filing for new ETFs to limit losses in her flagship fund. The ETF marks ARK's entry into the buffer ETF market, where funds use options to limit losses while capping gains. And her ARK Investment Management has filed proposals for 4 new ETFs. How is she still allowed to make ETFs?
I don't know how Kathy Wood still has the job.
Is she the worst investor of all time? I'm not trying to be hyperbolic. I'm just asking, like, return for return. Like,
no, she's not the worst of all time, but she is. I find her to be one of the. Here, I'm going to be.
Don't.
I'm asking.
I'm going to be really nice.
I'm just asking.
I'm going to be really nice.
Okay.
I don't care I don't give a flying F.
She's the least innovative. Let's put it that way.
What Kathy Woods does about anything, I cannot stand that woman.
Sure. I'm not talking about it on a personal. I'm just talking like return, like dollar for dollar ROI.
I'm not talking personal either.
Yeah.
She's just a disgusting individual. I can't stand her whole shtick.
Because she stole your look?
No, I can't stand her whole shtick. Her shtick is just horrible.
Well, I mean, in April, stock was 40. It's 70 right now. It's making new highs. It's up about 30 cents, 70, 72.
Yeah, I don't care what he does. I haven't looked at her stock. Won't trade it.
I haven't either.
I was just curious, and I just thought because we haven't talked. You used to be able to trade ARKK and all the WKRPs, whatever, because they were really liquid, and the trade was
still okay. I mean, the 20-cent wide markets, IV rank at 24. They're still okay, but they're like a synthetic play on Tesla and other stock. I don't know. Easy ways to do it yourself.
AI cloud infrastructure provider, that is word salad bingo right there. CoreWeave says they plan to buy Core Scientific, a data center infrastructure operator, in an all-stock deal valued at $9 billion. If the companies complete their proposed acquisition, CoreWeave wouldn't have to pay rent to Core Scientific on several data center sites.
CoreWeave down about $1.50 or so, 58 and change, 158.
You would think the street would like this deal, but I guess not.
No.
I'm not sure what Core Scientific's ticker is.
No idea. I don't even know if it's public.
Yeah, I don't know. I don't know the stock.
Yeah, I can look it up. You're not going to trade CoreWeave?
No.
Okay.
CoreWeave, if you take a look at the market, it has earnings, by the way, August 13th.
CORZ is Core Scientific.
Markets are like $1.50 wide, maybe more. I mean, if you do anything, it's a vertical spread. I don't even know if you could sell naked options in there at Tasty Trade. It's a hard to borrow stock. I don't know. It's a tough one.
NVIDIA stock just got a more bullish endorsement from Citi. Where have you been, Citi? Citi analyst sees NVIDIA stock rising another 20% as the AI opportunity swells further, but he notes the risk of potential geopolitical restrictions. Nada. What are you doing in NVIDIA? And who is upgrading NVIDIA at all-time highs? Citibank, that's who.
We don't have a position on NVIDIA.
Because the IV's
up a buck, 159 and change. August 27th are earnings, and you are right. It'll be at new highs if it closes around these levels.
Yeah, we don't have anything on.
Quantum computing company IonQ announced pricing of a $1 billion equity offering. The quantum computing and networking company announced the pricing of a $1 billion equity offering consisting of shares of IonQ's common stock, each at $55.49 per share. I know you don't trade a ton of the quantum computing stocks, but
we were short puts in there yesterday. We covered them in the morning.
Oh, look at you.
They came in.
What made you get into it?
I don't never remember.
Oh, okay.
I think it was like, what's your assumption trade or something?
Okay.
We had sold some puts. We bought them back. We were up 50%. We bought them back.
Nice.
I don't know what the stock's doing today. It's probably lower, but I don't know.
IONQ.
Yeah, not something I usually trade. Trading $45.73, up around 50 cents. I guess it's near its highs of around 50-ish bucks.
Okay.
Yeah, we were short to like the 31 puts or something. 30
Earnings
puts.
are August 6th. Markets are about 60 cents wide there too on the option side.
Yeah, it's not a good trade.
Here's a wild story. Shares of IBM, yes, that IBM, are outperforming the big tech stocks so far this year. And some analysts see more room for IBM stock to rally, especially compared with its fellow software names that are facing threats from AI and geopolitical tensions. Are you going big in Big Blue?
Near highs of new highs. Around a buck.
We have no position on there. Almost impossible to trade it.
Why is it
the 40
impossible to
earnings
trade?
July 23rd. He's right. It's like trading by appointment.
It's crappy markets.
Markets are like 50, 60 cents wide.
That's
IBM
what.
is-
What happened to you, IBM?
I don't know.
IBM is up 33% so far this year. Meta is only up 23%. Microsoft is only up 18%. And NVIDIA is up 17%.
Yeah, it's up
I'm
a lot.
surprised by that. I was surprised.
So is IBM.
Yeah, so is IBM. But it's almost untradeable.
Okay. Well, Meta, speaking of Meta being up a decent amount this year, Meta is reportedly recruited Apple's head of AI models. Apple's head of AI models is leaving the company to work at Meta. This marks the latest high-ranking AI executive that Zuckerberg has scooped up to lead Meta's new AI superintelligence unit.
I kind of like when these guys all poach each other. You know.
You would think they would. I guess they don't have non-competes anymore. I don't know how that works. I don't know what the laws are, what the rules are anymore.
I mean, a lot of them.
But I guess California is his own place, so I don't know.
Yeah, and again, these headlines can be very misleading because there's a good chance Tim Cook right now is going, he's all yours.
Right, because no one would say that Apple is dominating in AI right now. So,
Right.
I mean, they're trying, but this does,
I mean,
think
it's
this
the kind of
hurts
thing where-
Apple more.
Who knows? It
I don't know.
might hurt Meta more. Apple might be happy to get rid of this guy.
Well, let's do a Apple Meta pairs trade. What you got?
Well, Meta's up $3, 7.21 or so. Not at high highs, but getting close to it. Apple is, on the other hand, is up too, about 20 cents to 210, but it's closer to the lows than its highs of up around 250.
So do a Apple Meta pairs trade.
I don't want.
I would say Apple.
I don't want to.
I should say.
What's your Apple position, though?
We are like a hair long.
Okay.
Hair long.
Okay. Hey, Tesla has lost $68 billion in value after Elon Musk says he's launching his own political party. I didn't mention this yesterday because you talked about it on last call, but after the market action from yesterday, you kind of have to talk about it because Tesla shareholders have wanted Musk to stay away from politics, but it seems like he's doubling down on this, and the street just hated it yesterday. What is to be done in Tesla as a stock, because it's kind of volatile right now?
We sold some premium in there yesterday and scalped it. So
We sold some premium in ES too, and that worked out really nice.
overnight, we sold some premium in Tesla yesterday morning.
Mm-hmm.
Took about 70 cents out of it intraday. Stock didn't move all day.
Nice.
Tesla up $3 this morning.
Yeah, it didn't. It literally didn't move all day. It was down. It opened down $22, closed down $21.
Yeah, shares fell nearly 7% yesterday, so we will see what happens. But nice opportunity for a trade. Hey, Amazon is Prime Day today, and it is set to lift U.S. online sales by almost $24 billion. That's according to estimates from Adobe. Online spending is expected to surge today as U.S. retailers try to compete with Amazon's 96-hour Prime Day event this week. That includes sites like Walmart and Best Buy and Target and other retailers trying to vie for people, and consumers trying to get ahead of tariffs are buying items that are, of course, like electronics and toys that are made in China and other places. So it could be a significant little bounce. Amazon, what are you doing in Amazon?
Nothing.
Okay.
Up about 50 cents, IB rank of 32, earnings August 7th.
I kind of want to film you buying something on Amazon for the first time. Why?
You know what? I'm still kind of a little. I don't really. I'm kind of pissed off about that whole Bezos wedding thing.
Okay, well.
Because it kind of grossed me out.
Well, but he doesn't run Amazon. He's not the boss at Amazon anymore.
It's the largest shareholder by like 10 times over.
Well, look, you have the same taste in women.
I hope she's not listening.
Just saying. Good luck with that. Hey, Waymo. I said boom, boom, boom. Let me
Waymo.
say Waymo.
Waymo.
Waymo is going to be testing in the city of brotherly love in Philly with safety drivers behind the wheel. The company says they will begin road trip testing from summer through the fall. It is this company's latest effort to try to expand in northeastern cities. Hopefully they don't have to drive around stacks of garbage bags. I want to go to Philly this summer, but I hope they clean their streets up.
Said nobody ever.
I do want to go to Philly. I've never been to Philly, and I really want to go. But also, I'm not going to cross a picket line. So, stay strong. Stay strong, Philly. But Waymo, you love Waymo, though.
You do love Waymo.
Okay, I've been in one Waymo car.
But you didn't hate it.
I did not hate it.
Waymo, owned by Google. What's the Goog doing this morning?
Google trading 177 and change up around about $1 or so, 80 cents to $1.
Twitter co-founder Jack Dorsey announced a new peer-to-peer messaging app that works entirely over Bluetooth. It's going to challenge WhatsApp. The chats are encrypted, ephemeral, and stored only on device with no accounts, phone numbers, or servers involved. I don't quite understand how that works, but that sounds good if you are a privacy fanatic. And again, it's the guy that built Twitter. The app is now live in beta on test flight with future updates set.
It was encrypted end to end, I read too.
Yes,
so.
yeah. Like I said, it's encrypted, ephemeral, and stored only on device. I don't know that it has a name.
Yeah. Not sure.
But he owns Block, so
it only went smaller distance. It wasn't like
right. It doesn't go very far.
It was like a test pancake.
Working on updates. But you can trade Block, which is Square, which is XYZ. I hate it here.
XYZ. I don't think I've ever traded at $70 and change, up around 50 cents. Earnings are August 7th. It's off its lows of 40, off of its highs of 100, trading at 70.
How's the IV in there?
33.
I might have did something for your podcast.
Might have did something. You got markets that are 10 cents wide. Not bad. Yeah, every Tuesday.
Thursday. That's right. I'll take it.
Yep.
This headline is for me, and for me only. I'm very excited about this. Actress Anne Hathaway. You like Anne Hathaway? Yeah. She is set to play a Taylor Swift, Lady Gaga type character, and she's recorded original songs written by Charlie XCX and Jack Antonoff for a movie from director David Lowery called Mother Mary. Shut up and take my money. I don't care what this is. I'm going to go see it. If it's even remotely based on T-Swizzle. If you're new here, I'm Vanetta Logan, and I'm Tasty Live's Taylor Swift reporter. And yeah, Hathaway.
Why doesn't Taylor Swift play the part of Lady Gaga?
Because she is taking a much-needed break, and you leave her alone. You let her just let her be by herself.
I'm sorry.
But anyway, I'm very excited for this.
I was on my drive home last night. I was listening to the radio, and the guy was on the sports station. The guy goes, listen, I'm just going to tell everybody out there listening, whatever you do not see the Jurassic Park movie. It was the worst movie I've ever seen.
Oh, I can't imagine it being good.
He goes, it was the worst movie I've ever seen.
I mean, how many times can they do this with this dinosaur?
Yeah, I know. Well, I'm glad you brought that up because F1 is Apple's highest grossing theatrical film ever. It generated more than $293 million.
I heard it's okay.
That is behind.
I heard it's okay. I don't know. Your Taiwanese source told me he really enjoyed it.
Who?
Wheels.
Oh, Josh. Apple's F1 generated $293 million at the global box office, the most of any film released theatrically by the company. Jurassic World took in like $318 million, but that's pretty good. $60 million of its total global haul is from IMAX theaters. That is pretty cool. They also released a haptic trailer, so using the motors in your phone, you could feel the vibrations from the car. It was actually really cool because I tested it out. I was like, okay, this is kind of cool. Good job, Apple. And
Good job, Tim Apple.
good job, Tim Apple. Yeah, that seems pretty cool. Hey, tennis players are not happy with Wimbledon's AI line judges. This is the first year the prestigious tennis tournament replaced human line judges who determine if a ball is in or out with an electronic line calling system. I believe they partnered with IBM on the technology. Numerous players have criticized the technology, notably British tennis star Emma Raducanu for missing a ball that her opponent hit out, but it had to be played as if it were in. I get the
I
frustration.
thought she was wrong on that.
I didn't see. I'm just.
I watched it.
Oh, okay.
And
On a television replay, the ball looked out, according
It
to the
was out.
Telegraph. Oh, okay.
yeah, and
So she was right.
I mean, I have to take your
oh
word
no,
for it.
the
I mean,
one, the one I remember.
expert.
I watched it.
Yeah.
And it was a shot that thought it was a shot she hit and it was out.
Oh.
But maybe she's talking about.
No, she's talking about her opponent hit it out, but it was ruled as if it was in.
You said I was
That's what
all right.
the Telegraph
Spider.
said. I have my source here.
I don't remember
You
that.
okay?
But I watched that match.
Your source is trust me, bro. Okay.
No, I watched that particular match.
Yeah.
Because she's British.
Yes.
And
I'm aware.
and she was playing the number one player in the world.
Yes.
Wait, she's Slovak. I think I'm not sure.
You're gonna get it wrong. I don't know. I don't follow tennis.
She's Eastern European. I'm not sure
Okay.
which country.
Sure.
Maybe Czech. I'm not sure. But anyway, it was a good match, but she blew it.
Emma did.
Yeah, Emma did.
Okay.
She blew it because she was up and she had a good chance, and then
Uh-huh.
she lost like 5 games in a row.
And I'm sorry. And what are you ranked globally in tennis?
I'm just saying, as a fan, I really liked that technology
Okay.
because
But it's sometimes it gets it wrong. Like it's not infallible.
I'm gonna tell you something. As a fan, it's so much better than what they had before.
Sure.
And I wish they did it for Major League Baseball.
Well, we will see what the future holds. Sad news to report as the Pacers confirm NBA star Tyrese Halliburton will miss the entire 2025-2026 season.
This is sad.
He blew out his Achilles during the conference finals, and the surgery went well, and he's making progress so far, but it looks like it won't be enough of a recovery at a high enough level for him to play in the 2025-2026
That sucks.
year. But which makes it even crazier that Aaron Rodgers did come back. Like, not that I like Aaron Rodgers, but I'm just saying, like, it seemed like his rehab was super crazy fat. Like he was like walking like the next day. You know what do you remember?
Yeah, yes, but a little bit.
But obviously the injuries can have different severity and levels and stuff like that.
And Aaron Rodgers doesn't have to jump or run. Like it's different.
Sure. No, I get it. And it sucks for the Pacers though.
Yeah, because Halliburton is a physical specimen.
Right.
Right. Yeah.
So anyway, we'll wish him all the best. Hey, oh my God, this is the funniest thing I've seen. What do you think? What were the ages? You guys play men's basketball like rec league?
Yeah.
Yeah.
What? How old were you?
Until I was 50.
No, you really?
Yeah.
Till you were 50?
Huh?
How long were you playing that?
50. 50 was...
Last year I was 50.
Wow.
No.
I played from when I was
younger than that.
Like 8 to when I was 50.
Yeah, younger than that.
Okay.
Yeah.
I was just curious. So this just brings me so much joy. This men's rec league decided to dress as the iconic characters from Toy Story, but they're all still really good at basketball. Watch this. Got some moves. Oh, they're working on it. So there's Woody. Oh, with the jam. Wow. Buzz Lightyear from the top of the key. Yeah, and beyond. Ham. Good screen, Ham. Look at the Slinky Dog. They're two dudes attached together. Mr. Potato.
Okay, Tato. There's a plankton in my boot. Reach for the sky. Sid. Okay,
Sid.
Oh, give me that corn. Andy's home.
Andy's home. And then they all It's just
That's
so
good.
wholesome.
Yes.
It's was like,
good.
oh, this fixes the male loneliness epidemic.
The Andy's home part made it.
I know.
Sure. That was great.
The Slinky, though, took
Tom
me
doesn't
out.
get it, though.
The two guys is the Slinky dog. Like,
Because Tom didn't go to the movies with his kids. That's why.
Oh my God.
Yeah, he doesn't-
Toy Story will destroy you.
Toy Story. All those.
All the
movies
Pixar movies.
make you cry. Yeah,
No.
yeah.
If you can watch the first 10 minutes of Up with a dry eye, you're a sociopath.
Which, by the way, have you seen The Bear this season yet?
No.
Oh man, tearjerker.
No.
Tearjerker.
No.
You watch that?
I do watch The Bear. I'm behind. I think I'm
Oh,
still
man, the
like in
last
season
season's
2.
unbelievable.
But I heard
Big
mixed things about this season, so.
Oh no, it was great.
Oh, okay. I recommend. I just got to finish
Tearjerker though.
season 2. Hey, what's coming up next?
We're gonna take a quick 90-second break. Come back. We got more Tasty Live after this. We confirm and send.
Yay!
Andy's home.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's backtesting. Tasty Trade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, with Confirm and Send, where we listen, where we go over viewer emails. But you know what? First, let's take a look at the market. Even the S&P is Sadnov. They're up $1.50. Now, I'm a little surprised by this move. And yesterday, with conviction, I said you should sell every rally. I believe I was wrong, Sadnov. I believe I was wrong. Look at volatility, down 50 cents. Even the spread that you did in ES, which you covered for what?
Almost $4.
$4 profit is another $1 lower right
Oh
now.
yeah, because they haven't moved in the last 4 hours.
haven't moved. I don't know, man. I know volatility down 50.
You know, I'm gonna tell you something. Every time they do nothing like this, and you think it's the end of the
world as we know it,
vol crash. I'm talking.
Yeah.
About. Then something big kind of happens.
I know. Vol down another 50 cents, put a little damper on. So it's time to.
Bonds at 112.20.
Yeah, that's the big move to the downside.
Yeah, I don't see how you can.
Bitcoin catching a bid too.
I don't see how you can buy this stuff.
Yeah.
I don't see.
Oh, the bonds making the market. Well, that's what you're seeing. I mean, the market with volatility in by 50 cents, you would think the market would be up a lot more than up to 50. I think bonds.
Yeah, I don't like them here. I'm going to be a seller on
That's what they see. The idea that you don't like the market.
No.
See, I know. I felt that way.
Seller on a
yesterday.
bounce.
I'm going to listen to volatility.
We'll see.
Okay. All right. Well, oil basically unchanged. Gold down $5.50. Silver basically unchanged. Corn, wheat, and soybeans all lower. Tesla a little bit higher. Looks like
Our positions are tiny here. We can do anything we want. No big deal. Tuesday, July 8th. Let's do it. I want to get your perspective on, these are emails that came into us overnight from customers all over. I want to get your perspective on analyst ratings. I've always found it puzzling that analysts often adjust their price targets simply to follow a stock's movement. They raise them as the stock goes up and lower them as the stock falls. In my experience, their predictions are frequently off the mark anyway. Given that, why do you think people still pay attention to these ratings? I've noticed that when the analysts initiate coverage or revise a price target, it can move a stock in the short term.
It can move the stock in the short term, but it's usually, as you've pointed out already, late in the game for the stock's movement. And if you're a student of the game, meaning you just have been watching the market attentively, you see that. Somebody else who's maybe got a 9 to 5, who doesn't put the effort in that you've been putting in to learn about the market and watch the market, doesn't see what you see, which is really between the lines here. And you're 100% correct. I don't know what analyst perspective or ratings mean to the stock at all, just like you don't. And I think that it's just they're lawyering up so that they can protect themselves with legality. Other than that, I see no use for them.
Yeah. We've been talking about this probably for 15 years now, maybe even longer than that. At Tasty, we paid no attention to analyst ratings ever. It's not part of what we do. We've never even included on our software. We've never talked about it on the show. We feel the same way you do. They part of it is compliance related. Part of it is part of them is people. Analysts get paid by how much publicity they get. How much coverage they get for their stock market calls. Mm-hmm. That's how they get rated. There's a lot of little things that go into, there's a lot of things that you don't see that go into why analysts put these reports out. A lot of times they are for PR. A lot of times they it's just marketing for firms. I wouldn't read too deep into any of this stuff.
No, me either. I would not.
We don't pay attention to it. Let's go to the next slide.
Matter of fact, it should be like a bell that it's long in its move.
I was looking at a $5 wide iron condor in CRWV. When I set up the trade, I can actually collect more than $5. Is this an inefficiency in the market, or am I missing something? This is core weave.
Yeah, no, it's not an inefficiency in anything. What it is the product of the very wide markets. You'll see sometimes, not sometimes, you'll see in CRWV, meaning the bid-ask differential is too wide. So you might have one option that has a $2 wide market, and another option, because there's a standard bid or offer somewhere, have a 50-cent wide market. Remember, the computer just picks up the middle of those markets. In a good market, very tight market, the middle of both those markets should be close to fair value, and that's what the Tasty Trade platform is set up to show. You're not going to be able to sell it for over $5 in most cases in all cases on out of the money spreads. And in the money spread, you might be able to trade it for close to $5, maybe a couple pennies over under, because it is a hard to borrow stock. And since it's a hard to borrow stock, those options are going to be exercised immediately, if not sooner, meaning at the end of the day. Then you'll be caught with short stock in that product. It has 194% interest rate. And that's why that spread might trade over $5, because those options are going to be exercised. Somebody's be looking and left with short stock and paying a big interest rate. I'm assuming, since it's an iron fly, it's close to at the money, or maybe a little bit in the money. So it really is almost 200%.
It's a combination of cost to carry and also incredibly wide markets, which make the mid price look like it's a little bit off. But there's an old rule. If something looks like it's free money, I 1000% guarantee you that if you sell this for more than $5, it's literally
trade.
worth more than $5.
Yep, it's a losing trade.
Yeah. So just be careful. If you
I would not trade any in the money calls in core wheels.
Yeah, we wouldn't sell any in the money calls in there. And it, just always remember, as a general rule, if something looks like it's free money, it's not. You're the last person to know. Okay, if there was free money out there, you would be
passed you by. It's passed me by.
You would be the last person to know. So it doesn't. There is no such thing. You're missing that part of it. It's not an inefficiency in the market. There are no inefficiencies in the market. Let's go next slide. Under what circumstances would you use a ratio spread instead of a naked put or naked call?
A ratio spread instead of a naked put or naked call. If you were less bullish or less bearish, a ratio spread is going to have less delta than a naked put or naked call. So it gives you a little bit less, higher probability of success, less delta, relatively less reward if you're directionally correct. So I would use it if I was not as bullish or not as bearish as a naked option. Because you have a synthetic naked option in there anyway, it's just further out of the money.
Some of the fun stuff when you're trading is getting to choose kind of what strategy you want to use. And a naked call or naked put are pretty one-dimensional. A ratio spread can be a little bit more two-dimensional, meaning that a naked call or naked put may have let's say a win rate of 70% or 75%, and the ratio spread may be closer to 90%. Now, you'll make more money on the naked put or naked call, but the ratio spread will have an expanded win range, because you can make money on both sides. I think that's the difference. So you use ratio spread when you want a higher pop, and you're willing to take less money but a higher pop. You do a naked call or naked put when you want to be more directional. That's really it.
Beautiful.
Let's go next slide. On Monday, we saw an immediate reaction when the tariff news came out. Monday was yesterday, right? So the market was down about...
Yes, typically Tuesday is followed by Monday.
So the market was down yesterday, about 20 handles on the open. That's the immediate reaction. Actually, that reaction came on Friday, but down about 20 yesterday. We closed down about 40-something yesterday. Do you think this is just how it's going to be moving forward in terms of the impact tweets can have on the market?
I think this has. I think my son was right. It's Taco Tuesday. Trump always chickens out, so the markets are going to reverse on the tariff news. So, unfortunately, I didn't listen to the young bat, and maybe I'll pay the price today. So that's what I think is happening. So yeah, to answer your question, you're always going to get these knee-jerk reactions. They'll be less and less as they have been, I believe.
Yeah, I think that if we were talking about 3 months ago, it might have moved the S&Ps 100 points. Now it moved them 20 points. In another month, that same tweet will move them 5 points.
Yep.
Like Tony said, the impact that, it's the boy who cried wolf. You can only say something so many times, and eventually you're going to be like, you ain't
going to bite me.
Yeah, the dog barks, he wants to go out, fine. The dog barks, he wants to go out, fine. Then the dog barks every 15 minutes. You're like, okay, dog, sit down. Let's go next slide.
That is my problem with Sonny.
It's a relatively quiet week in terms of any economic reports or earnings. Do you find weeks like this with no scheduled news more or less challenging to trade?
You do have some economic news this week, but
well, whatever. I mean,
I get it. Any week in general, I get it.
Do you find a quiet week more or less challenging?
Every week is challenging, man. Anybody who tells you any differently is BSing you. So, all weeks are challenging. I think from a volatility standpoint, you get less pop in volatility when there's less news related. So yeah, I would say it's a little bit more challenging. Sure. Quiet weeks with quiet movement is a lot harder for me than when all chaos is breaking out. I feel it's a lot easier.
Yeah. So there's no question that in this business, quiet is hardest. It's always been that way. When we were floor traders, we made most of our money on expiration week when there was the most activity. And when there were quiet weeks, you're just kind of like, you had no way of knowing if you're going to do good or bad or anything like that. I think the retail side's kind of the same way. When it's quiet, you don't take a lot of risk and you don't have a lot of opportunity. And when it gets a little more wild, you take a lot more risk and you have a lot more opportunity. And I think we would all opt for that every time.
Agreed.
So I would find it more challenging when nothing's going on. Let's go to the next slide. This is the last one. This person writes, I got an email from the CBOE. I get an email from the CBOE each week. In this week's email, I didn't even know they sent out weekly emails.
Me either. I didn't get one. How come you're so bougie?
In this week's email, it said the risk premium in small caps, that's the Russell, had gone up relative to the risk premium in large caps, that's the S&P 500. I believe that means small cap premium is rich relative to large cap premium. How can I trade that?
I mean, IWM versus SPY or any of the other larger products. If you want to look at the CBOE products, you can trade that relationship between each other. I'm looking at IWM, IV rank of 19 right now. SPY is around 14, so they're not lying. I mean, it is that way. I don't know if you want to make a pairs trade with it. You've done it numerous times. But
I mean, this is a very difficult question because
it's good to know.
The Russell had a very strong move last week, and the risk premium in there had gone up on the call side a little bit more than the SPX. But that said, trying to, for example, sell Russell premium and buy S&P premium, which if that's what you're talking about here as a trade, it's next to impossible to do. I mean,
you're going to do option versus option.
For as long as I've been trading, thinking that you can buy vol in
It's
one
vol arbitrage, right? I mean,
yeah, trying to do any kind of vol arbitrage as a retail customer. Like, for example, here, I assume they're talking about selling premium in RUT and buying premium in SPX. You can't do it. I can't do it. Nobody can do it. It's so hard. You know, if you're talking about direction, where you said, I want to buy the Russell and sell the S&Ps, no problem at all. You just buy two, M2K or RTY contracts and sell one ES or MES contract, and you're done. And that's like a 2-to-1 relationship. No problem if you want to do it based on price. But if you're trying to do it based on premium, Godspeed. As a retail customer, it's a very difficult, ineffective way to trade. And even the pros with market maker margins would have trouble making that trade. It's not an easy trade to make.
Yep.
You have to keep your deltas in line. You have to somehow keep your premiums in line. It is not an easy thing to do, and virtually nobody trades that way. I'm not sure I think what the SIBO was trying to get across was that, if you were a premium seller, maybe there's more juice in the Russell than there is in the SPX. I think that was the message they were trying to send. And in fact, that was the case yesterday. Russell was down more than the S&Ps, and the premium came in more.
Yep.
But so that was not a bad piece of information. Just you can't trade it as a pair.
Let's take a quick 90-second break and come back. We've got an option jive next. Even the S&P's up 750. We'll be back in 90 seconds. Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
How many positions do you currently have open? How many positions do you have open currently? How many positions do you currently have? How many positions do you have open right now in total? How many positions do you currently have?
And I've got to say, I'm gonna say probably around like 30 to 40 positions. I've got a lot of positions, a lot of put spreads, a lot of iron condors, some naked puts, some futures. I got a little bit of everything on right now, but when volatility pops like this, I'm looking for new opportunities. So I took advantage of that over the last couple weeks here.
20. 4. Yeah, I think 4.
Maybe 10, maybe like 10 or 11, something like that, yeah.
Off the top of my head, maybe about 15 to 20 positions right now. Most of them are short put spreads. Quite a few positions, and I'm just trying to take advantage of all these different moves and these big ranges we're getting in the markets.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
It's option. Jive. Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, sound off with this option jive. Even the S&P's up $7.75. NASDAQ up $70. And the Russell, the strongest of the group, up 43. And the Dow, the weakest of the group, down 37. Volatility, also weak, down 63 cents. Big move, volatility.
Yay.
For the market movement, it's a big move.
Yay. All right, what else we got today? Kind of looking around. I need some stuff to do.
Oh, I think the market's going to get you in trouble today. It's going to lull you to sleep.
I think it's good. I actually agree with you. I think it's gonna. I think they're gonna put like. I think it's gonna lull you to like into a false sense of
stupid things. Yes.
I think it's gonna lull you.
Such a sucker for that too.
I know. I'm about to. I want to do something. Yeah, I want to get short some NASDAQ futures a little higher. I want to get short some S&P futures.
Oh, I hate it when you get like this.
I know, but I haven't done anything yet.
I know. I hate it when you get like that. Like you want to do something and you're complacent. Then you say, I should have had them. Then you do it at the lows and then you bring them back. Watch this movie.
Okay. Easy, boys.
Getting yelled at by the teacher. But yeah, I feel like I've got nothing on this morning and I got to do something. And there's no market. I'm already long bonds. I don't want to buy any more of those things. And there's no other market that's really that interesting to me this morning. Oof. All right. I got to figure this out. I don't have a lot of time. It's 8:11 in the morning. We are located in the West Loop of Chicago. Pat and I are in studio today. And you know what? It's a little cool out today.
It's going to be 80-something degrees. I mean, it was a little cool in the morning. I know you came in with a freaking sweatshirt on. I will give you the weather forecast. All of a sudden, I'm like Steve Schill here, or whatever his name was.
Steve Schill.
What was his name?
Skilling?
Skilling?
Gillen?
Skilling.
Yeah, that guy. Yeah. Skillings. Yeah, there you go.
Not Skilling. His name's not Steve.
Tom? Steve? John?
Tom
Frank?
Skilling.
Tom Skilling. Tom. Yeah. 87 today. 66 to 87. So when you woke up, when the sun wasn't shining yet, neither was your arse, it was 66 degrees. Now it's going to be 87. You're going to have me carrying boxes today. Tell everybody what you got me doing. You got me playing, you got me schlepper. I'm schlepper today. All of a sudden, I'm Jules.
You're the schlepper. Yeah. It's a good job for you. You're a good schlepper.
Okay.
I mean, of all the people we have here, you're probably the best schlepper we got.
Thank you.
You're like the best. Yeah, you're the best schlepper. You know.
Somebody's got to be good at something.
Yeah, everybody's got to be good at something. You're a good schlepper.
I'll take it.
Yeah, today could be the last day. We're cleaning out the old office and
cleaning out the closet.
Anybody remembers the old studios on Sagamon?
With the big cherry on top.
The big cherry on the building.
Mm-hmm.
You have a picture of the building, Beth?
Right on top of that town.
It's finally going to be...
finally maybe sold.
It finally may be sold.
Maybe finally sold.
Got to get our stuff out.
Possibly. Could be sold, maybe. Not so sure.
There's a buyer on the hook.
Oh, yes. We got a live one.
Yeah. Moved out.
Yeah, it is the old digs.
There you go. It's a nice building.
It's a great
building.
A great building.
Tell everybody who painted the cherry for you, my guys, before you ruined their relationship.
This was
with them.
the second. You have the first bet.
Oh.
We got to go in order here.
Oh,
Let's put up the first Huron. I'll take you through the
evolution.
of
Tasty Trade, Tasty Live, Tasty Works, Tasty offices.
So when we started Tasty Trade, we moved into a hip hop studio. Here you go. This was our first
62 West Huron.
62 West Huron on the
third floor, Beth, not second floor.
We had second and third. We had an office.
That's right. I'm sorry. The important
floor.
people like Beth were on the second floor. The cream of the crop was on the third floor, like myself.
So we had the whole third floor of this brownstone. It was really cool, right downtown. Absolutely beautiful building. Old hip hop studio upstairs. We were there for what, Beth? About 2 years?
Yeah, at least.
Was it at least 2 years?
Yeah.
Probably 2 years.
At least 2 years.
At least 2 years we were in, and then we started, and then we bought the next building. Go to the next one on Sagamon. Then we bought this building, and this is a much bigger space.
Yeah, it was cool.
And the whole building, and that's where we built our studios. That's where we did the show for probably 10 years. 9 or 10 years out of this studio in Sagamon.
Been around for 14 years, and now you only mentioned 12.
Only got
12.
12 so far. We've been here about 2 years or whatever, a little less. And now, the new studio, the new place.
Live, you're sitting in it.
Well, I know, but you like to see a little view. Well, actually, after this, we were in the Google building, and then we moved over to our newest location, and that's where the studios are now. We have a nice video of us building out the studios. They're kind of fun. And that's kind of been the last 14 years at Tasty. All right, let's do it. This is a option job we put together.
Yeah, and sad enough, now that you have status on different airlines and stuff like that, TSA is removing the process of taking off your shoes at the TSA. Sad enough, you no longer have to do that for the regular people, not the fancy people like yourself.
I haven't had to take off my shoes.
I know you haven't had to take off your shoes in 16 years. I get it. I know you're bougie.
I'm
but for my
pre-checked.
peeps out there, you don't have to take off your shoes anymore.
Why? Everybody who's pre-checked didn't have to take off their shoes.
Yes, that's true. So
it wasn't because of my status. My status gets me into the good lounge. Whatever.
Option jive.
I'm still not Premier 1K JJ.
You'll never be.
Option jive. Let's do it. So we're calling this one performance after price reversion. Or I'm sorry. Yeah. Let's call it mean reversion, whatever. So selling out of the money options means accepting premiums in exchange for taking the risk of underlying moves. Thus, if during the life of a trade, the underlying returns to its initial spot price, we expect to profit. Right?
That's correct.
Sell premium. You don't do anything, you make money. That's how it's supposed to work, unless volatility explodes. So how reliable does this work in reality, and how much profit do we typically see? Let's check the historical performance of short premium positions when the underlying returns to its initial spot price and find out. One of the reasons we like to sell premium is because if you believe markets are kind of cyclical and something is, let's say, trading for $100 today, maybe tomorrow it's 101, maybe 2 days later it's 99, but at some point it's going to keep crossing back that 100 level.
Yeah.
We're hoping.
Yep.
For some time.
Mm-hmm.
And when is that sometime? Let's go to the next slide. So we did a study. We looked at 15 years worth of SPY data. We looked at 20 delta strangles, 45 days to expiration. For each monthly cycle, we found the closing of the SPY strangle at 45 DT. So if the SPY increased from 45 to 44, we found the first date where the SPY closed below its 45-day spot. If the SPY decreased from 45 to 54, then we found the first date where the SPY closed above its 45-day expiration spot. Provided this happened for expiration, we checked the performance of our strangles when this occurred. Okay, so I mean, we're trying to make this as mechanical as possible. Now, here's going to be a very interesting and good visual of what this looks like. Let's go to the next slide, Beth. All right. So
there's a 20 delta SPY strangle, right? We're looking at 25-day entry. And the line in the middle is 21-day. Please go ahead.
Now, if you look at the first on the left-hand side of it, where all the dots are, okay, where most of the activity is, this is your first 24 days of the life cycle of the trade, right?
That is correct.
And so what happens here is that most of your opportunity for the stock to be trading around the number that you need it to be, like right around the perfect strike, is all going to happen early on in the cycle. So the argument to be made here is we like to manage things inside of 21 days. And the argument that this piece is going to do today is you're going to have a lot of opportunities to have profits early on in the trade.
Yeah, losses too. I mean, you can.
The question is, how early do you want to take profits? How greedy do you want to get? If you look at later on in the cycle, there's a lot less opportunity to go back to that price. Early on in the cycle, there's a lot of opportunity. Some are positive.
After that 21-day.
Yeah. I mean, after that 21 days, they're mostly all positive numbers, but
yes.
But it's if they come back in touch. Early on, it can be positive or negative. Let's go to the next slide. So here are the stats, and this is pretty interesting. A reversion to the initial spot price was observed before expiration in 75% of the trades, with this occurring before 21 days to expiration in 63% of the instances. About 42% of the time, this first occurred in the first 3 days of the trade, and they could be scalped for an average of 529 at a 79% win rate. There were isolated exceptions where sideways price movement was accompanied by large volatility expansion resulting in losses due to Vega, but they were rare once they'd had time to work. Looking only at the spot price reversions that occurred at least 3 days into the trade, 87% of strangles were winning at the time with a mean profit of $85. Now, these are SPY 20 delta strangles, right?
Yep.
And what they're saying here is that if you don't want to get too greedy, okay, again, a 20 delta strangle is going to have a probability of profit theoretical of 60%, right?
That's
20
correct.
plus 20
That's
is 40 minus 100 is 60. But if you manage early, okay, this is like, very early in the cycle when things cross back and forth, as long as there wasn't crazy vol expansion, which happens occasionally, 87% of the strangles of the SPY were winners after 3 days.
Which is, I mean, it's interesting. That's interesting. Okay. All right. I mean,
it's a lot.
Yeah, no, it's a lot. It's
but
a lot.
63% of the occurrences were winners, were winners before 21 DT, 75% before expiration. Those are still high numbers on 20 bucks strangles when the theoretical is 60. But
$85 is nowhere near 50%.
No.
So this is just showing you that, like, you know,
No, it's more like
you got to manage these things is what it comes down to.
it's more probably like 15 or 20%.
That's correct. You get around $7, $8 or something.
Yep. Let's go to the next slide. So some of the takeaways here, and these are really good. If time has gone by and the underlying hasn't gone anywhere, we expect our short option positions to be doing well. Common sense.
That's masters of the obvious.
Common sense.
Right.
By and large, this played out, and the general linear upward slope of the plot should be viewed as theta at work, especially after the first few days of the trade. An attentive trader could usually find a suitable moment during the life of the trade when the underlying was backward started. But the longer into the trade they were, the more they tended to make. So how patient do you want to be waiting for profits? It's a fun discussion.
Yeah.
But essentially saying that 10 to 20% number, you get that a lot. You know, you want to wait for 50? Go ahead.
Very good, sir. You know what? You just went through all the buildings that we were in and everything else like that.
Not the Google building.
Not the Google building. I know. Beth failed, but that's okay. We're going to give Beth the pass. I mean, she does a lot of good things. She made one mistake.
Whatever.
Not a big deal. You made a
One
big
time.
mistake. What's the name of the studio? You've never told us. You've never said anything. You never had it. I called it from day one. I need a name of the studio by the end of the month.
Okay. You got it.
I have your word?
Got my word. I've had the name all along. I just haven't. I just didn't want to explain it to you because it's got a lot of personal stuff.
I like that idea. We'll take a quick 90-second break and come back. We got more. You know what? I've always done well with people with personal problems. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. The opening bell is next, the moment we waited for. We'll be back in 90 seconds. Tasty Live.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
Question for you guys.
Yes.
Vanetta this morning was giving me a little flack. It was lighthearted. She meant well.
Okay.
For my particular baby face.
Yes. You are young.
Just
young
question for you guys, because I look up to you both. How much of your success, I don't know, financially with the ladies, do you attribute to having facial hair? Is it something I should work on actively?
Ooh. See, the thing, I can hear John laughing out there. See, the thing is that, you know, you either have it or you don't have it. And
All right.
you just don't.
I could put together a pretty gnarly neck beard.
You know, it's a manly thing. But
The last time I shaved my face, it was to dress up as Sting for Halloween. Like Sting the wrestler.
every time I leave Tasty, I miss it. Even like when I go home after work, I think about Tasty. I'm like, I wish I was really in the office.
No, you don't.
I don't.
You just went abroad. Were you able to just fully disconnect?
Fully.
Yeah.
We saw several artisans, but the sword maker. 3 months to make a sword.
Yeah.
That's
when
what
does yours get delivered? You didn't do the sword?
50 grand. And there's
But that's,
and a 2-year wait list.
It's a couple spoons.
Yeah, that's, come on,
You're going to Rockford for a wedding. It's going to be a very fun wedding.
Your friend that's getting married, or is it your girlfriend's friend?
Girlfriend's friend.
Do you want your girl to catch the bouquet?
No. That never ends well. Like in movies, that happens. The guy's like,
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Traders, start your platform.
Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Tomas, we're back, my friend. And you know what that means? Time for a little bit more Tasty Live with the opening bell in about 2 minutes here. Even the S&Ps holding steady, up $5.25. NASDAQ up 50, Russell up 9. The Dow trying to help you lower, Sodnoff, by 53. Volatility down 59 cents off of its lows of 18.19 set just a moment ago, down 3%. Big size move. I mean, listen, if you look at the move from yesterday when the market...
It's a weird move in vol this morning.
Now, vol doesn't always go the same direction as the market.
I know. It's a weird move this morning. It's making me... It's actually making me more bearish.
Yeah.
Because it's a little bit... It's almost when a line in a sports bet is too big.
Yeah.
And you're like, this is a hook.
No, but is under 19 vol too big?
Mm-hmm.
Going into a number this week too, right? Don't we have like an economic number on Thursday or something like that?
I know no.
I got in it. Jobless claims on Thursday.
I know nothing.
I know nothing. Who said that?
Sergeant Schultz.
Very good, my friend. Very good. Good job out of you.
I can't remember the actor's name.
I can't remember the actor's name either, but I could see his face like it was
like
he was standing right in front of me. For sure.
Yeah.
Yep. Well, even the S&P's up 450. Sadnov, we are set to open here in about 30 seconds.
Yeah, I'm a seller up around 10 or 15.
I think you're gonna have to be nimble.
I think you're gonna have to wait for them to goose it. I want to sell them here. I want to sell the NASDAQ right here.
I was extremely bearish last night. I mean, so
I know.
Close. I mean,
I know. No, I want to sell them.
Cards over here. I'm gonna get neutral.
I want to sell them. I got my finger on the trigger. I'd rather sell NASDAQ. It's not high.
You are a NASDAQ expert. I mean, so that's why you'd rather sell the NASDAQ because you are a NASDAQ.
I'm an right.
Don't you say I was all right?
That's exactly right. I'm a NASDAQ expert.
You are a NASDAQ expert. Even the S&P is up $1.75. Sosnoff, what are you thinking here?
Not impressed.
Not impressed. Nor am I.
Yeah. I'm going to. Oh,
you're going to roll some gold. Is what you're going to do.
Yeah, I'm actually about to take a little. I actually should have taken some off. I have my gold position's a little too big. So
you closed your ES. It worked out great. I'm only mentioning it for those people who didn't look on the follow page or see that you closed out of your ES, which is good. It's even lower now. You can make even more money if you missed that close by Sadnov or if you followed along yesterday on the bat call of the century.
It was not the bat call. Okay, don't take credit for stuff that you're not even in the same ballpark.
Oh my God, unbelievable! Actor's name was John Banner. That also comes from a Cracker Jack team behind the wall there.
John Banner.
I would never have gotten that in a million years.
Yes, no longer with us.
Gotten that. He has everything useless.
JJ might have got that.
He's good. I will give him that.
He's good. He's good.
He's good.
That's a tough one. John Banner, yeah.
Mm-hmm.
Yeah. There's a lot of Hogan's Heroes trivia.
Can't even remember your name half the days.
There's a lot of Hogan's Heroes trivia on the street, just so you know.
On the street.
Yeah, on the street.
Gold. You're trading a lot of gold per KY.
I'm not trading a lot of gold. What I'm doing in gold is
you just made 3 trades of the 5. 3 trades in gold of the 5 that you've made.
I know, because what I'm doing is taking some profits in gold.
Wow, a rare profit trade. Good job out of you.
Well, gold has not been good to us in.
No, it has not been good to me, but I conceded.
Let's take a look here. In 2025, I forget what year we're in. Gold has not been my favorite underlying. I'm looking at my GLD P&L, and do you want to know something? I'm going to go on a crazy little thing here. GLD in 2025 has been like one of my worst performers. Now, GC, on the other hand,
not bad, right?
Not bad.
Yeah.
Like, the crazy thing about gold and GC, gold and GLD is GLD, I've gotten killed in. And GC,
I know. Well, we did that market measure option jive yesterday or the day before.
Oh no, I got killed in there too.
Where we showed.
Oh, take it back. Gold. I was about to tell you that I did better in GC. I didn't. I did crappy. Gold has been my 2025 worst performer. I got caught on the up move originally from 3,100 to 3,500, and gold has been. I mean, usually when gold's your worst performer, you're doing pretty good.
Yes, because it's
So
not your biggest position.
Yeah, not my biggest, but gold has been my worst performer in 2025. First half of the year, I didn't look before this. Worst performing commodity gold, worst performing ETF GLD, worst performing commodity GC. What do you think my worst stock is for 2025? Worst individual stock. Worst ETF was GLD. Worst commodity was GC. So gold on both of them. And what do you think was my worst performing stock? You'll never get it.
Yeah, I was going to say it's going to be an obscure stock.
No, it's not obscure. It begins with an A.
Not Apple.
No.
Begins with an A.
Worst performing stock this year. Not.
ARM? ARM?
No. AVGO.
Oh, really? Oh, because that one big move. You weren't even big in there.
I know, but I got caught.
Yeah.
So that's usually when those are your worst performers, you're not doing too bad.
Yeah.
But AVGO is my worst performing stock for 6 months in the year, and GC and GLD are my worst commodities and ETFs. Best performer, probably. That's a fun thing to do, to see what's best first half of the year.
First half of the year, because the year is half over. So I don't know if you mentioned in the cherry bomb, it is half over, if you can believe that.
I know.
Dow down 96, even the S&P's red, down $1.50. NASDAQ up 20, and the Russell, strongest of the group, up 8. Let's see what some of the movers are while Sadnov goes through his positions here to the downside.
A lot of crap here.
FSLR down $8 and change. Double Dog down $8 and change. Goldman Sachs down $8 and change. JP Morgan down $6. Netflix down $5. McDonald's down 2.5. I guess they don't like this sandwich. CRWD down almost $2. Robux down $1.60. On the upside, you got AppLovin Sosnoff up $11. That's a big move and a big move in volatility. Earnings coming 8.6. Oracle up almost $7. Tesla up $5 and change. Coin up $4 with Bitcoin catching a little bit of a bid. 109.1 up about $500 from yesterday. Hood up $3 and change to 96 and change. PDD and Meta up almost $3, $2.80.
Okay, I've gone through all my stocks. Best performing stocks first half of 2025. You're going to be really surprised. NVIDIA, which is rare for me. Best performing stock, NVIDIA. Second best performing stock, Reddit and Tesla.
Oh,
okay. Best performing commodity. This should be pretty easy. Bonds.
Yeah, you and
haven't had a losing trade in there all year.
As of late too, you've been doing really
Still the
good.
one we have on now, but bonds. So that's my first half of the year wrap up. Bonds best, gold worst, and in stocks AVGO the worst, Nvidia the best, and ETFs now.
It's funny. Tesla / GC are my two favorite, my two best. The NPH and Netflix after that, and the worst UNH for me and Marvell.
I hate UNH and I hate Marvell. Oh, UNH. No, I take that back. UNH was good for us.
I didn't. You see, you stuck in it. I got money back, but not enough.
Oh no, UNH.
You increased your size. You did all the nasty things that you're not supposed to do, and it paid off for you. And I hate when that
happens. Yeah, UNH was good.
You didn't get penalized.
We sold premium in UNH yesterday afternoon too. It's up $1.70 today, and that trade's coming in.
Yeah,
pretty nicely.
Peter started the day down. He got a $300 ticket for speeding. $300 ticket for speeding, Peter. How fast were you
Who's
going?
Peter?
What's that?
Who's Peter?
Peter, one of my peeps.
Oh, got a $300.
Peter.
$300 ticket for speeding.
$300 ticket. He must live in like Canada, something like that. That's the only way.
$300 ticket for speeding would be. You must be going 100.
It had to be going fast. I'm going to ask him how much over. I mean,
300 is
a lot.
$300 must be 100. You were going 100 miles an hour.
I don't know, unless it's like his fifth offense or something like
that.
Oh
yeah.
Could be one of those things. It's not enough. If we go to the old office to pick up some stuff today, and you do have some stuff there that I need to get to your house somehow, do I have to drive through your neighborhood again? Because I get a ticket every time I drive through your neighborhood. Are you going to pay for the ticket this time because I'm actually delivering your stuff? Like if I come down for a free meal or something like that, or to play cards with you, that's on me.
Okay.
I take all responsibility.
Okay. What are you saying?
You're going to pay for it? Okay. What does okay mean?
If you don't have to drop stuff off at my house.
I don't have to drop stuff off your house. Oh, okay.
No. I got my truck here.
I just have to get it into your car.
You just have to carry everything.
Why don't we take your car in? And then we don't have to do one trip.
Because we might be taking tables and chairs. Maybe like big stuff, like file cabinets.
You're in trouble.
I know, shoot. So I just drive around with tables and chairs through the city of Chicago for the next month until we get to
we're storing them in your garage.
We're going to take a quick 90-second break.
You cleaned out your garage for this. There's all you got. You said you got lots of room. You got like a 3-car garage. You don't park. You don't need to park. It's the summer. You don't need to park your car in there.
We're going to take a quick 90-second break. I see how this is going to be.
And you're going to sell everything on eBay.
Oh, okay.
Oh, I got a guy for that.
You do?
Yeah.
Your goy?
My goy.
Your goy sells stuff on eBay?
Tickets, but yeah, he's good.
Yeah, a lot of Sasha's goy does that too.
Does what? Sells furniture?
Everything, like anything and everything. Like you'd be surprised. Garbage people will buy.
I mean, people are going to buy
anything.
Then we'll stack up your car. You'll look like a junk dealer. You're going to be Fred Sanford. I'm going to stack up your car like.
You make a better Stanford, though. I make the Sun a lot better.
Yeah, no, we'll stack up your car, man. We'll fill that thing up to the brim. You bring cords for us to.
I think I do have a couple bungee cords in there.
This is going to be a great visit.
This is going to be great. Sold. We're going to take a quick 90s. How about this? We are going to walk out. I'm going to tweet out what we walk out with. It's going to be one box. We'll be back in 90 seconds. We got more Tasty Live after this. What comes up next, Sadnov?
Your boy.
That's right, Chris Vecchio. We'll take a quick 90-second break. Let me explain.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Eddie in Texas, what's up?
I'm trying to determine whether or not I should actually feel experienced enough to grow my account. Been trading for about a year and a half, done all the homework, I'm not sure if it's just a market that I got lucky in the past 2 months.
Like, how many trades have you made?
This year so far, about 100.
Yeah, so if you've made 100 trades and it's working for you, then that's not luck.
No.
That's not getting lucky. That's being freaking smart and doing the right thing. Because you took advantage of an opportunity is not getting lucky. You made 100 trades already. You know, back when we started building this kind of software, an active trader made like 20 trades a year. What used to be 5 years, you've packed it into a few months. I mean, I wouldn't discount anything that you've accomplished so far at all.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day. Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Thomas, we are back, my friend, and you know what that means. Nothing makes this day more special than having Chris Vecchio in the house, and hear me out. Well, let me explain, too. What's up, Chris?
I'm all right. How are you today, Tony?
I'm doing good. Thank you for asking. I was a little verklempt here. I'm sorry. Mr.
Victor
Vecchio.
and I look pretty similar with the hair and the eyes and everything.
Yep.
How can we help you, Mr. Vecchio? What's going on today?
It's just a run-of-the-mill Tuesday here in markets. Is it a Taco Tuesday? I think that's the question on everyone's mind. We came out of this weekend with news of tariffs against Japan and South Korea, as well as Laos. Yesterday, the market was down a little bit thanks to those Laotian tariffs, Kazakhstani tariffs.
Laotian
here today,
tariffs.
we don't really.
Yeah, I get a lot of my stuff from Laos.
Laos?
Right?
Laos?
Laos.
Laos? You say Laos? I say Laos.
You say Laos?
Yeah.
It's L-O-A-S, isn't it?
I'm telling you, It's pronounced Laos.
Vecchio, you could be the tiebreaker.
And so we put all these tariffs on these countries, and the market's down a little bit yesterday. So
Hold it. You said Laos? Beth, is it Laos or Laos?
I'm not involved.
Ask Siri.
Ask
The
Siri.
worst AI?
Ask AI.
Siri, how do you say louse? I don't have Siri on my thing. Sorry.
Come on.
You asked your phone and you don't even have it?
I don't think I have it. I think I have it. I don't know where it is. I don't fucking. I don't use it.
Beth, I need you to Google it for me. The correct pronunciation.
Oh my gosh. Can you just talk to Chris, please?
No,
This is very important. I don't have any idea. I will bet you. Can we bet $20?
Oh my God! I got.
While research is on that, okay.
Can we have $20 on this? No, I don't waste my time here. Let me give you some action. I got no action going on. Can I have some action? $20? I didn't look it up. Beth, you gonna give it to us?
Louse.
Do it again.
Louse.
Beth for the win.
What is that?
Sounds like Lowe's. Lowe's.
Louse.
The correct pronunciation has
Louse.
Laos rhyming with house. Exactly what I said.
Louse.
Laos rhyming with house? Laos rhyming with house?
Yes.
Laos rhymes with house?
Yes.
Instead of louse?
Louse house?
Yeah, you.
Louse.
Seriously, how condescending and self-centered can you be not to admit that you're wrong?
You're wrong.
And you, Vecchio, I will remember, you did not side with me, okay? You think you have job security, but you don't think you know. You don't know what you know, okay?
Were we on the same side? We both pronounced it the same way.
No, he did not.
You and me.
Unbelievable. All right. Okay.
All right. Well, this lesson in linguistics aside, the market's wondering if this is going to be another Taco Tuesday. If you look to options pricing through the rest of July, you really haven't seen a significant movement on the other side of this. It's not like traders are thinking this is going to be a big deal. But it also brings up the paradoxical nature of the taco trade, right? It was back in April when Trump saw the bond market getting a little spooky, as it were, that he decided to reel things back in. With stocks at all-time highs, volatility sitting fairly low right now, having just passed this legislation, it seems like there's a lot of movement and availability to go to the downside here. So I question, because the market isn't responding to the news of the tariffs like we did in the past. Is this story dead for the markets here? Have we just completely moved past what Trump and co are saying, and we're just going to continue to ignore the noise here?
Yeah, because I think the markets. We've had this discussion the last couple of days, from Sunday night, yesterday, and again today. I think the market has deemed the whole tariff thing as not originally it was about uncertainty. So the reason that you mentioned the term taco trade, or the reason you talk about things in uncertain terms, the market is able to deal with uncertainty as far as pricing goes. And at first, it had to learn about it, and then it, absorbs all the information that it rationalizes it however it wants to, and then it prices things. I think the uncertainty has a long time ago turned to pure stupidity. Like, I really believe that it's not recognized anymore as something that is, it's not viable. It's just a stupid, PR tactic or marketing tactic. And so the market doesn't care. It really doesn't care anymore. So you can call it whatever you want. The market just doesn't care. It does not move markets anymore. Like a 25% tariff on Japan or 25% tariff on Laos, rhymes with house, doesn't matter anymore. It's not going to impact, none of this is going to impact markets, and the market's just going to do its own market thing.
Did I win $20 is all I want to know in this whole discussion.
I think the bigger issue for the market right now is what you mentioned, just kind of as a side note. I think that, at 112.27 or 112.25, where the bonds are right now, that any rate cut is off the table. I think it ties Powell's hands, pushes rate cuts back for a whole nother quarter if they stay at these levels, because I don't think you can lower rates when bonds are, a few ticks off their lows. So that's
we already know Powell's stupid, so he might do it anyway.
Powell is not stupid.
I'm just kidding.
The person that calls Powell stupid.
I'm just repeating
is
what I
stupid.
heard.
Yeah, but Powell's not stupid, and so
repeating what I heard.
Just quoting the president, Tom.
Just quoting the president.
Quoting the president, right? But Powell's not stupid, and his hands are tied right here. So I think you have two issues. You have that will cap the market a little bit. One is bonds right here. I just think that really does put an upside cap on the market. And I think the other one is the dollar. And I think they kind of go hand in hand, but I'm not, they for sure haven't the last couple of days. So I think those are the two biggest issues the market, those are the two biggest hurdles the market has to deal with right now. It's not tariffs.
Can we talk about the dollar for a quick second? That's actually one of the items I'd like to discuss here today.
Yeah.
A little birdie told me that it was something in your ear. Each week we have the CFTC COT report that comes out, positioning in the futures market.
Yeah.
This week it was delayed until yesterday because of the Independence Day holiday on Friday.
Okay.
But I ran the numbers on the latest positioning update for the euro and the yen. Right now, the net long position in the euro has a Z-score going back 20 years on a rolling basis. So the data set is July 2005 to present. The euro has a Z-score of 1.34. The yen still has a Z-score of 2.66. Okay, so yen positioning, net long yen positioning is still 2.66 standard deviations above its mean. These are very stretched markets right now. And
we agree with you.
Yeah,
we agree.
Yeah. There's an opportunity here right now. There's volatility in the yen, at least to me, is a little bit low. I've been buying yen puts for the better part of the last 2 weeks here, right around that 0068 figure.
I do not like it.
I know you don't like it, but let me explain, if you will. If you're looking at what's going on in the Japanese bond market right now, you're not seeing the situation typical of what's happening in the currency world, where yield differentials control the currency. Like with the British pound, you're starting to see how higher long end yields is actually hurting the yen, like it's hurting the British pound. And that's not dissimilar than what the dollar went through back in early April. So if you're entering a world where currencies aren't benefiting from higher yields and instead getting hurt by them, and they have extreme positioning on the table, they're prime candidates for a big reversion trade. And so the dollar has been beaten down. It's the worst start to the year in the dollar's history since Nixon took us off the gold standard in 1971. Stretch as stretch can be. And so if we're going to be playing, opportunities where everyone is on one side of the trade, I think right now, my point of view is you got to take these shots at long dollar positions, because if you're wrong, you're going to be wrong small. Everyone's already there. But if you're right, this thing could snap, and it can move very, very quickly as everyone shuffles out.
I could not agree more. I just think you're in the wrong. The only product that hasn't rallied is the yen. So why would you get short the yen? The yen's the same price as it's been when the dollar was 10% lower and the yen was the same price. Like, the yen hasn't moved at all. It's been trading in the 68 range the entire year. I know it got a little lower, I know it got a little higher, but 68 is like the mean for the year. It hasn't moved. Whereas the euro, it's just the euro, the pound, the Canadian dollar, they've all exploded. And this is a very different, those are very stretched markets, every single one of them. I like the long side.
They are stretched, just not as stretched as the yen by historical standards, for the record.
Yeah, I don't like
you're not going to find a Z-score north of 2 on any other currency right now.
I don't like that argument. I don't see it the same way. I really like the yen to the long side here, and I like all the other markets to the short side.
Well, I think it's long dollar either way. And, that ultimately brings up what's happening in some of the commodities. Gold, silver here, they've been taking a little bit of a hit today, but they've been resilient over the past week. I've been chopped up in gold the last few months just by leaning long and not ultimately seeing follow through to the upside. I'm curious, though, after seeing the gold-silver ratio jump above 100 and now it's sticking closer to 91, 90 in that neighborhood, do you think that there are traders to play a pairs trade within the precious metal space right now as we think about this low volatility equities environment making our way through the middle of summer?
it's really amazing how much that spread does move around. I mean, we got shorted way too early, obviously, and it went all the way up to 102, 103, maybe even 104 at one point. Now it's back down to 91. It's really moved all over the place. It's such a hard trade to get in front of because it's such a big trade. It takes no prisoners along the way.
When you're wrong, yeah.
Yeah, when you're wrong. I don't think it's enough of extreme here for me to get in it. So if you're asking would I buy gold here and sell silver, I don't think so. It's not interesting to me. We've been short strangles in gold and we just covered them. No, the long dollar play, short euro, short everything else, I like that. But the gold silver ratio getting long at 91, I don't like that. I'm going to pass on that one. The more interesting trade to me has all along been the bonds here. But I stopped buying them yesterday because I got nervous. I have a theory that I was going to talk about yesterday or today, but I'm going to hold off until tomorrow because I need to do a little bit more research because I have a crazy, creepy theory, and I don't want to bring it out until I can till I feel more confident in talking about it. But there's something weird.
Creepy is an interesting adjective. I've never heard you use that word before to describe something.
There's something weird happening, which I don't.
His vocabulary.
Something weird happening, which I don't fully understand, and I'm just researching some stuff to see if it's even possible what I'm thinking. That's all. That's with the bonds.
Can I share a fun story with you guys?
Yeah, sure.
Because maybe, sometimes we talk about things that are happening in the industry or the financial world writ large. Maybe it's not trading related, but has to do with the business of trading. In recent days, the Securities and Exchange Board of India has issued an interim ban on Jane Street and its affiliates in India and Singapore because the firm has apparently been running a deliberate and systematic manipulation of the Bank Nifty Index, India's stock market, via coordinated trades across cash, futures, and derivatives, according to the Financial Times. And so the SEBI is arguing that Jane Street on key expiry days, like specifically January 17th, 2024, they were placing these big purchases on the Bank Nifty equities and futures to inflate the index, while they were shorting positions in the index options, selling calls and buying puts, and they were unwinding and slamming the close every single day. So they've been banned. This obviously follows on with another different unrelated story that Jane Street apparently had been financing the purchases of AK-47s for rebels in South Sudan. Okay, but Jane Street has a different story here, Tom, and I think it's perhaps a defense that you would be partial to. According to Matt Levine over at Bloomberg, he says that this is not manipulation, this is arbitrage. Jane Street came in Friday morning and noticed that Indian retail traders were buying options on the Nifty Bank Index at much higher prices than where the index was actually trading. So Jane Street got to work doing what it does. It sold options to retail traders who wanted them and bought the underlying stock to hedge until the arbitrage closed. At the beginning of SEBI's window, the options were trading at a 1.6% premium to the underlying index. By the end of the day, that gap had closed. It's obviously very difficult for American traders to arbitrage here, but is this untoward to see a company, an HFT firm like this, doing this in a market that has thin liquidity and not as developed as its U.S. counterparts?
I have long, so it's almost impossible for U.S. firms to break into the Indian markets. And a bunch of our customers, we have a pretty big following in India. We have a big Indian customer base here in the U.S. So I talk to a lot of people specifically about this topic. I have long argued, besides the fact that the Indian markets are closed to outsiders, which they really are, it's almost impossible for U.S. firms to break into that marketplace. I don't even know how Jane Street got in there. But our experience with Jane Street is they're a very reputable, honest firm. Like, we've only had good experiences with them as a high frequency firm in the U.S. I have felt for a long time that the Indian markets, without having high frequency firms participate in their markets, is one of the reasons why their markets have a lot of volume on crappy little indexes, but no real, there's no real depth to their marketplace. They're not really tradable. They're very one-dimensional products. The Indian marketplace needs HFT market making in order to really grow their business. Jane Street was like exactly what they needed. They need Jane Street, they need Citadel, they need every big market-making firm in the world to participate in the Indian markets, and then their markets will explode. Their regulators do not understand that, and their regulators do not understand index arbitrage, and their regulators don't understand scale, multi-product scale, like basically just positioning. I have no doubt, and I've read a lot about this. I have no doubt that Jane Street took advantage of the inefficiencies of their market. And I also have no doubt that Jane Street did nothing other than trade kind of what was there. In other words, they just used the technology that drives US markets in the Indian markets. That's all they have.
All right, so hold on a second. You mentioned it yesterday. You're talking bonds with Chris right now. You had this super secret bond idea that you
This has nothing to do with that.
Well, can you give me your super secret bond idea?
What does that have to do with this? We're talking about this.
I know, but can you give me what your super secret bond?
No, because we're talking about Jane Street right now in India. Because it's a really interesting case. Because this case, I'm glad you brought it up. Because this case is what's going to lead to the growth of trading all around the world. Because the problem in India, which has the closest thing to like an SEC environment and is potentially closest to our markets, volume-wise and everything else, plus they have, 1.6 billion people, and everybody likes to manage their own money. India, to me, is the place that needs to blow up like the whole financial space to go global. The problem is, and I've done a seminar there, 2 seminars there, and I've talked to the head of the exchange in the Bombay Stock Exchange, and lots of different brokers over there. They need efficient markets. They need people to be able to make markets in order for people to trade those markets. And this is the key to their growth. And they do not get it. And now they're kicking Jane Street out. So that, again, that goes back to a closed market environment, and they want to go backwards, not forwards. I think it's a huge mistake. And I think the regulators are making a huge mistake. And I think it's going to set the Indian marketplace way back. When they all figure this out, they're going to understand that the only way to grow is through efficiency, and you need market makers to do that. They do not have market makers. So I'm agreeing with the guy from Bloomberg, and I'm agreeing with what Jane Street said. And this is not, they didn't do something illegal. They just made markets, and they took advantage of arbitrage opportunities. There's nothing wrong with somebody wants to buy something, you sell it to them. And if you want to buy the underlying index, you buy it. It's only 50, in most cases, only 50 stocks there. It's a simple arb. They just don't.
Right, it's only 50 stocks.
Yeah, most of the indexes are on their Nifty 50, whatever. But so you just buy the index. But they only really have like daily and weekly options. There's not really any much monthly stuff trading. It's very, you can't spread anything. It's really limited what you can do there. So their pricing skew is all messed up because customers over there, you can't short anything. So all you can do is buy. So you got this crazy pricing skew on all the out of the money options, and all Jane Street did was just whack them all because they could buy the underlying stocks.
I mean, it was no different than what some of the companies were doing during the GME saga, right? Like, if people want to buy the deep out of the money options, happy to sell them to you.
Well, yeah, but the problem is that people in India have very small accounts, so nobody can afford to buy the underlying stocks or the futures. Like, and you can't short. It's almost impossible to short something, and you can't do spreads. There's all these crazy rules. Like, you can do them, but they're just one side doesn't offset the other side. There's just kind of, the rules are a nightmare. You know, we've argued with the regulators there for a long time. It's really hard. I'll just leave it there. You brought up a really good topic because in order for India, China, South Korea, in order for Europe to figure out like how to compete with the US, they need really strong market making firms that can step in and make markets. And it doesn't exist yet.
You're here.
Yeah, we've been following this case. It's very interesting.
So what's the bond trade, Tom?
You'll find out there's no trade. The trade is you got to be long bonds. The trade is you got to be long bonds, but you can't buy too many of them because I've got an ugly feeling about something, which I don't usually have.
That's the super secret thing that he won't tell me.
Yeah, because you're not the right
Tony,
person to have this debate with. What?
Oh.
I'm too stupid, is what he
No,
just
you're not
said.
too stupid. It's just that I want to have
Intellectual debate?
I want to debate it, and I'm thinking about I need to do more research.
So he's going to have
5 down days in a row
explain
in the
tomorrow.
bonds. We don't see 5 down days.
You rarely see 5 down days in the
Right.
bonds.
Last time you saw that was back in April when they made lows.
Yep. But I mean, they traded once. They're only down 116 to 113, basically.
But they're about 9 or 10 ticks off their lows. This most recent move.
Yep.
Even the S&P down 9.5.
I know they looked
Missed it.
ugly.
They shook me out.
They looked ugly all along. I thought they looked ugly.
I don't know how ugly they looked with volatility, but volatility's not always right.
I know volatility wasn't right at all today.
Yep.
Right.
Yep. So far, you.
All right. Thanks, Mr. Vecchio.
Thank you, Mr. Vecchio.
Ciao.
Are you team Bad
Yes, sir.
Vecchio or are you team Tom?
Don't answer
I'm Team
that.
Tasty.
Let's take a quick 90-second break and come back. We got more Tasty Live with a market measure next. Good answer.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live. That's right, with a market measure. Even the S&P's down 675, so down 7 now. NASDAQ down 7 also. Russell down 890. Dow down 135. That's your big mover to the downside. Obviously, the Russell being green as you move it to the upside. Volatility, big mover, down 64 cents. Really screwing me up on this down move. I don't think it's going to hold, but that's just my personal opinion. Bonds down 9, catching a small bid, although they're down 9. So you say to catching a small bid after this 5-day move lower from above 115 to flirting with 112. The low was 112.21.
The only stock that you might want to do something, Intel, are you short any puts in there?
You know what? That's where good traders
go to die.
Yeah, Intel, you want to short puts?
No, I want to cover my short puts. It's up $1 today.
Good job out of you, Intel.
That's
makes sense.
Nope, I want to cover my puts. Is that okay with you?
Oh, that's okay. Cover them is good. I mean, Intel hasn't had a downtick until recently.
Yeah. No, I mean, we sold puts the other day. It's worked out nicely.
You bought it back for 43 cents. Would you sell them for 80 cents?
None of your business.
None of your beeswax.
None of your beeswax.
None of your beeswax.
That's right. None of your beeswax.
Oh, nobody can poop like an elephant. A bird, like my man.
Like my man. Yeah. I'm gonna make one more trade and then I'm gonna be done with you. Hang on one second. All right, let's do this.
Okay.
Give me one more sec. Perfect. Anyway, it's 9:13. And
yes, it is.
The Bat and I are going to do a market measure sponsored by SIBO. And happy to have you guys all on board for this. Then we have Scott coming in, which will be fun.
Scott's been on fire lately.
Before we do that, a quick little reminder. Dr. Jim's going to be in Boston this weekend. So if you've never seen Dr. Jim, I mean, everybody has to do it once, right?
I guess so. Sure. Why not?
Once in your life, you got to go see Dr. Jim. So if you've never seen him before, he'll be in Cambridge, in Boston, at the Sinclair on Sunday night. You don't need to watch Sunday night baseball. Trust me. So go see Dr. Jim. Sunday night, doors open at 5, show starts at 6. We should have a great crowd. It'll be small, it'll be intimate, it'll be fun. It's Dr. Jim's first live event this year, and go check him out. If you haven't signed up yet, go to tastylive.com/events. tastylive.com/events.
Please. He'll cry. You don't go out there.
He will actually cry. I've seen Dr. Jim cry before. It's not pretty. All right. Let me just see what we got. We got a little Houston, we got a problem. Let's see what we got today.
Beautiful. By the way, 20 miles over the speed limit, $300.
Where is that?
Canada.
Oh, Canada. Oh, Canada.
Oof. And that's negotiated down.
Canadians.
They just waited for him at his house. They didn't even like pick him up. They just got him on radar. His house. Wait for where he comes from.
I hate radar. I hate photo speed tickets.
The camera. Yeah, we have cameras here. Yeah.
Yeah, it is the absolute worst.
Yeah.
They get you, and you like
not to get bad drivers off the road. It's just to ding you for the ticket.
It's just a revenue thing.
Yep.
Yeah. They do that in London. They do that in different places around the world.
London is 20 miles per hour.
I know.
That's
They
the
do
speed
it.
limit. I mean,
They do it in
walk
different
fast.
places
Well, not
around
you,
the
but
world.
most people.
In Chicago, they only do it on the city streets and like school zones. Bad.
City streets and school zones. That's just
City
all of
streets
Chicago.
in school zones.
Nah. They do it other places too.
I don't think so.
The one on Ashland I always get. I don't know what school's there.
School zone.
Is it?
Yeah.
School right there?
Yeah. Yeah, Catholic schools all over the city. Every
schools don't count.
Every 15 feet, there's a local parish school. You know. All right.
As for told, Nasdaq up 6.
Yeah. Nasdaq up 6. I need some trades. Tomorrow, what's your assumption? tastylive.com/assumption.
Mm-hmm.
Man, I need some trades.
Mm-hmm.
All right, let's do it. Do it. Back to all-time highs.
Back to all-time highs.
Yep. Let's see what we got here. Market measure by the team today. The SPX has reached 6,300. Right now, we're pretty close. The S&P futures are 6,275. Time of this writing was 6,300, hitting new all-time highs and surpassing February's record by 1%. Market has climbed back from a 19% decline in less than 3 months, one of the quickest recoveries in recent history, percentage-wise.
Mm-hmm.
Let's take a look at the next slide. The recent rally has lasted 86 days with a 23% gain from bottom to top. The largest downside interruption during the rally was 6% from April 9th to the 21st. The rally, 86 days, 23% after a 6% pullback. All right? This is we're setting. We're giving you a little context here. What? Say it again.
And they say they would take the elevator down and the stairs up, not according to this.
Let's go next slide. So how does this rally compare to other significant ones from an historical perspective? To find similar events, we set up criteria as at least 20% market gains in 2 months, never any downside interruption larger than 6%, and no overlap in any 30-day window. We're just trying to see where this rally stands historically and maybe what's next.
Mm-hmm. Mm-hmm.
Let's go next slide. So, believe it or not,
I can't believe there's this many.
I know. We found a total of 11 occurrences since 2005. The yellow triangle and the green star represent the start and the end of the rallies. The red triangle represents the bottom of the interruptions, which are greater than 6%, ending the rally in our definition.
Well, this is, illustrating that V bottom that we've talked about, all the time.
11 times, though, in 20 years is a lot. Feels like a lot.
Yeah.
With all these criteria. So it happens.
Yep.
Let's go to the next slide. So the magnitude of the current rally on a percentage basis is still smaller than average, but it hasn't finished yet. This is the third quickest rebound from market bottom of all the occurrences. Only 2009 and 2020 were stronger. 2009 was after the meltdown, and then 2020 was after post-pandemic. So you have the information, all the kind of details right in front of you. High, the low, the median, and then the duration, the pullback that ended the rally, and then the duration of the pullback. Lots of cool stuff. Let's go to the next slide. So the next thing we're going to do is we're going to examine the VIX change. No, go back right there. So we're going to examine the VIX change during the market fall that preceded the rally. This VIX jump was the third highest and the quickest after 2008 and 2020. Let me tell you something. This VIX jump in April was ugly.
Oh, it was.
So you can say whatever you want. Like, it's not,
easy to look at on a graph, a chart, looking back in time, motions not
and go, hey, why didn't we catch this? Look how simple this would have been.
Sure.
It was not that easy.
Right.
2008, for those of you that weren't trading in 2008 was brutal.
Mm-hmm.
It wasn't like the vol just exploded. It was like the vol just exploded. The world was coming to an end. It took 6 months for the market to turn around. And every day it looked like it was literally the end of the world.
Right.
2008 was so ugly.
I even used the word scared.
Anybody that was long in 2000, by March of 2009, they had huge, you know what. In 2020, that sell-off was so ugly. First of all, we all thought we were going to die. Second of all, we all thought everybody else was going to die. Third, we had no idea what to expect. Everybody was stuck at home. Everybody was in front of a computer. And that sell-off of 30, it was from 3,300 to 2,200, which is over a 30% sell-off in less than 30 days.
6,300 now.
Yeah, but this is in less than 30 days or 35 days. That was brutal too. So that makes this year look pale and look like nothing in comparison, but this was ugly too in April of 2025. Let's go next slide. So in 20 years, this was the third largest sell-off. However, the current market rally has seen the highest and quickest 36-point VIX decline in a 90-day rally window, much faster than 2020 and 2008. Why do you think that is?
Oof. Just because the price being so much bigger?
No, this is just VIX, so it's not price.
Oh, VIX.
Yeah.
Oh, yeah, you're right, VIX. Information disseminating faster?
Yeah, I think so.
I mean, I think that's about
I honestly think so. I think that just everything happens at a pace today that we couldn't even imagine in 2008. And I think that things just happen today at just such a faster pace. The level of patience, the level of dissemination of information and how quickly things happen, and just, people trying to jump the, jump the news, jump the gun, whatever it is. I just don't think you're going to see anything like 2008 ever again. I think it's all going to be fast like we're seeing now. This 36-point VIX decline, crazy, but it was really fast. Let's go to the next slide. If we expand the rally window to 365 days, the current VIX decline range is the second largest after 2020, but it's still the fastest one in the past 2 decades. Like, just showing you that no matter how we slice it up, the most recent VIX decline, which fit the Tasty methodology really well, it's never easy.
Yeah, of course not.
So hard. Let's go to the next slide. So, some of the takeaways. The ongoing rally has been strong and very smooth. I don't think anybody would argue that this huge run-up has had too many bumps along the way. Maybe last couple of days, the first
time after making new highs.
Yeah, totally agree. Right. With only minor pullbacks during the upward move. The rally represents the third quickest rebound from the market bottom in all similar occurrences, only after 2009 and 2020. And the VIX decline during the market rally was one of the largest and quickest under both shorter term and longer term durations. So we saw here was very rare, was extreme, but it also played into the hands of kind of what we like to do.
Good job.
But I think Tony and I both think we're extended here and very nervous about
I do. I'm just
the tape action here.
And EMS down 11 is about as low as they've been since we've been on the show. They've been $10 lower than that overnight, but volatility still down about 56 cents. I mean, you got one of those days today where they're fighting with each other, bulls and bears. We'll take a quick 90-second break and come back. We got more Tasty Live after this with Oh Joy, your friend and mine, Mr. Scott Sheriff of Tasty Trade World Headquarters. Me found these messages back in 90 seconds.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
I got my Ted Lasso.
You actually have pants on.
Yeah, of course. I'm in school.
Huh, got it.
You're flexible.
It's cool. Yeah.
Oh, nice. You are pretty flexible. Let's see you get that leg up again.
Oh yeah, he's really. Right now, my other leg is cramping.
I believe that to be true.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Look who's backtesting. Tasty Trade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at Tasty Trade.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
I tend to call myself a lonely options trader because I really don't have a lot of people that I can share stories of wins and losses with. Like Tasty Live plays the whole day at my house. I love that they've made everything really easy to digest and take in. I love that you can easily send an email if you have any questions and Tom will be quick to respond to you, or if somebody else, Nick, Tony. I really enjoy that it's a customer focused and it's a customer centric system that you guys have here. And Tasty Live has definitely changed my life financially because I'm able to determine how and where I can make my gains and not be a passive investor where you're just relying on the markets to do something for you. You could actually go out there and do it yourself.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means. Enough out of you. That's right, Tasty Trade World Headquarters. Your friend of mine, the very popular, although he did put a sign up at Wrigley for his wife's birthday, Mr. Scott Sheridan. How are you, kind sir?
I'm excellent, thank you. I hope you're doing well.
Tasty Trade World Headquarters, and by the way, we're going to get the naming of the studio soon. It's not the Scott Sheridan Studios. It's right there on the bottom cherry one.
Scottish haggis, what's that?
Oh my God, you never had haggis?
That's something Tom eats.
Hold it, have you never had haggis?
It sounds like an old lady. What is it? No, I've never had haggis. What is it? It's in a can, so
yeah,
it's got finest ingredients. Hold on, what's it made of? First ingredient, water.
Yeah.
Then lamb.
Yeah.
Oh, lamb hearts.
Yeah.
Oats. Pork fat, lamb liver.
Yeah.
My dogs would destroy this.
Oh, dogs would
destroy this.
Haggis is like number one on the.
Oh my God, they would eat
on the
this
hit parade.
Where do you buy haggis? Where does one get it?
It was given to us. It was a gift.
Scott, yeah, it was Scott, one of our Scottish.
Well, can you get it here?
I'm sure there's places.
So here, I like they give serving suggestions. 1, do not serve. That's the first suggestion.
No, I had haggis like
empty can into a microwavable dish and break the haggis with a fork cover. Oof.
Right.
We'll put that back.
So I had haggis 3 ways.
I had Ann haggis 3 ways. Go ahead. How
you
did
had
it happen?
haggis 3 ways. Let's hear.
Haggis 3 ways.
Fried. Is it like Spam?
Yeah, a little bit. So we had
said like some bougie restaurant haggis 3 ways. They gave it to you. No, that's what it sounds like, doesn't
There's
it?
no bougie.
You definitely were not a diner.
Can I just say something in Scotland? There's no bougie restaurants. So we were in a bar. We had dinner in a bar restaurant. You know,
Sounds like the beginning of a joke.
That was good.
We're having dinner in a bar and haggis walked in.
So one of the appetizers was haggis with with like a dip, like not like a yogurty dip. You know, like you dip the haggis balls. They fry them, and it was.
This is like Spam.
But it's their own. It's Scottish. Anyway, so you dip the haggis in the.
Somehow I have a feeling after this conversation I'm going to have no other idea what haggis is.
Right, correct.
So anyway,
you will not know anything other than.
I'm not going to learn.
Other than the dogs would love it.
It's like liver and some other stuff.
Heart.
Yeah, heart, liver, whatever.
Yeah.
Anyway, so the first time I had it was
your cardiologist would be thrilled.
Right. The first time I had it was as an appetizer, and then it was like haggis, fried haggis, whatever, and with dip. Second time I had it was the next morning.
Oh, so 3 ways wasn't at one restaurant. That's the way you presented it.
Right. The next morning.
Right?
I learned it wasn't at one restaurant. That's what I've learned so far. Go ahead.
That's what I thought. So far you were saying haggis 3 ways.
Breakfast the next morning.
So instead of bangers and whatever, you went with haggis.
But since we're in Scotland.
They don't do sausage?
Full English breakfast had haggis.
Why wouldn't they call that a Scottish breakfast?
Full Scottish breakfast.
Okay.
Full Scottish, but they don't call it.
It's a great story. Go ahead.
Full Scottish breakfast does have haggis. So I had haggis. That was my
That's the second way.
Second way.
Third way, you went for dessert. And they had haggis ice cream. You're like, hey, let's do it.
Third way, we were at a place and we had it on
toast.
No, over like mashed potatoes and gravy. It was pretty good. It wasn't bad.
There's no way you liked it. You did it just so you could come back and tell us.
Let me tell you something. When you go to Scotland, okay,
there's nothing to eat.
You don't order the Dover sole.
Why not?
Because that's what you would do. Like it's not what
you know. Next Thursday, Tony, you want to come?
Sure.
Okay, I'll make it for 7. We have 6 right now. Went from 5 to 6. I can make
Next Thursday is the 18th or 17th?
17th. Going to Joe's. Slapping our.
Yeah, no, you invited me to this.
Slapping our bang.
I'm
getting a Dover sole. That's the point.
The B team invited me to dinner.
Oof.
But there might be some B team members might not be able to make it, so they might reschedule it. So can you pencil me in?
I gotta see. I think the 6 could make it for 7 instead of 6. You could be in.
I got a contact there. I got the guy on the payroll.
Yeah, I know.
Yeah, but I pay more than you.
You do.
So
we have more history, but you pay.
You have more history, but I get the guy way more money than you.
Yeah, that's true.
I get him boom like this.
That's true. But anyway, I'm ordering a Dover sole.
Nobody orders a Dover sole.
Don't do the Dover
Don't embarrass us.
I can't go.
But you won't eat it. You won't eat it because you're gonna be like nobody.
Eat a Dover sole.
Well, then how do you know if you like it or not if you've never?
First of all, Dover sole, it's like You might as well.
Your grandmother has to order it.
It's like
Nice,
my
they do
grandmother.
Table
would order,
fillet,
like,
they fillet at tableside. It's nice.
What is it? You know what it?
Right, Beth?
Yes.
You know what it tastes like?
The brown butter sauce that you get on the side.
Nothing.
It does
tastes
taste
like-
like nothing. He's right
It
about
tastes like nothing. It's the least interesting thing ever.
That is,
anybody's
it
ever
tastes
ordered.
worse than a whitefish. Just a.
No, it's not worse than a
I mean,
whitefish
if you,
at the country club.
If you went back to like 1980, for you, it had to be, 1978, 79.
Yeah.
And you were graduating high school and you were trying, because I
81.
saw pictures of you back in the day.
81.
You were trying to get some, okay? And you took your date out for Dover Soul, then maybe I could see it. Like, like 78, 79, high school kid, Dover Soul, they do it at your table like that, maybe get a little kepi, then you're fine.
Not today.
No.
Well, now you need to come. Who's this B-list? Because I'm telling them to move their dinner because you're coming because I'm ordering
who's
Dover
the
Soul.
B-lister?
Who's the B-lister?
Butchie,
Oof.
Rye Daddy.
Oof.
Oh my God!
Wait a minute.
This
You're
is a
still
makeup?
wait.
This is a makeup club.
Wait, you're still talking to Bri Daddy after not inviting you to the wedding?
I don't hold grudges. I'm not that kind of
Oh,
guy.
oh,
You definitely are going
where's
to bring
this
this up.
Where's this
I'm
dinner?
going to strangle him when I'm there. I'm inviting him to dinner.
Wait, either Carson's or EJ's.
Where's the dinner?
I haven't decided yet.
EJ's.
Because one of the guys who likes to use coupons is coming. We can go to some other restaurant.
Jules?
I am not mentioning names. I'm not hating on anybody.
Because I might switch with the. I might have to see who pays me more to show up.
I know.
I have a special guest though coming to the other dinner.
You do?
Yeah.
I broke the rules. I invited a special guest.
Yeah. I told you, went from 5 to 6, and you'll be
I
7.
invited a special guest.
Doesn't live in town. Doesn't live in town anymore.
Doesn't live in. Oh, I remember you told me. The cheese.
Yeah.
Yeah. I can't come now. I just remember cheese is coming.
Like this. Tony.
Chuck E. Cheese is coming. I'm out. I'm out. No, I'm sure. No, I love Chucky. I'm just teasing.
Love Chucky.
Wow.
Love him. Has anybody ever said that about Chucky? I don't think.
I have.
Have you?
Well, Chucky, he's seriously the best because when he just gets on a roll.
Oh, he can eviscerate somebody.
Oh.
Yeah.
Oh, and if we get it, getting into a politics, oh my God.
No, I love Chucky.
Oh my God, the best. You just give him a little one of these on the political side.
Oh, I'm sure.
Oh, once I get Chucky going.
That's it.
Oh, there'll be no stopping him.
Oh my God, I love
You
playing.
think we'll play credit card roulette?
No, Steve and I are paying.
Oh, I can't go then. Thank you very much.
I said we'd love to have you for dinner.
Very nice of you. Very nice.
You wouldn't offer.
I think Steve actually invited me too, so I appreciate that. It was very nice.
They're gonna invite you to help them pay.
We got this. We can do
It's
this.
his birthday.
Whose birthday?
Oh.
Ooh, it's your birthday?
Birthday is Saturday.
This one?
Yeah. Keeping it low key this year because I know you guys.
Where are you guys gonna go Saturday?
Well, you're a year and a month older than me. Born in 62?
Yeah.
Yeah.
So where are you going for the birthday dinner?
John Mayer.
No. I think we're gonna go to the place that you hate, you love, Lake Colonial, but up north.
Oh my God, that place sucks.
No, you can't.
Why?
No. That you can, in Lake Forest?
Yeah.
No. I've had multiple people tell me not edible.
First of all,
not edible.
Right now, that place in the
I've
city
only been
sucks.
once, and it wasn't a great experience. I will
See,
see that.
I've had
In the
multiple.
city,
It was
it
me.
sucks.
Here, so the Tooch gave Tom the. I'll go to the end of whatever the steakhouse. That one.
No, go to any place other than that. That place sucks. I mean, that's embarrassing.
It's so.
The food's so bad.
Wait a minute. Are you bringing
No, just the two of us.
just the two of you?
Yeah.
Come
Maybe
to
that's
the-
Sunday, actually.
Then he gets the night off.
Saturday, I'm doing the family thing.
Oh no, Sunday you got to do the show. We're missing one person.
Are we?
No, just kidding.
Oh,
On your birthday?
I would do the show. I mean, listen, I've worked Father's Day, Mother's Day, every other day. What difference is my birthday?
I would come to the city. Go to a steakhouse.
See, I've been to the city twice in 2 weeks already.
Oof.
No, I know.
That's a lot.
Yeah,
for
it's
a
a lot
non
for me. It's
for
a
a
lot. I get a
non-city
lot of the
person.
city. I get a lot of the city.
Yeah.
Traffic coming back is
Oof.
a biatch.
Honestly, we don't want you in the city.
It's people like you that cause the traffic.
Yeah, I know.
I know.
We don't like when the suburban.
Like if
guys
you
that can't
stay in your
drive
zone.
come down to the city.
I
Stay in your own zone.
I like my own zone. I like my own zone. I got to take you to where I'm going on Saturday with the family, Countryside. Countryside Saloon, I think, has the best.
Is it like country? Is it?
What is it? What kind
pizza
of food?
joint, like bar
Never heard of
pizza
it.
joint.
Never
Where
heard
is it?
It's excellent. It's Excellent. Countryside Saloon in Des Plaines. I know. Don't relax.
Countryside Saloon in Des
Countryside
Plaines.
Saloon. Awesome pizza. Tavern style pizza.
Better than Barnaby's?
Yeah, I think so.
Oof.
I think so. Barnaby's is different.
What's happened now? Tavern style pizza has absolutely exploded. Exploded.
Way up. Yeah. Because
everybody
people
has
don't
tavern style.
understand
Why?
that deep
I don't know.
dish pizza is not what Chicago.
But it's just
I
pizza.
love deep.
But it's just pizza in like tavern style. Like we go through phases. We had a
Portnoy.
What is it?
Sadnov hates it.
No, Portnoy doesn't like tavern style.
No, but he's brought it out to the forefront.
He doesn't even like it. He always bitches
He
about it.
doesn't. It's not his thing because he grew up on New York style pizza. You send somebody to a tavern style pizza from New York, they don't like it because they're not used to what it is. They're not appreciative of it.
I'm okay with tavern style pizza.
I love tavern.
See, you too, you and me. I'm the same way.
I'm okay with it. I
I
just
love
don't
it.
care about it that much.
Yeah, I agree with
It doesn't do anything.
you. You like it because
Love it.
yeah, this is because you're here.
'Cause you're a
born and
Barnaby's
raised.
guy.
My wife loves it.
That's it. Because if you grew
Here it
up
comes.
here,
Makes sense. Tavern style pizza,
if
chopped
you
brisket,
grew up here-
Dover sole.
if you grew up here, you like tavern style pizza.
Exactly.
We just
My
eat it
point.
because it's natural to eat pizza.
Right. Right.
Like if I see
Breakfast,
pizza,
lunch, dinner, it doesn't
I eat
matter to me.
Right. It's normal. It's okay.
I tell you, there's some really good ones that have come out. Dicey's.
I know.
Dicey's on Chicago.
I haven't been there yet.
Pizza Michi, I didn't think was as good as Dicey's, but people tell me I'm crazy. It's better. Zorella's, great.
Haven't been there.
Telling you.
Middlebrow gets like all these.
Not even close.
I haven't been there either.
You only go on Tuesdays. That's the only day they do the tavern styles Tuesdays, and it's not even close to the other three.
Haven't been there.
Just telling you.
I don't go out for tavern style.
You don't go out.
I go out.
You go out.
I don't go out for pizza that much.
Okay.
The only place I go is Spacco Napoli.
Yeah, but that's
That's
good.
not
but
tavern.
That's not tavern. That's the,
that's Neapolitan.
Yeah.
Yeah, I know.
It's good pizza.
Yeah.
Hard to get in, but it's good pizza.
Yeah, but they have a gluten-free pizza there. That's
Oh my God, that's the reason why you go there?
yeah. It's
Well, not for
Oh
him.
my God.
For the
not
So
for
she
me.
has to have gluten free?
But she can't eat dairy.
She's ruining your pizza experience?
Yeah.
Give it a back of your hand. Kick her out.
Yeah, but she doesn't eat dairy.
I thought you were going to say something else for a minute there. She doesn't eat dairy.
Wait a minute. What does
She doesn't even shut the front door.
Wait a minute.
No,
Because I know she does. I mean, I was going to say, where'd you
she
get your
eats
information?
Omaha.
Well, she does eat dairy?
Yeah.
Because, I mean, like going for pizza with like Ira, where you get like a patty, where you get like a gluten-free pizza with sauce.
Gluten-free pizza.
Oh, she doesn't eat sauce.
She does eat sauce.
No, just the pizza with the
Can she do what? Like
doesn't
white
put-
pizza?
yeah, white pizza.
Okay.
What is, I mean, I know she's Irish and everything like that, but how Irish could she be?
I'm just telling you. So
I mean, all these years
I have to
with you,
work
I
with what
mean-
I've been given. That's all I got.
No, you've been given a lot.
Wow.
Right. So I can't go to like Pequods with her.
I get it.
I got to go to Pequods with other people. Like,
Said Shark to Pequods, he loved it.
Or will she give you the, if that's where you need to go, I'll find somebody else have a salad?
to where?
Pequods.
No, I wouldn't. Why would I take her?
Because she's your wife?
No, I would never go to. No, it's not how it works.
Wait a minute. You're going to use logic, Tony?
Don't try to use logic to win an argument. It's futile.
No.
The worst.
I love Pequods, but I just go with other people. And Pequods, you got to go there.
You have to eat it there.
You have to eat it there.
Totally agree.
Totally agree.
Totally agree.
But I'm not a Pequods person. But you do have to eat it.
You got to eat it there. When you're there, it's great.
Yep.
It's not great.
It's great.
It's not great.
It's great.
What do you say is great?
Pequods is great when you're there.
Pequods is great when you're there. I agree with him when you're there. No, doesn't
Great.
travel. Like
Doesn't
most
travel.
pizzas don't travel the best.
Art of Pizza travels.
Art of Pizza. Art of Pizza is outstanding, but he always orders the wrong one.
Because he doesn't understand pizza. He grew up here. He doesn't understand anything.
Oh my God.
You always order the wrong one. You know you do.
He orders the wrong thing everywhere.
I don't order.
You know what?
I don't.
I'm sick of you.
Me too.
I'm not a
You're an
stuffed.
embarrassment.
I'm not a
What
stuffed.
embarrassment?
I'm a pan or a thin. I'm not a stuffed person. I mean, I'll eat it if that's my only option. Okay, so you guys can say fat to the tavern style. But if I go, you know what, like if it's there, you'll eat it. But if I say if there,
I said it. Sadnov stayed strong.
But if it's there, I'll eat stuffed. You go, yeah, because you don't know anything about pizza.
True Chicagoans
Yeah.
don't eat deep dish and stuffed pizza.
I do.
You're
You're not a true Chicagoan.
I've been here 45 years.
You're not born and raised here.
Yeah.
You were
ruined before you got here.
Just like
you were damaged goods.
So we like it. We like it.
I like it.
Did you ever go to GGO's in Evanston? On Davis? By the train? It's been there.
No, but I've heard about it.
It's been there. It's got to be close to 60 years.
Yeah, I think Steve told me about it.
Solid.
Yeah,
Stop it.
Slappy says he likes it.
Stop it and grab a slice.
Yeah, Slappy likes it.
Then you go to Benson's Bakery across the street.
I've had their stuff. Very average.
GGO's?
No, Benson's.
Italy is very average to him. I mean,
Yeah,
everything is. So if he says it's very average,
I mean, Italy. What? The pizza I had in Italy this time was really good.
The $90?
No, this is just
$90 pizza. What was that?
This was a little
so you could get
pizzeria.
some? Like what if I paid $90 for this pizza? You got to do something. Help me out here. I'm tired of doing it myself. Help me out here, please. $90 for a pizza, $50 for your Caesar salad, for crying out loud. We're in the land of Caesar.
Pizza we had
should have been free. Caesar salad should have come free.
Should have.
Should have.
Considering what it tastes like, it should have been free. But the pizza we had was great. The food. Yeah.
He's just, I can't stand him. I can't stand both of you, actually.
Oh, that's a me or him. Now
I love you both, but I can't stand both of you. I've come to that point right now.
You are the only person that I know that has gone to Italy and said the food's mediocre at best.
It's mediocre. I mean, we went to one great restaurant in Milan. Granted, great restaurant. All the other meals.
Just with your boyfriend? You went with Dylan?
I was with Dylan and a few other people. Great restaurant. But was it as good as Monteverde? Not even close.
I'm
just saying,
So it wasn't as good as the best Italian restaurant you've ever been to?
Wasn't as good as the best Italian restaurant in Chicago. Yeah.
Is it a Michelin? They have a Michelin?
I think she's got one. I think it is.
The one we went to could have been.
No, Monteverde.
No,
I think it's the
Monteverde.
one.
Oh, what's the one?
Okay, so it's not as good as a Michelin star Italian restaurant.
Oh, I've been
seriously.
I've been to.
You're no
I've been
longer
to 2-star. I've been
You're
to
number one. I hate you the most. Okay, so there.
Oh, thank you.
I've been to 2-star.
I'm 1A or 2.
Oh, you 2.
Okay.
I've been to 1 2-star Michelin Italian restaurant in Sicily.
How was it? Fair.
It was fair.
Oh, he's so obnoxious. He's so obnoxious.
It just rolled
I
off
have
his
a hard time looking
It rolled off his tongue.
I really do have a hard time looking at you. I remember you when you used to stick burritos in your pocket and go to Bulls games.
Love those. Those
Still one of the great culinary items
I
ever
would put
created.
that burrito up against anything in the.
It's really disappointing because Lila wants to go, and the last couple times she's been here, I haven't gone. I'm going next time she's here. I haven't been there in a while.
$20.
Is that what it is now?
$19.
No.
Yep.
They were $5. Then they went to $7.
There were three. They were when we first started going. There were $3.25.
It's $20.
I think they're $19.
It's worth it. It's good. Well, I haven't had one in a while.
Good.
I'll tell you after I've had it.
It's really good.
It's a great burrito.
Oof.
Oof. I'm getting hungry. Tony, bad news for you.
It's Taco Tuesday.
I know, but I'll make it. I still offer. I'll make you a plate.
I appreciate that. I really do.
Yeah.
I do.
I make a nice little nacho platter.
Put the cheese on it. You go put it in the microwave. You go that far?
No.
Just the nachos.
Can I just say something about nachos? Because we didn't.
Here it comes.
Yeah, nachos are not my thing.
We didn't grow up on nachos. There was no such thing as nachos.
Okay, here it
No
comes.
such thing as Mexican food. To be
No
honest.
such thing as Mexican food, but
How's there not Mexican food in New York?
there was none
Spanish.
growing up. You could have like hard.
Arroz con pollo.
You could have hard tacos like.
Yeah, but
that's
they were like
gross.
Yeah, they were.
There's no such thing as us growing up on Mexican food, but
Okay.
never had nachos in my life. Get to Chicago, go to like a first Cubs game or White Sox game.
The nachos.
Had this
with that disgusting
this plate
sauce,
of
the
with
cheese
this
sauce.
the crappy cheese sauce and the jalapeno peppers.
Oh my God!
And
the
I'm
red
like,
peppers on
what
it.
is this? It's such a mess.
No, it's disgusting.
And then you know,
dirty.
then nachos became like this kind of distant part of my life.
And their chips were disgusting.
Yeah,
those
and you go to
brown
this, and you
chips.
go to these bars and stuff, and you get nachos with all the
crap on
it's
it.
It's such an overrated dish.
Look at you sound like a bunch of 90-year-old Jewish men sitting around complaining.
There was a restaurant on Belmont called Fiesta Americana. They went out of business, but they used to make individual nachos. Like each nacho was
Oh, now you're talking to me, baby.
Yeah, they had you get a plate of nachos, and each nacho was individual.
Yeah.
They were great.
Yeah.
That was the only place that ever knew how to do it.
Now you're talking to me. Bad coffee, individual nachos.
Individual nachos. We don't have any ability.
We don't have a nacho maker.
We don't have a nacho maker.
we need to go hire a Nacho Libre. Go.
We can't even find a Toastmaster, let alone a nacho maker.
Oh my God. All right, let's get to some business.
Okay, let's do it.
All right. Top 20 symbols going through the system first.
You know what? You could be a hell of a nacho maker. You could do that.
I am. I have an attention to detail. They'd all be uniform. They'd all
little
be the
Batista
same.
wants a little practice in the kitchen.
Mm-hmm.
Send him
He could
down.
be our nacho maker.
Send him down to Ravenswood.
He could be a nacho maker.
He could be a nacho maker. He's the right height too.
You tell him. You tell him. Listen, I have a potential.
Well, he went he went up 2 sizes on his skate. So I think the splurt is happening.
What size is he?
He's a 4.5.
He's an 8 now, which is like a 9.5.
8. When I was his age, I had size 12 feet.
No, 8 in a skate.
Oh,
Like a 10.5.
Why did it do it that way?
I don't know. To confuse everybody.
Really? It's off by that much?
Yeah.
Okay, by the way, I wasn't talking or anything. Just in case.
Hold on. This is very important. Your top 20 symbols.
Oof. Ooh, now he's belittling you.
Oh, my
Oh,
God.
you gonna let him get away with that? Fight! All right, go ahead.
Remember the good old days?
I do.
Number 20 for Tom, in case you're
We're
listening.
going back to the old office in a few minutes if you want to go with us.
Yeah.
Are you?
Leave it in 8 minutes.
Yeah.
I have
things to do.
You know,
We're going back to clean up.
The thing.
This is your last chance. If you left anything in there, this is your last chance.
Oh, good. Don't worry about it. I'm good.
He has a whole house full of stuff that he's left behind.
Yes, I haven't been in my house. Like, that's been a year we've been gone. And I haven't been to that studio in, how long have we been here? 2.5 years?
Whatever.
Why are you going?
Because I left some stuff there.
And you've lived with it without it for 2.5 years.
I'm a facilitation trade.
Oh, you have your
I have
the pickup
I
truck?
have the truck and the manpower.
The pickup truck.
Right.
And Tom's a good director. He tells you what to get.
Absolutely. Absolutely.
Master blaster.
Yeah. I'm going to have to carry tables out by myself.
Can we live stream it?
What?
And then Tom would yell at you for like.
Hey, Beth is talking.
Oh, sorry.
What'd you say, Beth?
You want to live stream it?
Yeah, that'd be nice.
We could.
I'll send Vanetta with you.
No.
Oh, yes.
No,
please.
thank you.
Yeah, I think you deserve that. today.
Nothing can ruin a party like Vanetta.
You got it.
Oh, my God. Can I get through this or not? Are we just giving up on this today?
No, go ahead. Do it.
All right. Tesla at number 1. Okay. Tesla's a 23. SoFi's a 33. Amazon's a 32. Apple's a 26. NVIDIA 7. PLTR 40. SOUN 33. Hood 41. TLT 12. Oracle 31. AMD 22. Coin 27. IONQ at a 44. IBIT at a -3. GLD at a 19. HIMS at a 48. Wolf at a 53.
Wolf?
Meta at a 29. BBAI at a 40. And number 20 for Tom, BTBT at a 75.
What do you think about that? Say something nice about Mr. Scott Sheridan in named Scott Sheridan Studios right now until Tom changes that by the end of the month.
That was a great job, Scott.
We're gonna take a quick 90-second break. Nothing says love like that was a great job, Scott.
That was great. That was great.
90-second break. I'm gonna come back with more Tasty Live with Visit Jenny next. Go on, can meet that. You're not gonna want to meet that. You're not gonna want to miss that. Sorry, meet that. We'll be back in 90 seconds.
Do you not even know what you're saying?
Not usually.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Wolf!
The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one.
Missed the live show? Here's our cherry on top weekly recap.
Ah, look what the cat dragged in.
Top of the morning to you all. How are we doing?
Rich McDonald from London, he was so excited to tell me that he was on a game show in LA.
You were on a game show in LA?
Yes. He was walking down the street and some Hollywood producer spotted him and goes, "Oh, we gotta have this guy." And what was the game show again? I forgot.
It was called Eliminate.
Oh, I know Eliminate! Eliminate! You were on Eliminate! Oh my God!
You've seen it?
Have you met me? Yes, I've seen Eliminate.
Did you get eliminated on Eliminate?
Who would not pick the Scotsman? Like who? Why? Oh, that's that woman's trash. I'm so sorry, Rich.
The camera's finished, and she turned around to the guy she eventually picked, and she said, "So where are we going on our date then?" He said, "Oh, I'm very sorry, I've got a girlfriend. I'm going out with one of the Lakers cheerleaders. I just wanted to get on TV."
In a tribute to you today, just so you know, we have one of our viewers sent Tony a bunch of Scottish things. The first thing.
I mean, I wanted just a man in a kilt, but apparently I'm just gonna get some pudding.
I don't even know what spotted dick is, really. It says it's delicious.
Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Hello, everybody, and welcome to the Liz and Jenny Show. I'm Jenny. That beautiful blonde in her dirndl is Liz Deerking. Hello, Liz. Good morning. You're looking great in that dirndl.
Good morning. Now, people might be asking, why, pray tell, are you wearing that? It's my in-laws.
53rd wedding anniversary. So we are taking them to the beer stoop, Jenny and I's former place of employment. So the kids are getting all dressed up in their German stuff too. So we're going to go and it'll be fun.
Oh
Here,
my God.
Hold on. We're saving it for the show, but I'm telling you, this is the most expensive dress I own.
You got it. Love it, love it, love it, love it. You better pack that for our trip to Munich for Oktoberfest this fall.
I'm hoping they let me, I mean, when I'm dressed like this, people might be asking me for things, being like, can you go in the kitchen and get me, the kitchen and get me some sauerkraut? But I'm going to see how many if they'll let me hold as many mugs as I can.
That dirndl is so cute. So if anyone wants to go, Liz and I are speaking at the RMC this fall, this September. We're going to be speaking at the RMC, and that event is hosted by the SIBO, and we can't wait. Liz has got her dirndl already. I've got to get one. I'm behind. That looks awesome.
Well, you can get them there, but I'm telling you, it is a very high quality. Let's just put it this way. Do you remember the ones we had when we worked there that they were like thick and high quality? Like this is hot.
Oh, is it that thick?
It's thick. Yes. It's just like the ones we used to have. It's like thick material.
Well, it's super cute. And again, I've spoken with people there and they said these are outfits that they will wear in Germany to a wedding or to a baptism or to an event, a special event. The women wear their dirndls. So,
and I'll vouch for that because we were there on Easter. We were there on Easter, and not a lot of things were open, but we were sitting, and I'm embarrassed to say this out loud. We were sitting at the Hard Rock Cafe because it was open. And lots of people were walking by in their dirndls.
Yeah. Well, it looks great on you, and pack it in your suitcase. Now, I will say, Liz is one of those people who only carries on. Is that dress gonna take up half your carry-on?
Yeah, it will. That's what I'm saying. It might not make it. I might have to buy a new one out there.
Really?
Yeah. You know what, Jenny? I will. You and I will go dirndl shopping together. We'll be like a matching set.
Because that's going to take up too much space in your carry-on.
It will.
Yeah.
Like I said, it's big. It's big. It's thick. There's like layers.
You're not going to like this. You are not going to like this, but I might check a bag.
Well, I'm not traveling with you, so go for it in either direction.
I think on the way home. Well, I don't know. Anyway, Liz refuses to check a bag.
I won't wait I'm like Tom. If you check a bag, I'm not waiting for you. I'm gonna have global entry and no luggage. You'll be there for hours.
Hey, did you hear how Tony and Vinny had all the checked bags when they went to London?
Yes, I did.
So funny.
It is pretty funny. But I want to say thank you. A big shout out to TP. And if you didn't get enough of him yesterday, I will also have him on Friday. I've got a lot of emails that are already coming in about questions for the TP as he likes to be called. And I put in one request, Jenny, and I think you'll like this. Right before the show ended, I got one request. Flame Shirt Friday. And he said,
oh, nice. Now, what does he call your show? Does he have a name for it? Because when he's on with me, he likes to call it the TP and J show.
Oh, yeah. No, we are TP and VLD. And he's like, we're like two cops. It's like a cop show.
TP and what?
San Francisco.
Oh,
VLD.
Okay. We're the TP and J, kind of like PB and J, but TP and J. And you're the TP and VLD. It sounds a little bit cooler.
That's what he said. He goes, we sound like two old school cops working the beat. I was like, I know. All right, but let's
what did I miss? Yeah, what did I miss?
I loved it. I loved using his knowledge. We talked a lot of things, but the one thing that we did put on Let's Pop in the platform, if you don't mind, John, is I used his bond experience and we put on a bond trade. I don't know. I know you're kind of busy, but bonds have been it feels heavier than it looks, but the bonds have been taking a couple steps down, and it's continuing its step down today.
Yeah, down in the 112 handle, which is interesting. What did TP have to say about the bonds yesterday? Since he's our bond expert.
He was just, kind of going along the same lines we were. He's like, let's just put on a vertical spread that's pretty, low commitment. So we did a one point wide. We collected about $3. So we only risked about $7 because a 1 point wide is almost 10, I believe. I'm just going to do this real quick to make sure. So if I put on a new one, yeah. It's Yes, it is. This is a $10 wide. So it's a $10 wide. We brought it in and we collected about $3. So a third of the width of the strikes.
That's pretty good. I mean, I get it. TP likes to collect a third of the width of the strikes. So I get it. I know we brought it up to the 112, but we haven't been down to this level in a while. And maybe if you look at the chart we have, but we kind of wait till it gets down to this 112 level to get back in. Yeah.
I mean, we've grazed it, and it hasn't really been lifted from this level. But no, I'm okay. We were okay entering, and we were kind of talking about the implied volatility or the IV rank, and he was like, it's at an extreme. So he wanted to sell strangles, and I said, hey, listen, big time, we can't sell strangles in this account.
Right. So, now you know how we have the micro crude. Is there a micro bond?
Well, yeah.
Is there like
TLT?
Is there like
TLT, I think. I don't know. And then I was asking him, I said, because I know these GTCs, I didn't know, and I forgot to look into it. So I need to do this. I know that the futures trade absent of trading hours, right? I just was unsure if the futures options, what times, like could we get hit at 2 a.m. on a futures options GTC?
Oh, ask him on Friday.
I did. He said he's going to look into it. And he said, that's a real good question. Let me look into that and I'll get back to you. Because things change. I mean, he's done it for so long and so long ago. You know what I mean? Things change.
We can take up our MCL.
That's what I was going to say. Take a look at that. 46%. I'm fine with that. We did not have a GTC in for it.
And interesting, if you look at the chart, and I don't know, I feel like during yes, do you see yesterday's bar? The oil was weird because I have an oil position, and I just like Sunday night or early Monday morning, I looked at my oil and it was like, oh, it's looking good because I had a bullish position on an oil. But then by like 8:30 or 9, or when the rest of the market was open, it wasn't looking so hot. So now it's popping back up, or at some point it popped back up. But yesterday seemed to have quite a range. Like if you look at the open to the close, or
open is 64.54. The high was 66.83. And it closed at 66. Yeah, it closed right at the high.
I don't know. When I looked at it before, like in early hours or before the market was even open, it looked like I could take my position off. And I should have, because I'm guessing you could trade them at that point, the options.
Yeah, you can. I know that because I trade. The only reason I know that is because I can trade natural gas options whatever hour I feel like doing, which is crazy.
And there's like your son JD is getting into his ES iron condors earlier than market open.
You can get in earlier than the market opens, for sure.
Now, have people been doing, I feel like I've been gone a while, but have people been doing the SPX 0DT trade?
Yeah. Oh, yeah. Jack Tucker, Eric, they were all in full force yesterday.
How did it work out?
I believe it would have been okay. No, yesterday the market took a bit of a tank. I'm just going to go to SPOOs. Actually, I'm going to go to SPX. At the close, the SPOOs were down, and it doesn't look like it, but the close was pretty much the low, 62.29.
And the open was 62.59. So
yeah, and the high was 62.65. So I mean, I think they were probably okay. We can go back and look at the results, but I think they get out at a certain percentage, so it doesn't matter. Nobody's holding till the close, right?
Right.
Unless you have the iron fly with very, 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 very little risk.
I missed everything. Like I didn't trade anything yesterday. Kind of missed it all. Moving my daughter.
It was a low volume day though.
Okay.
I don't think a lot of people were trading.
Okay. Well, I moved Lillian for camp, which she was only at camp for a week, but I still had to set up the dorm room as if she was just like setting up a dorm room. Like my husband and I, when we walked out of there, we were exhausted, and we said, "Gosh, this was like moving Logan in as a freshman, just sending her to camp for a week."
Yeah, but it's not as emotional. You were like, "See you, Lily. See you in a week," right? It wasn't like that.
Okay, so there were so many parents. If your kid's never been away, there were so many parents crying, hugging their kids, giving this big farewell, and we were like, "See ya, we'll see when we pick her up on Friday." We weren't sad, but she's gone away so many times that it doesn't matter. But for some kids, this was probably their first time away.
That's true, or the parents might be a lot farther away than you guys are from her. Do you know what I mean?
Well, yeah, and so for us, like she's at Notre Dame, which is 45 minutes away from our condo, and there were people who were from California, New York, like Florida, all over the country, maybe even all over the world. So there were people who flew in from all over the place, and we actually we were exhausted after the 45-minute drive.
Now that's funny.
Yeah.
Yeah. Well, she's gonna have a blast. I can't wait to hear all about it.
Yeah. I'll pick her up on Friday. You'll have TP again on Friday. I'll be unloading the dorm on Friday. It's like
unloading. That's gonna come so fast.
Oh yeah.
Yeah, it's already Tuesday. Okay, now Jenny, it is Tuesday. It's weird that we're not at the SIBO floor, but we virtually are, if you can't tell. I forgot to change my background with TP yesterday. But it is Tuesday, so we usually have Kai Study. We are taking tweets with the hashtag LIZJNY. And I think I'm going to start with Twitter and then go to Kai Study, if you're okay with that.
Sure. Yeah, I'm okay with that. Anything else to close, though, in our account? And we could start with Twitter, sure, but...
I glanced at the account and looked a little bit before this, and there's not anything. How about this? There's not anything exciting. Is that fair enough?
All right. Okay. Fair enough.
Okay, so 1 minute ago, Jeff says, thanks to you, Liz and TP, for the Tesla trade yesterday. Took it off today for a little bit more than 50%. So TP and I were talking. We did not put this on. I actually maybe didn't get filled. We were looking at, so Tesla was down a ton yesterday. And I know it doesn't look like that gap down move. And so TP was asking, do you jump in front of it? And I said, I do. This is something that I look at all the time. Tesla's still got a high Ivy rank. So I wound up selling put spreads in my account, and I'm out as well. So I'm glad we didn't do it. I must not have gotten filled but we were going to do I want to say it was the 82 in the 10-day. We were doing like the 80s, the 80, 77 and a half. And we would have been out today. It was a very, very small baby trade. So I'm glad to hear that Jeff's out already.
Yeah, that's good. Well, Tesla's up $8 today, so that worked out.
Yeah, it totally took a hit. Ajit, I love it. Thank you very much for coming in with these again. These are large cap names with the highest IV skew this AM.
Large cap. Are you surprised PBR is large cap?
Kind of.
I mean, every time I see that, I think of Pabst Blue Ribbon. But what is PBR? Is it like Petrobras?
Petrobras, I believe it.
Petrobras.
Yeah, it's an oil company.
Yeah. I guess I'm not surprised now that I know it's not Pabst Blue Ribbon.
Yeah, it's
Petroleo Brazil. Yeah. Speaking of Pabst Blue Ribbon, my son and his friends were at the lake over the 4th of July holiday. When I got here and opened the fridge, I couldn't even put one item in the fridge. The entire fridge was full of Old Style. What am I supposed to do with that?
I'm telling you right now, they're hanging out with Uncle Mike too much. That's what he drinks.
I was like, what am I supposed to do?
And you'll know what I mean when I say that. Because Old Style and PBR are like they're like in vogue again.
They are?
Oh, yeah.
So I'm going to unload this fridge of Old Style, and can I give it to Goodwill? Can you give alcohol to Goodwill?
No, just give it to a neighbor. Find some teenage boys on the beach. I'm just kidding.
Hand out the cooler of Old Style.
Hand them the cooler of Old Style, and it's going to be fine. But thank you very much, Ajit. I appreciate this. These are your large cap.
Who do you resemble? Oh, what? Lizzie looks so good and resembles Rose from the Titanic in your outfit.
I guess it is a very Rose-esque outfit because it's back in the day. And somebody from the chat said, I know how you get it there. You wear it on the plane. I can't wear this on the plane.
Yes, you can. That's a great idea.
No, it's not going to be worn on the plane. But the one thing that I haven't looked at in a long time on this list, and I want to take a look at it. Number 1, HPQ. Number 2, Toast. And then we'll keep going forward. HPQ.
23 rank. Let's see what kind of premiums in the options if you open August.
And it's not at the top of its range. So let's go to regular August. You're out of the way of the earnings. It's not that good, but it's only a $25 product. So take a look at this.
Yeah, it's not bad.
From TP's perspective, because he's fresh in my brain, if you're looking at this, it's only using $422, right? Which is not bad at all to get.
No, it's not bad. You're getting $1.10 in theta a day.
Let me ask you this. I firmly believe that I would bring it up and get
Oh, the dollar.
91 cents. Because the 26 has more extrinsic value, it's almost trading right around the 26 line. So you can go either way with it, but their break even doesn't move too much.
Sure, do it. This reminds me of Campbell's soup. It kind of reminds me of Campbell's soup as far as the premium, let's see, go to CPB and see what.
Okay, I'm going to push some stuff out to the follow feed.
Well, yeah, push these out to the follow page and I'll get everything out.
Okay, CPB, Campbell's soup. Were you listening yesterday?
No.
Ajit sent something and Campbell's soup was on there. And he's like, I was like, Jenny loves Campbell's soup.
Well, no, I'm just, it kind of reminded me of my options in Campbell's soup. So if you go to August and you're right there. Oh, now what is the $5 right strikes?
Yeah.
In a $31 product, is that even legal? But here you're getting the same thing, like the just out of the money 55 cents using $5, $1.20 in decay a day is very similar.
So, and I would say here's a situation where it wouldn't go to the 35 because looking at that, you take a look at the extrinsic value of the call. So I would stay right there. It is very,
it's $5 higher. I thought when a product was under a certain price, you had to have dollar-wide strikes.
I don't know. I think it's based on the liquidity. I have no idea.
Campbell's soup is not that liquid.
Is not good anymore.
Yeah, not anymore. Not anymore.
Okay, and then that's why I wanted to go because I know he's got some other ones. The names with the highest IVR and IVP, IV and HV this AM. So is there anything on here that stands out? Lemonade. We haven't looked at that one in a while either.
Isn't Lemonade like at $5? Take a look. I don't know, because I think Lemonade really had a fall from grace. $40, but take a look at the chart. This thing went from.
I don't know.
Oh, no, it did get down to, you see, it was in the it was like 12. But Lemonade was one of those.
No, it was like 12. Oh, you mean from before? Was it higher than that before? It never really took off.
No, it did. It did. At some point in time, I remember Lemonade taking off and then gotten back down into the single digits.
Oh,
yeah.
There you go. Yeah. Look at you, 2021. Right in the middle of COVID, you're sneezing up a storm, and you know the Lemonade is a $100 product.
Lemon was $100, almost up to $200, and then after that, it was back down to.
Well, is this a pandemic? Was this a pandemic, darling?
I don't know that it was darling. I think it was like. Yeah, because I thought I remember selling the 5 puts in here, and I probably did when it was trading around 9.
Yeah. And now I will tell you, and Ajit knows this, but the things that are going to have the high IVR are going to have earnings on deck, right? If I go back to that, I'm going to take an educated guess here that a lot of these are going to have earnings on deck, right? Like, let's take a look at United Health Group. I want to see, just because that'll bring your IVR up. Yeah. Earnings on deck. So that is why your IVR is higher. There's nothing wrong with that. Sometimes we'll chase the high IVR because of earnings.
No, one thing you wanted to look at was Toast. You mentioned Toast, but we didn't take a look at it yet.
$43 product. Earnings are on deck. Let's take a look at what that did.
It's near the top of its range. Now I am long XYZ, and I feel like that is and that's more at the bottom of its range versus Toast more at the top of its range. So I continue to sell puts in XYZ, which I think, would you consider Square and Toast competitors? I mean, you tap your card to pay on Square, or you tap your card to pay on Toast.
Yeah, I mean, I would argue they're competitors, right?
Right.
Yeah, I would argue they're competitors. I mean, I don't like that. So it's called blockchain. What is it called? Hold on. It's called Block, but it used to be
it used to be called Square, formerly known as Square.
It did. It was formerly known as Square. Then it's actually called Block, but now we call it XYZ. Stop changing the name.
I don't know, but I have puts in XYZ in the. Let's compare it. Let's compare their options. Although both of them have earnings coming up.
You'd have to stay here. I just want to see what the capital requirement is because this has Jade Lizard written all over it.
It's decent premium in here.
$2,000. We close that up.
And then what's Toast?
I'm going to go to 24-day.
Same thing, 24-day.
Oh, you got wide markets down here. You got 48 cents at 70 cents, 69 cents at 85 cents. You can't trade this.
Yeah. That's why I stick with XYZ.
Yeah, even though it's too capital intensive for our account. I don't want to use $2,000 to get $1.
Right. When we just saw in those previous two, we could get $50 using 500 or $90 using 800 versus here $70 using 2,000.
Yeah. Yeah. It is true. It's funny. TP, one young Thomas Preston, thoroughly enjoys his spreads. That's what he was saying. He's like, just put a spread on. Just put a spread on. Now, I prefer, and like I said, I think it's great. I really do love having his, knowledge on here. But I prefer low price products with naked options.
I do too, but sometimes they're hard to come by.
They are hard to come by. Okay, look at this. We were talking about this yesterday. Cupcake went the ES route today. Iron Condor collected 405. Set my closing order at 25%. Not quite Jack Tucker levels, but this will do me. This is very similar to what JD does. Yeah.
Yeah, they got $50. Great.
I will say warning Will Robinson in this, in the fact that, or is it Danger Will Robinson? I don't remember, but you have to make sure it closes. So the one good thing with SPX is if it's full loss, it's full loss. Everything is just gone and wiped. I have to keep an eye on my son's account because he doesn't quite grasp that yet, because there was one that I had to close at the end, and you will not believe how much capital it was holding up at the end.
Oh, right. Because if one is going to be in the money and one's out of the money.
No, they were both super in the money.
Then why would it hold up so much capital?
It just did at the end. And I know that happens sometimes, so just keep an eye on things.
But if you end up with one in the money, one out of the money, and you leave it, you don't close it, you can come in the next day with a future, with an ES future. So that's big. So yeah, you've got to make sure these close or you don't let them go.
Yeah. Yeah. Okay, and then Bob on Fire, love it. There's not a lot. We were talking about that. There's very, very few. Today, there's none, but tomorrow, Jenny, buckle up for Delta Airlines.
Delta and ConAgra. Do we have any more earnings setup calendars we could possibly do?
We do, I'm sure. Hold on. Let's look at this. We've got the Ironfly, and this is John Mount. Awesome. Okay. I'm in sweet spot at 62.30. Ironfly at 62.30, and Iron Condor sold at 20 deltas. I love it. Look at this.
Yeah, it looks good.
And then we've got Jack Tucker coming in with his tranches. So this is today's 2 tranches. So he's got 20 lots, trying to do 25 point wide and cut the call side on the first one to only 20. Okay, see what he did?
Oh, okay.
25 on the bottom, 20 on the top, because that's great. And he's collecting $12,350. Yeah.
Nice.
I know, I love it. And same thing with Taco Tuesday. We've got Eric, who's coming in with filled on partials, it looks like right here, but he's doing very, very Jack Tucker-esque style where he's got $25 wide and $25 wide on the top. So I love this.
And he said his premium, he said his GTC at 40%.
Yes. He wants a lot more. Like my GTCs are a lot less than that. I'm usually 20 or 25.
Mine are less too. Wait, Liz and I have seen this. Let's say you take in a bigger collection, but you take in such a small GTC, like 10%, you can get out very quickly. And honestly, and you did this for a while, and I did this a couple times where I just recently did one side, brought it up, took in a decent collection, and then took such a small percent, but you can get it with just a slight move. And get out with a slight move,
which is very similar to the Jajun trade, which we used to do all the time. If you're doing one side and one move, you can get out. So that's the Jajun, which we haven't done in a while, and we might need to bring it back. And Jackie comes in. Happy Tuesday, Liz and Jenny. Data says, based on SPX and VIX history, SPX will close between 62.75 and 61.95. Thank you very much.
Actual physical data. I thought it was Dr. Data. Dr. Data said SPX will close between 62.75 and 61.95.
No, just data. Just data.
Yeah, just data.
And then I think we got to everybody because these are from this morning, our economic calendar. Tomorrow we're waiting for a bunch for things. I know that. And then one last one. I know we went to Jack Tucker, but crazy day. I opened the SPX 62.20 0DT put credit spread this morning on my way to work. Wild ride, but it ended in full profit. Wow.
Good.
Okay, good.
Nice.
I like that. Okay. Now, I know we want to take a look at Kai study, or you guide me. What would you like to do next? I know you said something.
Well, I just wanted to see in our platform, because it looked like we had a couple things that, like our Intel. Intel was big fall down yesterday, but then I guess bouncing back up a little today. But yesterday it was down. It was one of my losers yesterday.
Info is up. Now, if we want to, because to your point, this is 43%. If we wanted to, we can take off the additional. Yeah, let's take off this. We'll take some risk off the table.
Some risk off the table.
Okay.
And if it drops back down another day, we can add that put back on.
Okay, so that's all pushed. And then like I said, I glanced earlier. Our hymns is a naked or is a short put. It's the 38 level. We've got a GTC, and I'm going to keep that.
Okay.
IBIT, we looked at this. We have a put spread that's 25%, but I'm comfortable keeping. I'd like to wait for our GTC.
Put in the GTC, and then if it bounces up, it'll close.
And that's in. So IBIT's been up.
All right, so I guess nothing.
Yeah, I kind of vetted it before. The one thing that is not looking that good, although today's move might help us.
I see that our SPX broke wing butterfly. Well, it's
a problem.
We didn't risk much at all in this trade. I think $400.
Yeah,
so
it's not. It's not bad. But we need to pull back. We need it down. So that's what I'm saying. Today's move is helping us slightly, and yesterday was down a bit, so that helped us yesterday as well.
Just the rally. I mean, the last 2 weeks rally, when we put this trade on, we thought, oh man, no way it's getting up here.
These are famous last words, right?
Hey, but with the big move up, and we've got the market at near all-time highs, would you ever think of throwing in like a triple Q's downside diagonal?
I don't mind. I just want to show you where the VIX was, because the VIX popped. I mean, it doesn't look like it, but the VIX yesterday had a pop almost up to 1850.
Okay.
Look at how little that is. You're not going to believe the move that we had.
You're not going to believe this. No, I see it.
So if you're going to put on a diagonal, so I just want to see what our deltas are. What do you think our deltas are right now?
50,
30.
Oh,
so that's what I'm saying. If you put on a triple Q's downside diagonal, we might mitigate it, which you can. What about, to keep things cheap, instead of a diagonal, Jenny, what about a pool medic? I hope he's doing well.
Or what if you could do a downside crab?
You could do a downside crab. But look at this. So I just did a pool medic downside, because it's going to be very inexpensive, right? Pool medic downside, meaning I went to the 10-day and then the 24-day. I guess I can go to the 30-day just to keep it very cost effective. So I went to the expected move for the 10-day cycle. This is his parameters, not ours. So the 540. And then I went to the 24-day, and you buy the exact same strike. So the whole total is only $341.
So we haven't talked about the pool medic calendar in a while. Let's just walk through it real quick. This was one of our viewers. He would put on these downside calendars and look for, I think just 10% is what he would look for. And he would, it was always 10-day, 30-day. He was always, somewhere around 10-day, 30-day. Sell the 10-day, buy the 30-day.
I'm not trying to correct you. I don't think it was just downside. Sometimes he'd do upside.
Oh, right. Oh, right. Okay. But 10-day, 30-day, as far as sell the 10-day, buy the 30-day, and at the expected move of the 10-day.
Yes.
Yeah. And so let's go into the 24-day. It's a little bit cheaper, one less roll in there, but it's a.
No, he was using SPX, which that's why you're going to go with 10% pretty easily.
Yeah.
Because this would be a lot more expensive. So that's why for our account, kind of taking it into a baby nugget, you could for sure do in triple Qs. Now, if I wanted to, I can make this go out one more week if you want to. And you're paying $450 for it.
$450 for the 10-day, 30-day.
Yeah. I'm going to keep it cheaper. $340 seems good. This will add some negative delta.
We'll have a couple rolls in between.
It'll take our deltas down to 20, which is fine.
I would put in a GTC for that. And again, 10-20%.
Yeah. I mean, maybe because we're a collector paying so little, we'll do, so we're fills in the triple Qs.
Mm-hmm.
I'll start with 20.
Sure.
Because that'd be, in full disclosure, that'd be $60. I mean, that's what we take off of a, the Jajun trade or an Iron Condor or the Iron Flies,
Yeah. Right. And so when I mentioned diagonal, they would be expensive for us. But that's something I get into triple Qs when we get by near all-time highs. I'll throw in that downside diagonal, and then I never take it off for a full profit, but just a couple $100.
Yeah, and that's all you're looking for. I mean, you're not ultimately what I think your novice traders would be looking for. Be like, great, this is going to roll off, and I'm going to have the 540 for 24 days, and it's unlimited profit potential. That's not how we're playing here.
And that this year I've had mostly wins, but one full loss of almost what I paid for it.
For the diagonal?
Mm-hmm.
Yeah. I mean, that'll do it. It happens, right?
It does. It does. That's why you have to be careful on, what you collect and what you're making on trades in case you have those losses, you're making enough to offset those losses.
And those diagonals are part of the reasons why this account got taken out a little bit during that huge down move, because we had the bullish outside diagonals, and you have to make the choice to reestablish or not reestablish, and you're putting more money in. If you don't think it's going to turn around, it's very tricky.
Yeah. No, the move we had this year was tough for people to make it back if you're just selling puts, or even those diagonals on the way back up. Those diagonals are capped. So when we had a crazy wild move back up, if you had diagonals, you're not making enough back.
No, you're not.
No, but okay. I think a lot of people, it took some time, but a lot of people got the money back that they lost on the down move.
I don't know. You listen to a lot of podcasts and some things out there, and I think a lot of people got freaked out on the down move, pulled out, and then weren't in for the up move. They weren't in for the rubber band back up. So I mean, if you get out of the game when it's like if your pain tolerance is too high and then you are afraid to step back in, you can't make it back.
That's why you have to have enough capital on the sidelines. Don't have too much at risk at once. And I think when things are calm and doesn't seem like anything's going on, and people get too big because there's not enough premium in these options, and they're like getting bigger, getting too big to collect more, then a big down move happens and they have too much risk on. The problem with the down move that we had this year is that we were actually getting a boost in vol, and people were going, more and more and more in.
Yeah, and it was violent, by the way. I mean, from top to bottom was pretty violent. So you went from 61.40 all the way to, what is it down here? 48.26. That's a big move in what time frame was this? February 19th, Valentine's Day to, what's the date here? To April 7th. That's big. And so that's just it, is you don't know when it's going to rebound. You have no idea.
Right.
It is kind of tricky. All right. On that note, Jenny, not on that note, that is a terrible transition.
Let's check out the research corner. Kai puts these together for the week, and it's kind of a look back at what happened last week, what we've got to look forward to this week. Let's see.
All right. You ready?
Yep. Okay.
The S&P 500 and NASDAQ kept making new highs. Dow is only 0.6% below all-time highs.
Okay, most assets moved sideways with low volatility. Economic events, better than expected jobs report.
Wait, this is last week's. So I just want to be very clear. This was a week in review, basically. This is last week's. So we've got got some numbers that are coming out tomorrow. I think it's Fed numbers that are coming, FOMC tomorrow. So we've got numbers that are coming out tomorrow. And I think numbers and the tariff deal and all this stuff is a little bit more important. But go ahead.
Right. This was just, okay, so better than expected jobs report with 147,000 jobs added versus 110,000 expected. Unemployment fell to 4.1%.
Yeah, the Vietnam trade deal, which was live during our show. Remember this? The Vietnam trade deal announced with 20% tariffs versus its original 46.
Okay, and the big, beautiful bill passed as Trump's massive tax cut and spending bill cleared Congress. So this all happened last week, which is why... What did the market? Well, let's keep going. We'll see it in the slides. What the market went up.
Well, that's why the market was up. You know what I mean? Let's kind of go back and forth because I like that. But taking a look at, if you're just going to take a slice, this was last week. It liked last week. We know that. I mean, Thursday's rally was it Thursday's? Yeah, Thursday's rally was.
No, Thursday was 4th of July. It was Thursday. Oh yeah, Friday was 4th of July. Thursday was noon. We closed at noon.
Well, it was still a crazy rally because here's Monday and Tuesday. This is the 4th of July. Or the whatever day it was, the Thursday's rally.
Thursday.
It's pretty crazy. Okay, so then the July 9th tariff deadline US-EU trade deal or 50% tariffs could take effect, but Trump indicated deadlines could be extended or shortened.
And that's tomorrow.
Yeah, that is tomorrow. But they did kind of say that it doesn't.
Yeah.
I don't know, unless they drop the hammer on us tomorrow.
All right, and the 10-year note and 30-year bond auctions on Wednesday and Thursday. So we see bonds low. We can see bonds low. We've got our position at you and TP added it on yesterday. But if I weren't in bonds, I would be selling puts and bonds or put spreads.
And we're in. And for this account, I don't want to add to it. But if it goes down, I'll add a little bit more. Yeah. Okay, and the index weekly performance, so then I love this because that was last week's, the 2.3%, but the week before that, 3.4%. So last week wasn't nearly as big as the week before in all the stuff. Yeah. In all this stuff except for the Russell. The Russell seemed to outperform last week. Right? Am I looking at that wrong?
No, you're right. You're right. It's interesting. Everything keeps going up. Is this going to continue for the month of July, or are we going to see some back and forth?
July is notoriously a bullish month, but whatever. It doesn't matter. History doesn't need to repeat itself, but July is notoriously a slightly bullish month, and then it's kind of like choppy or down.
But I feel like there's a lot of stuff going on, so who knows? I just keep taking off risk every day I'll go through my positions, and if there's not a lot of premium and my short options, I'll take them off because I just think, why keep that risk on, right?
I know. And I kind of this is what I was thinking too. It is kind of weird territory that we're in right now because at any given time, anything can happen and we're down a ton. I kind of like the Jack Tucker risk off.
Yeah, you're in for the day.
You're in for the day. So then it doesn't matter what happens. And so if you decide not to trade that day because you see something crazy that's happening, fine.
Right.
The risk off position helps.
You're in at 9 and out at noon.
Yeah, right. Okay, so these are the weekly expected moves. Surprisingly, last week had an 83, which was higher than the 68. Because we've been seeing the weekly moves.
No, that's this week. So this week has an expected move of 80, up or down 83. Last week was a short week. So the expected move of the last week was up or down 68, but we were missing a day.
Thank you.
Yeah.
We were missing a day and a half, right?
I mean, if we went back to these old option jives, 83 is not a lot compared to
that's what I'm saying. They've all been going down. They're
all going down. It used to be 120, then 112, now 83. They're just going down.
Yes. So
it's all coming in. We see VIX is only 16.
I know, but it was 1850 yesterday.
Yeah, that's crazy.
Yeah, I got it.
What else did I miss yesterday?
Well, that's what I think was very weird to me, and we're going to go back to this too. That's what I think was very weird to me, Jenny, is the VIX move. Hold on, if I can get my cursor in there. Oh, please. It won't let me get in that box. There we go. Okay. Here's what I thought was crazy, because we were down, and it was quite a bit down. But when the VIX was 1850, I was like, that's high.
For now, right now.
Because we're in the 16 handle. At one point we dipped into the 15 handle last week.
I know. So were you doing anything? Were you making any trades when the market was down and VIX popped up?
I'm telling you, for me personally, it was a very calm day. Very calm. And I don't think I did much of anything. I had all my positions, because we'd been going up so much, I had taken a lot off. So there wasn't much to do or to look at yesterday. I don't know. For me, it was a very, very, very calm day. I don't know how it was for everybody else. Maybe Frank can tell us because he's usually hot on the trigger with the volumes. But I found it very, and I found the down move very, and I'm stealing the term from Tom and Tony, but it was very orderly. It wasn't a violent down move. Do you know what I mean? It was like.
And what were spoos down? 40 or 50?
No, they were down a lot. Hold on.
They were?
Not a lot, but it felt like hold on, I'll go high to low. So the high was 63.15 and the low was 62.46. So they were down quite a bit.
From its high, you've got $70.
Yeah, 70 point range, 68
55,
point range.
Yeah, 70. Okay.
68 point range. But so, yeah, it just, like I said, that's not something small, but it was just so orderly. It was like, we're down 20, then we're down 30, then we're down 40. And it wasn't kerplunk.
Right, I see.
And it stayed down. Like I expected throughout the day for it to pop back up at some point or us to get like a little bit, the market's trying to really rally, and I didn't see that. Now, because it was such a slow day, it wasn't like my eyes were peeled on it the entire day.
But
You know
I
what I mean?
did, yeah.
So I don't know. It's pretty interesting though.
I felt like I was
here we
Oh, here we go. This is the IVR, major assets IVR.
This is my favorite slide because we thought it was the move. We're like, whoa!
The first time. Whoa, look at that move. But you see, last week everything lost IVR. Everyone's vol went down. This week or the week before, the last few weeks it's gone down. But with yesterday's move, we got a little bit of pop back in vol.
But I don't know if it's going to hit the IVR. I mean, look at euros has remained steady. The euro IVR.
Speaking of euros, can you go to the FX? I just want to see what is going on with some of these.
So I looked at it yesterday, and it did not look good.
Okay.
I wonder if it's changed today, but I'm going to go to, maybe. Let's see. Let's go to our positions page, right?
No, because you can tell right by, if you go from funds and you look over to equity, we have $1,287. So I know we started with 1,500, so we're down. And you can look at profit and loss without even opening positions. You can kind of get a gauge on what's going on here.
So looking here, you're looking at equity. Okay, but so we've got the the US dollar shekel is down and down. The euro, what is GPB?
The Great British Pound.
The Great British Pound, that one was down. And so yesterday, the US dollar was down too. I think the US dollar is a little bit stronger today. Slightly and clearly.
Now, if you click on it, just click on the ask. See on the top, you've got that Euro USD up, and you click on the ask, and you'll see the chart. So the chart will pop up, and you can see it had that move up. We sold it at 117. We're playing for it to come back down to 116, 115, and it's moving very slightly. I
did look at this yesterday. Like I said, I'm learning Forex as everybody else is learning Forex. So I didn't want to ignore it. Looked at it yesterday. Everything was a loss. This is turned around today because you actually are in the green on this one. Slightly, meaning green, $4.
Now, if you go to the watch list, if you go to the watch list and you see the popular ones, like take a look at, because if you're looking for more opportunity or more trades to get into, like click on like USD Canadian dollar. You can click on any of those on the popular list, and then take a look at the chart, and you can see if it looks like it's an extreme. If you're interested in getting in or not.
I'm unfamiliar with, is this an extreme or not?
Well, so I was asking, and we're going to have Glenn on Thursday, but asking Glenn on how do you find opportunity, or where do you look with so many choices? And he said, you can go to the popular, the watch list, and you just look at what's on the popular list, and that's what people are trading. So when you click watch list and you see, like if you click back to watch list.
Okay.
And you see right there, the popular USD and the popular non-USD, that's what's trading. So I would go through that list and look at the chart and see if any of the charts look like an extreme and get in one way or another. That's what I did last week. But we'll see what Glenn has to say.
This is the one that I did when I just got in and out. And I actually took the contrarian. I know you guys were asking for it to come down. I took the opposite and then got out of it.
To go up.
But you can. Like it doesn't, just because, is this an extreme? I don't know, right? Like that's what's great about this. You can get into or out of this, and you can do both sides. If you think the dollar is going to get a little bit weaker, go for it. Do you know what I memean?
Right. Of course. I remember the first time I had Glenn on, one of the charts he pulled up, I was like, maybe I'd get long it. And he's like, well, but for, like historically, it might be more likely to go this way than that way. But if you're just playing for a quick day's move, you don't know which way it's going to go.
Hold on, take a look at this. And I don't know if this is it right or not. This is 2020. That's how this chart is. You see that?
Oh, then pull up a shorter term chart.
How?
So on the chart, I thought I just saw it. Go back to the chart, put your arrow on the chart. And there. Yeah, and go to the bar up on top where you see the chart and the bars, and up on the top where you see monthly, go to monthly. See if you can change that to daily.
There we go. That looks like it's an extreme. so because I know you were like, wait a minute, this chart doesn't look like what Glenn and I pulled up, and that's why it doesn't.
Yeah.
This makes, when I looked at that monthly, I was like, okay, I don't mind. I think it might go up a little bit.
So this is the daily. And then this goes back to how far?
This is daily. Well, this is July, April.
Yeah.
This is 2025 right here. So this makes a little bit more sense to me. Thank you very much.
Yeah, I'm glad you realized that we were looking at a chart that went all the way up to 2020.
I was like, wait a minute, this is a 5-year chart. So I guess if you want to look at things historically, you can, right?
Yes, and that's probably why we changed it, because we were talking about the Euro USD, and I was recalling days of when I was studying abroad, what the price was, and it was like if you think, oh, I'm going to sell this because I think the dollar is going to get stronger and the euro is going to get weaker, I think it was even more of an extreme then.
Okay, yeah, we go back to 2010. We've got a 15-year chart here. I'm glad we figured that out. Okay, there we go. So we got a daily in. That looks a little bit more of an extreme. So nonetheless, we're keeping an eye on these positions, which is great, right? So we'll keep an eye on them every day. Right now, I'm not going to take that off for $4
and let's try to add something else, something different. Right now, I know we've got the euro, Great British pound, but I'd like to add more like non-US dollar pairs.
Let's wait until we've got Glenn on.
Yeah, right. No, that's why I said we'll add something when we have Glenn on Thursday.
Every Thursday, we'll add, adjust. We've got some capital. We got some coin in our gene, for lack of a better term there. Okay. So I'm going to go back to this because it's already 47. Let's make sure we get through all of these. The SPX and NASDAQ are 2.3 and 3.3% higher than February's highs. Yeah, it crossed that mark.
Right.
Last week, but I think it's under it now. And then SPYs, what is this? What's going on in this one?
Oh, those are the volatility. So you're looking at implied volatility, historical volatility. The yellow is the historical volatility.
On SPY. And so the implied jumped up over historical, and that's that little red bar. Okay. Yeah. And then
so
Euro dollar.
Oh,
here you go. Here you go. Your Euro USD is 1.18.
Well, and you can see we got shorted around 1.17.
Yeah.
So that's losing slightly.
Yeah.
And this goes back to 2020.
This is the 15-year chart we were just on.
Yeah.
Or 5-year chart.
5-year.
No, the chart we were on went all the way back to 2010. That's what I was like, we got a 15-year chart here.
So this is something people are getting in because they feel it's an extreme, but who knows?
And then these are the biggest movers last week, right? So most of those were earnings. And then GE, Netflix has been down for a while. DoorDash, I don't think that was earnings. AMD was earnings, so I think, right?
So maybe, I don't know if AMD was earnings or if most of those earnings were over, but if we see a big mover to the downside, that's when I'll usually look for that and jump in with selling puts. But I don't know that we had any like very large movers to the downside. Although, what is that? What is CNC, MOH, and ELV?
I don't know. That's got to be. And he gives 3 different percentages. Maybe he just couldn't fit them all in the.
Maybe CNC
but those seem,
down 39%.
That seems extreme. Let's go to CNC. Oh, sorry. CNC.
What did it say it was?
Hold on. I don't know.
Centene Corporation common stock.
That's got to be earnings, don't you think?
Well, yeah, but look at that move.
Yeah, that's a big move.
Yeah.
It's got to be earnings. Okay, and I think we got to everything, right? Yeah, that's 9 of 9. All right, Jenny, we've got about 10 minutes left. I'm going to pop back in.
10 minutes. Any trades? Yeah, we'll check Twitter, but it'd be nice to get on a couple new trades.
Okay, Paul Smith, quick lunch money, SPX 0 DTE. He's got a Jajun.
Yes, so he sold the 245. He sold a call spread. Sold the 245, 250 call spread, and then bought it back. So just a and he, I don't know if he tweeted this or someone tweeted a trade like this last week, and that's when I said, I'll do something similar, and I did similar trade, like sold a spread for about 80 cents, bought it back for 40 cents very quickly. So you just need a little move. You just need a little move.
You just need a little bit of a move. But what's great here is, I mean, he's sized up. He did a 6 lot, so $150 is pretty good.
Yeah. So good.
Yeah. And then here we go. What is this? Adam Parker was actually Peter Parker on CNBC yesterday. Hashtag Liz and Jenny. Also, Liz and Jenny ETF. What?
Also,
on Wednesdays we wear pink. Do you know what this is from, right? Mean Girls?
Oh, from Mean Girls.
Yeah, she's from Mean Girls too. Thank you very much.
Someone adds their Boeing position. Let's take a look at Boeing.
Go back to Boeing. Are you in Boeing right now?
Let me look at my account. No, if it looks like that, I'm not in it.
You know what I think you know what I think? We've got an earnings setup calendar at the 217 level, Jenny Andrews.
I think we looked at this. They don't have 217 strikes.
Darn it!
Yeah, they don't. They don't.
They're doing that.
Okay.
They do here.
No, I don't have Boeing right now. I'll wait for a fall and get back in.
Hold on. This is the dumbest thing we're ever going to do. 163 for a 217, 3-day, 10-day.
Oh, sure. Go ahead, Liz. Go ahead.
Now, this is not adding to our Boeing position, but this is just something for fun. And we're going to put a very tight GTC in on that, and then we'll be in on something on earnings. I want to see what Oklo is doing too. So this has been, what do we have here?
It's down today.
And we have a short put spread, the 55-40 put spread, and a long put spread.
Don't you remember this? This was our chance at $2,000.
Yes, I do.
Oh, or was it like the buffer trade? Yes, just go to the analysis and see what this position is like.
Okay, so this is, Jenny, so let me tell you exactly what's happening here. This is our debit spread and then the buffer, and we bought something because we had to buy something to define our risk. So I'm going to go back to the position page, and I want to see what's happening here. The one that we purchased is actually helping us because we bought it for 147. And it's 170. This is our in the money put, which is if it's going to go up. And here's our debit spread. So our break even on this.
If you go to the analysis page just to see how far are we from starting to at expiration.
What? Wait, hold on a second. I meant
curve analysis. And this will show us, we had room when we put this trade on, it was trading 60. So if it kept going up, we can make money. And we had room getting our break even to 55. Now it's trading 53.64. So $1.50 below our break even at expiration, we'd be out at $1.50. I like having this feature of the analysis page. And then it kind of jogs our memory of what is this trade.
And so the buffer trades have been in the news lately. I was listening to Vanetta this morning, and she was saying that Kathy Wood is now starting to do a bunch of buffer ETFs. And that's all that the buffer trade is. And I know we walked through it pretty quickly here, but breaking it down, we know that we just bought this 40 put to for capital
just to release
capital. This is cash secured. And so we used the 60-55 as our buffer, meaning you're going to cap you'll be long it at that little area where if we go back, that's our buffer, meaning we're not going to lose any money between 60 and 55. And we knew it was trading 60. The 80 put, the one we sold, is the synthetic covered call. So when you layer these on there, the buffer trade, that's exactly what it means. If it was trading 60, we wanted profit potential to the upside. We were bullish, but we didn't want to lose any money until it got to 55. There's your buffer.
There's our buffer. And so this trade this is an August trade.
This is a longer term trade. Yes, we got 38 days. And I'm okay. I mean, I'm bullish Oklo.
I'm fine with it. I mean, we put it on when it was 60. We got our break even to 55. I don't know that there's much management to do with this. It's almost like too when you put on a zebra and the stock's not going up. Well, you put on a bullish trade and the stock's not going up. At least here we gave ourselves a little bit of room to be wrong, and it's breached that break even. But we still have 39 days in this trade, or 38 days in this trade.
Let's kind of go through this. I'm going to go to table. I want to put one on where we don't have to buy something so it doesn't look crazy. So let's go
find
to
a different product to put one on in. Like, how about DraftKings? How about DraftKings?
Oh, I like DraftKings.
That was down yesterday. I don't know if it's down again today, but it's up today.
But if you're going to take a look at this, I'm just going to kind of go through earnings. So, okay, I'm going to go to the 38 just because it's a $40 product. Okay, so the buffer is, on paper, it says, I would like upside potential, but I don't want to lose until it gets down X amount of a percent. And we know, because we're all educated tasty traders, that that's a put spread, a long put spread, and a covered call, right? Just put them together.
Right. So you have your covered call. So if I own the stock and I want to sell a call against it.
I just want to see how much these are. So I got to narrow it a little bit.
Yeah.
So this would technically be a buffer. Meaning I just grabbed, so you've got and percentage wise, let's talk about this. So
yeah, just walk through how you're picking your strikes, just for for someone new who's never.
I start with the debit spread because I need to make sure that we're getting enough collection in our covered call, right? So I started with the just in the money call, and then I went to the expected move.
Just in the money put, and buying a put spread.
And then buying a put spread. So I know my total debit is 196, which means I'd have to find a call that has about that extrinsic value. That's why when I did that, I was like, oof, the 44 is way too tight for me. So the option is to narrow your spread. So this will give us $3 in buffer. Actually, let me see if I can get 4.
What else you could do, and I know the P&L graph will look like you'll have a little dip, but you could shift your put spread, shift that down a little bit. It's tricky because we're trading 42.36, so you could shift that down a little bit to give yourself, wherever your short put is of the put spread, that's where your buffer ends, where your break even is going to be.
Just to kind of show this, so that's 116, so you can go to here and then sell the 46 put. So the in the money put is acting as a synthetic covered call at the 46 level. The 42.39 put spread is acting as our buffer, meaning we don't start losing money until we get to 39. Now, to Jenny's point, we know that it'll look, why does it keep going to active? We know that you'll lose a little bit of money here, like $34.
But not much. But then you have that upside potential.
That's not bad.
No. Now, you could also create, if someone says, oh, I want a collar where I, sell a call and the credit I take in for selling the call I use to buy a put, you could create that with the options using one short in the money put and one long out of the money put. And it's really just a put spread.
Oh, it is a put spread.
So let's say
if this is a covered call, let's say you want here, if this is a covered call, because this is a covered call at the 47 level, you're getting $1.15 in extrinsic value. $1.15. Yeah, your profit potential is where the stock is trading up to 47 plus your extrinsic value. There's your covered call. In order to create the collar where you want to risk define your loss, you're just buying that. You're capping your loss at 37.
Right, and you could.
This is different than the buffer.
No, but
the collar is different.
It's different than the buffer, but it is. So now typically in a collar, people might, whatever they collect on their call, spend that on their put. But yeah, this is one where you've capped your upside potential. It's a similar concept where you're capping your upside potential and you're capping your loss to the downside.
This is a stock protection. The buffer gives you a buffer. This will never give you a buffer. You will still lose money if it goes down, and you will make money if it goes up. You're just capped.
Where the buffer gives you that room for the stock to fall a little bit before you start losing.
Yes. So that is the little bit of the difference. And I think that's why when somebody goes in and sells it on paper, this looks better.
The buffer.
Yeah. You know what I mean? It just does. Like if I went here, it just looks a little bit better. Hold on. Let me go to curve.
Because you've got that little bit of room. You get that little bit of room before you would start losing. So you have some profit potential, but you've got room for the stock to go down before you start losing.
Yeah, you have this little bit of room.
Yeah.
So, I mean, that was kind of walking through the buffer. Do you want to put this on? Now, we'll put it on a down day. Because it's already up, 5% today.
And it's already 11. But I agree. Let's start looking for some. The buffer's been a hot topic, sounds like, lately.
It has been a hot topic.
Because, it's 11, and we're out of time, and I know the boys are waiting to get in.
Oh, yeah, Thomas Westwater's waiting. I mean, I don't know if you can see it on my screen. Should I admit him?
All right, everybody. Thanks for watching. Remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show.
We'll see you tomorrow.
Everybody.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at Tastylive.
If you missed the live show, here's our cherry on top weekly recap.
Question for you guys.
Yes.
Vanetta this morning was giving me a little flack. It was lighthearted. She meant well.
Okay.
For my particular baby face.
Yes. You are young.
Just
young.
question for you guys, because I look up to you both. How much of your success, I don't know, financially with the ladies, do you attribute to having facial hair? Is it something I should work on actively?
Ooh. See, the thing, I can hear John laughing out there. See, the thing is that, you either have it or you don't have it. And
All right.
You just don't.
I could put together a pretty gnarly neck beard.
It's a manly thing. But
last time I shaved my face, it was to dress up as Sting for Halloween. Like Sting the wrestler.
Every time I leave Tasty, I miss it. Even like when I go home after work, I think about Tasty. I'm like, I wish I was really in the office.
No, you don't.
I don't.
You just went abroad. Were you able to just fully disconnect?
Fully.
Yeah.
We saw several artisans, but the sword maker. 3 months to make a sword.
Yeah.
That's
when does yours get delivered?
50,
you didn't do the sword?
50 grand. And there's
but that's,
and a 2-year wait list.
It's a couple spoons.
Yeah, that's, come on.
Going to Rockford for a wedding. It's going to be a very fun wedding.
Your friend that's getting married, or is it your girlfriend's friend?
Girlfriend's friend.
Do you want your girl to catch the bouquet?
No. That never ends well. Like in movies, that happens. The guy's like,
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batiste. I've got my man, Mikey Butler, and, of course, Mr. Thomas Westwater in the house with us today for our Thomas Tuesdays. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show, whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Come hang with us for the next hour of the day. My favorite hour of the day gets spent with my buddies, Mike and Thomas. Thomas, good morning, sir. How are you?
I'm doing excellent. You know, the weather is beautiful here, finally. We're out of this heat humidity wave that we had, so I'm really enjoying it. The plants are enjoying it. The chickens are enjoying it.
Good. Did you have a good 4th of July? You come back with all your fingers? Perfect. Good. The finger check.
Yeah. You know, I don't like seeing the videos, but you always see those videos after 4th of July where someone is just lights something and it goes off in their hand, and then they're looking at their hand that is no longer there.
You'd think we'd learn at some point.
You got to be safe. Yeah.
It's really not hard to not do that. If you're gonna light off a mortar, just go buy an extension.
Yeah, you gotta get the little
wick.
Yeah,
and just add it on there, and then you have way more time to actually light it. You know, it's just people are just, you know,
or just don't hold it in your hand when you light it.
Yeah.
You would think.
Correct.
You know, because everything is made in China, and those wicks sometimes burn a lot quicker than they're supposed to.
Yeah. Especially with the tariffs, they might burn even faster.
Yeah,
you know what I'm saying?
Even
trying to send a message.
But yes, it is nice here in Chicago. It almost feels fake.
Yes.
Feels fake. But
we had a special guest today too in the studio.
Yes.
The one and only Big Shark, aka Shark Jeeve on the follow page. You see him on there. He's visiting us today. It's a beautiful day.
Yeah. I was in Lake Geneva for the 4th, and I drove by some farms. And let me tell you, the corn looks healthy and the wheat looks healthy.
Surprising. It's been so hot. I feel like it's been like too hot.
Yeah. They call Lake Geneva the Hamptons of the Midwest.
Ah, yes, no doubt.
That is correct. Yep. Yep. What's going on in the markets? Markets are flat.
Yeah, been a chop fest today. We got E-mini S&P 500 futures 62.75, basically unchanged. We're down a tick right now. They've had about a 35-point intraday range, so very, very muted, as you can see with volatility. We'll get to that in a moment. NASDAQ up 20. You got the Dow down 140 and the Russell up 15, so the Russell really bucking the trend today. Oil, 68.36. It's bounced a little bit, but chopping around the 65 to 70 range for the better part of the last 2 weeks or so, ever since the 12-day war ended. Volatility futures down 78 ticks, 4%, 1806. The VIX itself at 1680. Volatility getting absolutely hammered today, despite all the tariff headlines and the Taco Tuesday. Maybe that's part of it. But volatility is just getting hammered here. Bonds down 10 ticks. They were down about another 7 or 8 ticks from here. They've been super, super weak over the last 5 or 6 trading sessions. Gold also getting spanked. Gold down to 3,300 here, down $35. Silver down 33 cents. Then Bitcoin basically unchanged here, but it's had a pretty wide range, about $2,000. Spot's up 300 and change here. A little bit of a weird day. The volatility move is kind of the one that has me scratching my head the most, that it would be down 4% on considering what happened yesterday, as well as just the fact that it's kind of a nothing move for the session. I mean, I would have expected volatility to be like flat, not down.
Bless you.
I got a sneeze and I got a little everything here.
I yawned, you coughed and sneezed. What's next?
Got them all.
Yeah.
Nobody fart, okay?
Wait, that's what we need.
It's a closed room in here.
That's what we need on the soundboard.
It's a closed room.
We need a fart on the soundboard so that Tom or Tony can blame Tom, and then Tom would be like, "I didn't do it," and then it can be a whole thing. You know what I'm saying?
Little fart machine.
Yeah. Yeah, it feels. I mean, obviously, I think we're getting a vol crush due to just the lack of movement in the narrow range today. But I don't like it for the perception of the future, which is grind. We need vol, and I think we thought
you never know how much you miss it until it's gone. You know,
it's like that song. What's the song? Don't know what you got till it's gone.
Yeah.
In a parking lot.
Yeah.
That one.
Exactly.
That was good. That was
Thank
good.
you.
Exactly.
Thank you. I mean, we have some numbers next week, CPI, PPI, but it's just like when you look at the expected move in SPX, we are back in the doldrums.
Summer, baby. Summer trading.
Sub 100-point moves. Like for the rest of the week, 57-point expected move. That's nothing. And through next week, 100-point expected move. That's through the next 10 days. So
you can
what to do.
You can see a little bit of a extra volatility in the because the tariffs have moved, or I don't even know what to call them now. But August 1st is now when they go into effect. You can see if you look at the end of July, the expirations going into August, there is a little bit of a vol premium there. You can see it kind of getting priced in starting around August. But yeah, it's been a weird session for volatility. Down to 18 now. It's the low. It seems like this is just another dip to buy.
Yeah.
Yes.
We do have some fabricated implied volatility, though. We've got earnings coming up next week. Delta Airlines is reporting before the open tomorrow. Nope, before the open on Thursday. Thomas wrote an earnings preview for that, so you can check that out in the News and Insights tab.
Okay.
But the banks typically kick off the meat of the earnings season, and those are reporting the 15th before the market opens. So on Tuesday before the market opens. So you got Citigroup, JP Morgan, Wells Fargo, and then a slew of other earnings trades after that. So maybe we'll see some big moves. Maybe we'll get more info on the tariff implications for a lot of these companies, but we'll see.
Market vol is saying, who cares about earnings?
Yeah.
That's what it looks like here. Have you done anything today, Mikey?
No. Nope.
Damn.
It's a hard no. I thought about adjusting. So one thing I'm keeping my eye on, this UAL inverted strangle. I've had this on for 61 days. Through the tariff stuff, it was a 90, 120 strangle. UAL went all the way down to 50?
Yep.
Yeah, 50. It's climbed all the way back, and I'm basically at a scratch. I'm just holding on to it. I'm in the 10-day cycle. I'm going to close this before earnings 8 days from now, but just trying to scrape some more shekels out of this one. If we get any kind of continued rally here, closer to 85, I'll be able to close this for a net winner after all is said and done.
What are you down now?
Like 70 cents.
Oh,
something like that.
Take that money and run.
You know how I am.
I know. It's
a problem.
It's a problem. Try. We could do a nice little anatomy of a trade on it.
Yeah. I need the greens. I need the green scratch. I need to win.
Stubborn.
Yeah.
Okay.
You open an FX account, now you're saying shekels all the time.
Yes.
Yes, that's true.
My,
Are you long 'em or short 'em? You're short 'em, right?
I am.
Long dollar, short shekel.
I'm long the dollar.
Yeah.
Short the shekel, which is finally starting to work. I'm still down in all of my positions, though, which is hilarious to me. Because I'm short the Aussie dollar, long the dollar franc, long the dollar shekel, and all 9 items, except for one of them, is red.
Oh, you're long the dollar, and if you look at the dollar index, which is money sign DXY, it is at, it's had a little bit of a bounce, a tiny one, but I'm with you as well. I actually got short some euro, the euro via the euro futures 6E with a call spread here that'll be in the cherry picks. Just talking about how, every currency it seems like is up against the dollar, really is when you look at the dollar index, but it seems to be the consensus trade now. I know Vecchio was talking about it this morning too, so I feel like you gotta be on the other side. You gotta be the contrarian side of that.
Yeah, especially if you're have the ability to hold it for a long period of time,
Yeah.
it's going to eventually go higher. In theory, potentially, eventually, definitely.
You really hedged the bets there.
Yeah.
I want to go through just a couple things I did this morning. Close out of a Micron position in my Johnny Trader account and my Apple long position. I closed out of that one as well. QS, which was a random trade that we took for, I think, Fast Market the other week when we were hosting. Was it Fast Market? Friday, yeah. I had like a calendar spread. That stock is up like $2 in the last 48 hours. So I took some money out of that. I closed out the LLY Eli Lilly short put spread. I think somebody gave us that for Fast Market. I closed out of that crab trade that was right at the money. And then I sold a call spread against my Tesla short put spread, which is right at the money. And then 2 new trade ideas that will come in the cherry picks later this afternoon. We're a little bit slow this morning working on some things. I have a Palantir Strangle. 1 standard deviation in August, 105, 175. And I guess it's slightly closer on the call side. If you look at Delta, there's a ton of skew to the upside. So I played into that, only used $1,300 in buying power, and then I got short the euro a little bit with short call spread in the euro futures.
Lovely.
That was my day today.
Yeah, I have a bunch of positions that are trying to become positions I can take off. I've got the gold butterfly to the downside. That's up $100. Still have risk in there. FedEx call diagonal. That's up 30 cents. GDXJ strangle. That's up 40 cents. Palantir Iron Condor. That's up 40 cents. Roblox short call spread. That's up 10 cents. So just like positions that are okay, but they're not ready to be taken off yet. But yes, I've got plenty of capital on the sidelines, and I'm fully ready to deploy a new position in the topic of the day.
Yes, the Corn Man is back.
Yes, indeed.
Yeah, we're back.
But yeah, join us on the YouTube channel. We're streaming live there. You can throw in your trade ideas, questions along the right-hand side chat. And yeah, let's dive in. Should we pull up the slides and see what's what? See just how healthy that corn is?
Did you taste any of the corn?
No. Did not. Just drove by.
It was probably field corn.
Yeah.
Is that different corn?
Yeah, there's field corn and sweet corn. So most of what you drive past is field corn. And that's for producing ethanol, things like that. It's very mealy and grainy.
Okay.
The one way you could tell is if field corn is going to be planted 6 inches together for the row, so it's very dense.
Sounds about right.
Sweet corn is going to be much more spread out, like a foot in spacing.
Oh, that's actually good insight for when if I'm driving through and I get a little hungry. Make sure I don't go to the.
Yeah.
I was definitely looking at field corn then.
Yeah.
Because it was just dense.
Yeah.
Dense, dark green, lush green. Yes.
Yeah, my neighbor 5 doors down, he owns all the fields around here. So right in back of my fence is a cornfield. Most years it's corn. Sometimes he does soybeans there. So I was talking to him one time. He was driving his tractor. He stopped and he was explaining all the differences to me. But he was playing field corn, so he told me don't take any of it. Says sometimes people go into the field, take some corn, think they're going to go home and cook it, and you know,
and
you're
it's not good.
All of a sudden, you have gasoline all over your table. Just kidding.
Yeah, but corn, it is interesting because we are coming up against 400 here, so the psychological level. This morning, you know, last week we defended 400 pretty much right on the nose. This morning we came below 400, got down around 396. It was bought up, and now we're going to test 400 again. So this is the level that if it's going to hold, it's going to hold here. If it's going to break through, we might see some more losses, but I went ahead, I got long a micro corn contract, so that's a fifth of the size of, you know, your standard CC contract. And I had to put spread on in CC, only 18 days left, so I had to take it off. with the loss, but I still want to stay bullish corn. So I just got into that micro contract, going to try that out a little bit. There's good volatility in the product. So IV rank is 70 right now in corn. And this is the sell-off since these mid-June levels. We had the June acreage report come in, 5% higher corn than last year for the acres planted. And we'll go through some slides here, see how everything's going.
Beautiful.
So the first slide, this is from the acreage report. So 2025, you see that the area harvested, area planted, it's gone up from last year. So more farmers planting corn, that means more supply. And the demand has been tepid in the first quarter, but now it's starting to come back a little bit. So we have the WASD, it comes out on July 11th, I believe. It's either Thursday or Friday. I think it's Friday for the WASD.
Okay.
So WASD is a monthly report, the World Agricultural Supply and Demand Estimates. We'll see the supply, the demand, all those estimates coming in. There isn't a lot of trade desk estimates out there yet. I was going to put them on there, but those are probably going to come in over the next couple days. So what we want to see is production. It's probably going to raise because of these acres planted, but we want to see it come in below estimates. We want to see exports rise, demand rise, and ending stocks, most importantly, for the old crop and the new crop. We want to see those come down if we're getting along. So let's go to the next slide.
Next slide, please. There we go.
Yes. So here is by year for the last 5 years, corn exports. And this is for the week ending June 26. We are at the highest level of corn exports in the last 5 years. So exports, especially the last few weeks, have really picked up steam. So they're running above the USDA's projected exports for this year. I think we're like 2 or 3% above it. So definitely above trend there. It's definitely bullish. If this export pressure keeps up, it's going to be, a tailwind for corn.
That's supply side, right?
Yeah.
So, I mean, like you lower supply theoretically would mean higher prices, and you got corn at lows. So I like that.
Yeah, corn is definitely at lows here. Like we said, 400. This could be the spot, trading at 425 right now. Let's go to the next slide. I think this is positioning. So this red line on the chart is shorts. The green line is longs. We've seen this sell-off. The longs have, taken off their positions. They've went from very long to not very long. And the shorts have now, they're at the highest they've been since... Where is that? August 2024, right around there. So the shorts are definitely, I would say, starting to get saturated. So this short corn trade is becoming, popular, crowded, whatever you want to call it. And when the prices get low, you see these things called short squeezes where, the trend shifts. And all these shorts now have to start getting out of their positions, so they have to start buying them back. And that adds pressure, and the whole short squeeze term comes into play. So I think positioning is quite conducive to, if these prices do turn around or we stabilize at 400, these shorts starting to get out of their positions.
These are the charts that really get me
fired up.
I love these contrarian charts because it's cool to see in, looking back at just, the sentiment change that you can see via positioning. Like you see that shorts are at the peak at lows and longs are peak at highs. I mean, it's such a perfect example of being contrarian in trading and why we look for these sort of opportunities. And obviously, those trends, they don't flip right on a dime, but, and they're not always huge moves or quick moves, but it's cool to see. I love these. I feel like futures are more because the products are sort of cyclical or, there's less like binary nature to them. This sort of like, extreme positioning tends to be more a higher correlation in terms of like, being a contrarian indicator. It's hard to play that with an Apple or an NVIDIA or something that has so much like binary new products, people leaving, people coming on, whatever. There's so much more to that than there is with these products where it really plays out as sort of a positioning play. It's cool.
Yeah, and if you inverted that red line, going back to probably August there, it's pretty much, longs and shorts are doing exactly the opposite of each other.
Uh-huh.
And before that, you saw that to a smaller degree, but it seems like when these positions are running opposite so equally, you get more of a sentiment-driven moves in the market.
Mm-hmm.
But let's flip over to the next slide. That is going to be us looking at ethanol production. So again, this is the field corn, which is most of what you see planted out there, and most of what farmers plant is going to produce ethanol. So we saw in June these ethanol production levels hit a 5-year high. They've come down the past 3 weeks. The latest week it only came down very, very marginally. But we're still elevated if you look at the past few years here. We're seeing good strength in ethanol production, and also U.S. crude stocks for oil are below the 5-year average right now. So you need to use that ethanol to get, or that corn to get that ethanol. So if we see this ethanol strength pick up, that's also conducive to a long play on corn here. One thing I did not put in the slides was the crop progress report. It comes out every Monday. And the corn condition rated good for the previous week was 58%. That's compared to 52% a year ago. So the weather has been pretty good for corn growing. The acreage report, 5% over. And now this 5% increase in acres, it's doing pretty good. So this has also, played into why corn has been selling off. So what we could look at now for long corn via weather exposure is drought, another heat wave, things like that, which aren't unusual in July. Also severe storms, which hail could damage the crop. If you're on the long side, you want to look for those kind of events. So severe storms or severe drought across the corn belt. But I think all things considered, it's leading up to this WASDE report on Friday. I think WASDE is kind of going to be the trigger when these shorts evaluate, are they going to stay in or are they going to get out? So if these high export figures, feed into lower ending stocks, I think you're going to see some of these shorts start to exit their positions. Bounce up to 420 isn't out of the question over the next few weeks. And then to be cautious, if we make a significant close below 400, that could, be concerning from a technical perspective.
Okay. Well, I know I'm in.
I've been in for the last 10 minutes.
Yeah, me too. I just sold an out of the money put spread, 390, 375. What'd you do?
I did the 400, 420 diagonal spread, long the 45-day, short the 17-day, both settled to the U contract. So yeah, I now have two diagonal spreads on. I've got the 400, 420 and the 420, 450. Same cycles. So I've effectively doubled down.
Thomas, is this sort of in play for soybeans or wheat, or just less, are we seeing the same? Because soybeans are near the lows. I haven't looked at wheat as well. Is this sort of dynamic playing out in those two as well, just being like overly shorted?
Yeah, It's a little like that, I think. I checked last week for the wheat numbers, so don't take my word for it, but pulling it up right now. Let's see how the wheat non-commercial short. Yeah, I mean, wheat isn't, the shorts are not that extended as they are in corn.
Mm-hmm.
They're actually, the shorts have come off from a couple weeks ago, so there's been some covering there already. But the wheat market is quite different because you get Ukraine, you get Russia exporting a lot of wheat. So what's happening there is also a big influence, whereas corn is much more U.S. centric.
Okay.
What do you say about this long-term support line at 300?
For which one?
For corn. Is there any sort of narrative around that? It seems like all the way back to 2008, it's basically hovered above 300, and if it got close to it, it just bounced immediately.
Yeah, I mean, that's still 100 below where we are.
Yeah.
So I mean, you'd have to get a 25% sell off to get around there.
Yeah.
Probably be a problem if we got there, I would imagine.
Yeah, if we got down there, I would definitely get long, but you'd be taking a lot of pain if you're long on the way to 300.
Is it time to get long natty gas? You got us in a position the other week, took some profits in that. Are we back in again?
Yeah, we got the quick bounce in natty gas, and now we're coming back under. We haven't broken the swing lows from, July 1st, July 7th. Yesterday was a pretty wide range day, which shows me that there's a lot of indecision in the market right now. I'm long, so I still have on my micro NG contract. I still have on my short put spread at 3.25, 3.3. So we're, right there. I'm going to keep those on for now. But yeah, it's definitely the bears are trying to press their luck here. And it's been, we're trading at the lowest we've been in over a year pretty much. So, I mean, if you're going to get long, I think this is a decent spot to get long. But it's natty gas, so there's, it could keep making this move. You just got to have a little resolve when you're trading it. I'm staying long here, though.
Yeah, I think I'm ready to join you.
Are you in the Q contract or the U contract?
Front.
I'm in the Q.
Yeah. I just sold in the at the money put spread. Risk one to make one, pretty much.
Lovely. Yeah, I had the call vertical spread, the long the 337, short the 35, and I closed it the next day for $120 because we got that rally immediately. So I'm looking at the same price. It looks like the same prices between the Q and the U contracts if you wanted a little more time. The price of the contract is basically the same too. It's 3/100ths of a point higher. So virtually the same. I think that's what I'm gonna do. I think I'm gonna get into the longer term one.
Okay.
And do the same trade, 337, 335. Just give myself some more time.
Beautiful.
Yeah, and I mean, the volatility has stayed, pretty low for the move we've had. So that gives me caution going on the short side right here with prices down where they are. I wouldn't be surprised to see a big bounce maybe later this week or next week, but that's speculative.
Cool. I'm in.
I'm also in. We're all in.
We can all enjoy the pain together.
Perfect.
At least the short term.
That's what it's all about. Glorious. Well, thank you for that.
Yes.
We will pop those trades over to the follow page shortly.
You got some trade ideas? Throw them in the chat. Questions for Thomas on anything futures related? You can give us that too.
Are we doing anything for micro crude? What are you seeing? Thoughts?
I do not have anything on in micro crude. I have an iron condor in crude oil futures. So I did the 38-day 59, 57, 5. And then on the upside, I'm at 70, 71 and a half. And this position has basically not moved. I did this at 52 cents, still trading at that. Just trying to play this, 60 to 70 range that we've kind of been in, other than the explosion that we had in the, bombs dropping. So if we can stay below, 70 here, that'd be perfect. And volatility there has come in significantly, but not at lows. On the lower end, but not at lows yet.
Cool.
Yeah. Crude is getting a little bit of a geopolitical premium back in it. We had the Houthis hit a ship in the Red Sea. It killed a couple people on the ship. So that is going to keep those insurance and shipping rates high. It's going to keep, a little bit of that risk premium in there. Even though OPEC, they came out last week, said they were going to pump more oil in August. It was higher than expected. Market was looking for an increase of 411,000 barrels per day. They came in somewhere around 548, I think, if I remember that number correctly. So, even though the market's seeing more supply from that, this risk premium, low stocks in the U.S. and some other places are keeping us aloft for now.
Do any of the oil stocks interest you, or even an XLE or XOP?
I mean,
they've all kind of
Exxon's been having a good rally here alongside oil prices.
Yeah,
you don't got much volatility in there.
They don't. Yeah, it is. That's a tough one.
How about these lean hogs? Sorry, live cattle.
The live cattle. I've been out of that trade for a bit now. I got out somewhere around that June swing high. But we've come back pretty strongly. We're retesting this June high around 220. So it's that it's at odds with seasonality, because the seasonality for July with the live cattle and the lean hogs, you usually see prices start to decline all the way to September, October. And, we are seeing that prices are still increasing. The cash prices in the market for beef cutouts and things like that are still strong. So, it's, if we get over that 220, it could definitely ride higher, but we're coming up to that point of resistance. So,
and the hogs have come down too. You played that one
hogs
nicely.
Haven't recovered like the cattle has.
With the 4th of July, everybody gets their brisket out of the way.
Yeah, the hogs are more seasonally doing what they do right now.
Love it. Getting into selling delta against long delta. $1 wide spreads on SPY, 1 day out to cover long trades. Is this a good strategy or too much risk? $1 wide spreads on SPY isn't really going to move the needle.
Yeah.
So it's just
1 day out. They're going to trade for 20 cents.
Yeah. It depends on exactly what you're doing. But if you're doing that in size, like multiple contracts, I'm not sure I like it.
Yeah.
But if it's working for you, it is what it is. But yeah, give us a little more context on that. Trade idea in BABA.
Okay. Getting long China.
Long 2, 110 calls in September. Short 1, 120 call, and 115 in August. So a call crab.
They want to do it.
Yeah, 110, 115, 120.
110, 115, 120.
Or maybe they're short both of those actually.
Yeah, I think they were doing like 2 diagonal spreads, which is but it's just like a
double single.
Yeah, you're just different strikes. You're just doing it. It's a diagonal, but
yeah,
just multiple strikes. I mean, I usually swear off trading these, and there was a weird, some sort of cash dividend, I think it was, or like some sort of distribution that happened where they had another, like there's a non-standard option chain. So just make sure that you are trading the new standard option chain, which is adjusted for whatever this was. I don't know if it was a dividend or a special dividend or anything. Who knows really with some of these stocks, but stock is near lows, having a little bit of a bounce today. I'm light on positions. I will indulge the peeps. I think I'm going to do the 110, 120 and stick to my normal 40, 20-ish delta. I do the 115. I'll do that. 115, 120. Cheapy, $2 and change, $2.92. That seems about right for me, considering I don't have the greatest success with these. And I guess it's like a China tariff pause deal, whatever type trade as well. If something gets resolved there, you probably see a bump in some of these stocks.
Indeed.
I just saw a tweet that says everybody pays on August 1st. Everybody. Even you, Mikey.
Yeah. I already paid my taxes. It was really fun.
Smile.
Yeah. It was really great. Great time.
Yes.
When you look at corn, how do you get the positions on the chart? Long or short positioning?
So those are on TradingView, right? Thomas is the one that you're using?
Yeah. You could get it from TradingView. You could look at the CFTC's actual website. They publish the commitments of traders reports. They the aggregated report, the disaggregated. So you could see not only non-commercial, you can see commercial positioning, fund manager. It makes it broad categories.
Nice.
There's also various websites that have it already charted for you. If you type in like COT on certain products, you could usually find it somewhere in the search results.
I mean, who needs to search anymore? You could probably chat GPT it. I'd probably give you that nice and pretty too. Easy.
So back to the SPY thing, selling 5 spreads to collect 150 or more. I would just sell 1 spread, 5 points wide. Commissions are going to be lower, and you have a better break even. Your break even's 5 points higher than your 1 point, or it's going to be 4 points higher than your 1 point spread.
Yeah.
The break even on your 1 spread is your max loss point on your 5 times $1 wide spreads.
Yes.
You might give up a little bit, but I think it's worth it.
Or go to SPX.
Or go to SPX.
And do 1 contract.
1 5 point wide. Yeah. Yeah.
Be a little closer at the money on SPX.
Because in SPY, if you do this in SPY, you have another 40 points of wiggle room to the upside before you see the same max loss.
Yes, as if you're doing the $1 wide.
Yeah. And you could even move your strike in a little closer if you're trying to match that 150 collection.
Mm-hmm.
But yeah, we're always doing wider spreads one time versus multiple contracts of 1 point wide.
Yes.
What's the single most important thing when you're picking strikes for a diagonal spread?
I mean, I typically go to the 40 delta for the long option or somewhere around that, and then I sell a 20 delta in the shorter duration or somewhere around that. It nets you long or short if you do it on the put side, about 20 deltas on entry. And that's just generally what my trading is. So if I'm selling puts, I look somewhere between a 20 to 30 delta, or strangles. I usually sell, 16 delta or maybe a 20 delta. So I'm always wrapped around the 20 delta options. That's what I want my positions to have from a directional perspective. I'm not selling really 50 delta, 60 delta puts in the money or something like that. I'm usually selling 20 delta puts. Same thing with my diagonal spreads. I want to be long or short 20-ish deltas, especially because you can get, you have some positive gamma there.
Yep.
Do you add anything else as your setup?
I usually just buy the at-the-money option in the long-term cycle, and I sell the expected move option in the near-term cycle. So where the orange bar is, which is around a 25 delta. So it's a very similar setup.
Yours is going to be a little bit more expensive and have a little bit less gamma. Probably not going to move as fast for or against you, which is a positive. Whereas mine will have, the 40-20 will have a little bit more gamma, and it's going to be a little bit cheaper, but it'll probably move more if you don't get the directional move that you need.
Yeah.
It'll move more against you quicker.
Yes. Any other YouTube chat questions?
That's it. Nobody wants to chat. I mean, I guess when you get a 2-point move, it's not the most exciting day in the markets.
Yeah, there's nothing happening.
Yeah,
it's really sad.
Looking at just the S&P 500, I guess Intel having its once a month $1 or $2 rally.
Hell yeah.
It tends to reverse at some point.
Love to see it.
That one's moving a little bit. You got some of the oil stocks, APA, Halliburton, Energy, DVN, Energy, ConocoPhillips is in there, SLB. So you got a lot of those stocks. All those things are moving. Downside, First Solar, Newmont Mining, NEM. What are you thinking on gold? Are you shocked by the move in the bond? Oh, did we lose Thomas?
I think we might have.
That's okay.
What about there? You're twice. You're incepted. How about Moderna?
NEM. What are you thinking on gold? Are you shocked by the move in the bond? Oh, did we lose Thomas?
Ooh.
We're getting a little inception.
We are fully
We'll bounce Thomas. We'll bring Thomas back. We got a couple minutes left. We'll bring Thomas back next week. I mean, we got the trade from him already, so
How about Moderna?
NEM. What are you thinking on
We're fully incepted now. How about Moderna? Up $3, 11%. I heard there was a new COVID thing going around. Is that neuroscience?
We get that every couple months. I don't know if I'm not getting along this. I can't do it. No more jabs.
Positive phase 3 results for a flu vaccine candidate.
Oh. Not me.
Yeah. It's a hard opt-out for me. Hard opt-out. Banks having some action, giving back a lot. Yeah, they are going to be interesting to watch because they are reporting next week.
What happened? What in
the banks?
Yeah, why
they're just selling off from massive highs.
That's a fair point.
JPM down 3.5% today after another red day yesterday.
Wow, sky is falling.
Yeah. Let's take a look.
They have earnings on the 15th.
Yeah. JPM, Wells Fargo, and Citibank, I believe. But yeah, I'm not seeing anything in terms of
butterfly or something.
News.
Not yet. Have to wait on that one. See somebody mentioning CoreWeave.
Ooh. Or is it Cores?
No, that's the
Core Scientific.
Yeah, that one is the company they're acquiring or potentially acquiring.
The put skew in Core.
Yeah, they're saying the put skew is wild, but basically untradeable. So let's see. So we can go out to August. Let's go. So the stock's at 154. Let's say the 100 put and the 200. No, we go to the 210. And yes, it is a ton of put skew here after having a ton of call skew. I wonder if the borrow rate has come down because I remember this was still 174%. That's a little odd one.
That's a big borrow rate.
Yeah.
Big borrow rate.
Do we do something here?
No. I'm not touching this thing.
What'd you do? Didn't the circle trade worked out?
The circle trade did work out.
What'd you do there? The 1-2, like
it was
a butterfly, but unbalanced.
Yeah, it was a much wider put vertical spread versus the credit. So there was no downside risk.
It was done for a debit.
It was done for debit, no downside risk. So I guess if you're doing something, maybe do that.
Yeah.
In like the 10-day, or I guess you could go to August.
Yeah.
Yeah, it would be something like the 140, 110, 90, something like that. 140, 110, 90 is a, actually it's going to be,
yeah, because you're 30 by 20.
Yeah.
So you have no risk to the downside.
Yeah. Maybe like a 140, 120, 110. That's closer to what I did in Circle.
Mm-hmm.
$7 debit. But yeah, if you get a downside move, that can, the nice thing about these downside put butterflies that are unbalanced in your favor is that if you do get the sell off closer to 120, that's likely paired with the vol crush too, which helps that long spread appreciate in value.
And the short spread not move as
And the short spread doesn't really move. So
like a crab trade.
Yeah. Maybe that's the new strategy for these stonks that go crazy that have 150% IV that we think are going down. We just do a staggered butterfly. Could work. What do you think?
Yeah, it's still juiced. I mean, in August, it's still really high implied volatility. So,
yeah. Yeah. Ooh, a 130, 110, 100 is trading for 666.
Ooh, that's all you, baby. No, I'm going to pass for now.
Core weave. Yeah, the markets are a little wide there. It's $3 wide bid-ask spread between that spread. So
yeah, I didn't even look at the spreads. I was too obsessed with trying to figure out how to trade it. Hey, you got dollar wide on all these strikes. So when you factor in 4 options, 3 legs at $1 wide, makes fills very, very hard. Definitely start, at the better prices and work your order from there. Don't just go with the mid price.
How about a short put in XLU at 80, right at the money?
Oh, Dr. Data would love this one.
I was going to say that.
It's a Dr. Data favorite. I always give him
the dollar puts.
So what do we trade in? So August at the money
for 80, the 80 strike.
God, I'd rather pull my teeth out.
I mean, technically you can do it
for $1,
but if you're trying to just play for like a move from 80 to 83, you're going to get way more profit potential if you do a call zebra.
Yeah. The buying power here is just too, $1,500 is just too much. I'd rather buy a in the money call at $500.
Yeah. Not even. You could buy a 78 or 79 for $300 and just, if you get that move, that option doubles.
It's almost so low vol that you can just buy the option as opposed to.
Yeah. But yeah, zebra, if you're trying to get rid of extrinsic value, a zebra is not too crazy expensive. You're looking at $400 or $500 to get rid of most of the extrinsic value.
I'm going to do a poor man's cover call.
There you go.
These markets kind of stink though too. I guess the in the money. So when I'm looking at the September options, I thought the bid-ask spreads were not great, but some of these closer at the money strikes have a little bit better liquidity. I wonder if we have a little no volume. But so I was looking at the 75. I'm going to actually move this to the 76 just because the 20-cent wide market, a little bit tighter. I'll do the 82. This gives you a break even at 80.97, which is like 20, 30 cents out of the money from here. Pretty basic poor man's cover call type trade. Let's see if we get filled below. Got filled below the mid price too. That's why you work your orders. Save a couple shekels.
Mm-hmm. How about BRKB leaps?
Oh man. You know it's a dull market. Is it slash?
Yeah, it'll update if you just do BRKB, it'll update.
Oh.
But yeah, what do I think about leaps in BRKB? I think it's fine. If that's what you want to do. It's 20% IV. If I'm doing leaps in a situation like this, I just play for like a rebound to the all-time high or the recent high. So like if it's at 478, look at the leaps at 530 or 540, and if it gets up there, that's the sell point. Just makes it easy on yourself, but what are those costs is the question.
$1,000.
Yeah.
Go to January
of 26.
Yeah. Can't really go out much further because you want the gamma.
Yeah.
Like the delta of this option is like 20 or 30. It's going to move significantly.
It'll triple.
Yeah,
If you get back up there.
Yeah, so when you go to like a January of 2027, it'll
double.
Yeah, or less. I mean, it'll probably double. It's a 45 delta, and that's because that far out in time, most things go higher over time. So I'd rather go to the January expiration. It's a little bit more reasonable of a time frame. It's also a lot cheaper, obviously. So
yeah, but yeah, 20% IV stocks that have the ability to move. Totally fine with it.
Yeah, not for me though.
Yeah. Yep. Last one here. Maybe a vertical in LLY to catch the pre-earnings pump.
I caught it.
Now we're talking.
I caught it. I had a put spread that closed out this morning, 111. Now marked at $1.24, but.
So Smack 11's looking for a continued pre-earnings pump. But yeah, I mean, it's expensive, really expensive, so it's
got
tough.
Another month until earnings too.
Yeah, I think if you're doing something like that, maybe you do a calendar spread. You could do like long August, short the August 1st. That'll get you out of the earnings cycle in the short option. Still going to be expensive though. Yeah, it's probably too expensive for me. The market hasn't moved at all for the last hour. I don't know what to tell you. We need something. We need something here. Please. I think we're okay to head on out of here.
Yeah, let's do it.
For the
Taco Tuesday.
It is. So yeah, for the rest of the week, we do have some jobs numbers that come out on Thursday, but market's not really projecting anything too crazy. We would like to thank Thomas for his trade idea. Yes. So yeah, we are long corn. I got the 400, long the 400 call in the 45-day cycle, short the 420 in the 17-day cycle. So 20-point wide diagonal spread. Both of those options expire to the U contract. So it's a traditional calendar spread setup. And then got long natty gas. Long the 337 in the August 49-day, short the 35 in the same cycle. We'll get those on the follow page. But yeah, if you want to reach out to us on Twitter, I'm at Trader Mikey B, Nick's at Trader Nicky Bat, Thomas is at FX Westwater. Stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. And we'll be back same time, same place, 11 a.m. Central tomorrow. Peace.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
I think I went down the typical path of investing in stocks. And I was really frustrated in the sense that it was a buy and hope type strategy. And so I was looking at, different ways to learn about options. And I saw Mike and his whiteboard, and it all made sense. There's another world out there with options. It gives flexibility. It's more capital efficient. And tastylive does it again. They teach it in a way that is fun. It's easy to understand, and you're learning from people that have done it for 40 years.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
We're back. It's Tuesday, July 8th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Jamal Chandler. Jamal, are we dreaming, or is this market still sleepwalking through today?
Oh, Chris, I mean, I thought you knew. This is going to be the worst and most boring week of the year, probably. I mean, well, you know, it is what it is.
Is it? Is that the plan?
That's what I'm coining it as of right now. Based off of even yesterday's move, a 70 handle move, whatever, so quiet. It's so lacking of volume. And I feel like that's what we're going to get for most of this week because it's just kind of quiet. And we need that kind of week every now and again. But they can be dangerous too.
It feels like we've been overstimulated recently, Jamal. On a day like today, feels like I'm sitting around waiting for something to happen when nothing may come to pass. But I guess that's just your typical summer Tuesday. Volatility is in, volumes are exceedingly low, the markets are bobbing back and forth. Much ado about nothing here. President Trump is out talking about how much of a loser Fed Chair Jerome Powell is, saying that he should resign because apparently he's been perjuring himself in front of Congress. News to me. But we find ourselves in a world where perhaps that commentary is being issued because the market's telling the president and everyone else who's listening that the odds of a July rate cut have gone down. Over the past few sessions, we've seen that cut chance for the month of July, for that July 30th meeting, drop from the neighborhood of 20% to now below 5%. Likewise, a September cut favored, no longer with 100% pricing, only 68%. Will we get a cut by the end of the year? Yeah, perhaps. 94.69% chance that we get two, but that's now two full cuts that are not priced in. So Jamal, I mean, this is probably going to be the story that matters as we make our way into the fall, whether or not the Fed gives us a September cut. Do you think the market cares whatsoever about this July issue, even if it's something continually sent into our ear holes from the White House?
Stock market?
Fed cut odds, stock market.
I don't think so. I
care?
mean, bonds are showing that they care, but stock market, I don't think really cares that much. And quite frankly, I don't really care that much. I mean, look, I think it's an interesting topic because, again, mostly of the fact that we hear a lot about what's going on, you know, what the president says about Jerome Powell. I think that's what really makes it a topic. It doesn't seem as though the economy is screaming for a rate cut at this point in time. So, you know, those are, I mean, it's one of those times where, you know, you're just, it seems to be interesting in some circles, but it's really not worth talking about in others, honestly. The other thing I think makes it interesting is, sure, everybody wants lower rates. I mean, in your personal life, right? Everybody wants lower rates for those reasons, for different reasons or another. But outside of that, I mean, when I think back to, obviously it's a different time, 2022, when you could think back to whether or not we needed rates to rise, we totally needed it. I mean, based on the circumstances at that point in time. Now you go forward where we are now and you flip that and, you know, is it a situation of there's dire circumstances if we don't cut rates, and that's just not the case right now. So, yeah, I mean, a lot of this is commentary, you know, commentary based, whether or not we need a rate cut. The most interesting thing about it is what's going on with bonds, which we'll get to when we discuss that. I mean, that's probably the more interesting thing, whether or not it's worth a trade.
Yeah, the bond move has coincided with Fed cut odds going down here a little bit, although the scope and scale of the decline seems like it may be spurred on for other reasons. Jamal, one might surmise that if the reason the bond market was freaking out in April, we're erecting all these trade barriers, right? And the whole reason why countries buy our debt is because they have all these US dollars they need to recycle into something after we send them all this money to buy their tchotchkes. So if we're going to trade less with these people, they're going to have fewer US dollars in their hands, which means less demand for treasuries. So having, you know, a trade war type of situation going on and wanting to press on about rate cut, I don't know. It just seems like counterintuitive. I wouldn't be doing it that way if it were me. But this is what the market's telling us right now. So bond yields are down here after the bill, deficits and debts going up, and we're going to try to restrict trade a little bit and deprive ourselves of our trading partners who want to buy our debt. Well, stocks are stabilizing here on this Tuesday. S&P is down by 0.04. Nasdaq's up by 0.11. Your Russell's your leader, up by 0.84%, which perhaps is the most surprising news considering bonds at the long end of the curve are a bit weaker and banks aren't exactly faring well today. It's actually one of the weaker components. Yet the Russell here is effectively back to where we opened the week, Jamal. I don't have any long deltas going on in anything in stocks right now. I took them all off after non-farm payrolls last week. What's your take on this market right now? Because July is usually a pretty good month.
Yeah, my take has really been more one of, I'm still long the names that I am long, and I haven't changed though. I mean, am I seeing that right? Is there a huge spike? Sorry, I don't mean to disrupt. Did a huge spike in silver just happen?
Seems like it.
And I mean, sorry, not silver, copper. I seen it up 11%. Is that real?
You are.
And that's not good for me. Holy cow. What? just happened.
Let's take a brief detour here.
Yeah.
And see what just happened there.
Let's. Holy cow. I pulled up my position. I'm like, wait, what? Holy cow.
Trump is imposing a 50% tariff on copper.
Oh my God. That's not good at all.
Which, look, we brought this up in the past. When it comes to a commodity like copper, we as a country do not produce more than we consume. There's about an 800,000 ton deficit. We've been beating on this drum for a long time. We produce about 1.1 million tons. We consume about 1.9 million tons. Raising tariffs on goods that we do not produce or commodities that we do not produce enough of just raises costs, raises the input costs for everyone else. I got out of my short call spread in copper, Jamal, last week.
Wow.
Rather be lucky than good. This is no bueno. We'll be announcing a semiconductor tariffs, 200% tariffs on pharma.
Well, the one nice thing is this is at least out 49 days. Hopefully this settles down and calms down just a bit like things have in the past, similar to oil and some of these other things. But holy cow, that is a huge move.
That is a huge move, and that is quite the well, Mr. Westwater was pointing out that this is a market that could probably go up to 5.5 again. So kudos to him for that position he was holding.
Anyway, sorry to disrupt.
Yeah, anyway,
I could not ignore it.
Do stocks care?
I could not ignore it.
A commodity goes up 11% in the span of a few minutes. It's something that catches your attention. And yet, what are the stock markets doing right now on the back of this news? I mean, I guess they're slightly weaker, 22,920 down to 22,910 here in the NASDAQ. Volatility isn't exactly bumping up in the night right now or in the middle of the day. VIX 1685, we're still off 94 cents on the session, off the lows. But Jamal, I think that's really the whole taking a step back here. So much of this is noise right now. It's summer, right? Volumes are low, volatility is low. I have the idea that maybe you go out to the end of August and you get some downside protection while the sun's out and it's shining. It's cheap right now to buy umbrellas. You don't buy umbrellas when it starts to rain, as we've said for a long time around here. I'm buying puts on April 3rd. Okay, maybe it worked out for a few days, but that didn't last long. So if you're going to get bearish, probably now is the time on a longer dated scale. But tactically in the short term, the VIX is between 15 and 17. Volumes are this low. There's positive technical drift. You still have to have some long delta exposure on in the market in some form or fashion. Because historically, that's what the data tells us. If you're going to roll the dice and look at the probabilities, probabilistically, short term, you have to just grind this out. As uncomfortable and tedious as it may be, that's just where the math is. So it's about constructing the right exposure and staying small enough so that if this thing does turn sideways and one of these tariff headlines do end up blowing up the market, you can manage your position. And maybe that's why the longer dated short delta exposure is a worthwhile endeavor, because if things do go sideways, vol gets pumped.
You asked what I was doing. I mean, basically, I'm still long, but it's further out. So I have the Nasdaq. I have a Nasdaq call spread on further upside, like I mentioned, the one that I put on last week or rolled out to last week or whenever it was. Nasdaq and
that
then
was last
still
week, because immediately when after you told me and I said I'm going to stay with it, and I called out myself for knowing that every other time I ignore you, you end up being right and I end up losing money. Tuesday was down.
And then it's so funny. I'm almost not surprised you took it off, because again, it's either you take it off or you roll it out. Once we got the move again later that last week, I kudos to you for taking it off. I'm still long those, and again, it's 52 days out, so I'm comfortable holding that. I understand there's going to be some ups and downs, obviously. I mean, if you're bullish on the market, you want what's happened in the last couple of days and what's currently happening to happen. I mean, you get to highs, you get to new highs, and then you just kind of stall out, or you pull back just a little bit. This is exactly it. Now, whether or not we get a bigger pullback, or fall as a result of announcement of more tariffs yesterday, et cetera, who knows? Again, the goalposts have now been pushed out to August 1st. Whatever that may mean, theoretically, there's not going to be any new updates after that, or not any new extensions after that, but who knows? So yeah, for now, I do have those on. I mean, if we were to rally a little bit more, maybe through earnings. I know earnings are coming up soon, starting late next week. I feel like markets tend to be sort of somewhat range bound, if you will, during earnings because there's just so many different things happening and they don't necessarily, we've seen times where the markets were already tanking and then earnings made things a little bit tougher and worse or better. But I feel like generally we're going to sort of tread water at least a little bit here as, a lot of news is getting parsed out as people are still wondering what's going to happen with tariffs and the new discussions happening around that, and then earnings coming up soon. So that's what I'm holding on to. Those are the main two long equity exposures that I have right now. It's still the Russell, it's still the NASDAQ call spreads, but it's just further out in August.
Jamal, I'm just searching here for some information that may be of pertinence to us. What happens to inflation if CPI goes up by, say, 10%? There's actually a report that was put forth by CEPR over at VoxEU back in December of 2024, and they model out that a 10% increase in copper prices can lead to about a 0.06 increase in headline CPI 2 years out, and for core, it's about 0.04% at the peak. So will that get in the way of a Fed cut? I'll tell you, it doesn't make it easier if they see that there's a 50% tariff on copper coming down the pipeline, because that study covered a 10% move saying it would push up inflation. This is 11.4% today, Jamal. It's just it's a key raw material. And if we want rate cuts, and if that's what the market's looking for, then we just put a new obstacle in our path that makes it that much less likely to happen.
Yeah, and that's the thing. I think there's just so many different things, there's so many different things happening that the Fed has to pay attention to, that they need to have those levers to move anytime the economy gets in trouble, right? So why would they cut rates? I think that's just one of those other things that makes it obvious that they're not going to cut anytime soon. I'm not even sure if September's on the table anymore.
September is going to be really interesting. I think that September's either going to be no cut or we're going to get 50, because the Fed's going to have been so late it'll be just a rerun of last summer, where they don't do anything in August. They feel like they were late and they should have done something in July. And if they did something in July, it probably would have meant they would have done something in September as well, because the cut cycle began anew. And so they might as well just do 50 in September to make up for the one they didn't give us. And it's just last year. Total rewind. And it's going to be maddening. But it's a path. It's a path forward here. Do stocks care about this copper news? I mean, copper obviously does. Russell's still up about 0.85%. It's a 17.6 IVR. Jamal, you mentioned that you're sitting long those out of the money calls still. Do you prefer, is that really the modus operandi here? Volatility is going to be sitting around, in this range where IVRs are below 20, the VIX is 16, 17 handle. Is the most prudent thing to do to sell puts or to get at the money calls, out of the money calls?
The out of money call spreads are just a lot easier to do in this environment if we're going to continue to drift higher. They've worked out well. And again, being further out, you take an advantage of extrinsic value more than anything. I prefer to do that. I mean, look, the vol is not really there right now. Like the nice thing about the volatility complex is we've talked about this a couple of times. VIX, all the VIX futures, they're either above 16 or the futures are above 18 and change, which means the market is mostly moving around. And say for today, that's what we've seen. We've seen a lot of 1% moves on most days more recently. But in individual names or ETFs or even futures, it's just not there on the options front. I mean, these options aren't exactly, bloated in terms of volatility, whether it's the wings or whatever. So to be able to sell, I mean, you're just not gonna, you're just basically picking a direction at that point. I mean, what's the difference? They're out of the money. So, if you're selling out of the money, obviously that decays a little faster than anything else. But I would just rather play the upside versus selling downside in a market where we've already rallied quite a bit.
Yeah, I mean, right now, just looking at the difference, going basically out to 52 days to expiration here in the Russell, that's closest to the 45, so to speak. If you're doing the short put spread, basically wrapped around the one standard deviation band, okay? That would be short the 2050, long the 2025. In that case, it's an 85% probability of profit. You're risking basically $1,100 to make $150. Not a fantastic risk to reward. If you wanted to play it on the other end, right, you wanted to get a little bit more convexity here, So you're buying the 2450, you're selling the 2500. Again, wrapped around the 1 standard deviation move, 17% probability of profit, but it's basically a 10 to 1 risk to reward, a little bit beneath that, risking $237 to make 2,262 and a half. You and I have discussed the longer term potential here for the Russell. When we look at some of the charts where it appears there's a breakout of that downtrend that's defined the past 7 or 8 months, this inverse head and shoulders pattern that gives us a neckline closer to 2,200, and buttressing that neckline here, you have this 1 month moving average that's starting to creep up. So structurally, this becomes a very, very, very important area of support right now. As far as I'm concerned, if you're willing to give 2% in the Russell, right, you get back down to 2,200. If we can hold there, that seems to be a very constructive place to just base some risk around. 2,175, 2,200. I know that's not the 1 standard deviation move, but thinking about it in those terms, if you wanted to do a short put spread, that's actually a little bit more of an appealing profile if you're sticking to the technical threshold. It's a 2 to 1, and it's a 62% probability of profit. So there are ways to skin this cat, and I think that typical Tasty methodology, I think you're going to have to be a little bit closer to current price than you might be comfortable with. But there is a technical rationale around there where we've seen swing lows, pivot lows, many months going back to last September, October, including multiple times this year, January, February, and now here into June.
Yeah, I mean, I would just rather be long upside. For me, I like it better. It plays better, especially with the volatility at this low level in this environment. And I mean, at this point, honestly, I'm not too far away from being in the money. Knock on wood, we'll see. It's a 2,300, 2,400 and Russell. And again, it's 52 days out. So that's probably the most important thing, just giving time to it.
Time, letting things breathe. And I think that's I was alluding to this earlier, but perhaps when you go from such a high-strung environment like April, May, and yeah, June was really choppy for a while, but it was kind of like when you had green day, they were sizable, big green days, and then bleed-offs. You can get a little antsy. I get a little antsy. It leads to overtrading. I think that's the key takeaway here. Don't overtrade. You know, if you have a position, if you have a strategy, if you have an outlook, and if for the reasons that you put that trade on, they're all still valid. If I'm a technical person, are we still trading above the 1 week, which is above the 1 month, which is above the 50? Yes, yes, yes. MACD still trending higher above its signal line. Yes, it is for now. Is stochastic still overbought? Yes. Okay, so why would I get out of any long delta positions if I were in them on those bases? I wouldn't. And I think that's really what you have to do here so that you don't overtrade, that you don't mismanage positions. Stick to your checklist, stick to your strategy. Jamal, you're doing it well here. If the Russell is going to keep moving up, it has the technical structure that's been pushing it higher really since late April. And July is an excellent month for stocks. We get through this next few day period. This window in July tends to be a bit softer. But then you go into mid-July, like right up into July 18th, the market tends to peak right on July 18th, and July 18th onward, things tend to cool off. So we still have some time here, 10 days, Jamal, to get something going. And I don't think we should dismiss that. But if we do rally further, like if we see a 6,400 S&P, if we see like a 24, 25K NASDAQ, that has to be a gift for bears who want to get some downside plays in. And I will absolutely do that for August, September, October, given I just don't remember a time when that period has produced anything other than misery and contempt for bulls.
Well, that's the thing, right? You talk about overtrading, and that's the one thing I'm probably trying to avoid right now. I've the most of the positions that I have them at good durations. The ones that are the sells, I mean, they're within that 38-day window, if you will, or somewhere within the 45-day window. The few things that I have are longs are further out, whether it's equities or some of the other asset classes. So that's really where I'm kind of sticking right now. Like I'm trying not to overtrade, especially on a week like this week. And that's what I talked about. Like a week like this can be kind of dangerous because it's low volume and a lot of different things right now, which, could easily lead to the idea of why we just saw a huge surge in silver, right? Kind of low volume type of activity days. And so that can happen on weeks like this. Same thing in equities, right? We saw I remember yesterday it was 2 p.m. Eastern, and it was still not even 1 million contracts traded on ES, right? So this is that type of week where you'll easily sort of change around positions because things just aren't working on this particular week. But I don't expect a whole lot to work this week. And so for that reason, I'm just trying not to overtrade.
Don't overtrade. I think that's the timeless lesson here. Don't overtrade. So NASDAQ sticking around, S&P sticking around. In terms of sector performance, before we do turn our attention to bonds, which continue to bleed out here, top performing sectors as of now could change given what's going on with the metals, and XME is now in positive territory, but it goes over to the energy stocks. OIH up 4.66%, XOP up 3.72%, similar action for XLE and IYE. But then there's semiconductors. This seems to be a really quiet story that's been happening over the past few weeks. No one's really paying all that much attention to AI or even NVIDIA, which, let's going over to our charts here. This could be an all-time closing high for NVIDIA, Jamal. Why do you think that the market isn't tracking NVIDIA's every moves? It feels like it's just not in the spotlight the way that it used to be.
I think, a lot of it has been, the conversation has either been focused on, tariffs for a while there, right? And when we got to earnings, it came up again, and then it went away once again, and the shift went to what was going on with rates. And I feel like the discussion will come back again when it comes to earnings, which is not too far from now. Once we start getting earnings from a lot of those names, particularly the Mag 7 names, the discussion around AI is going to sort of ratchet up again. So it really hasn't been it hasn't been more, we haven't needed it to push stocks to new highs. It was really more of just like, they seem undervalued, let's buy them. It doesn't matter what the story is, but that story will come back, I think, again, once we get earnings.
I think that's a fair interpretation. Other sectors performing well here today, Jamal. Banks are popping up now. In fact, they are pulling up here a little bit more. Regional banks doing better than anything else, which, again, not shocking if oil is doing what it's doing. A lot of these banks have exposure to.
And the 10-year.
Right. And, yeah, exactly. What's going on with the 10-year too. This is great news for the Russell. We've been tracking this KRE breakout for the past few weeks, the potential for it there. And if regional banks are able to go, so too will Russell. This doesn't exactly scream like the structure's broken. Even yesterday's action, we pull back into the 1-week moving average, and today we're immediately pulling up off there. Every session since June 23rd, we've closed above it. So if we're thinking that the Russell's going to break, perhaps you need to look to the regional banks as a cue. Let's see this current thrust broken to the upside if you want to take a downside shot. Otherwise, what's the opposite of catching a falling knife?
I don't know.
That's the opposite situation. Oh, that'd be right, because it's going up. So it's not. I was
like, is this a riddle?
I've heard some really weird riddles in my day, which I don't even know how to transition after that. Let's go to bonds. This looks ugly. This looks really ugly. Why is the bond market freaking out again?
I don't know. I thought you'd have an answer for me. It's, the easy answer is the fact that they're starting to resign to the fact that we're not going to get a rate cut, right? That's the most acceptable answer. But is there more to it than that? Does it have something to do with the passage of the bill? Obviously, that's when the downfall started, middle of last week. So there's a lot at play there when we look at markets. But again, the stock market doesn't seem to have an issue with it. It's just kind of a bond market thing as of right now.
Well, stock market's probably not going to dislike it, right? Public sector deficits are private sector surpluses. So if the government's going to run up the scoreboard on the deficits and debts, and a plan that cuts taxes for the top 20% and raises taxes for the bottom 80% of income earners, who controls most of the wealth in the stock market in this country? The top 20% of income earners. So the stock market's probably fine. And those top 20% of income earners, are they going to buy more blue jeans and MacBooks, Jamal? Or are they going to take that extra post-tax earnings and shovel it back into financial assets and real estates, as we've seen people do for time immemorial in our capitalist system when they have excess savings? Okay, so bonds here, right? Like stock market's fine. You're going to pump the bags of the wealthiest who play in that field. But the deficits and debts with raising these trade barriers, it's just an incoherent policy message. And the bond market's telling you that. The technicals look terrible. Forget bullish falling wedges. This is now a bearish rising wedge, buttressed by its own evening star candlestick cluster at the start of the month. We lose the 1 week, the 1 month, the 50-day. Technically, that calls for a move back down towards the lows at 109. And I suppose with a 12.4 IVR, wouldn't be too expensive to get that kind of exposure. But the bond market here, I think, there's a tale of two cities, because you look over what's happening in ZT and you're not seeing that same type of dramatic gyration. It's almost like the short end of the curve is paying more attention to who's going to be the next Fed chair than anything else. So perhaps there's a yield curve steepener play in here. I haven't done like a 210 spread trade in so long. But that might be the feasible opportunity moving forward. If we're going to see the long end melt off, the twos are probably going to be pinned if Trump's going to have his guy in there by next May.
Mm-hmm.
That might be the better play right now, because selling, we were talking about this yesterday on air. I want to get long bonds, but when you have this type of price action where it's just like knife through butter, even on this 4-hour time frame, you're not seeing anything here. No break in the downside momentum, nothing in stochastics. We've been right. So like, why would I want to get long right now? It's on the watch list, but at a 12.4 IVR, I mean, you got to be nuts to think that you're going to sell puts near the yearly low and feel comfortable about it.
No. Again, this is another one where I went further out in duration. And so I'm in the September expiration right now. The idea being that obviously there's not going to be a cut in July, but maybe as we get closer to September, I probably should have gone October to give it a little more time to breathe, maybe. Because again, that's really what this centers around. Like you said, it's two things really. I mean, it's about whether or not there's a rate cut in September and when, if ever, does Trump get his guy in there, right? And so obviously that's going to be a situation where you see rate cuts, I would assume, if he does. So, I mean, this is really all about speculation. Let's be honest. I mean, this bond thing has been about speculation for a while. When will a rate cut happen? Who will be the one to administer it? And so I just decided to go further out in duration. I mean, there's no point in wasting time in anything near term at all if you're trying to be long here, whether you're trying to buy call spreads or sell put spreads or puts. I mean, there's no vol. It's fairly low. And again, I mean, you just kind of have an idea of what's going on in July and August at this point. So it's really about September and beyond. And that's why I decided to just go move my call spread out to September. I'm long the 115, 118 and the September 26 expiration. And that's what I'm sitting with for now.
115, 118, September 25th expiration. 39% pop, 3-1 reward to risk, which is pretty nice. I still have my long delta exposure on in the 115, 117 call spread, which structured in the manner that it was is intended to be a soft loss. But let's say that we could play into the yearly lows if you wanted to play the wedge. The way to do that would be something like long the 109, short the 107. It's roughly a risking 1 to make 3 type of trade. Actually closer to risking 1 to make 4 type of trade, 22% probability of profit. But if you wanted to go typical Tasty here and say, you know what, this move in bonds, we're not going to break the yearly low. We're not going to get down through 109 and 20 ticks. I'm willing to trade right around there, go 2 points wide. You can get a risk 3 to make 1 type of setup that's a little bit, I like a little bit less pop, so I could squeeze a little bit more potential profit out. It's at 74%, but there's still, you can approach this if you're going to give yourself enough time, right? The duration is the biggest effect on this whole position. If you're going to try to catch a falling knife, you got to give yourself breathing room to take some cuts. So for me, I'm not going to take 80 days.
I would rather, I would go a different typical Tasty situation. I would go an in the money call spread if people are so inclined. If you don't want to have an out of the money situation, or if you don't want to sell the put, I would do like the 111, 114, right? It's buying power wise, it is
a little rich,
3 times more than what you just showed on the selling that put spread. But max loss wise, it's essentially the same. Max loss and max profit, and your pop is 57%. Now, again, if we do fall lower to 110s or something like that, right? Yearly lows, that's a whole different, another ball game. I mean, then you're losing more. Probably faster, I should say. You're not losing more. I mean, again, max losses are similar, but again, the amount of money that you're paying, you're going to lose as we start to fall. Like that's going to fall a lot harder. But again, if you want to look at something where you got a higher pop, this is it. I just chose to go with a lower pop because I'm not giving up as much money on up front, right? That's the only way I did it.
Sure.
I did it with the 115, 118 for that reason. But this is really probably like the best tasty trade to put on right now for bonds. If you feel like bonds are going to bounce back, 111, 114. I just don't want to put that much money up front.
Right, and I think that's the context that matters here. You and I are modeling out trades around account sizes 25K. Some other people are modeling them out around 50K or 100K. But if you're putting on a trade where the buying power is $1,500, as a retail trader, okay, do I want to put 6% of my account equity into this one single position? And my max loss on this single trade is going to be 6% of my account equity if I have a $25,000 account, right? So maybe go over to TLT. You can express the same exact view, but winnow down that kind of exposure. And that's, again, this is a future show, and I prefer to trade futures than anything else. But when you're trying to articulate your view in the market, doing it in the manner that's correct for your risk tolerance is paramount, right? You don't want to have risk of ruin on any given trade needs to be as close to zero as possible. And having a single trade where you can lose, 6%, I think people would, I myself, re-examine those scenarios and try to reconfigure how I'm going to approach that. ZN here, 1.9 IVR. So for people who have been trading this directionally neutral and looking for a vol collapse, I suppose this is as good as it gets, right? What else could you ask for? There is an argument to be made, though, Jamal, like as you were pointing out, if you want to get some exposure, a 1.9 IVR is pretty darn cheap.
This is the next one to attack. If we fall lower in bonds, and I guess if we see like 109s in these, then I'm probably going to put those on. I'm probably going to also be recentering my ZBs at that point because Lord knows where they'll be. They'll probably be 110s or something like that, 111s maybe. But yeah, if bonds fall lower, then I'm going after ZN. But as of now, I just have the ZB on.
Adjustments may be made, can be made, should be made. Sometimes when you put together slides, Jamal, you don't account for 50% tariffs on copper announced after you start the show.
Yeah.
So metals aren't all down. Copper's up now. Man, what I'm, I was talking with Thomas yesterday about this because the low, so the closing level on June 5th is 4.9830, and yesterday's low was 4.9825. The 1 month moving average was 4.9924. You could see how we had this resistance region drawn up here, and Thomas was talking about how we should probably sell a put in copper. I think Mr. Westwater is doing a little bit better than I am today because I did not take the trade, and yet now we have this big move. Okay, it's tariff related, which makes sense. Again, we don't produce as much as we consume. That is the whole understanding of the tariff game. Trump wants to put tariffs on something like wheat. We make a lot of wheat. We make a lot of oil. We make a lot of natural gas, more than we consume. So we're just going to flood the domestic markets with it. That depresses price. But when you put tariffs on something that you consume more of than you produce, all you're doing is closing the supply funnel. You're making it more difficult for people to get the goods they want. All right, so copper's here, 39.4 IVR. It's exploding to the upside. Not going to affect for things that we actually have positions in. Silver, gold, not necessarily here today. I'm still leaning long gold and silver, though, Jamal. I think you may be too. This is looking like a flag in silver here, and we're still consolidating above our 1 month. I'm going to treat it as bullish as one does because deficits and debts and yada, yada, yada. It's all been working. It worked during the Biden years. It's working so far in the Trump years. Not going to change tack. Volatility is low. Upside exposure is cheap. Press on.
I'm quite sure there's no way that Mr. Westwater had Trump announcing 50% tariffs on silver in his thesis on the trade. But kudos
if
to
he
him
did
for
and
it.
didn't cue us in.
Yeah, exactly. If he did, why didn't you let me know, Thomas? Ask him that on overtime today. I'm curious. But big move there, obviously. As you guys obviously heard in real time, I noticed it because it sucks because I have a 530, 540 call spread. However, this is why we bracket things with spreads, particularly in metals, because especially if you're selling, because you just don't know. And the reason I put this trade on was for the simple fact that copper and silver have often moved together. And so I figured if there was going to be any big up move in silver, there would be a big up move in copper and vice versa. And it has not worked out that way, particularly as of today. But I'm not going to overreact. I'm just going to leave the position on. It's 49 days out. I mean, this really sucks if somebody's short, 20 days ago. There's a whole lot that might not get resolved yet. So I'm going to hold on to it. Hopefully, this thing can end up looking a lot like what we see when we look at an oil chart right now, or when we see what we look at a bond chart from earlier this year in April. And so hopefully it fades. But like you, I also still have on long copper, long silver. Those obviously aren't faring as well. But that being said, they're down. Their uptrends haven't been completely broken yet, and so that's the only reason I'm holding on to. I hope they don't break down. But those are also further out trades. Those are also out in August, and again, just trying not to. There's been time over this weekend. I did think about closing out a bunch of stuff, but I feel like again the theses are still intact for the reasons I have the trades on, and so I'm holding on.
A modest proposal for folks who don't necessarily have exposure right now. Let's treat the lows that we had yesterday and today as a place to operate around. 4.9725, the high is 5.8955. We're fading a little bit here right now. I wouldn't call it too consequential. But if we wanted to go out at 49 days and go to the 6162 short call spread and look at the 495 short put spread, that's not terrible. It's a 64% probability of profit. Maybe a little bit more breathing room to the upside is necessary, but 50 cents on either end, 60 cents on either end, Jamal, that is a wide range in copper. Okay, what's the problem? Can you spot it on the screen? Copper's impossible to trade at this moment.
Oh, yeah. It's super wide right now, I'm sure. It's crazy. Yeah.
If you've been in the market, right? Position management. If you had long deltas on, right, don't look a gift horse in the mouth. This probably is going to exceed whatever you were intending, right? I don't think Thomas had this on his bingo card, and if he did, why didn't he share this? But if you, right, so this would be a good place to get out, I'm saying. But trying to get something in this market here, we talk about why would we put on a bond position? That's something that's like a 6% risk to your account if you have a 25K account. This is a 40% plus risk to a 25K account. So no, copper at this moment in time, because of this tariff news, this is effectively untradeable for a retail trader. Not a market to jump into at this point in time.
No, this is a good thing to point out right now. I mean, you can look at these markets and you can see how wide they are. I mean, it's like, for example, I mean, just looking at the 530 call, it's 4 cents at 73 cents. I mean, that's crazy. Like the 50, I mean, there's really no bids, is really what I'm seeing. These bids are crazy low. And these offers, it's just wide. It's just crazy wide. And, that happens in markets sometimes. And, copper, we often talk about copper. Like, we often, it's funny. We always say this. A lot of us have, you, me, Tom. It's seemingly wide, but you can get things off in there, meaning we can actually get filled on trades. But copper's usually a lot more wider than a lot of other things that we look at. And after having some type of news like we just had today, obviously markets go wide because nobody really wants, the market makers don't want to make a market because they just don't know where things are going to go.
Yeah. Yeah, they exactly. They don't want to make a market here. That's even just doing a short call spread above 6.
Yeah, it doesn't make sense.
$5,600. Are we seeing that same type of action here in silver? No, I mean, like if we wanted to sell a $1 wide put spread in silver against the lows, it's still, with these markets, I think all the metals markets are feeling a little stressy right now, but SLV is probably the better bet. Gold, yesterday we started something in GCV4. Today that's not looking super hot. Again, fading away from the 1 month. But gold yesterday, outside of dollar terms, was actually doing really well. And I think that's a notable point of interest. Gold has been rallying versus everything else except for the dollar for the past 2 weeks. So dollar strength, higher yields weighing on the metal, but it's not necessarily falling as much as one might surmise, at least as much as I surmise. I made a mistake in being a little paper hand baby last week and getting out on that little dip. So I'm going to sit this one through and probably learn an important lesson in chasing.
Getting out of what?
Gold. I got out of long gold last week, and then I got back in yesterday. So we'll see. Energy's continued to trade. Yeah, like a tactically long right now has been eating me alive because just it hasn't made much progression above 34.75, but it also hasn't broken down. So the best play in gold has been just directionally neutral for the past month and a half, 2 months. I digress. Crude oil prices here. Another day, more gains, up by 0.9%, edging higher. It's a 28.5 IVR though. So if you've been approaching this market and you've been looking for volatility to come in, it is working. But if you've been leaning short deltas, you're probably a little unhappy today. I mean, I'm not the most comfortable today. It's a few bucks off, right? But has anything really changed here for crude oil, Jamal? I mean, should we embrace the fact that despite having all these tariffs and bad growth things going on, this thing is moving up? It's a little resilient.
It's a very different environment for crude oil than what we just saw a few weeks ago, right? Things have calmed down a whole lot. And you know what? Copper could really take a cue out of crude oil's book here. But things have calmed down a whole lot. Like you said, it is kind of bouncing back, which I'm unsure of how I want to change things around for myself. I have a iron condor. Upside is 72.74, downside is 61.59. So it has bounced, which has really been good for my position. But with IV coming in, I mean, at some point, if this gets lower than 25, I'm just going to close it out for whatever little gain that I have at that point. We'll see. So it does seem to be, bouncing a little bit, but a whole lot more quiet than we saw just 3 weeks ago.
A whole lot quieter than we saw 3 weeks ago. Natural gas here as well, starting to break down again. I still have my short put spread here, and we're basically on the line's edge. It's a 40.8 IVR, so it's difficult to ignore. But if you close below 3.4, what are we really hanging our hat on down here, Jamal? I'm trying to look at the closing low in the cycle for July 1st was 3.415. You press that July 3rd. Can't climb through there yesterday, falling back below there today as your 1 week comes in. This looks pretty bad. And if it's tariff related, isn't that what happened when Trump was talking about the tariffs in April before he finally gave up on them for a bit? We produce so much natural gas. We produce more natural gas than Qatar or Australia. We're the world's biggest producer. So if we're going to erect trade barriers, we're going to flood our own markets with this stuff. Today could be a bad day. I might have to get out. Small losses, risk defined, happy to take the lumps.
Yeah,
this is a different outlook now.
This has been one of those trades similar. I feel like you, like this has been one, if there's any one trade that I'm losing patience in, it's been this one. Like you said, it's not really looking good. And right now I could take it off or, that's some of the hardest things sometimes, right? Like, have I given something enough duration? Does everything look right? Still 40 IVR. It's not exactly at the yearly lows yet, but it's approaching there. And you sometimes don't want to give up on a trade, but sometimes it just makes sense to fold up shop if it's not looking right and just move on.
Sticking to the approximate closing levels during the swings that you had pre-Liberation Day, post-Liberation Day, and then here back into May. That technical measured move, and granted, everything with natty gas comes with a grain of salt because it's natty gas. But if it were to follow this particular cadence, right, the measured move brings you down to 2.724, technically speaking. And we can have the talk about head and shoulders up here or an even bigger left shoulder head, right shoulder kind of forming, maybe not so much, but it doesn't look like it's strong. It's a weak looking chart. So pressing long deltas right now, inopportune, even if it's risk defined. Momentum is firming up to the downside, as we can see with stochastics oversold, MACD trending deeper, right? Failing to climb back through the 1 week. All of it's pretty, we've seen better days here in natural gas, Jamal. We do have to talk about the world standard dollar, though, which, as President Trump said today, he wants the world standard dollar to remain the world standard dollar. He likes the king dollar policy, basically. If it's a little bit weaker on the exchange rate, that's one thing. But he does want the dollar to be at the center of global commerce, which, again, why the tariffs then if that's the stated goal? The dollar is a bit firmer today. It's losing its ground here, however, as the session goes on, as some of this tariff talk filters through. And I think that's really the important takeaway here, that as we're leaning more on these tariffs over the past bit, we get the 50% tariff announcement, Jamal, on copper.
Mm-hmm.
What happened to the buck? It got hit.
Mm-hmm.
The dollar does not like tariffs. That's the story. That's the game. So if I'm going to lean long deltas and dollar, we got to have something really crappy going on with that other currency, because the dollar's not going to do itself any favors.
I am starting to feel like at some point, and this is what I talked about last week, I'm going to reiterate again, I'm starting to feel like at some point that the dollar is just going to be so depressed that sooner or later it's just, a matter of time before you see a few days in a row. And I guess you've seen it a little bit here, but I'm thinking of on a bigger scale, honestly, where you could see the dollar end up ripping for a couple of days in a row, sort of this unwind. So, Chris, I couldn't resist. I did get long a dollar trade. I couldn't resist doing it in the euro. I just couldn't resist buying a put spread in there. And so that's my play on it. It is out in October, so I gave it 87 days. And that's kind of my play on this whole notion of a lot of people are short the dollar. At some point in time, it's going to reverse itself, if you will. Where does it go? I mean, I don't think, I think there's still been a lot of different reasons why the dollar's been depressed. And so it's not like it's going to, go back to highs of the year in the way that we've seen the markets. But I could see some unwind, if you will, at some point.
Yeah, that's my mindset as well. Some of the positioning here on these currency markets are exceptionally stressed. We've talked about the Bank of a Manager Fund Manager survey where short dollar was among the most crowded trades with long Mag 7 and long gold. In the futures market, per the CFTC COT report that was released yesterday, it's still a very crowded trade. The Z-score for the euro right now, net longs, 1.34. That's a data series that goes back to July 2005. So euro net longs are 1.34 standard deviations above their 20-year mean for positioning. The yen is even worse. That's still up at 2.66. 2.66 standard deviations above their 20-year mean. So the dollar snapback, you just got to give yourself time. And I missed this last year, and I keep going back to this about learning from mistakes. I don't learn from all of them. The goal is to try to improve over time. But last year, you had that big position in the yen. It was gross looking. And the Z-score at the time going into the first week of July was negative 2.17. And what happened in the yen in July of last year thereafter? I think it's my biggest fumble of last year, because I was pushing the long yen trade all year long because of the stretch positioning. And I get to July and say, you know what, 6 months of these paper cuts, that's enough for me. And then the yen, of course, explodes. So if you're going to take a positioning point of view, it's important to understand it could be lots of trades that don't work. The market can stay irrational longer than you can stay solvent into the position. So if you're going to structure this, as you say, you got to give yourself the breathing room. It's certainly not a typical tasty 45 in, 21 out type of perspective. You say 87, maybe even a little bit longer, 122. The vol is relatively cheap in some of these currency pairs right now, particularly the British pound at a 4.7 IVR. So if you wanted to have the dollar is ultimately going to revert type of exposure, there are interesting setups where this is, almost a 5-1, we'll call it a 4-1 here, Jamal, 21% pop, only laying out $156 of buying power. Way different than a copper trade, which costs $10,000 for a simple short iron condor. But it's the breathing room. You got to give yourself time on these trades because the positioning can stay and stay and stay. You just have to be waiting there for when it occurs. So it's working out in the end for me right now because we've been putting on those 0068, 0067 put spreads, and finally we got that move the last 4 sessions. But that's why it's the patience. You got to wait for it to come to you. You have to accept the losses. Don't make my mistake last year where I threw in the towel, even though the rationale was still valid on July 1st. I became too emotional about it. I didn't stick to the system and the mechanics of how to trade around a stretched position.
And I think this bears, talking about a lot because you talk about patience. It's easy to say the word, but what helps with patience is the amount of money you outlay, right? So, for example, with the euro trade, I had been trying to figure out one that worked. I was trying to do more of a tasty style put spread, which was a little bit in the money, a little bit out of the money, more of a 50% pop. I couldn't find it, and I couldn't find one that made sense risk reward size, neither. And then I finally found the 117, 115 put spread. It's a 3-to-1. It's basically like 2.5 to 1 trade. It is a 30% pop, so it's not super high. But again, I anticipate the trade working in the event that we're all going to be saying, wow, look at the dollar over the last 3 days. That's kind of my thought process around the trade. And giving it further time. I mean, it's a lower probability trade at 30%, but there's also 87 days for it to happen. Or not forget 87 days. Let's just say it's 50 days, right? Let's say it's 60 days. I mean, 60 days is quite a long time. There's a whole lot that can happen over the next 60 days, and I'm only outlaying about $700 to put the trade on. So I think that's the thing. It's more about finding the right amount of time, but also the right amount of premium. If it's a trade that's 10% of my portfolio, well, patience is out the window. I mean, like when you have that size on, patience is completely out the window. You're thinking about it, you're looking at it all the time. But if it's a smaller trade that, is further out in time, you don't necessarily have to worry about as much, it makes it a little bit easier to be patient. That's something I've learned about myself over the years.
Yeah, I don't want to call these lotto tickets, but if you're doing something that's 80, 90, 100 days out, it's out of the money, it's predicated on positioning, you're getting yourself a 4, 5, 6, reward to risk. Am I comfortable in a position where it's like, okay, the buying power is $156, max loss is $100 on a single, a single risk defined short call spread or long put spread that's out of the money? Yeah, because what am I losing there, Jamal? $156 over 80 days, $2 a day,
right,
in decay. That's more than I spent. It's more than I spent on this coffee today. Like I'm willing to accept that kind of risk profile, and I think that's, when you're looking at these positioning trades, you just give yourself the breathing room, and the sentiment, give yourself the breathing room, which, maybe that's where bears have something in stocks right now. I was looking at breadth in this market, and the breadth is getting really poor. How far is the S&P 500 index from its all-time highs? And you subtract that from the distance of the median S&P 500 stock from its all-time highs. And that difference is about 14 points right now. And when you look at previous scales of corrections, that's when you get into the nosebleed territory where you don't have enough participation. It's really a tale of two cities, mega cap tech versus everyone else. And eventually that gap's got to close. And we saw it close in 2022. So positioning trades, just give yourself time, breathing room, opportunity. Don't rush it. What's next on the calendar? Tomorrow, quieter day, 10-year auction, FOMC minutes, both important. They bookend futures power hour, so we'll have both to discuss. FOMC minutes probably lay out the conditions for what the Fed can do to cut. I don't think they're being met this week with 50% tariffs on copper. Now, granted, the data shows if the study that we shared earlier, and I tweeted it out, is to be believed, a 10% rise in copper tariffs copper prices is only going to lead to a 0.02 or 0.03 or maybe a 0.05% increase in headline CPI. Marginal, but not helping. So keep an eye on the news. And even Jamal, you're back later today with Engineering the Trade, if I recall correctly?
Correct.
You are. Between now and then, Dr. J is out, so we're going to be doing a rerun of Market Measures and Let Me Explain. Jamal, if you didn't see Let Me Explain this morning, if you're interested in hearing how Tom learns to pronounce a Southeast Asian country that has a population no bigger than Massachusetts, if that's your cut of your jib, I suggest tuning in.
Laos? Did he not know how to say Laos?
Laos.
What did he say?
Like house. Laos?
Did he?
This is the production note here for the bumper. Please point out if you want to have Tom learn about how to say Laos.
Laos.
So this, listen, I'm an Italian New Yorker. I mispronounce things all the time. I'm not going to knock anyone.
Him and Tony
with
definitely
that,
they got that book ended for sure.
For Jamal Chandler, I've been Chris Vecchio. Stick around after a brief break. Let me explain market measures coming up next. And then, of course, Jamal with Engineering the Trade. See you soon.
Thomas, we are back, my friend, and you know what that means. Nothing makes this day more special than having Chris Vecchio in the house, and hear me out. Well, let me explain, too. What's up, Chris?
I'm all right. How are you today, Tony?
I'm doing good. Thank you for asking. I was a little verklempt here. I'm sorry.
Mr. Victor and I look pretty similar with the hair and the eyes and everything.
Yep.
How can we help you, Mr. Vecchio? What's going on today?
It's just a run-of-the-mill Tuesday here in markets. Is it a Taco Tuesday? I think that's the question on everyone's mind. We came out of this weekend with news of tariffs against Japan and South Korea, as well as Laos. Yesterday, the market was down a little bit thanks to those Laotian tariffs, Kazakhstani tariffs.
Laotian
here today,
tariffs.
we don't really.
Yeah, I get a lot of my stuff from Laos.
Laos?
Right?
Laos?
Laos.
Laos? You say Laos? I say Laos.
You say Laos?
Yeah.
It's L-O-A-S, isn't it?
I'm telling you, it's pronounced Laos.
Vecchio, you could be the tiebreaker.
And so we put all these tariffs on these countries, and the market's down a little bit yesterday. So
Hold it. You said Laos? Beth, is it Laos or Laos?
I'm not involved.
Ask Siri.
Ask Siri.
The worst AI?
Ask AI.
Siri, how do you say Laos? I don't have Siri on my thing. Sorry.
Come on.
You asked your phone and you don't even have it?
I don't think I have it. I think I have it. I don't know where it is. I don't fucking. I don't use it.
Beth, I need you to Google it for me. The correct pronunciation.
Oh my gosh. Can you just talk to Chris, please?
No, this
this is very important. I don't have any idea. I will bet you. Can we bet $20?
Oh my God! I got
while research is on that, okay.
Can we have $20 on this? No, I'll waste my time here. Let me give you some action. I got no action going on. Can I have some action? $20? I didn't look it up. Bet, you gonna give it to us?
Laos.
Do it again.
Laos.
Bet for the win.
What is that?
Sounds like Lowe's. Laos.
Laos.
The correct pronunciation has
Laos.
Laos rhyming with house. Exactly what I said.
Laos.
Laos rhyming with house? Laos rhyming with house?
Yes.
Laos rhymes with house?
Yes.
Instead of Laos?
House.
Yeah, you.
Laos.
Seriously, how condescending and self-centered can you be not to admit that you're wrong?
You're wrong.
And you, Vecchio, I will remember, you did not side with me, okay? You think you have job security, but you don't think you know. You don't know what you know, okay?
Were we on the same side? We both pronounced it the same way.
No, he did not.
You and me.
Unbelievable. All right. Okay.
All right. Well, this lesson in linguistics aside, the market's wondering if this is going to be another Taco Tuesday. If you look to options pricing through the rest of July, you really haven't seen a significant movement on the other side of this. It's not like traders are thinking this is going to be a big deal. But it also brings up the paradoxical nature of the taco trade, right? It was back in April when Trump saw the bond market getting a little spooky, as it were, that he decided to reel things back in. With stocks at all-time highs, volatility sitting fairly low right now, having just passed this legislation, it seems like there's a lot of movement and availability to go to the downside here. So I question, because the market isn't responding to the news of the tariffs like we did in the past. Is this story dead for the markets here? Have we just completely moved past what Trump and co are saying, and we're just going to continue to ignore the noise here?
Yeah, because I think the markets, we've had this discussion the last couple of days, from Sunday night, yesterday, and again today. I think the market has deemed the whole tariff thing as originally it was about uncertainty. So the reason that you mentioned the term taco trade, or the reason you talk about things in uncertain terms, the market is able to deal with uncertainty as far as pricing goes. And at first, it had to learn about it, and then it, absorbs all the information, that it rationalizes it however it wants to, and then it prices things. I think the uncertainty has a long time ago turned to pure stupidity. Like, I really believe that it's not recognized anymore as something that is, it's not viable. It's just a stupid, PR tactic or marketing tactic. And so the market doesn't care. It really doesn't care anymore. So you can call it whatever you want. The market just doesn't care. It does not move markets anymore. Like a 25% tariff on Japan, or 25% tariff on Laos, rhymes with house, doesn't matter anymore. It's not going to impact, none of this is going to impact markets, and the market's just going to do its own market thing.
Did I win $20 is all I want to know in this whole discussion.
I think the bigger issue for the market right now is what you mentioned, just kind of as a side note. I think that, at 112.27 or 112.25, where the bonds are right now, that any rate cut is off the table. I think it ties Powell's hands, pushes rate cuts back for a whole nother quarter if they stay at these levels, because I don't think you can lower rates when bonds are, a few ticks off their lows. So that's
we already know Powell's stupid, so he might do it anyway.
Powell is not stupid.
I'm just kidding.
The person that calls Powell stupid is stupid.
I'm just repeating what I heard.
Yeah, but Powell's not stupid. And so
repeating what I heard.
Just quoting the president, Tom.
Just quoting the president.
Quoting the president, right. But Powell's not stupid. And his hands are tied right here. So I think you have two issues. You have that will cap the market a little bit. One is bonds right here. I just think that really does put an upside cap on the market. And I think the other one is the dollar. And I think they kind of go hand in hand, but I'm not, they for sure haven't the last couple of days. So I think those are the two biggest issues those are the two biggest hurdles the market has to deal with right now. It's not tariffs.
Can we talk about the dollar for a quick second? That's actually one of the items I'd like to discuss here today.
Yeah.
A little birdie told me that it was something in your ear. Each week we have the CFTC COT report that comes out, positioning in the futures market.
Yeah.
This week it was delayed until yesterday because of the Independence Day holiday on Friday.
Okay.
But I ran the numbers on the latest positioning update for the euro and the yen. Right now, the net long position in the euro has a Z-score going back 20 years on a rolling basis. So the data set is July 2005 to present. The euro has a Z-score of 1.34. The yen still has a Z-score of 2.66. Okay, so yen positioning, net long yen positioning is still 2.66 standard deviations above its mean. These are very stretched markets right now. And
we agree with you.
Yeah,
we agree.
Yeah. There's an opportunity here right now. There's volatility in the yen, at least to me, is a little bit low. I've been buying yen puts for the better part of the last 2 weeks here, right around that 0068 figure.
I do not like it.
I know you don't like it, but let me explain, if you will. If you're looking at what's going on in the Japanese bond market right now, you're not seeing the situation typical of what's happening in the currency world, where yield differentials control the currency. like with the British pound, you're starting to see how higher long end yields is actually hurting the yen, like it's hurting the British pound. And that's not dissimilar than what the dollar went through back in early April. So if you're entering a world where currencies aren't benefiting from higher yields and instead getting hurt by them, and they have extreme positioning on the table, they're prime candidates for a big reversion trade. And so the dollar has been beaten down. It's the worst start to the year in the dollar's history since Nixon took us off the gold standard in 1971. Stretch as stretch can be. And so if we're going to be playing, opportunities where everyone is on one side of the trade, I think right now, my point of view is you got to take these shots at long dollar positions, because if you're wrong, you're going to be wrong small. Everyone's already there. But if you're right, this thing could snap and it can move very, very quickly as everyone shuffles out.
I could not agree more. I just think you're in the wrong. The only product that hasn't rallied is the yen. So why would you get short the yen? The yen's the same price as it's been when the dollar was 10% lower and the yen was the same price. Like, the yen hasn't moved at all. It's been trading in the 68 range the entire year. I know it got a little lower, I know it got a little higher, but 68 is like the mean for the year. It hasn't moved. Whereas the euro, it's just the euro, the pound, the Canadian dollar, they've all exploded. And this is a very different, those are very stretched markets, every single one of them. I like the long side.
They are stretched, just not as stretched as the yen by historical standards, for the record.
Yeah, I don't like
you're not going to find a Z-score north of 2 on any other currency right now.
I don't like that argument. I don't see it the same way. I really like the yen to the long side here, and I like all the other markets to the short side.
Well, I think it's long dollar either way. And, that ultimately brings up what's happening in some of the commodities. Gold, silver here, they've been taking a little bit of a hit today, but they've been resilient over the past week. I've been chopped up in gold the last few months just by leaning long and not ultimately seeing follow through to the upside. I'm curious, though, after seeing the gold-silver ratio jump above 100 and now it's sticking closer to 91, 90 in that neighborhood, do you think that there are traders to play a pairs trade within the precious metal space right now as we think about this low volatility equities environment making our way through the middle of summer?
It's really amazing how much that spread does move around. We got shorted way too early, obviously, and it went all the way up to 102, 103, maybe even 104 at one point. Now it's back down to 91. It's really moved all over the place. It's such a hard trade to get in front of because it's such a big trade. It takes no prisoners along the way.
When you're wrong, yeah.
Yeah, when you're wrong. I don't think it's enough of an extreme here for me to get in it. So if you're asking would I buy gold here and sell silver, I don't think so. It's not interesting to me. We've been short strangles in gold and we just covered them. No, the long dollar play, short euro, short everything else, I like that. But the gold silver ratio getting long at 91, I don't like that. I'm going to pass on that one. The more interesting trade to me has here, but I stopped buying them yesterday because I got nervous. I have a theory that I was going to talk about yesterday or today, but I'm going to hold off until tomorrow because I need to do a little bit more research because I have a crazy, creepy theory, and I don't want to bring it out until I can, till I feel more confident in talking about it. But there's something weird.
Creepy is an interesting adjective. I've never heard you use that word before to describe something.
There's something weird happening, which I don't.
His vocabulary.
Something weird happening, which I don't fully understand, and I'm just researching some stuff to see if it's even possible what I'm thinking. That's all. That's with the bonds.
Can I share a fun story with you guys?
Yeah, sure.
Because maybe, sometimes we talk about things that are happening in the industry or the financial world writ large. Maybe it's not trading related, but has to do with the business of trading. In recent days, the Securities and Exchange Board of India has issued an interim ban on Jane Street and its affiliates in India and Singapore because the firm has apparently been running a deliberate and systematic manipulation of the Bank Nifty Index, India's stock market, via coordinated trades across cash, futures, and derivatives, according to the Financial Times. And so the SEBI is arguing that Jane Street on key expiry days, like specifically January 17th, 2024, they were placing these big purchases on the Bank Nifty equities and futures to inflate the index, while they were shorting positions in the index options, selling calls and buying puts, and they were unwinding and slamming the close every single day. So they've been banned. This obviously follows on with another different unrelated story that Jane Street apparently had been financing the purchases of AK-47s for rebels in South Sudan. Okay, but Jane Street has a different story here, Tom, and I think it's perhaps a defense that you would be partial to. According to Matt Levine over at Bloomberg, he says that this is not manipulation, this is arbitrage. Jane Street came in Friday morning and noticed that Indian retail traders were buying options on the Nifty Bank Index at much higher prices than where the index was actually trading. So Jane Street got to work doing what it does. It sold options to retail traders who wanted them and bought the underlying stock to hedge until the arbitrage closed. At the beginning of SEBI's window, the options were trading at a 1.6% premium to the underlying index. By the end of the day, that gap had closed. It's obviously very difficult for American traders to arbitrage here, but is this untoward to see a company, an HFT firm like this, doing this in a market that has thin liquidity and not as developed as its U.S. counterparts?
I have long, so it's almost impossible for U.S. firms to break into the Indian markets. And a bunch of our customers, we have a pretty big following in India. We have a big Indian customer base here in the U.S. So I talk to a lot of people specifically about this topic. I have long argued, besides the fact that the Indian markets are closed to outsiders, which they really are, it's almost impossible for U.S. firms to break into that marketplace. I don't even know how Jane Street got in there. But our experience with Jane Street is they're a very reputable, honest firm. Like, we've only had good experiences with them as a high frequency firm in the U.S. I have felt for a long time that the Indian markets, without having high frequency firms participate in their markets, is one of the reasons why their markets have a lot of volume on crappy little indexes, but no real, like, there's no real depth to their marketplace. They're not really tradable. They're very one-dimensional products. The Indian marketplace needs HFT market making in order to really grow their business. Jane Street was like exactly what they needed. They need Jane Street, they need Citadel, they need every big market making firm in the world to participate in the Indian markets, and then their markets will explode. Their regulators do not understand that, and their regulators do not understand index arbitrage, and their regulators don't understand scale, multi-product scale, like basically just positioning. I have no doubt, and I've read a lot about this, I have no doubt that Jane Street took advantage of the inefficiencies of their market. And I also have no doubt that Jane Street did nothing other than trade kind of what was there. In other words, they just used the technology that drives U.S. markets in the Indian markets. That's all they have.
All right, so hold on a second. You mentioned it yesterday. You're talking bonds with Chris right now. You had this super secret bond idea that you
This has nothing to do with that.
Well, can you give me your super secret bond idea?
What does that have to do with this? We're talking about this.
I know, but can you give me what your super secret bond?
No, because we're talking about Jane Street right now in India. Because it's a really interesting case. Because this case, I'm glad you brought it up, because this case is what's going to lead to the growth of trading all around the world. Because the problem in India, which has the closest thing to like an SEC environment and is potentially closest to our markets, volume-wise and everything else, plus they have, 1.6 billion people, and everybody likes to manage their own money. India, to me, is the place that needs to blow up, like, the whole financial space to go global. The problem is, and I've done a seminar there, 2 seminars there, and I've talked to the head of the exchange in the Bombay Stock Exchange, and lots of different brokers over there. They need They need efficient markets. They need people to be able to make markets in order for people to trade those markets. And this is the key to their growth. And they do not get it. And now they're kicking Jane Street out. So that, again, that goes back to a closed market environment, and they want to go backwards, not forwards. I think it's a huge mistake. And I think the regulators are making a huge mistake. And I think it's going to set the Indian marketplace way back. When they all figure this out, they're going to understand that the only way to grow is through efficiency, and you need market makers to do that. They do not have market makers. So I'm agreeing with the guy from Bloomberg, and I'm agreeing with what Jane Street said. And this is not, they didn't do something illegal. They just made markets, and they took advantage of arbitrage opportunities. There's nothing wrong with somebody wants to buy something, you sell it to them. And if you want to buy the underlying index, you buy it. It's only 50, in most cases, only 50 stocks there. It's a simple ARB. They just don't.
Right, it's only 50 stocks.
Yeah, most of the indexes are on their Nifty 50, whatever. But so you just buy the index. But they only really have like daily and weekly options. There's not really any much monthly stuff trading. It's very, you can't spread anything. It's really limited what you can do there. So their pricing skew is all messed up because customers over there, you can't short anything. So all you can do is buy. So you got this crazy pricing skew on all the out of the money options, and all Jane Street did was just whack them all because they could buy the underlying stocks.
I mean, it was no different than what some of the companies were doing during the GME saga, right? Like, if people want to buy the deep out of the money options, happy to sell them to you.
Well, yeah, but the problem is that people in India have very small accounts, so nobody can afford to buy the underlying stocks or the futures. Like, and you can't short. It's almost impossible to short something, and you can't do spreads. There's all these crazy rules. Like, you can do them, but they're just you don't. One side doesn't offset the other side. There's just kind of the rules are a nightmare. You know, we've argued with regulators there for a long time. It's really hard. I'll just leave it there. You brought up a really good topic because in order for India, China, South Korea, in order for Europe to figure out like how to compete with the US, they need really strong market making firms that can step in and make markets. And it doesn't exist yet.
You're here.
Yeah, we've been following this case. It's very interesting.
So what's the bond trade, Tom?
You'll find out there's no trade. The trade is you got to be long bonds. The trade is you got to be long bonds, but you can't buy too many of them because I've got an ugly feeling about something, which I don't usually have.
That's the super secret thing that he won't tell me.
Yeah, because you're not the right
Tony,
person to have this debate with. What?
Oh.
I'm too stupid, is what he
No,
just
you're not too stupid. It's just that I want to have an
intellectual debate.
I want to debate it, and I'm thinking about I need to do more research.
So he's going to have
5 down days in a row in the
tomorrow.
bonds. We don't see 5 down days.
You rarely see 5 down days in the
Right.
bonds.
Last time you saw that was back in April when they made lows.
Yep. But I mean, they traded once. They're only down 116 to 113, basically.
They're about 9 or 10 ticks off their lows. This most recent move.
Yep.
Even the S&P down 9.5.
I know they looked ugly.
They shook me out.
They looked ugly all along. I thought they looked ugly.
I don't know how ugly they looked with volatility, but volatility's not always right.
I know volatility wasn't right at all today.
Yep.
Right.
Yep. So far,
All right. Thanks, Mr. Vecchio.
Thank you, Mr. Vecchio.
Ciao.
Are you team Bad
Yes, sir.
Vecchio or are you team Tom?
Don't answer
I'm Team
that.
Tasty.
Let's take a quick 90-second break and come back. We got more Tasty Live with a market measure next. Good answer. Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live. That's right, with a market measure. Even the S&P is down 675, so enough down 7 now. NASDAQ down 7 also. Russell down 890. Dow down 135. That's your big mover to the downside. Obviously, the Russell being green as you move it to the upside. Volatility, big mover, down 64 cents. Really screwing me up on this down move. I don't think it's going to hold, but that's just my personal opinion. Bonds down 9, catching a small bit, although they're down 9. So He stated catching a small bid after this 5-day move lower from above 115 to flirting with 112. The low was 112.21.
The only stock that you might want to do something, Intel, are you sure he puts in there?
You know what? That's where good traders
go to die.
Yeah, Intel, you want to short puts?
No, I want to cover my short puts. It's up $1 today.
Good job out of you, Intel.
That's
makes sense.
Nope, I want to cover my puts. Is that okay with you?
Oh, that's okay. Cover them is good. I mean, Intel hasn't had a downtick until recently.
Yeah. No, I mean, we sold puts the other day. It's worked out nicely.
You bought it back for 43 cents. Would you sell them for 80 cents?
None of your business.
None of your beeswax.
None of your beeswax.
Remember that? None of your beeswax.
That's right. None of your beeswax.
Oh, nobody can poop like an elephant. A bird, like my man.
Like my man. Yeah. I'm gonna make one more trade and then I'm gonna be done with you. Hang on one second. All right, let's do this.
Okay.
Give me one more sec. Perfect. Anyway, it's 9:13. And
yes, it is.
The Bat and I are going to do a market measure sponsored by SIBO. And happy to have you guys all on board for this. Then we have Scott coming in, which will be fun.
Scott's been on fire lately.
Before we do that, a quick little reminder, Dr. Jim's going to be in Boston this weekend. So if you've never seen Dr. Jim, I mean, everybody has to do it once, right?
I guess so. Sure. Why not?
Once in your life, you got to go see Dr. Jim. So if you've never seen him before, he'll be in Cambridge, in Boston, at the Sinclair on Sunday night. You don't need to watch Sunday night baseball. Trust me. So go see Dr. Jim. Sunday night, doors open at 5, show starts at 6. We should have a great crowd. It'll be small, it'll be intimate, it'll be fun. It's Dr. Jim's first live event this year, and go check him out. If you haven't signed up yet, go to tastylive.com/events. tastylive.com/events.
Please. He'll cry. You don't go out there.
He will actually cry. I've seen Dr. Jim cry before. It's not pretty. All right. Let me just see what we got. We got a little Houston. We got a problem. Let's see what we got today.
Beautiful. By the way, 20 miles over the speed limit, $300.
Where is that?
Canada.
Oh, Canada. Oh, Canada.
Oof. And that's negotiated down.
Canadians.
They just waited for him at his house. They didn't even like pick him up. They just got him on radar. His house. Wait for where he comes from.
I hate radar. I hate photo speed tickets.
The camera. Yeah, we have cameras here. Yeah.
Yeah, it is the absolute worst.
Yeah.
They get you, and you like
not to get bad drivers off the road. It's just to ding you for the ticket.
It's just a revenue thing.
Yeah.
Yeah. They do that in London. They do that in different places around the world.
London is 20 miles per hour.
I know.
That's
They
the
do
speed
it.
limit. I mean,
They do it in
walk
different
fast.
places
Well, not
around
you,
the
but
world.
most people.
In Chicago, they only do it on the city streets and like school zones. Bad.
City streets and school zones. That's just
City
all of
streets
Chicago.
in school zones.
No. They do it other places too.
I don't think so.
The one on Ashland I always get. I don't know what school's there.
School zone.
Is it?
Yeah.
School right there?
Yeah. Yeah, Catholic schools all over the city. Every
schools don't count.
Every 15 feet, there's a local parish school. All right.
As for told, NASDAQ up 6.
Yeah. NASDAQ up 6. I need some trades. Tomorrow, what's your assumption? tastylive.com/assumption. Man, I need some trades. All right, let's do it. Do it. Back to all-time highs. Yep. Let's see what we got here. Market measure by the team today. The SPX has reached 6,300. Right now, we're at close. The S&P futures are 6,275. Time of this writing was 6,300, hitting new all-time highs and surpassing February's record by 1%. Market has climbed back from 19% decline in less than 3 months, one of the quickest recoveries in recent history, percentage-wise. Let's take a look at the next slide. The recent rally has lasted 86 days with a 23% gain from bottom to top. The largest downside interruption during the rally was 6% from April 9th to the 21st. The rally, 86 days, 23% after a 6% pullback. All right? This is where we're setting, we're giving you a little context here. What? Say it again.
They say they would take the elevator down and the stairs up, not according to this.
Let's go next slide. So how does this rally compare to other significant ones from an historical perspective? To find similar events, we set up criteria as at least 20% market gains in 2 months, never any downside interruption larger than 6%, and no overlap in any 30-day window. We're just trying to see where this rally stands historically and maybe what's next. Let's go next slide. So, believe it or not,
I can't believe there's this many.
I know. We found a total of 11 occurrences since 2005. The yellow triangle and the green star represent the start and the end of the rallies. The red triangle represents the bottom of the interruptions, which are greater than 6%, ending the rally in our definition.
Well, this is, illustrating that V bottom that we've talked about, all the time.
11 times, though, in 20 years is a lot. Feels like a lot.
Yeah.
With all these criteria. So it happens.
Yep.
Let's go to the next slide. So the magnitude of the current rally on a percentage basis is still smaller than average, but it hasn't finished yet. This is the third quickest rebound from market bottom of all the occurrences. Only 2009 and 2020 were stronger. 2009 was after the meltdown, and then 2020 was after post-pandemic. So you have the information, all the kind of details right in front of you. High, the low, the median, and then the duration, the pullback that ended the rally, and then the duration of the pullback. Lots of cool stuff. Let's go to the next slide. So the next thing we're going to do is we're going to examine the VIX change. No, go back right there. So we're going to examine the VIX change during the market fall that preceded the rally. This VIX jump was the third highest and the quickest after 2008 and 2020. Let me tell you something. This VIX jump in April was ugly.
Oh, it was.
So you can say whatever you want. Like, it's not,
easy to look at on a graph, a chart, looking back in time, motions not
and go, hey, why did we catch this? Look how simple this would have been.
Sure.
It was not that easy.
Right.
Like, 2008, for those of you that weren't trading in 2008 was brutal. It wasn't like the vol just exploded. It was like the vol just exploded. The world was coming to an end. It took 6 months for the market to turn around. And every day it looked like it was literally the end of the world.
Right.
2008 was so ugly.
I even used the word scared.
Anybody that was long in by March of 2009, they had huge, what. In 2020, that sell-off was so ugly. First of all, we all thought we were going to die. Second of all, we all thought everybody else was going to die. Third, we had no idea what to expect. Everybody was stuck at home. Everybody was in front of a computer. And that sell-off of 30, it was from 3,300 to 2,200, which is over a 30% sell-off in less than 30 days.
6,300 now.
Yeah, but this is in less than 30 days or 35 days. That was brutal too. So that makes this year look pale and look like nothing in comparison, but this was ugly too in April of 2025. Let's go next slide. So in 20 years, this was the third largest sell-off. However, the current market rally has seen the highest and quickest 36-point VIX decline in a 90-day rally window, much faster than 2020 and 2008. Why do you think that is?
Oof. Just because of the price being so much bigger?
No, this is just VIX, so it's not price.
Oh, VIX.
Yeah.
Yeah, you're right. VIX. Information disseminating faster?
Yeah, I think so.
I mean, I think that's about.
I honestly think so. I think that just everything happens at a pace today that we couldn't even imagine in 2008. And I think that things just happen today at just such a faster pace. The level of patience, the level of dissemination of information and how quickly things happen, and just, people trying to jump the, jump the news, jump the gun, whatever it is. I just don't think you're going to see anything like 2008 ever again. I think it's all going to be fast like we're seeing now. This 36-point VIX decline, crazy, but it was really fast. Let's go to the next slide. If we expand the rally window to 365 days, the current VIX decline range is the second largest after 2020, but it's still the fastest one in the past 2 decades. Like, just showing you that no matter how we slice it up, the most recent VIX decline, which fit the Tasty methodology really well, it's never easy.
Yeah, of course not.
So hard. Let's go to the next slide. So, some of the takeaways. The ongoing rally has been strong and very smooth. I don't think anybody would argue that this huge run-up has had too many bumps along the way. Maybe last couple of days, the first
time after making new highs.
Yeah, totally agree. With only minor pullbacks during the upward move. The rally represents the third quickest rebound from the market bottom in all similar occurrences, only after 2009 and 2020. And the VIX decline during the market rally was one of the largest and quickest under both shorter term and longer term durations. So we saw here was very rare, was extreme, but it also played into the hands of kind of what we like to do.
Good job.
But I think Tony and I both think we're extended here and very nervous about
I do. I'm just
the tape action here.
And EME/S&P is down 11. It's about as low as they've been since we've been on the show. They've been $10 lower than that overnight. But volatility still down about 56 cents. I mean, you got one of those days today where they're fighting with each other, bulls and bears. We'll take a quick 90-second break and come back. We got more Tasty Live after this with Joy, your friend and mine, Mr. Scott Sheriff from Taste Trade World Headquarters. Me found these messages back in 90 seconds.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
As a kid, I used to always tell my mom, I think I was born with speed and intelligence. She still reminds me of that. And I'm like, yeah, I definitely have no speed. But on the intelligence side, I think I figured a couple things out. My mom was a stay-at-home mom, and my dad really provided. He was a very blue-collar worker. In fact, my family lived paycheck to paycheck. And so I saw that. I actually said, I want to be financially independent one day. For the better part of my undergraduate career, I was convinced I wanted to be a stockbroker. I actually worked an internship at a major financial advising firm, and they offered me a job. They said, Jim, just go graduate, come back. But then I actually had an experience. So for all 4 years of my college career, I tutored students in accounting, economics, and finance. And most of the time, the students would come to me and basically to do their homework for them. And I would usually send those people on their way because I wanted people that really wanted to learn. Senior year, young girl comes to me. Her name's Carolyn. She needs help in microeconomics. She is completely lost. Her graduation hinged on her performance in this class. Obviously, she wanted to graduate, but I could feel this natural desire, this yearning to actually know and understand the material. I mean, I had to explain marginal revenue to her at least 38 times before she finally got it, but she got it. We go through the whole semester, we say our goodbyes. A couple days later, I'm standing outside waiting for my friends to come pick me up. I get a phone call and I missed it, but I felt my phone buzz to tell me I had a voicemail. And I looked down and it's from Carolyn. And literally, that 60-second voicemail changed the entire course of my life. So she basically said, Jim, I just want you to know that I'm gonna graduate this Saturday, and I'm only gonna do it because of what you did for me. I'm only gonna do it because of the patience and because of the time that you took with me. I never would have made it without you. I will never forget what you did for me. I hung up the phone, and I had a feeling inside of me that I'd never felt before. And I said, wow. I said, I need to explore this. I canceled plans with my friends immediately. I went to the computer lab. I started researching PhD programs. I said, I want to have more of this experience. I said, I think this may be what God wants me to do. Most of financial media is all based off of story and direction. And it's really interesting because it's either you try to find the story to predict the direction, or after the direction happens and you realize you didn't know anything to begin with, you find a story to attach to the direction in a very ex post type of way. We acknowledge, we own up to the fact that nobody knows anything from a market direction standpoint. So what do we know? What can we rely on? And it's the math, the statistics, the probabilities. It's changing the landscape of investments forever. And to be a part of this team, I count that as a tremendous blessing.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
All right, Tony, we have a big week of earnings coming ahead in a time of high volatility and uncertainty. How are you choosing to attack this week of earnings, and do you think that there's anything that traders should be aware of?
I think earnings become less important when you have volatility in the overall market, because sometimes a lot easier to find a higher probability trade in a longer dated time frame than you would for earnings. But if you are going to trade earnings, I think you have to trade it much shorter term and probably directional. And with this implied volatility being so high, it's going to be even higher in these earnings trades, which means that all options are going to be priced a lot more fatter. And if they're fatter and you're selling them, then you can get a higher probability of success and be further out. So I think you have to trade them directional, and I think you have to trade them shorter term for earnings themselves if you're using options.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than trade like a trader? Tasty Trade. Make your move.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
What's going on, everybody? We got a summer sales showdown. That's right. It's not just Amazon, but Walmart and Target got some. They got some shopping days too. People are going to be doing there. There's going to be 3 of them combining. We'll talk about what's going on, what not combining, kind of competing more than anything. We got more tariffs, of course, announced yesterday, and it doesn't seem there's going to be backing down from that. We'll talk about what's going on there. And obviously, when you talk about tariffs, I have to talk to you about copper. Holy cow. What a move. So we'll talk about those 3 things and more. People, this is one of the more boring days of the entire year, and I'm going to need your help today. Welcome to the most dangerous show on the Tasty Live Network. Folks, it's Engineering the Trade, and I am your host, Jamal Chandler. Look, it's pretty clear to me. This is one of the most boring days of the year. Thanks for joining the show. Thanks for watching. Appreciate you being here. There's not much happening. It really isn't. You know, this happens at times when we get to all-time highs. Market starts to slow down. Everybody starts questioning whether we came too far, too fast. People are looking at volatility and, starting to get some clues from there. I've heard some people say that, this is such a slow day, but volatility is down. We should be up way more, 30 to 50 handles at some point. I kind of agree. At the same time, and follow me on this one, I feel like this is a situation where if you want higher prices in the market, you have to be able to deal with days like yesterday and today. You need to have days where markets barely do anything, or they're calm, or they pull back just a little bit. This is what you need. Otherwise, it's just a situation of we're going up all the time, or we're only way we go down is big down days, 1.5% to 2%. Those are, that's not necessarily real markets, I should say. You don't want a market that's always going up. You also don't want a market that when it falls big, right? You just need gradual days, and I think this is great for a market that's going higher. It sucks for content. I will tell you for that. It definitely sucks for content. So I will be looking in the chat today to talk to you guys about anything you want to talk about. In the meantime, I do have a couple of things to show you. We can pull up some slides. Lone Sophos, what's up, man? You better believe it. The most dangerous show. I appreciate you joining the show, man. Really do. I talked about the summer sales showdown. There's Amazon, of course, has Prime Days, which basically started today. And it's going to run through July 11th, I think. Now, they said sales, I'm seeing some early reports that sales are down 14 to 15% compared to last year. Well, I think a lot of that has been the changes that you've seen with their competitors, with Walmart and with Target. Walmart has deal days, which I think have existed before. It's direct competition, directly overlaps with Prime Days. It's July 8th to the 13th. It wasn't 6 days. Now they've extended it to 6 days. Remember, Amazon used to sort of own this sort of couple of days to itself, right? This Prime Days. And it was usually maybe like the week of the 15th or something like that to the 18th. It used to be, but I think they moved it up a week early, and they're probably tried to run away from some of the other competitors, but lo and behold, they're dealing with them. You also have Target. Target has Circle Week. That's going to be the 6th to the 12th. And Target Circle Week is specifically going after teachers with a lot of their sales. They're going after early sales, early back to school type sales in a way, going with sort of teachers and students more than anything. So, and of course, all of these, I mean, really, like if you have those memberships, obviously, Prime Day is geared towards a lot of the Prime membership people. Walmart towards a lot of the Walmart Plus people, and Target, to whatever membership thing they have. I don't know, whatever that may be. But it's interesting that all three of them are going around this type of week, basically around the middle of the summer, to try to get people to do some purchasing. So it's going to be interesting. I did put on an Amazon trade yesterday. I put on some Amazon calendar call spreads. I did this in a couple of names, but Amazon was one of them. I don't necessarily know if it's going to be the Prime event that's going to make those call spreads come to life, or basically if it's not going to be until earnings. So I basically did the call spreads with my calendar call spreads with my long. Oh, actually, I forgot. I still have one more I want to put on. I'll do it when we get to the platform. But my long end of the calendar call spread is in the August 8th expiration, which captures earnings. And we all know, I like to play all earnings from a long side from a move. So we'll see how that ends up playing out here. But that's the move right now. U.S., of course, it mentioned a lot more tariffs yesterday. It was a lot of interesting countries, Laos, South Korea, among those, Japan, that Trump talked about tariffs with. We've all heard about the taco trade. Trump always chickens out, right, and backs off. But apparently there's not going to be any backing off this time from the tariffs on August 1st. No. They are supposedly going to go through. And, that's been the interesting thing when you talk about rate cuts, right? If rates are high in the economy, how in the heck are we going to be able to cut rates at some point if we keep having tariff discussions and they keep being right in front of these meetings? The next meeting, of course, is July 30th, but then the one after that is in September. And if you're going to have tariffs that aren't going to back off from in August, there's no way that the Fed is going to cut rates. And I think that's why you've seen bonds fall recently, because the bond market is coming to that realization. Now, as contrarians, we always try to play the opposite side. That's why I'm long bonds right now, but still, it's going to be a bumpy road, I would imagine. The last thing on tariffs is, of course, earlier today, you may have been watching Futures Power Hour when this happened, and it was true. It was real consternation on my face as I saw my copper position, which I'm only short a 10-cent wide call spread. Now, I understand copper has a decent sized multiple, but still, the amount of money that I was losing at that point in time didn't seem to comport with the size of the position, and it was up. I was down like $1,800. But copper futures went wide because copper futures surged nearly 17% at one point in time, largest surge since 1988 on the mention of a 50% tariff from Trump. And you could see the markets in there wide. Copper is kind of thinly traded, if you will. I mean, you could look at it. Any given day, an option, it might be like 20 options traded in any given expiration. And it doesn't trade heavy, but obviously when you have that type of move, things are going to get a little wonky, and it did. I'm not changing anything on my position. If you try to get in right now, it's going to be hard to get out. And that's the hard thing. We always talk about liquidity, right? This is actually one of the reasons why I haven't traded copper that much in previous times, because of the lack of liquidity. Let's just call it what it is. I know you can get trades off in there, but it's still kind of lack of liquidity in there. And I'm not going to do anything different, though. Again, I feel like this is another one of those situations that we've seen a decent amount this year. And it's not all been Trump. I mean, obviously the oil situation wasn't Trump, but you saw oil surge to 78 before retreating to 63, 64 and change, right? We saw bonds earlier this year in April surge before they eventually fell. A lot of that had to do with what was going on with tariffs at times. So you're seeing big moves in markets, which are really scary in a way, because it's not the way things normally happen in equity markets. But this is the new way that we've been seeing nowadays. Leftovers. U.S. home prices are up more than 29% since 2019. Let's move to the next slide. I know, Sam. I've seen the same thing. Wolf filed for bankruptcy, and the stock has been on the move. I mean, it's wild. You know what? You talk about trading or watching Netflix. Netflix, I remember Netflix's meteoric move. That stock was, I don't know, under like $10 and change, like 2009 or 10, I don't remember. And then it just started to take off, and nobody believed that stock was taking off in the way that it did. Before you know it, look where it is now. So I'm not saying Wolf is, I don't even know what Wolf does, honestly. I really don't know what Wolf is, but I actually been looking at that stock. I don't know what's going on in there. Brian, am I interested in getting long bonds? Are you asking me? I am long bonds. I am actually long ZB. I'm long a call spread, and I'll talk about it when we get to the platform. This is a chart of the change in home prices between 2019 and 2025, both first quarters of 2019 and 2025, in selected U.S. metro areas. Let's go. Knoxville is up 60%. Prices are up 60%. Been to Knoxville before. Been a while. Charleston, South Carolina. Been there plenty of times. This is where my whole mom's side of the family is from. Charlestonians, Geechee people, if you know anything about it. 52.4% increase in home prices in the last 6 years. Miami, Fort Lauderdale, Palm Beach area. Obviously, I've been there. I'm from Miami. I grew up in Miami as a kid. Was just in Palm Beach for a conference. I think I mentioned that, for the OIC conference back in early May. That is up 49.1%. Yeah, those prices have really skyrocketed. They were already kind of high, but they've skyrocketed since the pandemic. Syracuse, New York, really? 43.7%? That's interesting. I wonder who's moving there. Tucson, Arizona, 38.3%. Columbia, South Carolina, 38.2%. I also grew up kind of in Columbia, South Carolina. I lived there from 5th grade to 10th grade. Yeah, if you know anything about Columbia. University of South Carolina is there. They are rabid fans. And it was the first interaction for me to see a college type of town when I saw University of South Carolina and Clemson when they play their football game at the end of the year, their rivals. Oh my God, it was crazy. I'd never seen anything like that. It's like a takeover. I mean, the way that they came to town, it was wild. Cleveland, Ohio, 35.1%. I've been to Cleveland before too. Tulsa, Oklahoma, 34.2%. Never been to Oklahoma in any way, shape, or form. New York, New Jersey, 28.8% increase in prices. Colorado Springs, Colorado, 25.6% increase in prices. Been to both of those. All three of those, New York, New Jersey, Colorado Springs. Oklahoma City, never been there, but they did just win the championship, right? That's going to be a hard one to remember. I'm not going to lie. Like, when you think back over time of who won NBA championships, I bet you, unless you're from Oklahoma City, it's going to be hard for you to remember that Oklahoma City won a championship. It's going to be even harder for you to remember who they beat. Oklahoma City, Oklahoma, 22.8% increase in home prices. In Pittsburgh, Pennsylvania, not to be confused. Pittsburgh, Pennsylvania, 22.4% increase in prices. Only 3 places on this list out of the 12 I haven't been: Oklahoma City, Tulsa, and Tucson. Let's move to the next slide. Correlation and volatility have dropped. They tried to turn the corner a little bit, but correlation, of course, once volatility comes in, VIX comes in, correlation drops, right? So you're not seeing as many names move together. I mean, think about it. Even recently, you haven't seen much of the Mag 7 move together. Tesla's up today, Meta's up today, but Amazon's down, Google's down, Microsoft's down. It's all over the place. Correlation has really dropped quite a bit more recently, and that is also one of those other weird things, I think, of a market where at all-time highs, correlation is low. Things are kind of moving a good bit on their own. I mean, even today, look at NASDAQ is slightly up. Russell 2000 is up quite a bit, which is interesting to me. I still haven't been able to put all that together. Why this rotation between Russell 2000, the Dow, and Nasdaq and the S&P? This is quite the weird day. But again, it's the toughest thing about today, and maybe even the rest of the week, is you just can't read into things too much. You really can't. We're at all-time highs, that we know, but the fashion which we got there, I mean, it was more of like a situation of, well, honestly, it felt like, why did we even ever drop the way that we did, even though those tariffs were never really materialized, even though it was not in any of the GDP data. When you look at GDP now, when you look at inflation data now, when you look at jobs reports now, none of it shows tariff-related issues. And so it's almost like we never should have dropped the way that we did. And people eventually, I think there was more of a short covering rally over the previous 6 days prior to yesterday, previous 6 trading days where we saw the market rise, right? And so as a result, correlation, of course, has gone down. Correlation is always going to be high when the markets are freaking out. But once you get up to this area, correlation chills out. It's just what it is. And, by correlation, you know what we mean, right? Like gold is not moving in the same direction as equities, which is not moving in the same direction as oil, which is not moving in the same direction as bonds. And those are really extreme examples of non-correlated asset moving together, but that's what's happening. Let's move to the next slide. Speaking of correlation, still staying with this, one thing that you have noticed, and you can see it today, S&P 500 and the 10-year, they had this relationship together for a while. Remember a couple of years ago, or heck, even going, I mean, obviously we saw it in 2022, but you saw it again in 2024. They were inversely correlated. We saw it to start the year, but then when you look now, it had been positive more recently, going back to, looks like March, April. Basically the downturn of the market. We saw equities drop. We saw 10-year yields go up. It looks like it's kind of reversing a little bit again. Even today, we got a big move in the 10-year, 0.5%. Markets are down, very small. So this is the correlation to continue to watch if this is going to change more and more, or is this just going to be, is it going to go back to negative, right? Or is it going to stay positive? I don't know. Let's move to the next slide. I mean, you can't imagine it's going to change too much because when you think about it, if they for some reason cut rates, I think the markets will jump then, and I think you'll see it. That'll be the one way to return to inverse correlation, right? But we'll see. I keep referring to this chart because I think it's one of the more interesting things in our market. You can't tell if rates are going to drop and the dollar is already there, and that's why the dollar is low, or if this is going to turn around at some point in time, or if they're going to meet in the middle for some reason. That would be weird. If rates drop and the dollar goes up, I don't know if we've seen that too often. That would be kind of wild. I don't know if the one can happen without the other, but this still remains really interesting right now. The dollar's at the low levels that it is, and yields have yet to drop, and there's no indication that the Fed's going to cut rates. So one of these is wrong. I just don't know which one. I don't know which one. Let's move to the last slide. No earnings to speak of. We do have a 10-year note auction tomorrow. That could be fascinating. If there's not as much interest in U.S. debt and U.S. 10-year debt, that could be a very negative thing. We'll see how the markets take it. We also have the FOMC meeting minutes tomorrow afternoon, and then we also have a 30-year bond auction on Thursday. So these things right here, as much as I think it's going to be a boring week, these are probably the few things that could maybe move the markets this week. Number of S&P 500 stocks above the 50-day moving average is 370. Well, I mean, it's actually really good. Let's move to the platform. So, good question. Smack 11. Any thoughts regarding buying a way out of the money leap call and IBIT to play for some BTC pump? I have not really looked at this name much. Looks like it's been on the move. If you're way out of the money, well, why would you buy an out of the money leap call? Like, which one are you talking about? I mean, basically, if you're saying leap, you got to be talking 2027 at this point, right? So when I buy leaps, this is just what I do. I like to buy in the money because the reason you buy an in the money leap is basically it's like stock, right? Again, look right now, 100 shares of IBIT cost you 6,200. Well, one leap call at $30 with essentially the same, right now it's effective price. Say you buy this for $36.50, your effective price is $66.50, right? After that, you're over your break even. And so if this is the way I personally like to buy leaps, I don't like to buy out of the money leaps. That's quite a bit of extrinsic, you know what I mean? It's a decent amount. I prefer to buy in the money leaps, if you will. If you, again, I mean, on a lot on this network, we don't necessarily condone buying out of the money calls, but you've come to the right place because I do it all the time. What would I do if I really was bullish on this thing and I thought it was just going to continue to go higher? And again, I know this one has futures in it. I don't know exactly how it works. I don't know everything about IBIT. I don't really trade IBIT, but if I felt IBIT was going to 80, what would I do? I would maybe a trade like that in September with using, I mean, $500 to me is a decent price. Like that's 2% of a $25,000 portfolio. This is also 70 plus days out. The other thing that I would do, and again, I would do that one because, I just arbitrarily picked these strikes. The pop is not super high. It's 39%. We understand that, but it's not a lot of extrinsic. It's 300, and it's a scenario where you're almost risking 3-to-1. So that would possibly be one I would do. Again, if I were to also go leap, though, I would go a little more in the money. I usually like to go 90 delta on a leap. But say you don't want to necessarily do the leap. You want to do Jan 26 instead of Jan 27. Well, let's see what that 30 strike looks like. Jan 26, 30 strike call. It is about the same. It's only $3 difference. So you decide, overall. But when you go leaps, you usually want to go a little bit more longer, a bigger delta. Hey, Jamal, is GLD still along here if you're already in it? This is a tough one. I am long gold. I'm long gold upside. There's a real inflection point right here. One of the reasons that I was interested in getting long gold was because it touched the 50-day moving average. It was around right in this area. And I have noticed that a lot of times gold touched 50-day moving averages and it bounced higher after that. So this is the battleground right about now, honestly, and it's really more about whether you either want to hold on to it, right? You can either get rid of it right here as it's sitting on the dancing on the line, and it's this is the tough part, really. Or if you don't believe that it's going to bounce, this is the area where you quit. But this is make or break time. I personally am holding it. I have a longer outlook on my gold too. I'm out in August, so I got another 49 days. To be honest with you, I probably might need to roll this if it's 49 days. I don't want to be in the 45-day window. I do still always believe, and I really do believe this, that a lot of times when you're doing gold or silver, the 45-day window of decay doesn't mean quite as much because, again, I'm upside, right? And we all know that upside has a little bit of a bid when it comes to metals. And so usually if you're upside in an equity and you're out of the money, it's going to decay a lot faster. And out of the money options decay a lot faster than at the money options, right? This is one of the reasons why we always say, you might want to buy an at the money call spread, not only because of extrinsic value, but because of the higher pop, right? Obviously, I'm aware that this is a lower pop, but I don't feel like if it mostly decays and loses money, obviously based on the price dropping more than anything, more than just decay and the upside vol. So I'm gonna hold. I'm gonna hold here. It's a tough decision. One thing I can decide though, whether or not I want to hold this 34.50, or do I want to go out to September? This might be a good time for a lot of different things where you just roll out a little bit further. This is 1600. Oh, my current gold situation is what? My current gold situation is 1400. I think I'm gonna take the loss on $200 right now and just roll this further out. I think that's something I want to do. Oh, hold on. No, let's go. Let's close this out. Yeah, let's close that out. Let's see if we can do that. Can we get it? 3,400, 3,450. Let's roll further out to SEP. 3,400, 3,450, 16. Let's go 1610. Fine. We're in that. Silver is kind of the same deal. I got this here. I got the. I'm gonna close this one out too. 4042. Oh, come on. Replace. 4042. Let's go out to SEP. I think a lot more things are getting pushed out to August, September at this point. Let's go with that one. I'm going to still stay with the same strikes. It's cost me a little bit more money, but you know, what are you going to do? Yeah, that's kind of how I'm going to do it. What is IBIT? But looking to put $50,000 to work in an investment, do you have a type of V to put that cash to work? I don't know, Michael, are you asking me that, or are you just asking in general? IBIT, that's the crypto scam thing, correct? Yeah, it kind of is. I mean, look, let's look at IBIT. Let's see what IBIT is made of. I mean, IBIT does have futures. I just don't remember exactly the, and it's always important. I always say this. You guys, anytime you trade one of these ETFs, make sure you look at the holdings. I mean, IBIT has, it has Bitcoin. It says it has Bitcoin in it. I think it has the futures. I believe it does. I believe that was the whole thing about IBIT. It actually seems to comport. You know, it's a lot better than some of the other ones, I think. I mean, again, it has. There were others that initially were just sucked. They didn't take it. They didn't understand how the future situation worked. They didn't take advantage of. It just didn't work well. But I think IBIT is fine. Again, I don't trade it personally, but you know, don't let me discourage you. All right, so in the silver, rotate it out of these, publish the follow feed. Let's publish these. All I did here was just push my gold and silver further out in time, which I think makes sense to me as of right now. And I'll make sure those get to the follow page after the show. Beto was the one I thought that was not that great, actually. I think that's the one. Beto Holdings. Let's see Beto. Beto, I thought, yeah, no, maybe so. Oh, God, I hate when they don't give you the right pages for holdings. Yeah, again, I really don't trade any one of these. I personally just rather have exposure straight to Bitcoin itself. And so that's kind of the way that I trade Bitcoin. I don't trade any Bitcoin in any equity trading accounts. I just rather buy Bitcoin itself. But I can't remember. Just make sure you understand the holdings and what you're trading with these. Like, yeah, see, Beto, no, I would not. I don't know. It's supposedly trading 95% CME Bitcoin futures, but I don't know. I don't like it. I don't like it. What else have we got going on here? We talked about Amazon and the days. Again, I'm really not trading so much around. I'm trading for a breakout in Amazon. I'll be honest with you, on earnings at some point in time above 230 to 240, and so that's kind of where I've made some inroads here. Let's see, 225 is too close. I'm playing it for a breakout above 230. That's what I got on right now. I got a couple of calendar calls. As you can see, that's been my play more recently. Let's see what else. I mentioned copper futures. Good Lord. This was a huge move earlier. This is my call spread. Feels like it's kind of normalized itself now. I think it was crazy earlier, but it feels like it's a little bit better. So SHG. What are we doing here? Table. I have HGU. I don't know why it's showing me. It feels like it's normalized itself. I feel a little bit better. This is, yeah, I'm down. Looks like about $800. Let's see. Futures. Copper futures overview. What are the specs on copper? 25,000 pounds. Yeah. Look, this is a this is one where, again, I put this on initially because I was playing long silver, and a lot of times silver and copper move together. Just so happens this is a one-off situation where something was named about silver, where they're talking about increasing tariffs to 50%. Copper tariffs to 50% has nothing to do with silver. So that's this is a one-off move. I'm hoping that you can see a situation like what we saw with crude, right? Upwards of 78, but then eventually drops back down to 64. Big drop there. I'm hoping, again, we saw this with bonds too, right? Big up move and then eventually fall. So there's just been so many times this year we've had some crazy moves in different asset classes. And, copper is just the latest one where you've gotten a move. If you're on the right side of this, kudos to you. If you're on the wrong side like me, I don't think you should overreact. I think you should just give it some time that maybe this will normalize itself. Hopefully the prices don't just hang up here the whole time. Eventually they'll fade back some. So what can you do? It just kind of happens every now again. Intel. Oh, yeah, Frankie looking at Intel, huh? Intel is up bigly, as Frankie said. Yeah, other than that, we don't expect tariffs to back off. This is one of those type of weeks, these couple of days, where you can end up rearranging a bunch of positions, sometimes over trading. Careful not to overtrade. I think you just gotta, if you like, you gotta go over the theses as to why you put on the position in the beginning. And if it still makes sense, then you need to still stay in the trade. If it doesn't, it doesn't. Like, for example, natural gas. I put natural gas on, I initially put it on 626. Let's see where it was then. 626 was here. And then, bounced up. It was as low as 340. I put on the 320, 310 put spread. It bounced back up. That felt awesome. But then it dropped early last week. And it's continued to hang around here and it's drifting lower. And I don't like that. My whole idea was maybe it drops to 320, but maybe, which is kind of the yearly lows. I can stomach a drop to 340, 330. But once it gets below that, it might be time to go. And I just closed it out for a small loss today. Even though the IVR is high, doesn't fit my thesis anymore. And I'm out. Folks, that's the show. Thanks for watching. And as always, be smart, be patient, trade them small, and trade them often. See you.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Hello, everybody. Happy Tuesday to you. Well, we should catch up with charts, right? The market isn't doing too much right now. The ES and incur are both down a little bit, a few hundredths of a single percentage point. The YM is down about 1/3%. I'm still relatively light, about 82% committed in my positions, still trying to play it safe, with the core positions being the diamond short, DI8, a bond short TLT, and kind of a smattering of other odds and ends. I've got the charts ready loaded, and so let's jump in and catch up, see what's going on out there, which, as I said, isn't a tremendous amount. It's odd because tariffs have come back with a semi-vengeance at least, and it's almost like the experience of April 2nd through 9th tempered the market into this kind of thing so that it kind of doesn't care anymore, because tariffs are getting introduced. There's a copper tariff of 50% introduced. All kinds of nasty stuff is going on. We're going to have to put him away. It isn't really killing the market too bad. So it's interesting to me because the market's way more than 1,000 points higher on the S&P than it was during the tumult of the tariffs. And now they're kind of coming back as if they weren't canceled, but nobody cares. The deadline, which was supposed to be tomorrow, of course, got pushed to August 1st. And Trump has said explicitly, this is it, no more delays. August 1st means August 1st. We'll see. If August 2nd comes around and they're actually intact, interesting, okay? But we'll see about that. We'll see if on July 29th they don't kick the can down the road again. TBD. But Spider is just hanging out near that midline, that dashed line there, which is the exact center of a long channel that's been going up for the everything bubble this entire time, ever since 2009. The everything bubble up, 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 up. And we are just at the trend line now. The diamonds, as I said, are down about 1/3%. This is one of my kind of anchor positions right now. It's not some amazing pattern or anything. We had a failed bullish breakout here. So we were at a lifetime high on Thursday, and then we slipped hard yesterday, relatively speaking, and then slipped a little more today. So this was the lifetime high at the time. This was the little tiny bit higher lifetime high. It beat that old record, and then we beat that old record here, and now we're slipping again. So kind of a triple top in a way. Seems sort of unable to hold that level. The cubes are pretty much unchanged right now. And in this instance, we're above this damaged trend line, so which this trend line is here. It goes all the way back to this Halloween bottom in 2023. So we got this anchor point, failure here, resistance, 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 and it managed, because of this jump, to get just above that line right now. So we're hanging out just below lifetime highs and just a little above that damaged trend line. Some of the hotter stocks are definitely seeing some profit taking. AVA Technologies, AEVA, down a little more than 11% from its peak. Although one stock that clobbered yesterday steadied itself, perhaps because it was made clear by Yolanda that have not formed a political party. And we're just kind of glued to those Fibonacci's again. You can see what a powerful force those are. We felt very hard, and it's just sticking around that pair of Fibonacci's. So roundabout just under 300. Over in China, this is the Hang Seng Index futures going back for decades. And for a while, I was doing gangbusters. So we had, high after high after high. And of course, it couldn't be done at the time, but this was the peak. This was the lifetime high back in February of 2018. And since then, we've had a major lower high and then another lower high like so. So we're way below the highs from 7 years ago. For my own sake, yesterday or so, I shorted FXI, not a huge position, but kind of a simple trade, fingers crossed for China to slip. 37.30 is the stop loss on that one, like so, 37.30 on FXI. Closer to home again, semiconductors, another strong day. Big gains in the likes of AMD, on semiconductors, Microchip Technologies, NVIDIA, SMH, probably a lifetime high close. This show's recorded between 45 and 30 minutes before the close. So that's unknown, but it seems fairly likely that we'll get a lifetime high on this. That dashed blue line indicates the former lifetime high And so we had the peak on Thursday, slipped some yesterday, and have pushed back to where we were on Thursday. So like I said, probably a lifetime high close on this. I do think that it's going to take some real power for some of the non-NVIDIA components to keep this thing cooking. AMD, for example, yes, it's up, but this gap is important on AMD. This one is at, what's that level right there? 141.01. And we've tried again and again and again and again and again to get past it. And it's just locked below in that little cellar down there. So that is an important level of resistance. And as far as on goes, it's right up against it. This is the topping pattern here. And we've got this price gap like so. That gap was defined way back between March 8th. Geez, Tim, get your eyeballs working. Okay. Yeah, there we go. January 8 and 10. And so we've got this gap here. It just about sealed it here. Fell hard, of course, during the tariff tumble, and then pushed, having a big update today, matching the kinds of levels we saw here, and on the upside here. So there's the line in the sand right there. So if this just zips right past tomorrow, then that lends credence to the SMH just churning right along higher. But it's kind of a test right now. Gold not having a splendid day. The front month in GC is down, glancing over here, about $30, not quite 1%. It had a tremendous run here, but really ever since this peak back in April, over 2 months ago, it has been just treading water. And it hasn't really sold off, but it's definitely, at best, kind of consolidating those gains. And it could be just doing another one of these things here, where it just kind of hangs out for 2 or 3 months before it lifts again. Did the same thing here. But the gold folks who are really getting accustomed to those fantastic gains, probably getting a little frustrated right now. GLD itself down clean 1%. And it's got its own gap to contend with right there. 310.31 is the resistance level. Palladium is up, and we've talked about this a lot. Now, this is a very thin market, so this chart looks bizarre because there's all these like little individual dots. Very, very not a heck of a lot of data to go on here, but over the long term, we've got 1, 2, 3 major bases. There could be plenty of backing and filling on this. It could be months before this truly breaks out above that green level, because in the past it's done that. It's had to really hammer out firm bases before launching. But PALL itself, the ETF for Palladium, which is also quite thinly traded, has had a series of gaps, and right now it's kind of landlocked here a bit. Resistance, this red line up here, 1 to 2.92, and down here support, this gap down here. So stalled out in this zone. Long term, I still think it's going to have do very well. But you've seen before, you get these big launches, and it can take months to digest that before launching again. Added to which, platinum is pretty lofty right now, and it wouldn't be surprising to see this maybe even take a hard hit. And if it did, that would almost certainly bleed over to the world of palladium. But miners are quite weak today with all this going on. GDX is down 4.3%. We've been banging around for weeks in this range. We're in the lower portion of that range right now. The junior miners also down, not quite so much, but support on this one short term is at 64.92. I would also mention XME, the metals and mining ETF, which is more broad than GDX, is down, but not by much. And that's probably because the copper got the 50% tariff, which was of aid to American copper companies. So here we see HG, the copper futures, up very strong. Even if it's backed off those lifetime highs, it's still up about 10%. And FCX, Freeport McMoran, up over 3%. So definitely enjoying the 50% tariff slapped on overseas copper. What else is cooking? Well, wanted to mention a couple of existing short positions and just talk about them in a little more detail than I usually have time for. This one, FLR, Fluor Corporation, is interesting because it goes back many decades, but long term, it's been in this kind of slow grinding bear market. The lifetime high was way back here in the summer of 2008, and it peaked around 80, and it's around 50 now. And it had this tremendous plunge. It bottomed out during the COVID crash at $2.85. So, it's up about 20-fold since then. But what we've got going on here is we've had this incredible climb higher, just a steady series of higher highs, higher lows. And this peaked in its own way right here, back in November 2024. What I've been watching, though, is this gap, this price gap at 54.02. And so I'm short this position, and that gap is the basis for my stop loss. So provided it does not cross above that gap, I'll be sticking with that short. And you can see from this distance how it definitely, to my eyes, has the opportunity for some downside there. Another one I mentioned specifically yesterday is Nike, NKE, down 3.5% approximately. And this one, it broke its lifetime trend line a long time ago, but my focus in this instance is this right triangle top right here. So being defined as this descending trend line and this base, like so. And that base is also my stop loss on this. So NKE short, with the stop being any crossing above 77.5. In the 70 seconds we've got left, let's just talk interest rates real briefly. As I mentioned, also the other kind of core position for me is TLT. I talk about this a lot. This is down about 30%, slowly hammering out this hoped for top over the course of the past year and a half or so. And the base on this one is down at 82.68, which isn't too far away. That's about $3 from here. So about a 4% drop from these levels would complete this pattern, which I think would be pretty nasty for TLT. The different angle on that is ZB, like so, and you can see the same pattern hammering out there. The real question, though, of course, broadly speaking, is, there's even today Trump was talking about Powell should resign, and even if that were to happen, and even if Trump installed the most sycophantic, compliant governor for the Federal Reserve, I don't know if that would truly bend time and space to as well as far as interest rates go, because the interest rate market is pretty big and pretty powerful and very global. The real question is, will this kind of chart, and this is the market yield on U.S. Treasury securities, is this indicating to us that much lower rates are ahead? It could. We've seen tops again and again and again, and what we're seeing here resembles a top. But if you look through a lot of interest rate charts, some look like this, and some look like they're kind of sneaking up to the upside and breaking out. So it's very murky right now. But I'm definitely keeping an eye on TLT, not only because it's a position, because I think they'll be very indicative of this big question, whether the demand for bonds ruins the notion of those lower rates. So it is the bottom of the hour. I shall say farewell and see you tomorrow. Thanks a lot for coming by. Bye-bye.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Steven Atlanta, thank you so much for holding.
My pleasure, guys. And let me go on record as saying I think you've got Tasty Trade is the best brokerage, and you guys have the best content, and I'm not here just schmoozing. Y'all are the best on the planet, period, for what you do. Go on record as saying that. Tom,
Thanks.
You were the great disruptor when it came to forming Thinkorswim and then Tasty Trade. You're an innovator.
I appreciate you calling in. Good stuff as always. Thanks, man.
If you missed the live show, here's our cherry on top weekly recap.
Yeah, that's gonna. There's a spider on my desk. No, kill it, kill it, kill it, kill it. Oh my god, oh my god.
Where is it?
It's on my microphone.
I don't see it.
Not from there, you won't.
Oh no, oh god.
Spiders don't bother me at all. Just the big ones.
No, it didn't bother you at all. From where you were sitting, you had no problem
Thank
with
you,
it.
Bat.
Man, let me tell you something.
Thank you,
I don't want you to throw me a life preserver. That's never going to happen.
Thank you, Bat, for coming to my aid.
You're welcome. You're welcome.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters. Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend, and you know what that means. Well, we're here to save the day, Sadnov. We're going to try to move these futures more than 8 handles today. Even the S&P is down 5, and NASDAQ up 2, Russell up 19. Obviously, NASDAQ and the Russell green. The Dow and even the S&Ps are red. The Dow has been down for most of the day, down 148 right now. Even the S&Ps have been hovering between down 5 and up 5 all day. Volatility been anemic all day. Mentioned it today. I thought we'd actually catch a little bit of a bid today because volatility was down so much, down over 4% now, just about an 80-cent move, making new low lows. Market not doing anything. By the market, I mean even the S&Ps and the NASDAQ really not doing anything. Bonds actually caught a bid too. I know they're off of their highs of 113.70, off of their lows of 112.21, kind of mid-range at 113.02, but they were under 112 for most of, under 113 for most of the day. They're down 5 ticks right now. Bitcoin about $500 higher than where I was quoting it yesterday. You can see they're up $730. Oil up 52 cents. Gold down 29. Gold for the first time in a while. By a while, I mean probably a week or so. It was under 3,300. It's now 33.12, down 30 cents, $40, sorry, off of its highs, and about well, let's just call it 15, 20 bucks off of its lows. Silver down small, about 3.5 cents or so. Sadam, I don't even know if you want to mention /HG. That would be copper. I got the emails about them. Copper moving just about 10% today. It's up 9 in the order percent right now, 49 cents. But when you look at these markets, Sadam, they are horrific. You go to August, and it doesn't even make sense to trade 21 to 25 at, what is that, $250 a point, right? Is it so?
No. 21 to 25, I think, is $400.
Oh, $100. Sorry, $100 a point, $400.
Yeah,
correct.
So the markets are the
0.001 is $25.
Yeah. So the markets are the equivalent of the at the monies are the equivalent of $400 wide. It's like a $4 wide option marketplace. It's untradeable.
Yeah, no, it's definitely untradeable.
And that's the tightest they've been. I've been watching them for a couple of hours because I wanted to do something in there, and I received a lot of emails from customers who are like, why are the markets this bad? Well, one, you can see the volume is really light. At first, the markets were so bad, Tony. They were $1,200 to $1,500 wide on each strike. And what I did was, it was weird. I went over to the trade desk because I'm like, hey, did they lock limit? Because I didn't know what lock limit in copper was. And in the
like an upside lock limit?
Well, in the futures world, when they lock limit, the options can still trade. It's not like the stock world.
Right. Right.
But there's no markets for them. And the markets look so bad that I thought they were lock limit. But I don't know what the limit is, honestly.
Mm-hmm.
I don't trade enough copper. I mean, occasionally I trade copper. I haven't traded it in probably 3 or 4 months. You're going to see a crazy high IV rank here. I looked to do something this afternoon in there, but the markets were just too wide. I'm a noise freak. So when there's crazy amount of noise like this, I want to put a position on, but there was nothing. The markets were too wide to get anything done. So
if you don't have a position in copper, I wouldn't be looking for a position in copper.
No, I want to put a position on in there, but not.
No, I know what you want to do. I'm telling my audience who might listen to me, you don't want to be in copper for just the reasons that Tom has already stated.
Yeah. If the only way you want to be in copper right now is A, if you stay super small, like a one lot, and B, if you get filled at
a one lot's pretty big.
No, it's very big. But I'm saying if you get filled at your price, which has to be extraordinary, again, I mean, this is just a bunch of noise created by, I guess there was a tweet today. Trump tweeted out that he's going to increase tariffs on copper by 50%.
That's right.
Now, I mean, on every level, I can't stress how anti-competitive and just incredibly stupid this is. Like, I'm not being political. I'm just telling you that this is like, it wouldn't matter who did this. This is like, again, one of those things that I think is just the absolute dumbest way to run an economy. And the market reflects that. If the market thought that there was any sensibility to this, it would have reasonable markets. These markets are so crazy that the market's essentially saying, I'm not willing to stick my neck out at the craziest volatility ever in copper, no matter what, because I don't know what you're going to do tomorrow.
What price. Yeah. Right.
Because I don't even trust my hedge, is what the market's saying.
Sure.
Like, I don't trust the fact that copper could be down 12% tomorrow or up another 10%.
Sure.
This is, if I didn't know better, I would say it's market manipulation, but I don't think it is. I think it's just a case of pure stupidity. Regardless, if you have a copper position on, and I wrote this to a couple people,
Gesundheit, what are you telling your
Well,
your
okay, what I
email
told
us? Yeah.
people was that if you're short a strangle in there, if you have a defined risk spread, I would do nothing because you can't do anything today. You can't roll up the put side on a defined risk spread. You just can't do it. If you have a naked strangle on and you want to flatten out the deltas a little bit, you can put an offer in to roll up a put spread, but you can't chase this market. And so you just have to leave something in and hope that you get filled near the offer. And that's the best you can do. What I also explained was what I would do personally is hope that tomorrow the markets normalize a little bit more and they get tighter and you can actually do something tomorrow. I just think today there is so much fear of a complete reversal tomorrow, and nobody wants to hedge these. But you can tell by the market. Tony, I don't know if you looked earlier, but there were markets.
I did look earlier.
There were markets
They were twice as wide. Right.
No, there were markets that were 5 to 10 times as wide. Like this is, you saw some markets in there where there were no bid at 40 cents.
Right.
At the money options in the front month.
Yeah, and unfortunately, that screws up your P&L too, because it picks up the mid price. Mid price might not be anywhere near what fair value.
Totally. Yeah. Now, for a while we did not have a good IVR in copper, and but I think that the guys figured out a way, and they got it. So it should be, I think I'm trusting it here at 65. I did look at FCX, which is liquid enough and does have, some better.
It's up also, but it's off of its highs too. It's up $1.34 or so, but FCX traded all the way up to what, like 49 or so.
Yeah.
So
yeah,
it's almost $3 off of its high.
That hedge did not work. So in other words, this is another challenge with copper because the offset is FCX. The IB ranking there is only 23, which I think is way too low. Should be higher tomorrow. But the other problem in there is that, like you said, it sold off $3 off its high. So what people were doing was they couldn't get markets in copper. So they were going in the futures. So they were going to FCX to get markets to hedge the position. And it was a double whammy. You got screwed both ways because the copper prices didn't come back down. So this is one of the keys of staying small and staying in liquid products. Now, again, I wouldn't, sometimes people say, well, why don't you guys offer certain products that aren't that liquid if we want to trade them? And the answer is just for this reason. For this reason.
Yeah.
And copper, I felt, was a legit, tradable product. If you look today, the front month volume is only in the hundreds and the back month volume is like nothing. So it is not a good situation. As Tony said before,
it is not a good situation.
As Tony said before,
you got volume today in HG of 77,000. Sadnoff, you got volume today. You talking about the options?
No. You have in the futures. You had volume for sure.
Yes,
plenty of volume in the futures.
Got it. Yeah.
And they haven't moved much in the last couple of hours. They've really sat in a very narrow range. If you're watching the S&Ps all day, well, you're probably watching the tightest range that we've had intraday during the listed hours. I'm going to go out on a limb and say possibly all year. I don't know this for a fact, but I think today was probably the narrowest range we've had all year. I mean, I think we were less than 20 handles the entire day.
If we were more, it certainly didn't seem like it. And
after the opening, when we opened up like $5, and at one point we were down 10. I can only remember a 15 handle range all day long.
Yeah, me too.
The Russell was super strong. Everything else was the S&Ps and the Dow were weak, and the NASDAQ all day kind of wanted to rally, but it just has been kind of stuck around here. I mean, just looking at certain NASDAQ stocks, NVIDIA was strong all day. Tesla was a lot stronger this morning. It's only up 2 right now. Intel, it's crazy, strongest stock on the board, which is nuts, up $1.60. And I don't know if you got anything else, but
Intel IV rank kind of percolating too a little bit. Go ahead, what's up?
Yeah, AMD, MU, UNH, those stocks were all up today. It was a day that the semiconductor stocks, I think I just heard Tim mention it on his show. if you look at SMH, it was, which is a
Up
semiconductor.
almost $4.
Yeah, SMH was really strong today. And so that's where your strength in the market was.
And it's $1 off of its highs here. But
Yeah, but that's where the strength in the market was. The weakness was in, the S&Ps and obviously the rut was super strong today. This was what we call a very mixed day on moderate volume. For most traders, today was a good day to be short premium, but if you didn't come in with a position, man, you struggled. I promise you.
Yeah, looking for anything to do. You're right.
Yeah, I mean, we found a few trades. We are looking for good trades. So if tomorrow, by any chance, you're home tonight and you find a good trade, because people have been emailing me with some stuff today that's kind of fun. If you're home tonight and you find something, tastylive.com/assumption. Tastylive.com/assumption. We would love to have your trade ideas, suggestions, assumptions for tomorrow. Maybe just think of a direction on something you like, something we can work with. We're kind of wide open here. We are. Another person sent me an email today. They said, would you consider this the moderate level of implied volatility or conservative level? And I said, well, very low end of moderate, which means, we're technically on the low end of our theta positions right now. This is our, we have a decent delta, but we have one of the lowest thetas we've had on all year and one of the lowest extrinsics. So I think I speak for a lot of tasty traders right now. In the passive world, I think the street is fairly fully invested with this rally. In the active trader world, I think the street is very underinvested. Don't you think that's fair?
I don't know. I find it so hard to do that. I mean, listen, I'll struggle with my own yesterday. You heard me yesterday talk about how weak I thought the market was going to be today. I mean, I said the highs were in, for
you
for
weren't
the week.
wrong. You weren't wrong.
I wasn't wrong. I wasn't right. Market didn't do anything, but I was wrong because of my conviction. Like, I was so dead set on it yesterday, and then today with volatility contracting as much as it has, and I please don't send me the emails about the bullish vol wedge and everything else. I hear you. I got it. I know. But all I can do is trade what's in front of me. Volatility is telling you there ain't much going on. We might go a little lower, we might go a little bit higher, but nothing with any conviction. That's what volatility is saying. And it's starting to tip, at least for me, back to the upside. I want to abstain. I'd like to take a mulligan, Sadnov. I would like to take the week off. Can I have the week off?
You just have 2 weeks off, but yeah, sure. Take whatever time you need.
2 weeks off. I worked the first week. I was working day and night.
Day and night?
Well, afternoon and night.
Okay. Anyway, I wouldn't say you were wrong yesterday, because I definitely would not consider this to be an up day. I wouldn't.
Well, Ilya's still staying strong. He's writing into me right now. He's still just as bearish as he was yesterday. So
I am very mixed here. Honestly, I think our positions are so small, I don't think it matters what happens. I think if they rallied big here, it wouldn't faze me at all. And I think if they sold off big, I'd be mad that I missed it a little bit. But
I'd be mad that I missed it.
I'm still short. So I'm a little bit short, but I just don't have any gamma risk right here. So I'm not too concerned about the upside. NASDAQ's up a little bit. S&P's down a little bit. Dow is down a little bit, and the Russell's up a little bit. So this is a truly two-sided mixed day.
Mixed time, yeah.
I did sell some puts in the 10-year notes. I did not buy any bonds today. I like at least the fact that they didn't close on their lows for a change. I'm still a buyer of bonds, but I've slowed down my purchases just because I want to see a little bit of...
Slowed down your conviction?
Yes.
Uh-huh.
I mean, you'd think with lower prices I'd be more convicted, but or to have more conviction, but I don't. For some reason,
typically
I just don't.
You are. I mean, typically you're pretty good.
I know,
you're not
but
wishy-washy. Even when it goes against you. I mean, you're so silly sometimes that even when it goes against you, you're all in. You're still feeling good about your position. Now you can get in at better prices.
VIX down 98 cents today. That's kind of an ugly move in the VIX. The 1 day almost down $2 in the VIX. Those are all just kind of like, definitely not showing any kind of any kind of fear like you just mentioned.
No, not at all. Not at all. Right.
Looking at different stocks, I thought one of the more interesting stories today, before the opening, Vanetta did her piece, if you remember, and she talked about she was yakking a little bit about Jeff Bezos and Amazon's this is your Prime days, right?
Yep.
Another 25 billion, this and that. And if you remember, pre-market, Amazon was up, I want to say close to $1 pre-market.
Yeah, it opened at 223. It's 219 right now. So yeah,
it's $4 below where
that
it
was
opened.
pretty much the high, 224.
Yeah. So Prime Day didn't go as wonderful as at least this was another case of buy the rumor, sell the news. A $4 reversal on a dead day like this is pretty good, I would think.
Yes. Yes.
Other than that, most of the tech stocks were kind of really mixed today, and I'm not reading anything into any of these moves. I think this is one of those days where a stock could be down $2 today and up $2 tomorrow, or up $2 today and down $2 tomorrow. This is just like, these are just like professionals just playing mind games with each other. And I think the damage today, if there was damage, was done in copper. I think that for most S&P traders and bond traders and currency traders and most tasty traders, this was just a really good day to be short premium. When you get a market where the VIX is down $1, the VIX futures are down over 4%, and the S&Ps are unchanged, you are going to have a monster day as a tasty trader, period.
Yeah. But what now, Brown Cow? What about for tomorrow? We're a little bit
okay. Let me just swim around in all the wonder that is today. Let's just enjoy the moment and take the 4% decline in volatility and the zero movement. When there's zero movement and 4% decline in volatility, you don't even have to adjust your positions.
No, you don't have to do anything. Matter of fact, your deltas don't even change that much because the volatility is contracting so much on both sides. Now, if you have one side or the other, you will lose some delta. If you were all short puts today with the market basically being unchanged, you're going to lose some delta there because the expected move gets tighter, and your out of the money options lose their delta a lot quicker.
Yeah, I covered some strangles today in the Qs and in spiders. Because with the IV rank at 11, I'm like, listen, you're playing with fire here. So you might as well just cover some short premium. It doesn't make any sense at these levels to be short. It's hard to find some short premium.
Do you go back to the well from yesterday and look at a one-day trade?
No,
they took so good.
They took too much out of it today. I don't like it. I did use the cherry picks though. Cherry Picks is a free quantitative newsletter that we send out. And one of the trades that they had in there today, they did some healthcare stuff, which Nikki and Mike, which I'm not, I don't really like trading healthcare. So I skipped this. And if you go down,
you're allowed to do your own thing.
Yeah, I know. But I use all our research for different things. So I skipped the healthcare because I don't like those stocks. I skipped the Solana USD either. I don't like that either. Not for the time being, but these two trade ideas, stop right here. So I actually looked at Palantir. Stock was down a few pennies today. I'm not sure exactly where it is right now. I haven't looked at it. It's not on my screen.
PLTR is up 56 cents.
Okay. Well, before it was down like, let's say 50 cents. I don't know.
Good IV rank at 38.
But it had a good IV rank, and it was one of the few stocks that was trading 1 penny off mid price. So
shout out to Nick Batista, who happens to have the same last name as myself, and Mike Reckentine, who does not have the same last name as myself. Over the last 5 days, the IVX 5-day change is up 12%. South of it's one of the larger movers of implied volatility over the last 5 days to the upside. which is rare, like you just expect.
So I
showing
took
how-
their advice here and sold a strangle in August because I kind of was not looking at PLTR. That was one of the short positions we got on. And then if you scroll down a little bit, which I was surprised, I liked both of these.
Yeah.
I am working a short call spread in /60. I'm already short it. And unfortunately, the last couple of ticks in there have been lower, so I didn't get filled. But I am working to sell the 120, 121 call spread in there, and for 150 ticks. And I'm hoping that hoping for an uptick either today, either between now and the close, which is only a couple minutes, or I'll work it in the overnight session tonight at the same price. One of the nice things about futures options is that you can trade them 24/5. Like yesterday on the close, if you remember, Tony, I did an ES short strangle.
Yeah, it worked out nice. 4
Yeah,
points
but the point I'm trying to make is that I closed it at 4 a.m. because it trades in nickel wide markets, so it's nothing. So at 4 a.m. it came in, and I was like, okay, I'll take it off. I'll work this call spread tonight, and if I get filled, great. It's I don't care what time I get filled. So yeah, they're shorting the 119, buying the 120. I'm doing the 120, 121. You can do whatever you want in there, but I like this play, and it is, it has had a monster run.
It has had a monster run.
Yeah. So those are good things about, some of the newsletters that we send out. Especially when things are slow, you get these ideas, and that's it. You can take that down.
Yep.
But that's one of the cool things is, I love trade ideas, whether it comes from customers tomorrow on, what's your assumption, or whether it comes from, these trade ideas, from cherry picks.
Yeah, you don't care. You're just looking for ideas.
Yeah, I don't care at all. By the way, little bond rally here in the close makes me feel a little bit better about my bond position here. Not that they're good at 1305, but it's way better than 1222.
Sure. No, you were dying for an uptick. You finally got one, but it's almost like a kind of a dead cat bounce. I mean, they're still down.
Oh, it's a pig.
Yeah.
I didn't want to see them.
How about Unity? Have you? I know we only got a minute left here.
I have not traded Unity in a long time.
It's
somebody
gone
else
from 23 to 29 the last 3 or 4 days. IB rank at 35, and it's got earnings coming August 14th. Go ahead. Sorry.
Yeah, I mean, I wouldn't short it for earnings, but if you wanted to, what's the IB rank in there?
In the 30s, 35.
We have not had a lot of success over the years trading Unity software, but most of our
markets aren't good either. Well, not good. They're 20 cents wide.
Yeah, and most of our losses in there came to the downside, not to the upside. I don't have an opinion in there, to be fair with you.
That's more than fair and very timely, my friend. Good job out of you. Even the S&P's down 5, NASDAQ up 8, Russell up 15, Dow down, volatility down. We'll take a quick 90-second break. We'll come back. We got the overtime crew chomping at the bit to talk to you. We'll be back in 90 seconds. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
I'm like the Tupac of economists, going out on top. And will I ever really be gone? Say bye to Ben Bernanke. Cry your eyes out past the hanky. Gone from the Fed, but still looks swanky. Bye-bye, Chairman Ben Bernanke. Ben Bernanke, hardly knew ya. Ben Bernanke, glad we're through ya? Sayonara, Mr. Yankee. Closing bell tolls for Ben Bernanke. Now, say hello to Janet Yellen. new blood, maybe start some selling? All around the world like a market Magellan. Hello, hello, Janet Yellen. Janet Yellen, Professor Shady. Janet Yellen, new chair lady. Welcome in the new Miss Yellen. Different from the old, there's no telling. And I'm out, like Tupac, in a peaceful transition.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your partner.
Who loves the hardest?
Yes, yes, yes. So are you ready? Who's more stubborn? Who's more public? And who do you think takes longer to get ready in the morning?
Oh. He's got to do his hair.
Who's a better driver?
I mean, for sure.
Yeah.
Like, I live in Italy. Like we drive like.
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed most? Who is more spoiled?
Oh, yeah. It's not even close. Like, you got buildings full of people. What do you want, Mr. Zosnoff? I have nothing.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
I'm like the Tupac of economists, going out on top. And will I ever really be gone? Say bye to Ben Bernanke. Cry your eyes out past the hanky. Gone from the Fed, but still looks swanky. Bye, Chairman Ben Bernanke. Ben Bernanke, hardly knew ya. Ben Bernanke, glad we're through ya. Sayonara, Mr. Yankee. Closing bell tolls for Ben Bernanke. Now, say hello to Janet Yellen. New blood, maybe start some selling? All around the world like a market Magellan. Hello, Janet Yellen. Janet Yellen, Professor Shady. Janet Yellen, new chair lady. Welcome in the new Miss Yellen. Different from the old, there's no telling. And I'm out, like Tupac, in a peaceful transition.
Is this thing on? Oh, the markets are open today. Markets are open today. Tuesday, July 8th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Thomas Westwater filling in for Dylan Radigan today. He's on his way to New York. We'll see him later this week. We're here to take you through the rest of this hour, of course. Futures market closes at 5 Eastern, 4 Central, although you wouldn't know it was open today. Light volumes, light action. Stocks barely changed here on the session. Come talk about it with us. Tasty Trade platform, Tasty Live website. If you're already there, thanks for joining us. But come over to YouTube. What you think of this quiet day? It's a typical summer Tuesday in these markets. Low volumes, low volatility. Why don't you do about nothing? Stocks meander around. Nasdaq's up by 0.08%. The S&P's down by 0.05. The banks had a nice day, though, at least the regional banks, helping propel the Russell to the front of the pack up by 0.76%. Ultimately, bonds continue to move lower. Not great news for the metals, precious at least, because copper gets a kick in the pants with a 50% tariff brought to you by the commander-in-chief himself. Oil prices bounce higher, nat gas leaks lower. Better day for the dollar this morning than how we finish up. And of course, Musk is back in the news with Tesla. Ilya, let's just start with you. I know that the handoff to overtime was canceled today, which makes us all sorts of bearish given the track record for that.
That's right.
But jokes aside, what's going on in this market in today's session? Because it feels like there's nothing doing anywhere. The S&P 500 just squeaks past 1 million contracts traded as we head into that 4 p.m. Eastern close.
There's only one kind of bit of sense that I can make here, and it's looking at the price action rather than anything else, because there's not really anything else that's going on. I mean, we just, as you said, we just barely limped over 1 million contracts now. So this is a very, very low day. But take a look at a 4-hour, take a look at an 8-hour, doesn't matter. But zoom in on this candle's structure, and what you see is that big surge. Obviously, the markets liked the jobs data. It's funny that they did, because the jobs data was mixed at best, but price action is the price action. Granted, the volumes on July 3rd were predictably the second lowest volume day of the year. Nevertheless, they liked it. You see, we've settled. We established a range bottom. We kind of tried to take off from there, and then we cracked under, and now we're holding under. Now, this is a flimsy signal, so let's be clear. This is an intraday thing, but it does give you a sense that you're getting lower highs and you're getting lower lows on the immediate kind of structure here. And either this is digestion or it isn't. But if there was a place at very cheap vol to take a pot shot at a pullback, it looks valid to me. So that's exactly what I've done here. It's a vertical, it's risk defined, vol is dirt cheap. Why not? 4 or 5% pullback from here would be enough to make this make sense. It would leave the up move structurally completely intact. But it does look like the market is getting a little soggy here. More structurally, if you look at a ES chart, and probably have to look at a continuous contract here on a monthly time frame over the longer term, and look at any which oscillator you like, what you see is the kind of divergence that happens at tops. This is negative divergence. Price is setting higher highs. It isn't, and this is a monthly chart. So when you get divergence here, it's not exactly as flimsy as it would be even on a daily, where you look at that as, let's say, a tertiary indicator along with other things. This is a loss of momentum at the monthly scale and in overbought conditions. Overbought, obviously, a very relative term. Who knows if that's a thing that even exists? I don't believe too much in that as a concept, but it is certainly the case that when these oscillators start to have negative divergence at sort of their headier levels, 2022 is a good example, 2007 is a good example, on and on it goes. This is what happens at major tops. I think the last time this hasn't worked for a major top was 1987. So, noteworthy, not something to hang your hat on, but when you get the kind of price action you get on the shorter term charts with this kind of positioning on the longer term ones, and vol costs next to nothing, why not put on a little put vertical that's risk defined to 1 to 2% of equity loss in the worst case scenario? That's my thinking, and so that's what I've done here.
Thomas, that all sounds rational and reasonable from a certain perspective, but we just got a 50% tariff on copper today, pushes up copper prices around 10% into the close. We have all the Laotian and Kazakhstani tariffs yesterday alongside Japanese and Korean ones. The market's not really reacting negatively here. Shouldn't this all be bad news for stocks? How come we're not down more?
Yeah, I mean, it's bad because it pushes up inflation expectations. So, FOMC rate cut bets for July were at 20% last week. Now they're all the way down to the 5 or 4% range, which effectively takes out, any speculation of a July rate cut. I'm a little surprised the market didn't drop. We had tech actually up, you had energy up, materials up, probably due to copper. But this is a huge move. I mean, Section 232 tariffs, the investigation was done earlier this year that, gives the president broad authority to implement tariffs on national security concerns. It's hard for courts to overturn. It's hard for Congress to overturn. We've seen tariffs like this last quite a while. If we look back through history, they've done it on oil under this. I think it lasted 14 years back in the 60s or something. So, I mean, the market is focused on these reignition of trade fears. It seems like we're trying to shrug that off for right now and try to get a feel for how this is actually going to play out. Is it going to be more just rhetoric, or is this actually going to turn into something that's going to take us a material step backwards? So I know I was talking to you last week, Chris. I said I was going to sell that put spread in copper. I actually had the order in. It didn't get filled, and I never tried to put it on the next day. So I didn't actually catch this move. I know I said I was going to. I had the order in, just didn't get into it. So I saw the chart this morning, and wasn't too happy with that. But I think this is, going to feed into, because copper's in so many products, right? Cars, bridges, construction, electronics. So if this move lasts with these copper prices staying up here about 5.6, 5.7, that could, bring in the fear of inflation being more persistent, and then the Fed, pushing these rate cuts further back. I'd like to see a drop down to 6,100 to get long on ES. I don't know if that's going to happen. I thought we'd see a little bit more selling into the close today, but we're quite resilient. So, this is a hard one.
Yeah, it wasn't just the other day, Thomas. It was, in fact, yesterday where I asked you, I said, what do you think about copper back near that 1 month average? And you said, I'm going to try to sell a put spread here. So unlucky for you that you couldn't. I actually got lucky insofar as I tried putting on a short iron condor yesterday and did not get filled. So today would have been a lot worse had that been the case. The 50% tariffs in copper, let's go over here to copper. HG provoked this massive rally, a new all-time closing high for the contract here. There was a really interesting study that I came across earlier, just because what is the impact of these kind of tariffs on copper? I tweeted out the link earlier, but while the Fed probably uses this as another excuse not to cut here in July, maybe even September, the data that's available that actually runs from a study that was published in December of last year suggests that the impact of a 10% rise in copper prices is only consistent with a small bump up in overall headline CPI and core CPI. I think it translates to 0.05% on the very high end. So keeping that in mind here, is this going to stop the Fed from doing what it wants to do? Probably not, but it's just another marble on the scale that makes it that much more difficult for the Fed to justify going forth with any cuts in the short term. Ilya, this seems to be a problem for the bond market to a large degree. We did end up actually squeaking back higher technically in positive territory today at the long end of the curve. ZB pokes itself up a little bit more. But that's starting to look like a really ugly chart, like a bearish rising wedge. And hold on. If the April idea for the bonds was, well, if we're going to be erecting all these trade barriers and these countries recycle dollars from our trade to purchase our treasuries, then if they have fewer dollars, won't they buy fewer treasuries? So we're going back into the tariff pit and this time with a new bill, the one big beautiful bill, as they're calling it, that's going to pump deficits and increase debts. And we're asking the world to help finance these debts with fewer dollars.
But telling them not to do it. So we have bigger deficits to finance, but we're telling them, hey, the money you need to pay for our debts here, we're going to make sure you don't have it.
That's what it reads like. That's kind of what it's
fun times. It's interesting because you get the sense that at least people like J.D. Vance in the administration, they understand how the recycling of dollars via the capital account into the U.S. economy works. They understand, he's talked about it directly, that this is a critical way that things are financed in the U.S. and a huge reason why we're able to enjoy what has come to be called the exorbitant privilege of having the world's currency of commerce, because if people have to transact primarily in dollars for the commerce that they do, and then they need to park those dollars somewhere, this is what finances our deficits and allows us to be the power projecting hegemon globally that we are. For example, doing things like dropping bombs on Iran to try to force a peaceful settlement through strength in the Middle East. None of that is possible. None of the flexing is possible if we can't borrow at preferable rates. And what's interesting is the people like J.D. Vance that understand this dynamic somehow think it's a bad thing that we can borrow cheaply because of a strong dollar, because that hurts our exporters. It is, in my mind, a kind of willful, no, I will cut off my nose to spite my face, and there's nothing you can tell me otherwise kind of argument. Because, of course, it's absolutely ludicrous. 68% of U.S. GDP is household consumption. Should we be optimizing for the purchasing power of U.S. consumers or for the 5% of GDP that is net exports? Should we be offering preferential conditions dollar-wise to our consumers who actually power the economy, or to our exporters who are an afterthought? And should we sacrifice cheap borrowing for the entirety of the United States to break this? I think probably you get the sense of where my thinking lies on this, but I'm not the vice president.
Thomas, would it be a stretch to say that Ilya's thinking lies that he should be short the market?
No, I
don't think so.
I mean, I am,
for
the record.
Okay, so
Yeah, I mean,
bonds, the bonds may be one thing, Thomas,
but that's fine.
The notes are the different story, though. I mean, I feel like this has been old reliable this year, just being directionally neutral. We're ping-ponging. Yields aren't really going anywhere. 10-year yield, Thomas, we look at 4.41 right now. This year, it's been 4.15 up to, we'll call it a little bit more generously, 4.6. Do you have any strong feelings on the belly getting into the long end? It's a 0.7 IVR. Surely we can do something that's out of the money one way or the other, Mr. Westwater?
I mean, I'm on the wrong side of the bond trade right now. So I bought a call spread in ZB last week. Horrible timing. So just did not read or forecast what was about to happen here. And I thought the trend was finally in place. And then I bought pretty much right at the top. So it's
not ideal.
No, not ideal. Definitely not.
Ilya, we have a 10-year auction tomorrow, 30-year bonds on Thursday. Tomorrow, of course, is the FOMC meeting minutes.
Yeah.
We've heard from Powell. He was, talking in front of Congress recently.
I mean, we know what the man's going to say at this point. He's been saying the same thing since March.
What's the story for tomorrow? For the minutes for the auction? Do we care? I think we care more about the 30 than the 10-year auction this week, given the tariffs.
Yeah, probably.
But the FOMC minutes tomorrow probably carry some weight.
They probably do. And I actually don't expect the FOMC minutes to be that controversial in terms of the substance, because we kind of know the square that the Fed has outlined for itself. We kind of know where they stand. It hasn't materially changed, really, since March. And the rollout of the Liberation Day tariffs and then their pause and now their extension, they all kind of factor into the same idea, which is the Fed basically goes, look, we know historically tariffs are going to pull us in different directions on our mandate. The inflation shock is going to tell us to keep rates high. The growth hit is going to tell us to cut. We don't know how this particular version of tariffs is going to register on the spectrum of outcomes. Which one of those things is going to be more or less important? So while the unemployment rate is relatively low, and while the inflation rate is relatively manageable, we're just not going to do anything. And we're going to wait. And the longer you delay these tariffs from hitting in their kind of full force, or even in defining what full force means, the longer we're incentivized to do nothing, as long as nothing in the economy unmistakably starts to break. So if the unemployment rates start surging, well, we know which way we got to go. If inflation starts surging, we know which way we got to go. None of those things are occurring. So why wouldn't we sit here and not attempt to front run something when we don't have to? I think the minutes are going to basically tell you that story again. I think the real question is whether the markets want to hear it. This is, as ever, I think, where people get macro confused and think that there is some sort of a macro manual where if XYZ macro conditions are met, ABC outcome occurs. That's not how this works. The whole thing is completely contextual. I was having a conversation with someone over the weekend, and they actually made the great analogy that what a great investor does isn't try to find where the green pasture is for the cows to graze. They look at the cows and see where the cows are going. So the interesting thing here won't be what the Fed says. It'll be whether the markets want to hear that. Because the markets are not confused about which way the Fed should jump. Break-even inflation expectations in the bond market have gone basically nowhere and are near early April disinflation is ahead levels, where they fell precipitously since the beginning of the year. And the markets are saying 66 basis points next year. And the Fed is saying 25. So the markets know where they think policy is going. And that's the disconnect. If the minutes, as you might expect, they're going to give us the same song and dance, and the markets are saying nonsense, you're wrong, there is a reaction function there where something has to give. Will it be the minutes that forces that? Unclear. But at some stage, this imbalance closes. And the longer it persists, the more of a risk it is to overall risk appetite.
Thomas, I'm not expecting much from the minutes tomorrow. Are you thinking about anything this week? Do you care more about the minutes or the bond auctions this week?
I think the bond auctions, they've been, pretty impactful in the market for at least the past few months. FOMC minutes, like Ilya said, we kind of know a lot of what they're going to say. Outside of that, it's a pretty light week. So, I mean, I think it's going to be more headline driven, if anything, watching out for headlines from what Trump is saying for how we're going to actually push forward with tariffs. So I'm keeping my eye on the bond auction and headlines more than the few lighter economic prints we're getting.
Well, if today's 3-year note auction was any sort of precursor for what we should expect at the longer end of the curve, it's an ugly appetizer. The 3-year note auction results gives us a 0.4 basis point tail, a bid to cover of 2.51 versus a 6-month auction average of 2.61. Usually it's the short end of the curve that's been staying intact throughout all this because that's more related to the Fed. But in the wake of what we see here of this one big beautiful bill and the resumption of these tariff talks, of course, are for a fairly weak auction and, more importantly, a lot of weak foreign demand. Foreign demand, what was this slump? Foreign demand was the lowest level since December 2023 for the 3-year note auction. You go out to the 10s and the 30s, that's problematic the next few days. So I would posit something that we were discussing yesterday, Elia, on Futures Power Hour, where if you want to put something like ZB on a watch list for whatever rhyme or reason, it's not a bad idea to do so, but you have to figure out a way to scale into a position without necessarily catching a falling knife of sorts. I'm looking at this 8-hour time frame, and I see here that we've been riding the rails ever since we broke down on July 3rd with that non-farm payrolls report. We've been riding the rails lower here of the 8-hour, 5 EMA, 40 hours. Like, it means nothing. But the fact is that momentum is still negative on this time frame. Stochastics are still oversold. MACD is still trending lower. Volatility is on the floor. So why would I want to catch a falling knife by selling puts with such a forward pattern? You could. It's just not a high convexity trade right now. The lows for the year are around 109.5. You could go out to say 80 days if you really wanted to give this some breathing room. The 110, 108 short put spread here is going to be in the neighborhood of 75% probability of profit, but it's only risking 3 to make 1. Again, if you get a little bit of a turn, you might have something to do. But right now, we don't catch falling knives in these parts. We need evidence that there's something going. And for now, a bearish rising wedge calls for a return to the base. So momentum has to break and we have to reestablish some uptrend, or you have to be tactically bearish at the long end of the curve until this pattern finishes making its way through the system. I'm open-minded. I'm still leaning long deltas, but I feel like crap doing it. Doesn't feel good. Do you guys want to talk about the metals here today?
It's an interesting thing in the metals because I've been obviously short premium and gold. It's worked since kind of the deflation of the Iran-Israel kerfuffle, but it hasn't really gone anywhere. And I was up against or getting close to being into the single digits DTE, and begrudgingly I took P&L and basically just recentered and reestablished. Still short puts, still looking for the upside that way, but ultimately structuring it this way so that if nothing but vol contraction happens, it still kind of works. Because this looks pretty anchored here, but at the same time, it also does not look like it wants to roll over. And this is another day today. It's a little bit softer today than it was yesterday. It actually has a little follow through on the downside here, but it ultimately holds within this familiar range. And the dollar is stronger today. Yields are up again. This is pretty resilient for gold under the circumstances. It might be expected to take a beating when the dollar is strong and yields keep surging. And it's not doing that here. For the record, neither is silver. So this seems to tell me that the place to be is biased long, but in a way that gives this a lot of time and probably does it by being short vol rather than just buying calls, because first of all, they're still expensive. And second of all, that's probably more conviction than you want to have at the moment.
Yeah, but I'm an idiot, so I'm buying calls. Thomas, what is your take on gold and silver?
Yeah, we mentioned in the morning market report, 5 futures in focus, that gold was actually holding up pretty well considering a stronger dollar and higher yields here. So, some uncertainty around being long equities. Maybe people are trying to hedge with gold. I'm long out of gold and silver. I'm staying long silver right now. I have a call spread on for silver. So I'm going to continue with that play. But I think Ilya's right. You'd expect gold to be down a bit more today, considering the moves in the dollar and bonds.
It feels like it could be a little bit softer. Dollar does have a decent session, which with the CFTC COT report update yesterday at the end of the day, we find ourselves in a situation where over the past 20 years, the Z-score for yen positioning right now is now 2.66. So we're 2.66 standard deviations above the 20-year average weekly basis, going back to the first week of July 2005. For the euro, we are 1.34 standard deviations above the mean position in the market from over the past 20 years. So the short dollar trade is very saturated still. Ilya, I suppose we could do a little bit more legwork here, and I haven't done so, and maybe I'm calling myself out, but we could do this for all the components of the dollar index. We could do a weighted average of the various z-scores based on the components of DXY. So the euro would have 57.6% of the z-score, and then the yen 13.1, pound 11.9, go all the way down, except for the fact that you don't have Swedish krona futures. So but we could still find ourselves in a place where I was eyeballing this earlier. This is still one of the most sizable net short positions that we've seen in the buck, even if the yen has rolled over here the past few days. What is it going to take for the dollar to get going? Because it feels like, again, with these tariff headlines, we're not getting that straight buy America, sell America dynamic that we had in March, that we had in April, that we had in spurts in May. Thematically, is that done? Is that what this market's telling us here through the first half of the week?
I think it is. And I think that's kind of my general thinking for what the first half of the year was all about and the seesaw in equities that we saw. I think you really get a sense for the sell-off in equities was growth-based, and that's why break-even inflation rates were falling in near perfect lockstep with stock markets from the middle of February until those reciprocal tariff lows in early April. It was very clear what the market was doing. It got a bunch of scary business confidence and consumer confidence data with the rollout of the tariffs in early February. We've said a gazillion times on this show and others that it's very important that it happened in early February and not in November, when the market knew that there was a tariff regime of some sort that was coming and that the screws there were going to get tighter in some way, and that the markets were not concerned with that conceptually.
Implicitly, if you're just doing something that is tariff related, you can actually incentivize and increase the demand for US dollars. But when you push tariffs so far as to get people questioning the role of the US economy, or rather the US within the global economy, and the dollar's role within that system, the tariffs become a negative.
Well, right.
We've seen tariffs increase the value of the dollar in previous episodes simply as a function to offset the impact of tariffs from an inflation standpoint.
That's right. That's right. If it's a mild inflationary uplift, you end up with higher rates. The dollar ends up with a higher yield premium. As long as it's moderate, it's actually a good thing.
It's washed away by exchange rates, in effect.
It's washed away by exchange rates. Exactly. You increase the purchasing power of U.S. consumers of foreign goods with a stronger dollar, and the tariffs get digested. So this is not that, obviously.
That's like a 3 or 4 or 5% effective tariff rate, not a 25% effective tariff
right?
rate.
Well, the average tariff in the U.S. before these shenanigans was 2%. And it's now what, if we believe the architecture of this thing, it's increased 5-fold, and the floor is now 10.
I actually have a number for that here. Jason Furman, who is over at Harvard now, but he was the chair of President Obama's CEA. He had a chart that he put out either yesterday or today about this, talking about what the tariff scenarios would look like on the downside. I think, if I recall correctly, we are talking about, you keep going. Let me find this because it's better to show than tell.
Well, yeah, I mean, the story is simple. If from mid-February to early April, the concern was, oh no, businesses and consumers don't like this scary rollout, this is a hit to growth, stocks and inflation expectations fall together, and that all makes very clear sense. The foam board and the scenario that you just described, the possibility that the U.S. is going to, against all odds, attempt to surgically cut out the dollar and U.S. Treasury bonds from their foundational role in global finance, then you get this sort of, oh my God, sell America fear, where bonds, stocks, and the dollar fall in tandem. Once you get the step away from that sort of a scenario, you see stocks and break-even rates diverge. Break-even rates are still on growth time, but they're still low, at the lows, as a matter of fact. Whereas what stocks have done is rebounded because of the sentiment improvement. Because clearly the administration is not attempting, at least as a point of its strategy, to level the global financial order. And so I think we're done worrying about this. I think now the rest of the market can turn back to what the bond markets have been doing to focus on growth.
What, Thomas, like we're at a point right now where if the tariff rate, the effective tariff rate that Trump announced back on April 2nd was in the neighborhood north of 25%, like some estimates are up at 28%. With the changes for July 7th, this puts the effective tariff rate 60% of the way back there, right? Assuming substitution effects, you're still looking at an effective tariff rate at 14.1%. So actually we'll call it half. If we're going to go with the high end estimate of a 28%, we'll say that we've now gone back to halfway there to where the market fear was several months ago. This actually comes from Ernie Tedeschi over at the Budget Lab from Meow. It wasn't Jason Furman. Either way, though, I think the point still stands, right? You have this, if we're going to do shock and awe, it's bad for the dollar, bad for bonds. If the market judges it as a reasonable shift in policy standards, then, well, we saw November, December, January before Trump came into power, the market really wasn't caring about the tariffs. It was once the implementation arrived that things went awry. Do you have any particular feelings on any dollar pairs right now? Any activity going on? Otherwise, while we have you here this week, I do want to pick your brain about the state of the soft ags, seeing as how we have a WASD report coming up on Friday and the volatility in ZC, W, and S higher than what we're seeing in equity. So thoughts on the dollar before we turn the page?
I'm long dollar yen. I had that long yen position on that you ruined a couple weeks back for me. And then I'm long dollar franc.
Figures.
But yeah, you didn't ruin it for me. And you explained what was going on, and then the price turned against me.
I didn't move the market. I'm not that kind of whale, Thomas.
Yeah, you're not there yet. Not yet.
So you're saying you didn't call the Bank of Japan? I see.
Yes.
It's only the Ayatollah that gets agita on Twitter. It's not the Bank of Japan.
That's fair. Let me see if
Governor Ueda is spared.
We were talking about corn on OTCL earlier today. And exports for corn this year are actually trending stronger than the USDA projections. So we're at about 103% of the level that they forecasted. So inspections for exports right now are actually at a 5-year high. That's pretty good for corn right now if you want to get long, because corn is trading right at a really important technical level, which is right around 400. We actually dropped a little bit below there today, which is concerning if you're trying to get contrarian, which is kind of my view, because shorts, per the COT data for speculators, shorts are really leveraged pretty heavy in this market. And that's despite shorts are keeping their position on despite all the downside we've had. So the WASD report is important because, is it going to account for this recent uptick in inspections for exports? And is that going to bring the ending stocks number lower for this new crop year, which is the crop that's going to be sent to the market later this year when farmers harvest their crop? So I'm trying to play it to the long side. I bought a micro corn contract, which is essentially a fifth of the price of the main contract there. I think there's a few ways you could play it because you do have a pretty good IV rank in corn. It's at 75 right now, so meaning volatility is higher than it has been for the past year. So personally, I think it's risky, but I'm trying to play for a bottom here in corn, and I think the WASD could kind of be perhaps the trigger that gets the shorts to start capitulating out of their positions.
Yeah, it's. I want to just pull it up here. You mentioned the market being very short right now. I quickly just ran this through my little Z-score calculator. So again, rolling 20-year basis, corn has a negative 1.588 Z-score. The last time that the market was this short, you have to go back to the start of August or late July last year, Thomas, which it wasn't quite the low, but around this 400 level was a pretty serious condition where the market was saturated with shorts. We're getting into this territory again right now, I think, where if we're thinking about that, we're talking about an IBR in the front month and the ZCU5 up at 75, we may need to start looking outside of the equity market space to dip one's toes in the waters. I do have to ask the question, though, if Trump's doing tariffs on everything, right, we don't produce as much copper as we consume. So if he's erecting these trade barriers and people are going to be buying less stuff from us because of these trade barriers, one of our big exports is wheat. We produce so much wheat. Wait, I think we produce 10 times as much wheat as we consume. Wouldn't this be bad for wheat, right? Isn't it a little dangerous to sell some puts in tariff town?
Yeah, I mean, it could be bad for wheat, but, corn is a bit more U.S.-centric, and you'd expect that people would be buying less with these tariffs, but the export numbers are telling us a different story. So if you need corn out of the U.S., there's a few places you could go, but there isn't much supply outside the U.S. So if you need corn, you still have to buy it from the U.S. So perhaps that's a little bit insulative for that effect. Whereas wheat, you could go to Russia, you could go to Ukraine, you could buy it other places.
That's fair. One of the tells that I'm looking for in the market here, soybeans reacted really negatively when the tariffs were announced before they were ultimately signaled to be rolled back. And soybeans are reacting very negatively again this week, right around the tariff announcement. And we saw this in February when the tariffs were being, trickled out versus Canada, Mexico. The commodity space isn't exactly giving you an all clear here. And then copper obviously does the copper thing that it does today, which is just remarkable and astounding to look at considering it's copper to move higher by 9.41%. Good for copper. Oil's also moving up here today, though. Ilya, I mean, if things are so bad, how come oil's looking so good and quietly churning back up towards $70 a barrel?
don't think this looks like much of anything at this point. I think this looks like digestion of what obviously was explosive volatility, first on the upside, then on the downside. This thing looks to me like it's just digesting. If you look at a shorter term chart here, let's call it a whatever, 4 hour, 8 hour, and you kind of look at where the inflection points are on the range, you can see that the underside of where you have a little bit of former support turned resistance back mid-June, right around, let's call it 66, 67. You're right there. So look at that long wick that you have there, and you're basically sitting against it. So this looks digestive. This looks like something there from mid-June is acting as resistance, having been support, and you're kind of hovering around there. And you can see, depending on whether you want to look at the wick or the close, you're kind of grinding into the underside. So let's see. But probably the more interesting thing this week, if growth doesn't snap as a macro narrative, if we don't come out of, let's say, the FOMC meeting and the bond auctions with really good uptake at the bond auctions, suggesting that people want to lock in these yields, and maybe they think that they're going lower from here, and a Fed that again continues to clash with markets, and markets going, listen, you're out of your mind. You're going to have to stop. And if we're going to have to badger you all summer, like we did last year, by the way, this is the story of last year, where the markets all summer long badgered the Fed into becoming ultra dovish, and then they got more dovish than the markets wanted, and the markets started to badger them in the opposite direction from mid-September onward. This is that, maybe. Unless that becomes the running narrative, the other kind of possibility for what could inspire markets this week, because it is a thin data week, is geopolitics. We do have the Israeli prime minister on his way to Washington, D.C., and the administration wants him to own a Gaza ceasefire and to get it done. Obviously, there's a bunch tied up here with what Iran is going to do, with how Israel did that action, with how it got the U.S. involved, with now ostensibly this administration owing the president a solid and not really in a position to say no to a Gaza ceasefire. We'll see how this goes, but that could be an impetus for oil in the absence of nothing else. But for right now, I don't think this price action says much of anything. So I'm standing on the sidelines and waiting. Because I'm biased lower on growth, I am ultimately biased lower on oil, just on cyclical considerations. But I'm not sure the market cares about any of that here.
Are we in trouble with our natural gas position?
Yeah, I mean, I'm still long natty gas. We had a little bit more weakness than I expected today. Power burn over the weekend for natural gas was a little higher than expected. So, we get another inventory report Thursday. I don't know. This is a hard one because I want to stay in my long positions because I think we can get a pretty solid break to the upside once you get into these new lows that are, multi-week lows. You can usually get a pretty quick snapback in natural gas. But, we're now breaking into the lows of, the year. So we need some support from the weather. We need some heat coming in. We need the wind and solar displacement for natural gas to go down a lot. The past few weeks, wind and solar have been really strong, so that's displaced some of the demand for natty gas. I'm going to stay long here. I'm long a micro contract, and I'm also long via a short put spread at 3.25, 3.3, trading at 3.354 right now. So I'm going to keep it on, especially the put spread. If we get a little bit more follow through on the downside until Thursday, I'll take my micro contract off and try to redeploy at a later time.
Yeah, I'm just sitting on a knife's edge here, waiting to see if this thing is going to break or we'll have a chance to, push it up. One more throw up, maybe back towards 3.75 and get out. But it's not looking great. And again, tariffs. We are the world's largest producer of natural gas. So you want to, build walls here. We're just going to swim in supply in the short term.
Yeah.
Nothing else to do. It's not a great look, and probably not something you want to stand in front of. We do have to talk about this Musk tiff here. Yesterday on the show, we referenced that Elon Musk, was being called out by people like Dan Ives, someone who's been a friend of the show before, of Wedbush Securities. He's said that as long as Musk does three things, focus on getting voting control, the merge with XAI, time allocation at the company, right? Making sure he stays focused, staying away from political matters. All that would work out well. Elon Musk decided to respond to Dan Ives today. Told him, just shut up, Dan. Which doesn't seem like it's a big deal in this era of social media masochism. But I do think that in the context of Dan Ives being one of the biggest Tesla bulls, a bull's bull in many regards, the fact that Musk can't even take light criticism from him, which is like, stay in your lane kind of, whenever Musk goes into politics, you, me, and Dylan say, like, fade the clown car. Thomas, you did this a few weeks ago at the start of June. Fade the clown car. If you faded the clown car yesterday, are you up on the week? Yeah. If you got in the market and went long deltas in any form or fashion when the cash equity bell rung in New York on Monday morning, you are still technically up on the week. But this doesn't seem like it's now like telling one of the most famous analysts who covers your company to shut up when he's offering reasonable suggestions for good governance, for shareholder value. It doesn't seem like he's going to listen to said advice unless the company itself decides to rid themselves of a one Elon Musk. I don't see that happening anytime soon. Do you? Okay, so at a 22.9 IVR, are we still of the mindset to fade every bit of nonsense and noise in Tesla? Or is this actually entering a new dimension where Musk is signaling he's not backing away from politics anytime soon, and you should expect this as part of your Tesla ownership?
I mean, for me, and we talked about this, I think this is an attractive setup if you look at this just ticker agnostic and you look at the chart and go, right, we've had a range from about 210, which you've helpfully annotated here, to about 368. We are at the middle. When you get to the middle, if you get there from the bottom, it holds for a bit as resistance until it breaks. If you get there from the top, it holds a little bit as support. We're seeing it hold as support. So the risk reward is go long here and see what happens. Alternatively, you could go directionally neutral and just say, you know what, at 23-ish IV rank, right near the middle of the range, maybe all I want is for some of the vol to come out of this, and that's it. For me, the hurdle is that it's expensive from a risk-reward perspective.
It's the copper problem.
Take a bet. It's the copper problem. It's just it's an expensive asset. So if you're wrong, unless you have an account in the vicinity of 100, 200 grand, you're wrong by more than 1 to 2%. And I don't want to be wrong by more than 1 to 2% on any trade I take ever. That's part of how I sustain myself in the market. I start to think here that it's possible that Tesla has a Microsoft issue, which is which is to say that for
something related to Jeffrey Epstein.
No, for a long time, Microsoft was basically listless.
Oh.
It had its dominance. There was nothing new going on. They released consecutive updates of Windows that everybody that owned Windows, because they had to, because it was the standard, just updated, and they updated their Office, and blah, 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 on we went. It wasn't until Microsoft reimagined itself as a hardware company that we really started to see some real movement at Microsoft. And that didn't change the fact that it was the most dominant gorilla in the Office software space the world over. It just wasn't a reason for an incremental rise in share valuation.
Satya Nadella did get his comeuppance in Microsoft by working through the cloud, their cloud division, right? And I think that was
a big one.
Ballmer wasn't a great CEO, but he did make the smart decision to promote Satya Nadella to the front of the cloud operations, and obviously,
well, and then like Xbox and things like this gave them entirely new business lines to go after. So it sort of shook up the stasis. Microsoft was basically a flat line for a long time. You might have this at Tesla, a period like this.
Unless they merge with XAI.
Yeah, where you drift because nothing new is happening. Something has to happen, I think, in the company's own numbers. Either they need to fix their demand issues, their delivery issues, come up with a new car that doesn't suck and doesn't look like a toaster. Something that actually moves the needle. That was a reference to the Cybertruck, by the way. The only image in my mind is a 4-slice toaster on wheels.
Oh no, I totally get, something like Warthog from Halo. That's absolutely there for me. Guys, before we go out the door here, quick look at the sector performance for the day. Top performers are the oil ETFs. Bottom performers are the gold ETFs. But quietly here, we haven't talked about it in some time. Is that a closing high here? 283.62, not quite. We almost got there in our SMH, but we are knocking on the door of a fresh all-time closing high here in stocks, at least for SMH. So we'll be sure to tune in tomorrow to see if that actually is accomplished. But until then, overtime's out of time. We'll be back Wednesday, same time, same place, every Monday through Thursday, right after first last call, 4 p.m. Eastern, 3 Central, here on Tasty Live. So for Ilya Spivak in San Francisco, Thomas Westwater in Chicago, thanks for Thomas' his support today. I've been Chris Vecchio in New York. Good luck trading after a brief break. Tasty Live's back with Ilya and Macro Money.
See you there, everybody.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today. Forbes called us best online for options trading. With stockbrokers.com, we're number 1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Finding where markets meet politics, if you will, is kind of a passion of mine. We're changing cycles right now. We're moving into a different political complexion down in Washington, D.C. We're moving into the end of a potential Fed rate hike cycle. And as you change these economic and political regimes, asset prices behave in different manners. So I do think what's worked over the past, say, 1 or 2 years may not work so well in the future. I have like a kind of a core satellite portfolio mix where I keep some assets for multiple months, even quarters, years at a time. But then I augment that with some options trading in order to help provide a little bit more convexity to my portfolio. Risk management is the most important thing. You can't control where the market's going to go on a day-to-day basis, right? No one individual investor has that capability. But what you can control is where you get in the market, where you get out of the market, how big your position size is. And learning that the market is not always going to move in your direction, you have to appreciate the fact that you will make mistakes. But the idea is that you make enough of these trades with a consistent enough edge that over time, as you stockpile some results, then ultimately you are profitable over the long haul.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
Were the markets even open today? That's seemingly what happened, but you wouldn't know it by the price action. Things very, very quiet, very, very listless, but we do have, finally, a bit of event risk on the calendar in front of us and some macro themes to contend with as it approaches. See what it does to wake the markets from their slumber. I'm Ilya Spivak, head of Global Macro here at Tasty Live. This is Macro Money. And what we are going to do here is take a look at, first of all, how we're setting up as the week progresses, look at what this performance looks like, then consider how it might fit into what comes next, because over the next 24 hours, we finally get the concept of a catalyst, to borrow a phrase. So let's consider here what's been happening so far this week. Stocks down, S&P 500 off by about 0.8%. NASDAQ off by about 0.7%. Rates higher across the curve. More on that in just a second. Crude oil still oscillating a little bit higher today after a small rise last week, but as we'll take a look at here in context momentarily, it's really just digestion after bigger moves. Gold down a touch again. The dollar up a bit with the yen so far taking the biggest hit, down just over 1%. And Bitcoin is still wiggling back and forth around its range top. But it's really the action in stocks and bonds that's perhaps the most interesting, and that's seemingly a change of pace from where we were last week. So just a quick reminder, this is how we did last week on the holiday shortened week there. And we can see here stocks up for a second consecutive week, albeit with less vigor. And that was mainly triggered by the U.S. jobs report that came a day early on Thursday, because, of course, Friday was the Independence Day holiday. And that data seemed like the markets took it at face value. The unemployment data was a little bit better than expected. The payrolls data was a little bit better than expected. And so we can see the response is higher yields across the curve, in particular at the front end, suggesting that the Fed has less scope to cut rates in the near term. And stocks seemingly taking it in stride, saying, well, we don't need rate cuts if growth is good, right? So why worry? And stocks end up having a nice day higher. It is also the second lowest volume day for the year, so didn't really take a whole lot to push the markets around, but the price action is the price action, so nevertheless, we do get a kind of good news is good news response, which of course starts to contrast with where we are as liquidity comes back this week. Yields are still going in the same direction, though the long end is getting a little bit more life so far as compared to last week, where it was mainly about the short end. And stocks are looking soggy for it. So perhaps as we get more liquidity on the board, the conversation is changing. We'll see, of course, whether that's actually the case or whether the markets are just wiggling around, digesting after hitting record highs last week, as we get the first bit of news, and that is going to be minutes from the Fed's June policy meeting. And before we get there, let's just consider how the markets found themselves in this position. As we said, the jobless rate unexpectedly down, 4.1 versus 4.3. The economy adding 147,000 jobs to payrolls versus 110. So nominally better than expected results. But it's those low volumes that really start to jump out when you consider the actual internals of this data and how we arrived at these numbers. So first off, yes, of course, 147,000 is better than 110. And certainly that we got a 5K revision from 139 to 144K on the May number is nominally a step in a positive direction. But when we look at the net 2-month revision, covering both May and April, we can see that's 95,000 jobs to the downside. So did we actually end up with more jobs, or didn't we on net over a 3-month period when we got the June results? Okay, we got 37,000 jobs better at the headline versus consensus, and another 5K here. So that's 42,000 jobs better than we thought between May and June. But that's not even half of the 95,000 job downswing over both May and April. So did we end up with net more jobs? No, we ended up with net 50 plus K fewer. So not great news there. And when we look at what happened with the unemployment rate, this decline from 4.2 to 4.1% came not as more jobs were added, but as more people left the labor force and stopped being counted as unemployed. We can see the participation rate actually went down. That's what happens when people leave the labor force and are no longer looking for work. So their unemployment isn't considered unemployment as such, because in order to be unemployed, you have to not have a job but want one. And what we see here is a decline in participation that suggests this is not happening for labor market health reasons. This is happening for labor market shrinkage reasons. Again, not great. But in thin liquidity, with most of the institutional money off on the long weekend, we still get this. Now that that money is back, this is holding up, but we're starting to get this. This is where we conclude, okay, well, maybe what we're seeing this week is the right quote-unquote thing, and what we saw last Thursday is the wrong one. Perhaps. On to the FOMC minutes. We see from the statement at that meeting, not a whole lot going on here. The unemployment rate remains low, the Fed says. Inflation remains somewhat elevated. That is to say, it is north of 2% by a touch. And we can see uncertainty about the economic outlook has diminished somewhat, if only through the passage of time. That is to say, when we rolled out the tariffs and the Fed looked at them and got concerned about what they might mean in March and again in May, we now see nothing has broken yet because, in large part, they've been delayed. So uncertainty about the economic outlook is necessarily a bit cooler because the immediate impact hasn't produced anything dramatic, but also it remains elevated because we still don't know what's going to happen. We see in the summary of economic projections that the Fed basically is continuing to run the narrative that they've been giving the market since March, which is to say, we know historically that tariffs are a problem for monetary policy because they weigh on growth but boost inflation, which demands, on the one hand, lower rates to boost growth, on the other hand, higher rates to contain inflation. So from the Fed's dual mandate perspective, if both of these things were to evolve simultaneously in those directions, it's a policy nightmare. There's nothing to be done. But from the Fed's perspective, we're sitting at inflation that's a touch above 2%, an unemployment rate that's a touch above 4%. Inflation is manageable and very close to target. The unemployment rate is low by historical standards. There's no need to make this decision. Better to sit back and wait for one of the sides of the mandate to start to flash red and to unmistakably say to the Fed, you need to go and focus over here, say on inflation or on growth. And in the meantime, the Fed is just adjusting its forecast to say, higher inflation from March to June, that's the update. Higher unemployment, that's the update. Lower growth. But interestingly, fewer rate cuts. So we can see here between March and June, we go from, in particular, the back years of the outlook next year and 2027, and in particular in 2026, we see a shift from 2 cuts in March, 3.9 to 3.4 is 50 basis points. That's 2 standard cuts at 25 basis points apiece. We now go down to 1. We're still at 50 basis points for this year. In other words, the Fed is increasingly becoming a creature of the calendar. We're not looking like we're going to have a rate cut in July. In fact, we can see as much here. There's no change that's priced in. We look at September, and we can see the drift lower is starting to occur, but you don't get to any kind of meaningful rate cut probability until you get to October. So if the Fed is going to be at 50 basis points, it basically has to do those 50 basis points right here. Otherwise, it's run out of calendar to make those cuts. And so the Fed seems to be increasingly locked into this as time goes on. But for next year, they seem to think they can only do 25 basis points in easing because, again, they're waiting. And as the tariff deadline continues to push, it got pushed again this week from July 9th out to August 1st, apparently, on reciprocal tariffs. The knowledge of what the impact is going to be gets delayed right along with that. But as long as there is a cliffhanger on the horizon, the Fed doesn't know what all to make of all of this, is unable to extrapolate forward, and until then, something is going to break, either on inflation or the economy, that is on growth and on employment. Fed doesn't have the confidence to do anything at all. Hence the modest amount of easing next year. Now, what makes this very interesting is, of course, the other piece of data that we got last Thursday was the ISM report, which sort of tells the Fed's story. Manufacturing is narrowly in contraction territory. As ever, ISM is done in the same logic as other Purchasing Manager Index or PMI data, where 50 is neutral, above 50 is growth, below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. At 49 on manufacturing and 50.8 on services, kind of mentally scaling for services being a much larger part of the economy than is manufacturing, you sort of get the sense that the economy is about at or close to 50 on some sort of a cumulative assessment. In fact, if you assume that the economy is about an 80-20 split between services and manufacturing, then you get to a place where you might say, okay, if we scale it that way and you end up with a reading of about 50.4, you have essentially standstill. If you do a straight line average between 50.8 and 49, you end up a little bit under at 49.9 or something along those lines. But we know the economy is more services than it is manufacturing, and so tilting it a little bit makes sense. Giving it the benefit of the doubt a little bit makes sense. But what that means is that essentially, since the end of last year into now this period, growth is at a standstill. At the same time, employment is contracting in both sectors and at an accelerating rate in June. Both of these indexes sub 50 and more so than they were the previous month. And prices are rising. And at a very fast clip. We're back to near the levels where the inflation scare post-COVID was at some of its more dramatic levels before this big decline. So in some sense, this data is telling the Fed's story. In fact, after we got the jobs data, what we saw was the curve for where policy rates are going that we just looked at a moment ago, this is the curve for today, is now basically exactly in line with where it was on Fed meeting day, the 18th of June, having started the month a little bit more dovish. So indeed, it does look like the markets have interpreted the data as suggesting the Fed is not going to do much of anything that's different this year. But when we look a little bit further downfield at next year, we open a yawning divergence. The market sees 66 basis points in rate cuts next year. That is 50 basis points in cuts already fully discounted. So that's 2 cuts of standard size that are on the board, and about 16 basis points in the direction of a third 25 basis point cut, which gives that third cut a probability of better than even 64%. So the market envisions, as we can see here, 109 basis points in cuts between now and the end of next year. Compare that again with what the Fed is seeing, and there is a major disconnect. The Fed is at 75 basis points. 109 here is obviously a far cry from 75. It suggests the Fed is off by, or the markets are off, depending on who you choose to believe, by 34 basis points. That's about 1 cut and 9 basis points in the direction of a second one. So, needless to say, there is an important disconnect here. And of course, what we've been talking about is the bond markets are telling you where that disconnect is coming from. When we initially saw the rollout of the tariffs at the beginning of the year, this is January, so this is the start of this year. It's important to note here was the election. Clearly, the markets knew that there was some kind of a tariff regime that was coming. They did not mind it because they figured it was going to be not unlike Trump 1.0, which is to say, not necessarily a thing that spooks the overall market, not something that's terribly destructive for growth. They didn't get concerned until here, when the rollout of the tariffs started to paint them as something else entirely. And so you got a parallel decline in the S&P 500 here in the yellow, as well as the 5 and 10-year break-even rates, measures of inflation that are baked into the bond market. And the logic makes sense. Consumer confidence and business confidence start to fall away with the rollout of the tariffs. There's clearly a growth scare that's bad for earnings, and it's, of course, bad for the demand pull impetus on inflation. If there is going to be less growth, then there's going to be less demand chasing the supply of goods and services. That means price pressure on that supply will be diminished. All classic growth downturn indications. And so you get a very clear growth scare here. When you get sentiment snapping back, we can see here it's now come back and then some. Stock markets are actually higher than they were at the beginning of the year at this point. So we can see that whatever sentiment shift occurred here clearly tells you that when post-Liberation Day, the Fed and the markets saw the White House take a market signal and back away from the brink, you got sentiment coming back saying, okay, this is not going to be the kind of a thing that forcefully pulls apart the global financial order to the extent that it looked like it could at the height of the panic here. But notice these break-even rates, they've not budged from this range that they've since carved out from April's lows to the initial sort of rebound here into the beginning of May. They've remained locked near the bottoms here. They've not come back to retest these levels. This has not been a story of economic growth recovering by this metric. This has been a story of sentiment recovering, but of the story on growth, still envisioning weakness downwind, because the markets have apparently concluded that the inflationary shock of the tariffs is something to look through. And the thing to focus on is what that shock then does to consumption and, by extension, to economic growth. They're calling for rate cuts, which is how you end up with 66 basis points on the menu for next year against the Fed's 25. And so when you get these minutes from the Fed, it will be very interesting to see how the Fed justifies what they're saying. And because we're probably going to get this familiar song and dance around inflation is contained or close to it, it's certainly not running away anywhere. Unemployment is relatively low. We don't need to do anything. We'll see if the markets still believe that story as generally benign. Because if the markets are becoming increasingly convinced that there is some kind of a growth scare on the horizon that the Fed should be responding to, and the Fed is pointedly resisting, that's not going to sit well with risk sentiment. And what we are starting to see this week may well be, to bring it full circle, the story to keep an eye on. That is to say, rates are going to stubbornly resist, and stock markets are going to have to take the brunt of disappointment, because what the markets want is not that. They want the Fed to act. That is Macro Money for today. As ever, we are here Monday through Thursday, right after overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'll be on in just 30 minutes' time, as I am every Tuesday, with Victor Jones for The Price of Truth. Back with Chris for Futures Power Hour on Friday, and back with Victor and Tom for First Call on Sunday, writing for the News and Insights portion of tastylive.com and commenting on former Twitter and on Blue Sky at Ilya Spivak. If you're watching on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
Do you believe the efficient market hypothesis holds up completely, or do you think that there's some merit to technical analysis?
I definitely think there's merit to technical analysis. I think technical analysis sort of identifies these greed and fear pockets in the market, and where everybody is sort of trading around. So I think that's fascinating, and it gives you sort of areas of the market where people are clinging to, so you can choose to take advantage of that however you want to.
I think the efficient market hypothesis is perfect just the way it is, but I think that there's always going to be some sort of inefficiency, whether it be wide bid-ask spreads, illiquidity, in the rare cases of inside info or nefarious things. There's always going to be that aspect, but I think from the main point of efficient market hypothesis is that you can buy and sell right now at basically the same price, and that is very much true.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
What is going on, everybody? Welcome back to Risk and Reward with Gus and E. Today's a little bit more, it was a little bit of a volatile day, closing on an inside day, inside the price action range from Monday. But before we get into all that, we got a little bit of PLTR to get into today, Gus. But how we doing?
That we do. Palantir. Who doesn't like talking about Palantir?
Palantir.
I'm feeling good.
I hear a lot of mixed opinions on PLTR.
Yeah.
Just right off the bat.
I'm not like a massive proponent. Obviously, this thing has been skyrocketing, but it just feels fugazi to me. I think I've said that before. It's
fugazi. You were of that proponent. Yeah,
I think I've the equivalency I've given before is that it feels like SMCI to me, where like all of a sudden something's going to happen and we're going to be like, oh, that's why, like I don't.
Wait, you think PLTR is moving off of vibes a little bit? I mean, I know
it's trading at like 300-400 times its valuation, has been forever. I mean, yeah, it's like they are definitely a legit company and they're becoming more and more established as time goes on. But it's just, yeah, I don't know. It's weird. It's weird. I don't like these vibe trades. Everybody's vibe trading on PLTR.
To your point though, PLTR was catching a lot of attention in like 2020. I think it was one of the first options that I traded. It was one of the first option trades that I took was on PLTR because it was so hyped up. I didn't know what it did. And I think most people I spoke to didn't know what it did either. So to your point, again, it definitely feels like it's moving off of vibes. So we'll get into all of that here in a moment. Then we'll do a little tour to market. How we doing so far? It's Tuesday. We got a few days. We got FOMC minutes tomorrow at 2:00 Eastern, if I'm not mistaken. But outside of that, what's new? Anything else standing outside of PLTR on your end, Gus?
Yeah, no, nothing too crazy. And it's not even PLTR. It's the subsidiary stock that we're going to talk about, which I have made some money on. But yeah, no, nothing catching my eye too crazy. I did put on a short put on this CNC. Took a big dive late last week. They had some bad news. Honestly, guys, this is like some of the least TA I've ever done before diving into a trade. Like I'm in this CNC position because it went down. Like I don't even know what the company is. I couldn't tell you the name of the company right now. So, but that's working out for me. It's going on.
Bought that one, or did you sell that one?
I sold a put. Put side premium was insane because it fell off like 40% or something.
That's what I was going to ask. I was like, what was attractive about it? Was it that premium or what was it?
Yeah. It was just that it had taken, I think they lost a lawsuit or they missed approval for something. I guess I'm sort of vibe trading here myself, but it took a massive tumble, like 35-40% overnight, gigantic gap in the chart. So yeah, I just made the put side premium really attractive. I figured that all that was going to get priced in pretty quick. So about 4 hours after that news broke, I jumped in on a short put, which has been working out okay. But that's it's really my only new position.
That sounded a little sus to me, Gus. But I don't know how that news dropped.
Sometimes you just got to buy things because they went down, and that's what I've done here.
I hear you. That's all you need sometimes. Yeah. With that being said, we'll go ahead and start jumping into some of these slides for today. But Palantir's pink sheet, Palantir's spent the last 17 months quietly acquiring a penny stock. They now own 20% of the company, and it just exploded. What we got? Penny stocks, pink sheets. What is this? The Wolf of Wall Street? What we got going on today?
Let me tell you about Aerotide International right here, Errol. So Palantir has become involved with this Surf Air Mobility, ticker SRFM, since 2023. They partnered with them in 2023 originally just to do some software development for them, develop this Surf OS suite, which has like 3 subsidiary suites below it. And then in February of 2024, Palantir said, hey, you don't have to pay us money, you know. You can just give us some equity, like just a little bit. You don't got, you know. And so then they wound up with 10% of the company throughout 2024. Over the last 17 months since that Equity for Services program began, they have acquired 19.9% of the company, which is 4.4 million shares of this SRFM. And they firmly asserted that this is not some takeover attempt. They just want the equity. They're cool with the company continuing their operations as they have, and all they care about is the equity. So what's interesting now is that as SRFM continues to grow, I should say Palantir is now incentivized to grow SRFM as much as they possibly can, to grow Surf Air. Their profits are now directly tied to the growth of this company. And grow, it has, but we'll get to that. But yeah, this stock, it was trading at $4.50 yesterday. Wrote a little article about it on tastylive.com. And has since moved up to over $6 today, touching $7.50 at one point today. It's crazy town. We're going to get into all that a little bit later, but this is nuts. What's going on here with Surf Air?
It sounds like Surf Air is a little bit of a parasite. I mean, it doesn't sound like they're going to be able to survive or grow without their host, PLTR. So who's winning right now? Maybe Surf Air, but if PLTR continues to take off, you know,
that's true.
Maybe it'll be worth it for I'm just trying to see where this decision or this business agreement is going to be worth it for Palantir, because clearly I've never even heard of Surf Air before that, and clearly they're the smaller company too. So those are my initial thoughts.
Yeah, for sure. And I think parasitic is maybe a good way to describe it. Perhaps Surf Air is too intimately tying themselves to Palantir. But when a market giant like Palantir comes your way and you're a publicly traded company that's trading at $1.20, I think you have no choice but to tie yourself to that ship and hope it doesn't sink and hope it doesn't leave you behind, I suppose.
I mean, I forget what the exact data points are, but I think it's a very high percentage of penny stocks don't end up making it out and end up going bankrupt and getting delisted. So I know we always hear a lot of merges and a lot of acquisitions with those smaller companies. So we'll see how this one pans out. But it seems like Surf Air's mobility develops electric and hybrid electric aircraft propulsion systems. Wow. It sounds like it goes hand in hand with PLTR, though, from what we know from PLTR. A lot of like military grade software, technology, those kind of things. So that makes sense. They're vertically integrated, developing their own technology for their own flight operations. Their leading competitors are Joby Aviation and Archer Aviation. Worked with PLTR to develop Surface Suite, set to launch in 2026. That's like right around the corner, 6 months from now. And then Surface OS is AI powered and will enhance fleet management, logistics, and predictive management. So I mean, I can definitely see the parallel here. It's definitely quite the investment. But I see the parallel. It makes sense why they would do some type of collaboration and how it's mutually beneficial here. I'm still up in the air about exactly what PLTR is looking to get into. It's hard when when they do some things that are classified information. That's when it gets a little vague and difficult to put your finger on it.
For sure. And we'll get into some of those reasons, I believe, in the next slide. But yeah, you hit the nail right on the head with the military foresight, because while Surf Air does nothing with the military right now at all, their primary focus is these little regional jets, primarily Cessnas. They refit Cessnas with electric or hybrid electric powertrains, and then they send them out and they do little regional flights in the California area. They're based in Los Angeles. It really is just Aerotide International for real. But there's lots of speculation, though, that this is going to take a military turn and that perhaps that's why this relationship is forming. But to your point about what Palantir's angle could be, they truly believe that this Surf OS that they're developing is going to be a very revolutionary thing that's going to be adopted by airlines beyond just Surf Air. And so I think that's why they want themselves so tied to this company.
Well, I also wonder, too, like the developers and some of the guys that started Surf Air, if that was the goal, like to potentially get acquired, because that's a massive uphill battle. And I mean, by getting acquired by somebody like PLTR, maybe that helps them out a little bit more. But interesting story so far. Let's go to the third slide here. What do we got over here?
Yeah, so this isn't the first time that Palantir has applied this equity for services sort of playbook to get equity in a company that they're working closely with. And they really believe in this technology that they're developing here, this Surf OS. They think that this data-powered efficiency is going to help Surf Air overcome their thin margins. That's been a big thing plaguing Surf Air throughout the entire course of their company history to this point, really, and especially since they've become publicly traded, is that they operate on crazy thin margins because they are trying to it would essentially be like if United decided to try to build all their own planes. Like that's obviously going to cut into their margins a lot. It's hard to be vertically integrated like that. And they think that Surf OS could be transformative to the entire airline industry, as I just indicated, far beyond just Surf Air. They think that this is something that could be widely picked up by all commercial airlines, which obviously would do very good things for Surf Air. And they want exposure to this electric air mobility sector. Palantir and their CEO here, which this is a wonderful, all-encompassing picture of him. This you can get his personality from this picture. I wouldn't put it past him to be a massive proponent of electric aviation. That seems like a maybe 30, 40-year type of deal, but after electric vehicles, that feels like the most logical next step. But there are still three pretty big hurdles for Surf Air. Most notably, the FAA has not cleared hybrid electric powertrains. So it's a tough spot for them to be in building these things. They're not really allowed to use them in as much of a capacity as they would like. And additionally, they need capital, which they are now finding a way to, which maybe Palantir is helping them with. I was going to say they're finding a way to get it from Palantir, but most of this is equity for services. So I guess that actually kind of restricts their ability to raise capital in the future. And there's also execution risks in low revenue, high capex environment. That's obviously evident. If you try to scale up an airline, it's a tall ask. It's everything that you do is expensive. And yes, it's high revenue, and it's especially high revenue for them right now, as most of their planes are really small and they're doing a lot of private flights. But it's really hard to build that outward as you acquire more planes, more workers, more flight attendants, more engineers, whatever you may need. It's a high capex environment in every sense of the word.
Yeah, no, that's a pretty big deal. I mean, again, PLTR has been getting so much buzz. I'm curious to know who brought this opportunity to PLTR's desk or who brought this opportunity to SRFM's desk. Obviously, it seems like it's more in the best interest of SRFM for this deal, but I wonder, who saw the opportunity first and was like, yo, we want to partner with you guys, or yo, we want to do some type of deal. I think it could be mutually beneficial. I wonder if it was PLTR and the CEO on that end, finding them and wanting to do something there, or the other way around. Either way, I'm excited about PLTR. PLTR is still trading out. It's at its all-time highs, and the IV is sitting at around 38 right now. So, I mean, it sounds like Surf Air is giving PLTR a lot more volatility in the market right now and a lot more relevancy in the market.
Yes, this certainly has been a giant story. And PLTR, I think they're up another 100% this year already. It's insane, the rate that stock goes at.
Oh, yeah. But it's looking like 50 shares here, 447. I mean, catching a breakout here, it's looking good on Surf Air. But I mean, super cheap stock, super volatile. How's the liquidity in SRFM been so far?
Well, it's been okay so far because I'm hopping in this at the same time as everybody else, which is the reason for the massive pump that we got today. I didn't even click with me that my position is on this picture, so my apologies for that. I was just trying to pull a grab.
I mean, fire position though.
Yeah, well, yes, and I had 100 shares initially, 50 of which I exited this morning at 566, 25 at 566, 25 at 576. So I have begun to scale out a little bit already and take some profits. But yeah, I'm in here at 447. And I mean, if I had gotten in like 3 days sooner, it's a whole different animal here.
Hey, it looks like you caught the meat of the move though, or you're still catching the meat of the move. Because I mean, if this thing extends, you have a pretty great average. So it looks great on this end.
Yes, absolutely. And it has been great so far. It's just anytime I'm in one of these positions that's just going vertical, it's so hard to determine, the best time to exit and all these things. There's so many questions come into play. But yeah, this is the extent of my position. As you can see, June 25th is when PLTR disclosed their involvement with this company. I forget the Schedule 13G or something like that. But they had to disclose their holdings in this company. So when that news broke, that was when we got this initial pump. And then we returned to like the $2 level before we've run now all the way up to what we closed at today, 610, I believe it closed at today. And it has moved up a little more after hours. So,
yeah. That is the story of the market right there. That after that initial move, that aggressive move back down, maybe even liquidating a lot of longs. Because I mean, you don't expect a lot from it from there. But I mean, we took off even higher into a break today.
Yeah. So I'm not exactly like hodling here. Like I don't have a super distinct exit point for myself. I'm just going to feel
You want
this
to skim
out.
some off the top or what?
Well, I mean, I've already taken half the position off and brought some solid profits home. So I don't know if I want to swing these last 50 into a more long-term position that I'm planning to hold, through this entire saga and whatever may happen, and see if this turns into a $30 stock or something, or if I'll just, grab some profits if we drop back below 6.
What the float is. Hold on, let me see. Let me double check. Let me see what this float is on SRFM. I'm curious.
Yeah, it was south of 100 million before this pump, and then I think when they were at $4, it was like 150. The float? No, I'm thinking market cap. Yeah, sorry.
That's still small. It's got to have a small float if it's 100 mil market cap. That sounds pretty small. I'm just curious because, I mean, if that's the case, especially if it's a low float, small market cap, I mean, you could accidentally catch a lot of momentum if this thing continues. Because, I mean, at this point, it's tough to catch, but you had a really early entry. So I want to just double check to see what the float is on this and what, type of squeeze potential on SRFN. So let me double check that real fast.
It's true, and it's getting all the attention in the world right now in the media and everything. This is I managed to just barely buy the rumor, basically, is the way that this all worked out. And then, by the time I could even start Paul revering this stock to the masses, it had already made the big move this morning. Emmett, it's just a water bottle. It's a Hydro Flask. Said it looked like I took a hit off a water bong.
Let me see, 19 shares float. And I know depending on where you go, sometimes data is a little bit different, but public float 14 million to 19 million. I'm seeing in the range of 10 to 20. 10 to outstanding 34, 19. I'm going to go 20 mil, give it an average from what I'm seeing everywhere. 20 million shares, that's a pretty low float. I mean, especially relative to the volume this has been trading. I'm just going to pop it in here real quick just to see what type of volume it was trading today to get a little bit more clarity on how much how much active this has been. 40 million shares traded today. And if this only has a float of 19 or 20 million, the float rotated like twice. I mean, all of the available shares for the public to trade went into somebody's hands and out of somebody's hands twice, with 40 million on the volume today with only a 19 million float. So for a short seller, that sounds dangerous. But I'm excited to see how this plays out.
Well, yeah, absolutely. I mean, and you raise a great point as well, because you can essentially see that in the chart action here, that we got everybody bought once and then everybody sold once is the way that this worked out loosely. The more buyers than sellers, obviously, with the big move up and where we closed. But yeah, I feel like that's essentially what's going on here.
Yeah. I mean, this seems like one of those stocks right now where some short sellers may be on the sidelines, like this thing has to top out any moment. That's where things can get really tricky and really dangerous with these type of moves. So I'm not a part of it, but I'm living vicariously through your position. So I hope this thing keeps continuing to the upside.
Yeah, we'll certainly see it. This position, I could exit it tomorrow or a year from now. I really have no idea.
Yeah. Other than SRFM, let me double check. Before we switch gears here, we're going to go ahead and jump to the platform, get a little tour to market, see what's been going on for the day. Obviously, SRFM putting in numbers on the day. Cheaper stock, but percentage-wise, this thing is one of the largest movers on the day. I do have a short position on in the micros. We had a little bit of a rally, then we gave it back, and then we rallied again. And then we ended up having an inside day relative to the price action and the highs and lows we put in from yesterday. So still sitting on that position, going to manage it. It is just an outright futures contract, so I am peeking at that one a little bit more often. Coin, had to get involved, get a little bit of some crypto exposure, sold an out of the money call spread. This one wasn't doing too hot a week ago. It's doing a little bit better now, so I can still make the decision. I could cut it at break even, but I mean, at the same time, we're not being tested on any of the strikes, so I can let that one ride a little bit longer. And then we have CRCL, Circle and Internet Group. This one's cooking. Out of the money put spread we sold on this one, 38 days till expiration, up a little bit on it. Not much to say about that one. Just need to be more patient. No adjustments needed. Disney. I mean, Disney really did a number on me. I bought a put on Disney. This one was like 2 months out. I was like, you know what? I got 2 months. Disney will subside. We'll come back down. But Disney kept taking off to the upside. So 10 days left to expiration on this one. We need Disney to drop a little further for us. So we'll see if we get that. Netflix still kind of break even on this one. Out of the money call spread. Wanted to get on more short delta, balance out the portfolio a little bit better. So we got in Netflix and then QQQ. We got some shorter term dated expiration in here and some longer term dated. Some 38 days till expiration. Out of the money call spread, just a show my overall opinion on the market with a longer time period. And then I got a couple that expire in 10 days. This one's like an iron condor. I unintentionally legged into this one. The market moved so quick in my favor after I put on one of the sides. So I was like, I'm going to throw the other side on because these premiums are a little juicier now. So those ones are doing well. Got about 10 days left for expiration. But outside of that, nothing as exciting. I mean, the market today seems like it's kind of prepping for a larger move once we have FOMC at 2 o'clock on Wednesday, which is tomorrow. So maybe we do more management there, but anything stand out to you on this end? Gus, not as exciting as the SR-FM trade, but you got some things cooking.
Yeah, this Disney position is really...
It's a tough one.
Yeah, it's killing you. I keep waiting for Disney to come back down myself. I mean, this is one that I keep looking at, and especially at the top when the premiums were so juicy, it was like, oh, I want to sell a call, but when it's on this kind of it's a cataclysmic run that Disney is on this year. It's its best year in almost a decade, and so it's too hard for me to get short Disney. I respect you for doing it. Also, I've been informed in chat that Palantir added another 1 million shares of SRFM today at 450.
Okay.
Or at 450, which I guess is yesterday.
That's interesting.
Yeah, I'm not gonna lie, guys. I used my own article that I wrote yesterday as like the basis for the slides that I made today. So that information just wasn't. I didn't have it priced in. So yeah, thank you for that information. That is very interesting.
No, awesome.
That means that I have the same freaking buy as Palantir. This is awesome. They're never gonna let that thing get lower than that. This is great.
No, things are looking great. When it comes down to some of those penny stocks, some of them, they try to be so sneaky. Like a lot of them that aren't making money, they'll release some type of news that makes it sound good. And then they release some file, like a 10K filing where they sell shares from the inside. But it sounds like they're putting out more shares. I mean, that sounds pretty good for a penny stock because they are a really cheap company. But I mean, I guess tied to Palantir, their success is their success.
Yeah, not a penny stock anymore. Graduated.
Not a penny stock anymore. Exactly. I think Snapchat is still a penny stock. To pivot from Disney a little bit here.
This freaking company.
Snapchat, I know they make a lot of money from.
Somebody buy Snapchat. I want to grab these CEOs by the shoulders and shake them. Somebody buy this company and put it out of its misery, please. No, I don't think it's for sale. This is just a major buyout candidate to me.
I mean, what do you think Snap needs to do? We grew up with it from our middle school years, kind of when Snapchat really started to pop off. We were with it from when they were developing and getting the new updates for Snapchat to what it is to what we know today. We grew up on it.
Oh yeah, I mean, I remember Snapchat like before you could even just talk on there. You had to send a picture, and there was no replays, no nothing. Yeah.
Yeah. I mean, I don't know what they're gonna do. I don't know what type of adjustment they will do. I know they make a lot of money from ads, surprisingly, right? A lot of creators make a lot of money on Snapchat because of the ads, but also I think we have Snapchat, and I would argue a lot of us are still going to have Snapchat 10, 20, 30, 40, 50 years from now, which is really smart. Whether they did it, I think it was unintentional, but we have a lot of memories on Snapchat. I know I'll go on there, I'll look at all the memories from when I was in college, even high school.
Yeah, they circulate back Snapchat. Like on the anniversaries of the day and stuff.
Yeah, I don't even use Snapchat anymore, but I will never delete it because I got all those memories in there. So I don't know if Snapchat did that intentionally or unintentionally, but I think it's a huge reason why older people still have Snapchat on their phone and will still use it.
It just feels like it would make so much sense to me for Meta to swoop in and buy Snapchat and then give you the ability to like do some fancy, like the way, when somebody's on Threads, like if you go to their bio, it'll like have like a whole built-in thing that's like, oh, check this person out on Threads. They could do that with Snapchat if you wanted to, and these influencers would be able to grow themselves on Snapchat a lot more that way. It just feels primed for that type of acquisition. Yeah, I'm not too sure, but I don't have any flyers. I haven't put where my mouth is on this, but it just feels like that's a company that gets the next 18 months.
Yeah, I know Snapchat was playing around a little bit with the augmented reality because they gave us like our first look of what kind of augmented reality was with like just the regular camera and then seeing the graphics in your clear view. So I know they wanted to do some things with there, and they started to get into like the videography business. They had like a Snap drone that it could take Snapchats of you that like glided and could fly around like a personal drone. So I don't know the direction Snapchat has taken, but yeah, it makes sense for Meta. Meta's been a little bit quiet lately too. IV rank of 28.5 right now, still trading within a range for the past 3-4 days. So Meta's been a little bit quiet on this end, but there is premium around the table to go around. I mean, the market's selling off a little bit. VIX isn't at 30, 40. I know we still got that long VIX position, but I mean, we're primed. Maybe we get some downside this week. Gus, and we get that pop we were looking for.
Yeah, we'll see. I'm still just crazy long delta until proven otherwise, I guess. I'm just.
That's the way to really go about it. I mean, that really is the way, unless proven otherwise. Really, I mean, given the history of this market.
Yeah. Why would I get short? You say, oh, because at any given point, the president could tweet something and tank the whole market. Grow a pair. That's what I say. lock in.
He could tweet something. It would be at all-time highs. I mean,
that's true too. That's true too. Well, yeah, and I actually saw somebody mention earlier today. This taco trade is something that's talked about. I'm not about to make a political statement. I promise everybody. But somebody said if you buy into the taco trade, then you therefore must also buy into the idea that he is only chickening out because of what the market does. And so paradoxically, if everybody did that, then it would not work, which I think is a very interesting philosophy. Saw that on Reddit today. Shout out to the random Redditor that posted that. It had like 4 upvotes. It's like this self-reinforcing prophecy, but if everyone were to buy into that philosophy, then it would not work for anyone, which is interesting.
Right. Yeah, that makes sense. We do just have a few minutes left here. Gus, any plans for the taco trades before we head out over here for the rest of the week?
Yeah, no, I don't have anything concise. Delta Airlines has earnings on Thursday. Might try to get a little cute with that. Not exactly sure what my angle is going to be yet. But that's really the only thing I have my eyes on for the rest of the week. It's just, I don't know. It's the way I trade is like funny. Like I don't ever, I don't have a watch list. I never look at a watch list ever. I just kind of wait for the trades to find me, and they do. And I have this giant portfolio that I wish was a a little bit smaller.
You don't even got to force any trades. Yeah.
No. Yeah. It's just, especially in the age of information, if you're in front of your computer all day, they come up. I find ways to get things on. Oh, copper. Yes. Let's talk copper. Copper tariff today.
Let's do it.
Yeah. I have no idea, to be honest with you. Can anybody in chat, know what the ticker is for copper on our own platform?
Did you see what I just typed? I just typed in the periodic table copper. I really put in CU.
It was a good guess. I mean, gold is AU, right? That's
true. No, true. But gold is GC on the platform, though.
Oh,
periodic table. Yeah. That's just kind of funny. No, we'll start wrapping there, but we'll see what we get for the rest of the week. We have a few positions on. Really nothing too much to manage. Some positions have 10 days left for expiration.
/HG is copper.
/HG. Let's take a quick look. What's been going on in copper? Copper been abs. You mean SRFM?
Yeah, bro.
That's what I thought I just pulled up.
Yeah, right. This is just SRFM. Yeah, crazy town on copper today. Loot your local abandoned house, guys. Copper just went up.
Yeah. There we go. I knew all that copper in the closet saved up was going to come in handy. But,
you got some wires in there?
I might have a few.
I know Grumpy Mike's got some copper. I know Grumpy Mike's got some wires laying around.
And I might have to steal a couple. It'd be a shame to see those copper wires missing nowadays, Grumpy Mike. No, as we come to a close here, anything else to add, Gus?
Yeah, no, nothing else to add. Crazy, it's insane move on copper. When's the last time you saw a metal move like this? Biggest move on copper since 1968. There was a strike then. That's why. If you're curious, I looked that up today.
Well, we got some exciting things going into the week. Tomorrow we have FOMC at 2 o'clock Eastern. We have copper to pay attention to, SRFM. We'll see how PLTR reacts to everything that's going on with SRFM. That's going to do it for today's segment. Thanks for taking the time to hang out with us. We will be back every Tuesday and Thursday, 4:30 Central Time. Be sure to stay tuned for more segments coming on next, and we'll catch you guys next time. Peace.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
If you missed the live show, here's our cherry on top weekly recap.
Question for you guys.
Yes.
Vanetta this morning was giving me a little flack. It was lighthearted. She meant well.
Okay.
For my particular baby face.
Yes.
You are
Just
young.
question for you guys, because I look up to you both. How much of your success, I don't know, financially with the ladies, do you attribute to having facial hair? Is it something I should work on actively?
Ooh. See, the thing, I can hear John laughing out there. See, the thing is that, you either have it or you don't have it. And
All right.
You just don't.
I could put together a pretty gnarly neck beard.
It's a manly thing.
The last time I shaved my face, it was to dress up as Sting for Halloween. Like Sting the wrestler.
Every time I leave Tasty, I miss it. Even like when I go home after work, I think about Tasty. I'm like, I wish I was really in the office.
No, you don't.
I don't.
You just went abroad. Were you able to just fully disconnect?
Fully.
Yeah.
We saw several artisans, but the sword maker. 3 months to make a sword.
Yeah.
That's
when
one
does yours get delivered? You didn't do the sword?
50 grand. And there's
but that's,
and a 2-year wait list.
It's a couple spoons.
Yeah, that's, come on.
Going to Rockford for a wedding. It's going to be a very fun wedding.
Your friend that's getting married, or is it your girlfriend's friend?
Girlfriend's friend.
Do you want your girl to catch the bouquet?
No. That never ends well. Like in movies, that happens. The guy's like,
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Eddie in Texas, what's up?
I'm trying to determine whether or not I should actually feel experienced enough to grow my account. I've been trading for about a year and a half, done all the homework. I'm not sure if it's just a market that I got lucky in the past 2 months.
Like, how many trades have you made?
This year so far, about 100.
Yeah, so if you've made 100 trades and it's working for you, then that's not luck.
No.
That's not getting lucky. That's being freaking smart and doing the right thing. Because you took advantage of an opportunity is not getting lucky. You made 100 trades already. Back when we started building this kind of software, an active trader made like 20 trades a year. What used to be 5 years, you've packed it into a few months. I mean, I wouldn't discount anything that you've accomplished so far at all.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Global markets never sleep. Explore them with Forex.
now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
I want to play a game. It's a relationship game. So I'm going to ask each a question to your partner.
Who loves the hardest?
Yes, yes, yes. So are you ready?
Exactly.
Who's more stubborn? Who's more public? And who do you think takes longer to get ready to move?
Oh. He's got to do his hair.
Who's a better driver?
I mean, for sure.
Yeah.
Like, I live in Italy. Yeah. Like, we drive, like...
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed most? Who is more spoiled?
Oh, yeah. It's not even close. Like, you got buildings full of people. What do you want, Mr. Zosnoff? I have nothing.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Christy Ross, St. Norbert College, Wisconsin. Number 85, because I like trades that have an 85% probability of success.
Lindsay Grata, University of Illinois at Chicago. Number 14, because that's how many times Tom asked me, where's my lunch?
Tom Sosnoff, State University of New York, Albany. Number 0, really? You gave me 0 because I like being delta neutral?
I like the looks of that lineup.
Well, being mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Contrarians! I just signed up for Dough and opened a new brokerage account. Time to get trading!
Newbigard, big barbarian on hillside. To celebrate, let's slaughter 1,000 ewes and suck the raw marrow from their bones. Oh, yeah. Why did I say 1,000 ewes? I always get caught up in the moment.
I don't even really like raw marrow. I mean, it's fine, but it's definitely not my favorite.
Hey, maybe next time when I do something cool and smart, just give me a subscription to Bob the Trader, okay?
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
It was a great show. It was very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
If you missed the live show, here's our cherry on top weekly recap.
Question for you guys. Yes. Vanetta this morning was giving me a little flack. It was lighthearted. She meant well. Okay. For my particular baby face.
Yes. You are young.
Just
young
question for you guys, because I look up to you both. How much of your success, I don't know, financially with the ladies, do you attribute to having facial hair? Is it something I should work on actively?
Ooh. See, the thing, I can hear John laughing out there. See, the thing is that, you either have it or you don't have it. And
all right.
You just don't.
I could put together a pretty gnarly neck beard.
It's a manly thing. But
last time I shaved my face, it was to dress up as Sting for Halloween. Like Sting the wrestler.
Every time I leave Tasty, I miss it. Even like when I go home after work, I think about Tasty. I'm like, I wish I was really in the office.
No, you don't.
I don't.
You just went abroad. Were you able to just fully disconnect?
Fully.
Yeah.
We saw several artisans, but the sword maker. 3 months to make a sword.
Yeah. When does yours get delivered?
50,
you didn't do the sword?
$50,000. And there's
but that's,
and a 2-year wait list.
It's a couple spoons.
Yeah, that's, come on.
I'm going to Rockford for a wedding. It's going to be a very fun wedding.
Your friend that's getting married, or is it your girlfriend's friend?
Girlfriend's friend.
Do you want your girl to catch the bouquet?
No. That never ends well. Like in movies, that happens. The guy's like,
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Eddie in Texas, what's up?
I'm trying to determine whether or not I should actually feel experienced enough to grow my account. I've been trading for about a year and a half, done all the homework. I'm not sure if it's just a market that I got lucky in the past 2 months.
Like, how many trades have you made?
This year so far, about 100.
Yeah, so if you've made 100 trades and it's working for you, then that's not luck. No. That's not getting lucky. That's being freaking smart and doing the right thing. Because you took advantage of an opportunity is not getting lucky. You made 100 trades already. Back when we started building this kind of software, an
Good morning, welcome to Trade Live with IG. We got Mini Cooper in the house, people.
Thank you very much for having me, Rich. It feels like I haven't been on here with you for ages.
You and I, it must be at least 5 weeks, I reckon.
That's because you abandoned us for Milan. That's what it was.
That was it. And then you were busy on holiday as well.
Yeah, I had a bit of holiday.
Now, talking about holidays, Mini Cooper.
Talk to me. Talk to me.
Everybody, Angeline isn't feeling well today. Well, when I say holidays, you know, obviously I meant, sorry, Angeline is off sick today.
Oh, okay.
So she won't be on the show. Now, I'm not suggesting that everybody should send her get well soon emails and fill up her inbox, but angeline.ong@ig.com, definitely do not ask her any really complicated questions about shows and make her spend the whole morning replying. Get well soon, Ange.
Can we go one better, and can people send a video, not just an email, but with a video attached?
Of themselves?
Yeah.
Asking the question.
Asking the question?
Okay, good one.
I was thinking get well soon. What were you thinking?
Oh, okay. Yeah, let's... So, Little Wabbit, that's a new one. Good morning, Little Wabbit, saying you're announcing yourself to the chat. Very good morning. Like that. Neil Brewster, good morning to you. The most musical intro to a financial show. That's right, we're way better than CNBC there.
Of course we are.
CNBC's been the same intro for about 20 years, I think. Now, let's have a look at what is coming up on today's show then. We've got myself and Mini Cooper through till 8:30 a.m. And then I've got Matt Arborin. He's talking... Matt and I spoke at the bottom of the market. Now we're talking at the top of the market. And then, Mini Cooper, what have we got after Matt Arbour and I are chatting? At 9 a.m, the all sessions.
So we have got all sessions opening bell with yourself, and then we've got Mr. Agnick and Graham Dixon at 9:10 with Experts Edge,
who's one of Ronnie's clients.
And then finally at 9:35 we've got Gabrielle and yourself.
That's right, but I am going to be jumping in and speaking to Graham as well, because we are going to be talking about small and mid caps in the UK, which I know that quite a few of you have a lot of interest in. So, right, we'll dive into it.
Where do we start? Yeah.
So you and I have got plenty to talk about because it's someone's birthday tomorrow.
What'd you get me?
Mine.
What'd you get me?
Well, I haven't got you anything yet.
What? Is it a surprise?
Well, your age is a surprise. Let's have a poll of how old is Mini Cooper tomorrow? I think potentially, well, let's see what producer Phil comes up with.
He's going to come up with some dodgy options, I can tell.
No, we'd never do that to you. Never. So yeah, if you think you're watching Gary Stevenson, then you're not too far wrong. But Mini Cooper, how old is he going to be in his birthday? So producer Phil's going to pop that poll up now as we go into overnight action. Overnight action.
Have a look.
He doesn't know what the right answer is, so he doesn't know what to put. Right, well, the market's laughing. The market is absolutely laughing at Trump once again. South Korean stock market is up 1.7% overnight. That's what they think of this delay in tariffs. Let's have a look at CNBC's wonderful graphic. There they are. Run us through that. Mini?
So, yeah, new US reciprocal tariffs. We have got Japan and South Korea at 25%. Wow, this is testing my flag knowledge.
There are some really tough ones up there, I'll give you that.
So yeah, Japan and South Korea at 25%. We've got South Africa at 30%.
If you can get any of the others, I will be impressed.
Right, I want to say Vietnam.
Yeah.
36%.
Well done.
Tunisia, 25%.
Ooh, you pulled that one out.
Is 35%, is that Bangladesh?
No, I think that is Slovakia.
What? The red dot with the green background?
Oh no, so the red, blue, and white stripes. I believe that's somewhere around. Well, from the old Czech.
I want to say Cambodia's on there.
Yeah. I don't know the rest of it.
I say that's the best I can do.
Yeah.
I used to be good from playing FIFA when I was a kid because it had all the flags on, but I don't play anymore.
There you go, the skills that you picked up there. But yes, the markets in Japan are up 35 basis points.
Yeah.
And the South Korean market's up 1.7%.
Yeah.
So yet again, he has choked. He's forgotten about this deadline tomorrow, and the new deadline is August the 1st. And
I was going to say it's mainly due to the fact that Trump said that, look, this is still open to change. It's not set in stone, which insinuates there could be potential for a new deal.
Exactly.
He came out and said, look, we've done a deal with the UK, China, and it looks like we're doing one with India very, very soon, which is great for the US, given that obviously China and India are some of their biggest trading partners.
Yeah. That's right. So India, a mini deal is expected in the next 24 to 48 hours. That will be for 10%. So 10% is expected with India. Thailand has offered concessions to make a deal. South Africa say they're committed to constructive talks on tariffs. Indonesia say the trade deal will include buying soybeans and energy, as well as corn. And then Europe